On their plans over the next 5 years to return cash to shareholders, 50 billion euros to investors in the next 5 years through a combination of buybacks and dividends, of course. We're also watching InPost. There's a buyout on the table for this particular business, planned by Advent and by FedEx. It's for $15.60 a share, and it closed at $13.30, so we would expect to see some movement on that one at the start of trade. Also keep an eye on Novo Nordisk. One of the reasons it slipped midweek last week was around Hims and Hers and what they were offering, a copycat version of Wegovy over in the United States, and then they withdrew that on Friday after the close here in Europe, and so ADRs went higher. We'll watch to see how the listing in Copenhagen goes this morning. Guy?
Okay, let's talk about this market open. Feels kind of mechanical this morning. You've basically just got to price in the gap. We'll see what happens as we come through the open. I think we'll check back in and see what the market looks like in a little while. But this morning, the FTSE 100 is expected to go higher, like most of the markets across Europe. We're expecting circa 0.5%. We've got a little bit of that this morning. We'll let it open, climb a little bit more maybe as we start to look around the rest of Europe to get a better sort of sense of direction. The CAC's going to be up a little bit this morning. Big week for luxury as well. Just kind of pay attention to that too. Don't ignore the fact that there are some really significant names coming out of France this week in terms of the reporting story. It's up by 0.2%. We're actually not getting quite as strong a market response as maybe we first thought, but the IBEX is out. It's up by 0.6%. The other markets are beginning to climb a little bit more, so the FTSE's now up 0.3%. We were looking for 0.4%, so we're pretty much there or thereabouts. But a positive start, an indication maybe more about Friday than Monday, so let's see how this market develops, Tom.
Top performing sectors so far. Basic resources up 1%. Tech also performing well, up 0.8%. That ties into what Guy has been talking about, of course, in terms of the upside that came through for the tech stocks, at least on Friday out of the US. We'll see if that momentum can be maintained. Banks performing relatively well as well. UniCredit in the mix, up 0.7% in terms of the sector. On the downside, you've got energy down 0.3%. We mentioned the fact that oil prices have been falling on easing geopolitical risk. Personal consumption products as a sector is also off 0.5, but it's basic resources again, top of the list, up 0.9%. Gold and silver jumping again in the session today.
Yeah, to your point, Guy, we're kind of evenly split between the gaining sectors and the losing ones. So we're up by 0.2%, so perhaps not quite the gains we thought we could see. Personal consumer, grocery stores, that sector is under pressure. I can see that Greggs is down by 5.5%. That seems to be the biggest mover on that particular index.
It's a story in one of the papers this morning talking about weight loss pills and Greggs somewhere, I think. ASML, which I think has got its dividend this morning.
Yes.
Is actually up quite nicely. It's up by 0.5%, so that's quite a decent bounce. But it looks like it's the banks that are doing the heavy lifting this morning in terms of the points. UniCredit, Santander, BBVA, all up quite nicely. Some of the defence names are in the mix as well. But it's tech and banks that look like they're doing some decent lifting. Though NatWest is a little softer on its acquisition this morning.
Yeah, acquisition there in the sort of wealthier end of the consumer spectrum. Let's have a quick look at what's happening on the gilts market.
Yeah, actually, the bank story, I wonder whether the bank story is related to the gilts story this morning, because the UK banks are softer.
Right, and we are seeing a bit of movement in gilts. So this to do with the politics, very much watching what happens with gilts here. We're seeing some selling of gilts. We're up by 1 basis point at the short end. We're up by 2 basis points at the long end. So these are not by any stretch big moves. And I'd also highlight that on Friday, these markets, we saw yields dropping by 3-4 basis points. So we are not even unwinding the moves of Friday. Just to add that context, that doesn't change the fact that these markets are very jittery around political risk, and we are watching that very carefully.
But you're seeing a bid into EGBs, European government bonds, and selling of gilts.
UK, yeah.
Which is probably worth mentioning as well.
Let's talk to Helen Jewell, BlackRock's international CIO for fundamental equities, and we'll put the gilt story to one side for the moment, Helen. But let's talk about overall markets and where we are and your expectations. Last week seemed to be a week where we all had to question a lot of assumptions about winners and losers from AI and start to ask really hard questions about who the losers are going to be and can we even answer that question right now. That seemed to be a real preoccupation. At the same time, the overall indexes didn't reflect all of that nervousness necessarily because there was a lot of rotation. So what were you taking away from last week?
Yeah, thanks, Anna. I mean, you're absolutely right. The market was actually pretty flat, which is incredible for those of us who were involved in it day to day because there was so much going on. As you talked about Friday, where you saw a bit of reversal. But what really the market was telling us last week is you need to have diversification in portfolios because we don't know exactly how that AI story is going to play out. So on the one hand, you had this huge amount of capex being committed. So obviously with a large number of those Mag 7 names, so a commitment of like $650 billion, which is an enormous amount, more than 60% more than last year in terms of the AI spend. And a nervousness of the market of saying, we really need to see some kind of return on investment coming through this year. And alongside that, you also had this situation where, because of Anthropic and Claude, a situation where, for the software companies, there was a question mark on actually how much disruption there was going to be. So those two stories going alongside each other. But what was incredibly important is that the money was staying in the market. So you saw a huge amount of rotation. You saw actually from a momentum perspective, 5-6 standard deviation moves in the middle of the week.
Yeah.
And actually what you saw, if you look at, for example, I mean, there's so many ways we can measure this, but one that caught my eye was that the S&P equal weight versus the S&P market cap had its best relative performance since the COVID vaccine was announced back in November 2020. So what you're seeing is not capital leaving the market, but you are seeing a broadening out, and you are basically seeing we need some kind of balance in portfolios, while to your point, Anna, we actually work through how this might land.
Yeah.
But that's where the opportunity is from an investment perspective.
Okay, and let's get more on that opportunity then, because another way of looking at it would be the realised dispersion that we saw in European stocks, and we've got a chart that sort of points to that, and that stood out as a big theme of last week. But that goes back to the rotation that you're talking about and how we find those winners. What are you thinking about where we lean next then on the AI trade? Is it still about hardware?
Yeah, well, less so. I mean, we're kind of shifting a lot more to the bits that we just think that there are still gaps and opportunities in. There are going to be opportunities in the hardware. For the software space, for example, it does feel the entire sector has been priced down, so trading at like 17, 18 times now, and there will certainly be opportunities there. But whilst we're kind of working out exactly where those opportunities are, what we're still really focused on is where the sums simply don't add up. So one of the areas remains in that energy space. There simply is not the energy and the energy infrastructure at the moment to supply what AI will need in terms of data centers. So we continue to lean into that space. We lean into things like Prysmian, cable making. You know, it's actually kind of just needed for that grid expansion, and you need grid expansion for energy, and you need energy, more energy than you needed for a long time. So that's where we're leaning at the moment. I think where there is that more clarity, but that's not to say we don't think there will be opportunities elsewhere as well.
The Nasdaq hasn't made a new high since October. The S&P is kind of going sideways. But to your point about rotation, when we think about flows into just the mechanical flows into the market, if the market just goes sideways, are we convinced that those flows are going to remain? Because they've been a huge factor that has driven the market ever higher. If we don't get index gains, is that a problem?
I mean, overall, you do want some form of index gains. I would also say, don't forget, Europe is actually doing okay. So, and that is because of the flows. We are starting to see those shifts from flows into Europe. We started to see that a little bit last year. We didn't see as much as I think we would have anticipated, especially given where the dollar was. But in some ways, there was a huge amount of reversal we needed in order to get that shift away from the US into Europe. Similarly, if you actually look at the value indices, so if you look at the Russell Growth Value, you are seeing outperformance in those indices. So, yes, of course, on the whole, it is better from a kind of visual and impact perspective if you are seeing, whether it's the Nasdaq, and we are again seeing the S&P 500 upwards. But actually, it doesn't matter so much. The flows are driving what you're seeing underneath of that. You're seeing outperformance in Europe. The banks, of course, again, today doing incredibly well. So you are seeing shifts in some of those indices. So even if the top line looks a little bit meh, actually underneath that, the opportunity is there, and I actually don't think, therefore, it's a problem for the market.
How active do you have to be?
Well, you'd always have me say you do need to be active within the space. So I think software is probably the best example of where, from an active perspective, the opportunities are going to start really coming if you really understand where the margin really is going to be hit versus not. The other area, again, I'm sorry to keep coming back to it, but it's something I feel so strongly about, is this next generation from the energy perspective.
Sure. Really
understanding the infrastructure story around that is something which needs just the understanding of every nut and bolt that goes into the energy flow.
Is my portfolio going to be riskier if I get active?
It is at the moment, because the level of vol is relatively high for the returns that you need to get. So, yes, you are going to need to get just perhaps a little bit of additional volatility. Having said that, it depends on how you're constructing the portfolio. So I would say, in some ways, the most volatile portfolio you saw last week was one that was overweight US tech. And an overweight US tech portfolio is not how a number of active portfolios are structured at the moment. So, yes, probably a little bit of volatility, but of course it all depends on where your starting point is, guys. So if you're starting from an overweight US tech, absolutely not.
Most
you're going to get low. But if you're starting there, then absolutely not. Lower volatility for better returns.
Is there a risk on the software trade that you end up with two losses? One is that AI cannibalizes financial services, asset managers, and others. But number two, people aren't willing to pay for it because you can basically pull together open source models and software solutions very, very cheaply, so you don't get the revenue streams that filter back to the data centers and the infrastructure and the picks and shovels that you lean into. There is a scenario where you lose twice on this.
Well, I think that the thing with that, though, in terms of that, so let me take the first of those first. This is the big question at the moment, is there is a lot being priced in that it is just very, very easy to replicate all of the software solutions that are out there. And I'm sure in some ways that it is, but if you've got critical support and critical software that is needed, it's very difficult to see how that is going to be an immediate switch. So yes, there are question marks about the terminal value, but the big question is what happens before you get to that terminal value, which could actually be a number of years. And of course, speaking as an asset manager, I kind of think that there's probably quite some way to go before you can replace humans in any part of this. The second bit then about the picks and shovels, and you see this in the semis. Semis in Europe again doing very well again, starting off today. What you're seeing in that is the commitment to the spend from the Mag 7, who've got a huge amount of capital that they can invest, is there, and it's real. And it's not just about AI when it comes to things like energy. Air conditioning uses a lot of energy as well. So this is not something where without this spend it's declining, and with it, it's kind of plus 3%. It is something which is growing as a result of a number of factors, of which AI is probably the one that gets the biggest narrative.
Going back to the rotation trade, does that still work if the Fed doesn't cut more this year?
I think if the Fed doesn't cut, then probably the rotation trade pauses a little bit. I don't think it necessarily continues in the same way. The big nervousness, really, and the thing that will actually give more wind to that rotation trade is that the jobs data. We are starting to see, if you think about the jobs data, we've got non-farm payrolls this week as well. You are starting to see some kind of softening on that. And I think that's part of it. When we're talking about the AI narrative so much, I worry a little bit that we're not really focusing on the macro part of the story. And so you've got the two things going on here. When you see that rotation, the big driver of that is the level of valuations and nervousness about AI. But there is a second part of that, which is perhaps we just need to be a little bit cautious about how perfect the Goldilocks scenario might be. So I think actually, rate cuts, it goes back to this, good is good, bad is bad. Like, if we have rate cuts, if rates remain constant, and rates remain constant because there is no nervousness about the jobs trade, I don't think that's necessarily going to be a problem. But if we start to see jobs nervousness, that rotation and the momentum will continue.
President Trump would like that. He likes it when good data is good for stocks. He told us that not long ago, so that would be interesting. Helen, what else are we missing as we sit here obsessing about AI and the losers from it, and where is the pain in software and all of that, and is the trade in hardware done, and where are the pockets we can still find value? Are there things that we're not talking about that maybe we should be?
I think we talk about everything, but I am going to bring it back to the ones where we remain been super focused on. So defence is still very interesting, and banks. I feel like we always talk about the banks, and it's always kind of nice when you see something like today.
Does that still fall into our value conversation or no?
It really, really does, because I think we get very tied into value versus growth, and what really it is those stocks that provide you stability within a portfolio. And what the banks are giving you, and you've seen it again this morning, is this huge amount of capital that they are returning to shareholders or potentially doing M&A with. But that is certainty, and that's what basically investors are looking at to ballast against where there is uncertainty in the AI space. So I know we're not talking about it, but don't ignore the banks and those sectors as well.
Never would. Helen, nice to see you. Thanks very much indeed. Helen Jewell, BlackRock's International CIO for Fundamental Equities. Thank you very much. Okay, let's talk about where we are with these European equity markets and show you what's happening. We'll get to the banks in a minute. Rheinmetall is up by 2.27%. The defence stock story is back on. Chips are actually having a fairly good day. I think SML is ex-dividends. Schneider's up by 0.7%. Standout story, though, post-Friday, and what we saw with him and hers and the copycats is Novo, the stock bouncing on the news we saw as a result of the withdrawal of that copycat drug late Friday. Let's see what else we're watching. Back to the banks. Chloe Melly.
Good morning, Guy. UniCredit is doing pretty well today for the fourth quarter results, beat estimates, but also what is really pushing UniCredit in the green this morning is the plan to return 50 billion euros to shareholders through to 2030. So the outlook is definitely very positive for UniCredit, and therefore we are up about 4.6% this morning. Moving on to another bank that is not doing as well, and NatWest is in the red this morning. It agreed to buy the wealth management company Evelyn Partners for £2.7 billion, and this is part of a strategy to access more wealthy clients in the UK market, in the home market for NatWest. But perhaps that price tag is a little bit too high for investors, and we are down about 4% for NatWest. Moving on to InPost, and the parcel locker company is up very strongly, 13.4% this morning after this takeover deal from Advent International and the consortium led by FedEx. And so this is a deal that investors are getting quite excited about. It values the company at about 7.8 billion euros, and we are most definitely in the green this morning. Novo Nordisk is also in the green, which, as you mentioned, Guy, is on the back of this, of hims and hers saying that they will no longer sell this copycat version of the weight loss pill. And this is going to be seen as very positive for Novo, given that it is pinning a lot of hopes on this obesity pill and what it can do this year for the company. And we are up about 8%. On the other hand, the fact that this weight loss pill is happening is maybe not such good news for sausage roll sales. And Greggs is down this morning after being cut to hold by Jefferies analysts on the back of those risks coming from weight loss drugs. And we are down about 3.3% for Greggs this morning.
Okay, not good for the lovers of the bacon breakfast roll. Just one item on Greggs.
You sound like you're familiar with it.
I'm just looking at the menu right now. They haven't updated it for a while. There is a vegan sausage breakfast roll, though.
Oh, well, they were almost world famous at one point, weren't they, for the vegan?
For the vegan sausage rolls. There we go. Greggs.
So.
Under pressure. What isn't under pressure is the banking space, as our previous guest was saying. UniCredit promising to return 50 billion euros to investors over the next 5 years. That stock is jumping. This, as fourth quarter profit blows past estimates. We'll bring you the details next. This is Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Welcome back. This is the opening trade. It is Monday, everybody. 8:19 here in Europe and here in London, and we have European equity markets going a little higher this morning, actually making better gains than they were just 5 minutes or so ago, up by around 0.5% on the stocks Europe 600. The Xetra DAX getting some decent gains this morning. Travel and leisure stocks doing okay. We've got oil prices coming down, so that sometimes helps those, doesn't it? After the weekend was more peaceful in the Middle East than had been feared. Yeah, defence stocks, though, ironically, up. That's probably the biggest driver in terms of what's driving the DAX this morning. Rheinmetall's up by nearly 3%. Let's talk about banks. Big theme of the morning as well. UniCredit higher. The Italian lender said it plans to return around 50 billion euros to investors over the next 5 years. Earnings were a little kind of more iffy in terms of maybe where the market is this morning, but it doesn't care because loads of money's coming back, and that's kind of the main driver. Let's figure out what is happening here. Our finance and investing managing editor for EMEA is Tom Metcalf, joining us around the table. Am I slightly sort of simplifying the situation? Lots of money being returned, earnings, do I really care?
No, Guy, you're right on the money. It was a messy set of earnings, and there's certainly reasons, you might pick out things to be slightly concerned about, but the big picture is Orchel coming out saying, look, 50 billion through 2030. So you can really see his playbook, right? He is just laser focused on that, and then you've got the much more complex matter of, will he ever manage to get any sort of big name M&A? But frankly, if you're a shareholder right now, you're probably quite just happy, like, give me the returns. And, Q4 is always an interesting one for UniCredit. So they take a few charges, it becomes a bit messy. But, that does set them up nicely for sort of future outperformance across other earnings.
Does that return of cash to shareholders suggest that he's not going to be pulling the trigger on significant M&A? They've built up that stake in Commerzbank. They've struggled, of course, to get anything further across the line, regulatory reasons. Is it a signal that they're going to be more focused on returning cash to shareholders rather than M&A, or you don't read it that way?
No, I don't think yet. I mean, I think he's keeping all his options.
And they do both?
Yeah, I think it would be a stretch, but I think definitely in terms of under the plan, they could. And, I think like Orchel said, he's got until about 2027 to make a call on Commerzbank in particular. So, no, look, I think, he's a deal maker by heart, right? And so that's the thing I find fascinating is pretty much all the success of UniCredit has been based on the operational side.
Let me ask you about the UK banking sector right now, Tom. We've got NatWest down, 5% or so this morning? 4.5%. They've agreed to buy Evelyn Partners for £2.7 billion. Why the negative response, or is it just, the knee-jerk reaction to spending money on M&A?
I think it's as much that reaction. We normally see it with M&A. So, I think it's about, 3% you're saying down on the shares? I mean, it makes sense. Every bank in the UK and, wider also just wants to get into this wealth market and, get that recurring revenue. So, I think it was a pretty competitive deal. So that might be something shareholders reacting against. We knew Barclays were in there right to the last minute. And certainly 2.7 billion enterprise value is a pretty decent price to be paying.
Okay, Tom Metcalf, our EMEA finance and investing managing editor on UniCredit. on that West deal making on that front as well. Tom, thank you. Let's get back to a check on UK assets. We did see a sell-off in gilts. We're seeing that, and then it paired, and now we're kind of back again in terms of yields up about close to 3 basis points on the front end, 365 on the 2-year. The 10-year is yielding 454, up 3 basis points, but not particularly dramatic. But the selling is there. We tie that to the UK politics and the uncertainty. Keir Starmer and his future very much in focus. The pound currently trading versus US dollar at 136, a little softer by 0.1%. Let's bring in our Markets Today editor, Morwenna Coniam, on how the politics of the UK, the political uncertainty, ties into what we're seeing in terms of UK assets. What is the the key takeaway? Are markets bracing for this Prime Minister to step down imminently?
It's not a huge reaction this morning. I think this has been building up for a while. Of course, we had the news over the weekend about Morgan McSweeney, which focuses it even more so. And, the betting odds have crept up slightly there as well. But overall, at the moment, we're seeing yield across the curve up about 3 to 4 basis points. That's not a huge move, particularly if you look back, say, to the summer where there was some concern about Rachel Reeves. We saw them shoot up at 18 basis points. So this just isn't that big compared to previous moments of political uncertainty. The pound is actually only a little off against the dollar this morning at the moment. It is down a little bit more against the euro. But what we've been discussing this morning is that a lot of it probably comes down to monetary policy as well. We had the Bank of England meeting on Thursday, signalling a slightly more dovish direction, and that comes in contrast to the ECB, who seem to be at the end of their policy easing cycle. So that move we're seeing that it is definitely exacerbating those trends already, but is not the only driver of asset moves today.
And Morwenna, it's interesting. If you're in the left of the Labour Party and you want to get rid of Keir Starmer, you're pushing for that to happen. There is another argument that there's a big election coming in May, or at least local elections coming in May, and maybe they won't go so well for the incumbents, and therefore you wait until then and you make Starmer take the fall for that. I mean, you could see logic in either argument, I suppose. And so maybe is the market is it a wait and see here? And given there's a lack of clarity over who would take over as well.
Well, I think exactly your last point there. There is a certain element of wait and see because there isn't an immediately obvious situation that's going to evolve from this. And I think there is perhaps a suggestion in some camps that you wait it out, you see how things fall out whilst everybody actually gets themselves in position, if that is what's going to happen for a proper leadership challenge. At the moment, of course, Angela Rayner and sort of Wes Streeting have been touted as the sort of front runners, but at the same time, you've got at least 6 other names in the mix as well, and it's not entirely clear that neither of those names are uncontroversial at the moment as well. So perhaps for those who aren't gunning for Starmer to leave, just in principle anyway, there's not necessarily that much merit in forcing the situation.
Okay, Morwenna, thank you very much. Morwenna Coniam, Bloomberg Markets Today editor, of course, with us this morning on the market reaction and the politics. It's interesting to me that list of contenders was growing over the weekend. More and more people being mentioned, which it does give you a sense of a lack of coalescing around a
But does that mean it's more likely that Starmer stays?
Maybe.
Because you've got to get quite a big number of MPs behind you to become the next leader. So if the party feels more fragmented, if there are more camps, is it harder to get to that point?
Yeah, perhaps.
That you get a leadership challenge.
We're waiting for more details in terms of the vetting process and what could come out in terms of the emails and the text messages, and to what extent that ties Starmer to that decision and possibly fuels calls from his own cabinet.
And the Met seems to have delayed some of that, doesn't it?
But the Chief of Staff going, is the Chief of Staff about to publish a whole load of other stuff? So that could come this week.
When we come back, we will talk energy markets. We'll join Vikas Dwivedi. That conversation is next. This is Bloomberg.
problem we've got as an industry is when the government's overtax, and let's say they tax at 30 or 40% of net gaming revenue, what happens is it starts making it uneconomical for the regulated operators like ourselves. And then you land up, the customers end up going to the black market, and the black market don't pay tax, do whatever, and there's no customer, there's no responsible gaming, and the fiscals of these governments don't collect any money. So it's finding a balance between overtaxing and then not regulating. Anything from 15 to 25% of the net gaming revenue paid on tax is probably the right number. And when you start going above that, the metrics start becoming a bit more complicated for lots of the operators.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise,
with some fun along the way.
This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Happy Monday. This is the opening trade. We are 30 minutes into today's session. So a very strong session, of course, on Wall Street on Friday, making up for some of the losses of the previous week. Then a decent session in Asia, particularly focused on the Kospi in Korea, but also Japanese stocks as well, surging on the back of Takaichi's pretty historic win. European stocks are up 0.3%. You break things down, there is some idiosyncrasies in terms of what's happening in the energy space with oil under pressure. The miners doing very well. That's lifting the FTSE 100 to some extent up 0.2%. Stronger silver, stronger gold in the session today. The FTSE MIB lifted by UniCredit, the banking space performing well, a big return of cash to shareholders. The FTSE MIB up 1%. Over in Germany, the DAX gaining 0.5%. Some of the industrials, some of the defence names performing strongly in the session. Guy, what are you seeing?
Internals 2-1 up versus down. You've got 382 up, 299 down. Volume's a little light. We'll put that down to it being a Monday morning after a busy weekend of sport. Did you stay up and watch the Super Bowl? Let's talk about what's happening in terms of the single stock news. Tom's just given us some of it. UniCredit, certainly one of the standout stories, but Novo's having a really good day on the back of the him and hers pill being withdrawn. It's up by 8%. UniCredit's up by 5%. InPost is up by 13%. There is an offer on the table, Advent-led consortium bidding for this business. The stock responding quite strongly to it. So you're getting some M&A in the market this morning. UniCredit on the results. Novo Nordisk on what is happening in the GLP-1 space over in the United States. Downside looks like this. Acquisitions for NatWest driving that stock lower, but UK stocks are a little lower as well. Lloyds is down by 1.83%. Can I draw a line between that and what is happening with UK politics? That might be a stretch, but nevertheless, UK banks under a little bit of pressure. Gold, silver, gold in particular, going back up again. Pandora responding negatively to that. Its stock is down by 4%, Hannah.
Guy, let's get an update on some of the other news flow this morning. The Japanese Prime Minister Sanae Takaichi has secured an historic election triumph. Her ruling Liberal Democratic Party, the LDP, achieved the biggest post-war victory for a single party in a general election. An extraordinary transformation of fortunes for a party that was on the ropes last summer before getting behind Takaichi back in October. Bloomberg has learned that Chinese regulators have advised financial institutions to rein in their holdings of US Treasuries, citing concerns over concentration risks and market volatility. Communicated verbally to some of the nation's biggest banks in recent weeks, the guidance reflects growing wariness among officials that large holdings of US government debt may expose banks to sharp swings. And Kevin Walsh has called for a new accord with the Treasury Department, overhauling the relationship between the two institutions with a new version of an agreement from 1951. A revamp could prove to be just a bureaucratic tweak with little near-term impact for the $30 trillion Treasuries market, but a more ambitious effort involving a shake-up of the Fed's current $6 trillion-plus securities portfolio could see increased volatility and, depending on the scenario, deepening concern over the U.S. central bank's independence. Tom.
Okay, so from central banks on a big week, of course, for inflation, jobs data through this week too. What's happening in the energy space right now? You've got Brent currently down 0.7% at 67.60. WTI at $63 a barrel, down 0.7 as well. The focus, of course, on the geopolitics. Oil down after Iran's president described Friday's nuclear talks with Washington as, quote, a step forward, even as he pushed back against any attempts at intimidation. Joining us now for an insight into the impact these talks are having on the energy markets is Vikas Dwivedi, who is Global Oil and Gas Strategist at Macquarie. Vikas, good morning. Thank you for joining us.
Thank you for having me.
What assumptions are you making about Iran oil flow on the back of these talks going forward?
On the crude oil flows itself, we are not expecting any real changes, especially directly vis-a-vis like what Iran may do. And the problem is they don't have a tapered way to approach it. It's too big of a hammer. Either if you do much to the Strait of Hormuz, you block way too much volume, and then the reprisal from the rest of the world, the U.S. in this case, is too strong. So, you go from a rhetorical match to a full-out, military engagement too quickly.
These markets seem to be pricing in a resolution, or at least an easing of tensions. How are you thinking about the geopolitical risk premium priced into oil at this point?
Yeah, we think it's in the range of $6 to $8 a barrel, so it's still very big, and more than 10% of the price. And the reason is the market cannot actually bear the risk. Everybody generally agrees the market is very oversupplied globally. We do too. These are our biggest surplus balances that we've seen since we've been doing these models, ex-COVID, right, obviously. Yet it's very hard to short this market, because you've got this looming risk. Even if it's a very low probability of some supply issue happening, you can't short this market comfortably.
When do we get clarity enough to short the market? Are there kind of milestones that you're looking at?
Yeah, look, we think there's still a decent chance that there will be some kinetic exchange, right? And it may be
around Iran.
Yeah, between Iran and the U.S., Iran and Israel. It's not our base case, but it's a high enough probability that you cannot ignore it.
Okay.
And it may be the highly telegraphed and even choreographed, like, hey, we're going to tell you when, and we're going to tell you how, but be on the lookout for it, and Iran will do their response. And I think until that has happened, the market won't be very comfortable shorting.
So once you get that, in a weird way, oil prices go down on the kinetic action because we've seen it.
Yeah, exactly. Everybody will have seen, like, hey, you know what? We can still have a measured exchange with each other. Like, no one's going to go full out and try to, overwhelm the other side. And we think Iran is going to be far too smart to try to even encroach into that territory.
Right.
There's a lot of unpredictability with President Trump. You push a little too far, and it could backfire very badly.
Vikas, away from Iran, can I ask you about the global supply glut narrative that has been dominant for quite a while? Because some people really do focus on that, and we see elevated stocks on the water, and they maybe point to that. But others are referencing onshore stocks and saying, actually, in January, maybe they weren't as strong as people had expected.
Absolutely.
What's the detail that we need to be aware of there?
Yeah, great question, and it's certainly where the oil market would like to focus. Our clients would like to focus on that and not try to predict what Ayatollah Khamenei or President Trump, like kind of trying to figure out their MO. Look, we think the market is in a massive glut. Okay, and it's very fair pushback. Well, prices don't suggest that. Spreads, right? The structure of the curve doesn't suggest that. The January, to your point, January stock numbers don't suggest that. So what's going on? You know, what's going on is we've had an unusually large number of one-off outages on the supply side. We think, you know, between higher than expected refining runs, which kept exports down, and outages in so many places around the world, whether it was Russia going down, Venezuela temporarily going down, Turkey, Iraq, Mexico, you know, without listing half the world, it's like you had a lot of outages, and that kept a lot of exports off the market. And that's why December and January have not looked as big on the onshore. The other thing is most of the stock builds have still been in China, right? Their SPR is building rapidly even now, way above what a normal need would be. So, you know,
Makes
normally,
you wonder why.
Well, it does beg that question, right? Normally, countries want to have 90 days of net imports.
Yeah.
China is on track to do 150, maybe even 180 days.
Okay.
So people do ask why? Why do they need it to be that big, right? And it leads to other interesting questions. But.
Okay, so you do believe still in then the glut story reasserts itself, and that causes prices to drop quite low, 50s. You're talking
low 50s, Brent, and maybe below 50 for sort of a one touch on the path. Yeah.
And what does that do to investment and, you know, clients, companies' ability to go and invest? I mean, President Trump wants more oil companies to go invest in Venezuela. Do they do that at $50 a barrel?
No, they won't. No. If it gets stuck there, it won't. We don't think it'll stay there. But if you go down that low and for various reasons, let's say it stays there for just long enough, meaning, you know, a couple of quarters, that will slow down investing in oil and gas, especially in the shale, but it'll also disincentivize Venezuela badly. Because then you'll be in a situation where, like, hey, I have to worry about my employee safety, a really volatile political situation, and terrible prices all at the same time, right?
Yeah.
It's not a good
The
look.
risk and reward is not. Yeah.
That $50 on Brent, that's stripping out geopolitical risk. That's where you get to once we've kind of looked through and we got some clarity on the geopolitics. You get to $50.
Yes.
And that's for a couple of quarters. That's the kind of time frame you see it at.
Yes, yes. Our struggle, by the way, is, you know, we think the numbers we have forecast on the supply demand still are playing out. But it's easy to forget. We just finished the first year of the Trump administration. So the question for us is, will it be even more active in year two? Will it be the same as year one, or will there be some tapping of the brakes?
When does Venezuelan oil come onto the markets then?
Starting really now. It's picking up. I think some of the narrative that
material barrels on the market from Venezuela.
Yeah, we think of materiality as every 100,000 barrels a day, right, up or down, and we think that's already underway. There was probably about 200 to 300 of low-hanging fruit that just needed a little TLC, right? And we think that's coming. The next step will be more oil field services.
Yep.
And then you need E&Ps to actually arrive and drill more. And then the final step will be the downstream refining and upgraders. They have to get fixed. So you'll hit a few plateaus along the way, but we think Venezuela will get some extra oil, and it'll probably arrive in the U.S., you know.
Yeah, which will help gasoline prices into the midterms. Thank you very much.
Yes.
Trump wants to accelerate the U.S. economy into the midterms. He's hoping that we see a pickup in economic activity. How many barrels does that take?
From the oil industry?
Yeah, no. If we're going to see if we see a faster economy in the States, is that positive for oil prices? Presumably, it must be. Is there a demand picture that comes with that accelerating economy?
Oh, absolutely. Yeah. Look, we actually think 2025, the global economy took a lot of body shots, right?
Yep.
And it was resilient. And this year, we think it's going to be much better. So you get more driving globally, you'll get more driving in the U.S., more goods being moved. Jet demand is sort of flattish right now, but we think that'll pick up. So all in, it'll be very positive for the demand side and petroleum refining. But if along the way prices stay elevated because of the geopolitical situation, you get both. You get the incentive to drill more and produce more oil, and you get good demand to refine it. And it actually ends up being a nice 1-2 positive punch for the U.S.
Okay, interesting in terms of how that changes the demand dynamics for oil then through the rest of this year. Thank you very much, Vikas. Really smart insights on an important day again for the oil and gas sector. Vikas Dwivedi, who is oil and gas strategist at Macquarie. Coming up, ESPN says the Super Bowl winning Seattle Seahawks may be up for sale. What is the team's current valuation? We're going to give the answer when we come back. This is Bloomberg.
Say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And, you know, we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns. And a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Vonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
Well, before the break, welcome back, by the way. We asked, what are the Super Bowl winning Seattle Seahawks valued at? The answer, $6.6 billion. That is according to online digital media platform Sportico. ESPN reporting that the NFL team will be up for sale. After the Super Bowl, Seahawks sale will likely be the biggest NFL deal ever, with the potential to surpass the purchase of the Washington Commanders in 2024 for about $6 billion. The headlines have been focused not just on the win, but also on Bad Bunny. Anna Edwards is a fan. Anna.
Thank you very much. Yes, I thought it was a Bad Bunny gig with some football on the side. Was that how it actually went down, maybe?
Certainly seems halftime's always important. Everybody takes that seemingly very seriously.
They do, and the business of sport, that seems to be the headline here at Bloomberg. Right, let's talk about what's going on in Japan, because this has been an incredible weekend for Japanese politics. The Japanese Prime Minister, Sanae Takaichi, has secured an historic election triumph. Her win now positions her as the nation's strongest leader in the post-war era. Speaking on Fox News, US Treasury Secretary Scott Bessent said the US would now be stronger in Asia.
Japan, the prime minister called a snap election, the quickest snap election in Japanese history. And boy, has she had a big victory today. She's going to have 2/3 majority in the upper house. President Trump endorsed her last week. She is a great ally, great relationship with the president. And when Japan is strong, the U.S. is strong in Asia.
The US reaction there. Joining us now from Tokyo with the latest on Takaichi's win is Bloomberg Japan economy and government reporter for Bloomberg, Erika Yokoyama. Really good to have you, Erika. So the election win was expected, but the scale of it quite unexpected, perhaps. How does that change the political landscape?
Exactly. As you said, the scale was far larger than any forecast by local media, which was predicting roughly 300 seats. So the LDP secured 316 seats. As you said, this is the largest number for a single party in the post-war history. And it's also exceeded something called absolute stable majority threshold of 261 seats, allowing the party to control all 17 committee chairmanships and have enough votes across relevant panels to smoothly pass bills and budgets. This is totally different landscape from last week when the LDP managed a slim majority of 233 seats, even with coalition partner Ishin and some independent lawmakers. The LDP picked up many seats from the Centrist Reform Alliance, which is newly formed opposition party by Komeito, and Constitutional Democratic Party, which used to be the largest opposition party. So now Takaichi's ruling coalition finds it much easier to push forward with whatever she wants to do, from economic package policy or defense build-up, without much obstacle from other parties.
Erika, on that list then, what is going to be top of the list for this newly emboldened Japanese Prime Minister? What is she going to prioritize?
Sure. Yeah, the inflation has been a long-term concern, but before doing anything, she first of all has to get the budget for the year starting in April through the diet. That's priority. You know, the ruling coalition is still in the minority in the upper house, so some amendments there are possible actually, as we saw last year. But given now the LDP has a solid majority in more powerful lower house, this should be a manageable task, I guess. Then once that budget checkbox is the budget is done, she probably moves on to sales tax cut. She already pledged suspending 8% consumption tax on food for 2 years. She now needs to think about how she will finance 5 trillion yen required for the measure. Then there will be potential market turmoil because of that.
Erika, great stuff. Thanks for the update. Really appreciate it. Erika Yokoyama in Tokyo, updating us on the Japanese political story. One of the kind of risk events that we've been watching into this week. There are plenty more still to come. Keep an eye on what's happening in South Africa. You've got the Indaba conference taking place. Plenty of Fed speeches coming through as well today. International Energy Week is kicking off in London. You're going to see plenty of names coming through. NFIB, small business optimism. That feels like an important data point, given the kind of the rotation we see towards smaller mid caps. Lots of data out as well. US jobs Wednesday delayed. UK GDP Thursday, Friday we get US CPI plus the Munich Security Conference as well. So that's going to be an interesting one to watch out for. Let's talk about kind of where we are with these markets though. Big day Friday, kind of tough week last week. Big day Friday, equities come back. Are we on a sounder footing, or was that just a short covering rally that still leaves us with potential for volatility? Scarlett Montgomery-Koenig from our markets team joining us. Michael Pasika, European equity strategist, joining us. What do you think, Mike?
It's a good question. Look, we had a huge washout in software stocks.
Yep.
You look at positioning now on that sector. It went from like 18% last year, according to Goldman Prime Book, into like 3%, which is like a record low. So literally, it's been completely sold, especially on the hedge fund side. I think now the real money, like long money, is also selling. But we are like, honestly, we had a proper sell-off on those, and not just in terms of volume, but also in terms of proper exposure from asset managers. So You could argue that we have seen a lot of the capitulation in there. Does that mean we need a rebound, or does it mean it's like uninvestable and no one wants to touch it? Maybe. But I would say the bulk of the outflows has happened.
So that's a key dynamic. And it's interesting that earnings actually for software stocks in the S&P 500 are forecast to rise, not drop. The rotation trade is also part of that as well. How convinced are you that that is a sustained theme?
So the rotation trade has been ongoing for some times now. We've seen a rotation out of US equities into international equities, Europe, Asia, emerging markets. And also within the US market, there's been a very strong rotation into small caps, into other sectors. Last week, if you look at ETF flows, we had a record outflows from tech ETF into other sectors of the US market. So all the other sections of the market are getting inflows. And you can see it with the outperformance of the S&P equal weight compared to the S&P 500. This is very typical of like a proper rotation going from one side to the other.
Yeah, absolutely. And we saw it in Europe with lots of people talking about dispersion. Realized dispersion in Europe was pretty high. So the volatility, there's drama in the narrative, but it's not shown at the overall index level. Skylar, what did you take away from last week and that dynamic that we were just hearing about from Michael?
Yeah, I mean, I think you need to be more considerate when you're picking stocks, and that's something that's come across the board, right? But generally what you see is that when you have these diversions between earnings and equity performance, they don't last for very long, because at some point you derate and you become cheap enough that people still want to buy that. And so I think, eventually you'll get there with software. I do wonder more long-term, though, because we had this massive divergence between US and European equity performance versus actual earnings, whether or not that corrects, because that implies a bigger move, and whether or not the US begins to outperform again as those earnings have come in quite strongly.
Is it getting harder to buy the dip?
I think it is. It definitely is, because people are cautious around the idea that some of these things are overpositioned. Maybe now that we've had to clear it, it becomes less hard. But I think it also becomes harder because you're worried about how you hedge that, right? We've seen that precious metals aren't helping you as much as they used to. People are worried about government bonds more generally, about yields rising on higher term premium. Just there's greater risk within the system. And you have all these headlines going across you that just make it harder to see what it is going forward, especially because some of the moves aren't fundamentally driven.
Skylar, I wanted to ask you about what's going on in UK politics, because we have not a huge amount of movement in cable, but the dollar's on the move, so there's that. But in the euro against the pound, it did start a couple of hours ago, but we have this gradual weakening of the pound against the euro. Bond markets a little calmer than they could have been, given the politics in front of us. Things look hectic in UK politics. We don't know where this is going to land, but what do you make of the movement in FX this morning?
Yeah, I mean, I think it's because we've had a couple of these kind of shaky events within politics in the last few months, and so there's a higher bar for reaction. What I would say, though, is we were doing so well on the pound. As in post-budget, fundamentals were looking stronger. Growth had become perkier, inflation had peaked, so you could get those cuts. And that means that there's not a risk premium priced in anymore. So you had the gap between rate differentials and Euro GBP close quite significantly, and that political risk isn't going away. There's a by-election at the end of February, there's local elections in May, and it's just downside risk from there. So you should probably price a bigger premium.
Michael, do I hide out in UK stocks, though? Because if the pound goes down, doesn't that mechanically help the FTSE 100?
It does help it. The thing is, like, investors are not interested in UK stocks. No. They don't want to buy.
Just another reason not to buy.
No, actually, that's not true.
We find some voices who are quite...
The Frenchman says with a sense of glee.
Yeah, we do have some guests, and they're not all British.
The Frenchman would say that the CAC 40 is doing way worse than the FTSE 100. Yeah. So I'm okay with that. It's fine. No, there's a lot of good stocks in the UK. It's still a lot cheaper than a lot of other markets. So there is some interesting flows there, but every time there's something going on with the UK government, people just want to stay away. Oh, this is UK stocks, I'm staying away.
Yeah, we've seen that before. Michael, Scarlett, thank you very much indeed. That wraps up the show. Plenty more still to come. We've got the European Commissioner for Competition coming up very shortly on the Pulse. Look forward to that. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
The gamble pays off. Japan's prime minister secures a supermajority in parliament, making her the country's strongest ever leader in the post-war era. The UK prime minister's leadership hangs in the balance despite sacrificing his right-hand man over the controversial appointment of Peter Mandelson. Plus, China calls on its banks to rein in their holding of U.S. treasuries, citing concerns over concentration risks and market volatility. Now let's get straight to those markets to check the volatility that we're seeing from within and without. Look, treasuries, but also the dollar dipping because of China warning on U.S. bonds. We'll spend a bit of time on that. They say it's not because of geopolitics or the credit worthiness of the U.S. They say it's a matter of diversification. Still, it is having an impact, and yields are rising across the curve, led by the longer end with the 10-year rate up 3 basis points to 4.23%. I'm also looking at sterling because of what we're seeing with Keir Starmer under pressure, and then a couple of other things that we're looking out for. Look, gold 5,026. We have a couple of analyst notes, for example, from Goldman Sachs, looking at volatility ahead. Now, let's also look at the European markets map. That could give us a good indication of whether it's following what the U.S. was doing yesterday. You can see the IBEX and the FTSE MIB over in Italy gaining a touch, the FTSE gaining 0.2%. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, a pretty bold gamble by the Japanese Prime Minister has paid off in spectacular fashion, with Sanae Takahashi securing the biggest ever parliamentary majority for any post-war leader in Japan. It's an extraordinary reversal of fortunes for the Liberal Democrat Party, which lost control of both houses of parliament just 7 months ago. Well, joining us now is Alice French, Bloomberg's Japan stocks reporter. Alice, thank you so much for joining us. And we're all glued to the screens yesterday. When it comes to domestic fiscal policy, what is Takahashi likely to do with this big win, and how fast will she do it?
Morning. Yes, I mean, what a showing for Takaichi. I think she really kind of beat a lot of people's expectations with that huge majority. And of course, you know, we know that 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 she will be pushing ahead with these fiscal expansionary policies. She's been focusing on things like AI. Defense is a big topic for her, and I think really the sky is the limit here in terms of, she has such a huge majority in Parliament. She will no longer have to listen to those opposition parties in terms of their calls for tax cuts and things like that. Now, having said that, in part of, as part of her election campaign, she was she had been promising that she's going to cut the tax on food temporarily. Now, that had caused some kind of worries in the bond market in the lead up to this election. We know that she is actually about to start speaking here in Tokyo, and so the market will be looking for signs of sort of fiscal responsibility from her, right?
Yeah, and Alex, she actually has started a couple of minutes ago, and that's exactly true. Markets want to know what she's going to do fiscally. I mean, there's also some constitutional reform that's back on the table. But what are the markets now factoring in?
Yeah, I mean, the reaction today has been interesting, right? We saw the Nikkei and the topics, those stock benchmarks really rallying today. The Nikkei up around 4%, up a new high, crossing that 57,000 mark at one point. And this is all kind of expectations that she's going to be pumping more money into those key industries, whether it be AI, quantum computing, defense, construction, infrastructure as well, set to benefit. But of course, the outlook for sort of bonds and the yen slightly less clear. As I said before, she has sort of been part of triggering bond sell-offs in the past. The yen has also been weakening, close to that kind of 158, 159 to the dollar level, which is sort of the danger zone for intervention. And we know that sort of in the days leading up to the election, she had spoken about the benefits of the weak yen for exporters here. And so I think, the bonds and the yen are really going to be reflecting that caution. I think today the initial reaction has just been, look, we have a stable government, back in power. She has this really strong mandate. She can push forward with those spending plans. Now I think what's going to matter is how will she actually fund all this? How many tax cuts are actually going to come into play? Will there have to be extra bond issuance? And I think that the bond market and the yen is going to be stricter on that side than the stock market.
Alice, thank you so much. Alice French there, Bloomberg's Japan stocks reporter. Again, the Japanese prime minister, after her big majority win, actually started speaking a couple of minutes ago. She's saying she got strong backing from the public to pursue her policies. We'll look out for any detail coming out of Tokyo. Now, Bloomberg understands that the Chinese regulators have advised financial institutions to rein in their holding of U.S. treasuries over concerns of concentration and market volatility. Well, with us now, Sylvia Westall, Bloomberg's managing editor for FX and rates in EMEA and the US, and Eric Lonergan, head of discretionary macro at Calibrate Partners. Eric, Sylvia, thank you both for joining us. Eric, let's start off with you. I know you have an interesting play on actually German bonds as a way to hedge on AI. But actually, I mean, is this the start of a sell-off in US assets?
I think no. I mean, I think, if you think of what drives U.S. bond markets, and you've seen that over the last weeks and months, is a combination of things. It's predominantly U.S. domestic interest rate expectations. I think, if China is to impact the exchange rate by telling its institutions to sell U.S. assets. We've seen the renminbi's been strengthening pretty persistently against the dollar. I think Americans would be very happy for that to continue. I mean, whether China can cope with the stronger currency, is another question. There's still a shortfall of domestic demand. There's still domestic deflation. It is still predominantly an export-led economy. So structurally, that hasn't really changed. If you said to America, or you looked at it as in terms of the two major geographies, and you said the Chinese currency is going to go up against the dollar, nobody's really bothered. The big call for U.S. bonds is what happens to U.S. interest rates.
Right, of course, as always. But we have, Sylvia, I mean, we've tried to understand whether there was a kind of underlying current of U.S. assets being sold off because of the politics. So even if in the shorter term it's not influencing treasuries as much as Kevin Warsh, are we seeing the foundations of something shifting?
Well, I think the timing is interesting because we have seen this sort of shift away or diversification from other countries. You have India and Brazil. We have had China buying less. But I think in the overall picture, we did see treasuries dip on the news, although there is kind of the markets digesting everything that's happening with Japan as well. I would say that, there are a few sort of to-be-sures here. The first is that when you look at the latest data for overseas holdings of treasuries from November, they were at their highest on record. So people are, holding, foreign countries are are holding US assets. It might just be different countries. You had sort of Norway and Canada and Saudi Arabia offsetting some of those others. And overall, it was a really good year for treasuries last year. It was a good year to hold treasuries. They did well, compared to their peers. So I think there is sort of a longer-term picture here that it builds into, and there's the timing of it. But overall, there are other factors kind of feeding into this.
Yeah. I guess it's a gold play.
In what sense?
I mean, if you see a shift from central banks away from U.S. assets, then they buy gold, which is why we've seen the rise, notwithstanding the massive fall that we saw last week.
100%. I mean, the only problem with the gold hypothesis is this kind of, the debasement theory is usually that you've got an inflation problem. However, the evidence is actually that inflation's coming down. I mean, I think what's happening really with gold to me is speculative, and then you have kind of you backfill a narrative about central bank behavior. But broadly speaking, it's just a trend, and as we've seen, it's become a highly speculative trend reflected in the elevated volatility.
So, Eric, I'm quite intrigued. German bonds, the best AI hedge. So if you feel like there's an AI bubble, buy German bonds.
Well, I think we are in an AI bubble, but one's got to be very clear what you mean by that. I mean, to me, a bubble, this does not mean AI stocks are overvalued or the stock market is overvalued. What it really means is that asset prices are hijacking social activity, right? And so a bubble is a social, psychological phenomenon. I mean, it changes behavior. Everybody's talking about AI.
That actually a bubble is what you get fired for not owning.
I mean, there's some truth in that, but what I mean is stock prices are changing behavior. And what you're seeing is, because we haven't seen this before, you get extraordinary volatility in asset prices. You get a very significant compression in people's time horizons. Everybody becomes myopic. So if you look at asset price behavior, rising prices and rising volatility in stock markets, that is typical, really, of a bubble-like environment. And I think that's the environment that you are in. And I think, for me running a macro hedge fund, I want to have exposure to AI because I think there is going to be extraordinary price volatility in the next 12, 18 months.
But you can be in a bubble that never bursts. So when are you expecting for something to come down?
Yeah, well, I think you will get ferocious volatility within it, right? So what you've already seen this year, so suddenly Korean stocks, no one's interested in them in the middle of last year. Then all of a sudden people think, oh, wow, actually there's AI exposure. They go up 70% in 6 months. You saw that with Google in the second half of last year. You're seeing the reverse of that with software, which is profound fear. So all of a sudden people go, oh, there hasn't been a change to earnings forecast, but we don't know if these businesses are going to survive. Within the debris of the software sector, there will be huge opportunities, right? To me, the bond market, I think one of the really big calls is the other dimension of an equity bubble. And the most interesting phase is when it starts to impact the economy. And the big call now is, what does it mean for interest rates? And this is where Kevin Warsh is key, because he is...
Always.
He's the Greenspan, right? He thinks this means not just higher growth rate, but lower interest rates. And that will completely de-anchor valuations. But that has profound implications for the bond market. I think European bonds, particularly as you go 10s, look extremely attractive. You've got a very steep curve. You've got a lot of term premium. You've got a central bank that's more powerful than any country in Europe. So talk about central bank independence. Arguably the ECB is kind of last man standing.
Let's also talk about the UK. So the UK, we're seeing so much pressure, actually, on Keir Starmer. His future seems to be in the balance, although there's no clear way of Labour actually, changing him if he doesn't step down. What kind of impact can we see on markets?
Sure. So we saw kind of some of the pressure into gilts on February the 5th. So last week when these sort of this idea started swirling. Often you find that the gilt market moves quite fast and the politics catches up a little bit. So we saw that there. So I think, the thing that the bond market's really looking for is this idea of these fiscal plans that the UK has, and they're very much tied to sort of Starmer-Reeves doing that together. The expectation would be that if Starmer were to go, probably she would too. And what does that mean for that kind of plan there? So who would come next? Would they stick to those fiscal rules that have been sort of so important in that balance and that kind of understanding there between the bond market and politics? And overall, I mean, the one that's very clear is the pound. Very bearish bets on the pound from hedge funds. It's been down. You've had the dovish BOE. So overall, we're going to come into a period of, more pound weakness and to come. So I think, question marks there for the bond market, and then the pound is really kind of down from here.
And Sylvia, your take on Japan, because we're still hearing actually from the Prime Minister. I mean, the big question is fiscal.
Exactly. Well, I mean, I think Takaishi did, did discuss and brought about this idea of bringing in fiscal responsibility. And for now, again, we haven't seen a huge move on Japanese government bonds right now. I think perhaps people are taking that in their stride. There's lots going on. I guess, we've seen some auctions. They kind of had up and downs. They've had some kind of good Japanese bond auctions. The question mark is about whether there'll be more issuance to come. I think it's been very much a market that's been sort of quite reactive and seeing where things are going. But right now, for now, they're giving her some time to put her program in place.
Eric, going back to the Fed, what do you expect Kevin Warsh to actually do? Because, does he have to get market credibility first and foremost? And does he change? It's my understanding that actually he will change the way he views the U.S. economy through the lens of AI.
I think you're absolutely right. Both of those points are key. This is there's no other job like this in the world, right, where trillions of dollars of capital are moving on every word that you speak. What's far more important than doing what you're told by the White House is getting it right. And if the market either senses you have to establish market credibility, there have been episodes in market events whenever the Fed chairman has transitioned. But I think you're absolutely right. I think what he will first of all do is change the narrative. And this is where kind of the availability bias will play a role. If you get Fed staff to do a whole load of research into AI, you will convince the FOMC that it matters more than they believed beforehand, right? And so I think that is going to become center stage of the debate. And that, will precede violent asset price volatility. If we really start to believe that this means lower interest rates and higher terminal growth rate, how do you value the stock market? That is when you get the really, really severe price volatility.
With spillovers to countries like the UK, that although the Bank of England will push back, they're still linked to what the Fed does.
Yeah, well, the UK is fascinating for all the reasons that you've given. I'm actually not worried about medium-term fiscal policy because I actually think there's a huge political consensus that's terrified by the gilt market. So I think even post-Starmer, I suspect you'll get tight fiscal policy in the UK or prudent fiscal policy. You will get volatility in between. But the other thing that nobody talks about in the UK is the UK has the biggest share of professional services in employment. It's got a huge legal sector, it's got a huge accounting sector, it's got huge consulting, it's got financial services. So in terms of the private sector exposure to AI, when policy has pushed up the cost of labor. So the incentive for the private sector to replace labor with technology is very elevated. So I think, the UK is in a really, really interesting juncture where part of the distribution is big decline in interest rates and very considerable asset price volatility.
Thank you both for joining us. Bloomberg Sylvia Westall and Eric Lonergan, head of discretionary macro at Calibrate Partners. Coming up, the EU has issued a warning to Meta over its policies around AI assistance on WhatsApp. We'll be speaking to the European Competition Commissioner, Teresa Ribera, next. This is Bloomberg.
Up-to-the-minute global news whenever and wherever it happens. I'm Hazlida Amin in Davos, Switzerland, and this is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, we have quite a lot going on. Let's look at a market check to give you exactly the latest. A lot of focus, of course, on the fact that China has urged banks to curb U.S. Treasuries exposure. This not because they say they worry about U.S. creditworthiness, but because of market risk. Now, Meta has been hit by an EU warning over policies that block the use of rival AI assistants on WhatsApp. Well, Oliver Crook, Bloomberg's chief Europe correspondent, is with me here in London. Before we go to the Munich Security Conference, let's also get more on the story with Teresa Ribera, the European Competition Commissioner, who joins us from Brussels. Thank you, EVP, for joining us. There's quite a lot going on when it comes to tech and when it comes to Europe. We'll talk about Meta in a second, but what kind of, how are you expected to be received by the U.S., given everything that President Trump has said about Europe slamming tech?
Well, I think that it is very obvious that we need to defend and to implement, to enforce our rules, to defend the market, a well-functioning market, a competitive market, where there can be an option for players to provide their offers and for consumers to decide which option they prefer. So the abuse of a dominant position in a given market that prevents any other alternative for final users is not good news for anyone. And it is not good news in Europe. It is not good news in the United States. And in this case, we are worried because we sense that this may be the case when forbidding the access of other providers of AI instruments that use WhatsApp. So this is the message that we wanted to send to Meta. Why we do not start thinking of an interim measure preventing this stop of available options.
Yeah. Commissioner, when you're saying that Meta risks a temporary European Union ban, how do you think the U.S. will react to it?
I think that for anyone being at the forefront of any institution, we respect the enforcement of the law. So I don't know how it may be read by any government, but my sense is that this is not connected to politics, but connected to well-functioning markets and protection of consumers.
I'm not sure the Trump administration will view it necessarily in exactly the same way, but I want to ask you a more broad question about AI and regulation. Obviously, this is a technology that will disrupt the world in a number of different ways. It's a new sort of area of functioning. Are we going to see more cases like what we're seeing against Meta, against other technology firms? And what kind of concerns are you seeing in terms of concentration and antitrust in the world of AI more broadly?
We are not looking into the origin or the headquarters of any given company. In this announcement that we have made today, these interim measures, Italy has already taken a similar approach. We are opening a procedure so that if Meta does not agree, they can defend, they can take whatever information they bring to the table to respond to our question, and it is not a final decision. I think that AI is changing the world. We all, consumers, citizens, providers of public services, providers of private services, industrials, rely very much on the quick development of digital services and AI. And I think that it is good that there can be many players that could challenge the traditional incumbents. So it's good to be successful, and it is also important to ensure that those looking into the future are not prevented to develop their services because of those that have succeeded in the past. Great to compete, great to have these open markets for everybody.
And in another area that's not quite as new as AI, but still relatively new, is this world of streaming. And we now have this sort of potential acquisition by Netflix of Warner Brothers. This is something that certainly will attract some scrutiny from you. In a sort of preliminary fashion, what kind of concentration risk do you see from those deals? Do you see one of the two offers as more risky? And have you had any contact with any of the CEOs involved?
No, we haven't got any contact, and of course it is quite clear that this is something which is not quite clear yet what it is going to happen, so we follow what it is going on. And we will be paying attention to whatever operation, consolidation, acquisition may take place. For the time being, it is not clear. So the bids are there, the discussions are there. We will have an eye on what it could mean for the European markets, as it is the case in the United States, but there is no operation to be assessed yet now. Not yet, sorry.
Commissioner, could you talk to us also a little bit about Google? So what's your vision for how Google should operate in the EU? And could you ever see a Google that's actually different in the EU than it is to the US?
I think that Google is quite a relevant player, both in the United States and the European Union. And I think that in certain markets, in certain services, they have a very relevant position. In others, they are not the front runners. There are others that have taken a higher share of the market. And I think that it is quite important to remind ourselves that we came up with a regulation to introduce predictability on what it is the expectations in terms of the obligations and the rights in an upfront manner, so that any gatekeeper, anyone having a relevant position in a given market could know upfront what it could mean to ensure that users were protected.
Since the last time you spoke to Bloomberg, has your thinking about Google's ad tech changed at all?
Sorry, that I didn't get your question.
What's next for Google? Is there anything in terms of ad tech or something else that you don't like when you look at Google?
Oh yes. Sorry. I hadn't heard that. No, I think that that is where we are right now, and I know that Google is making efforts and having conversations with the services, so to ensure that this very important flourishing business case in terms of advertising through the different technological platforms are not restricted or is being biased by any given preference towards Google's decisions, toward Google's priorities or preferences. And the efforts are ongoing. So we have heard, we have paid attention to the decisions being made in the United States, including by the courts, and I think that it is good that we go along similar lines in the different jurisdictions, but the process is not yet over. So we will be coming up once we have a clear understanding on how far we can ensure that the final solution is equal, inclusive, and does not discriminate competitors.
And so we've dealt a lot with the sort of U.S. side of things. You're also looking at things on the China side of things, subsidies into, for example, wind energy. This is an investigation that you have now launched. If you could give us a little bit more in terms of what you're looking at specifically from China, and this is a criticism, illegal subsidies from China, that we see not just sort of leveled against the wind industry, but across many other industries from a number of people in Europe. Do you expect to have more investigations in order to prevent that sort of dumping into the European market at this very critical moment for European competitiveness?
Yes, this is something that came up last week. We have been working on that for a while already, and we want to clarify and to ensure that we will pay attention to prevent any illegal subsidy that could undermine the level playing field in the European market. Of course, wind is a very powerful way to produce electricity, and it has a huge interesting and modern industrial value chain behind, and we are proud of what it has been done in Europe, complying with high standards both in social and environmental rules and innovation and so on and so on. If anyone wants to enter into the European market, we are more than happy, but it is important to be transparent and not to dump on prices.
Commissioner, as always, thank you so much for your time. Teresa Ribera, the European Competition Commissioner. We'll be back. We'll have plenty more. This is The Pulse.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacroix here in London, and these are your top stories. The gamble pays off. Japan's prime minister secures a supermajority in parliament, making her the country's strongest ever leader in the post-war era. The UK prime minister's leadership hangs in the balance despite sacrificing his right-hand man over the controversial appointment of Peter Mandelson. Plus, China calls on its banks to rein in their holdings of U.S. treasuries, citing concerns over concentration risks and market volatility. So the UK Prime Minister Keir Starmer's future hangs in the balance after Morgan McSweeney quits as his chief of staff. That's after a backlash over Peter Mandelson's appointment as UK ambassador to Washington.
Morgan McSweeney's resignation, it's just the beginning, because over the next few weeks, what is going to be released via the Intelligence and Security Committee is the depth of messages and emails that have gone on in and around number 10 in the run-up to the appointment of Peter Mandelson and subsequently, and also his involvement at the heart of this Labour government in the run-up to the election and afterwards. And I think as those come out, if the Prime Minister is still Prime Minister at that time, that will effectively finish him off.
Well, that was Richard Tice, of course, Deputy Leader of Reform UK. Now, for more on all of this, we're joined by our UK government reporter, Joe Mays. Joe, thank you for joining us. You've been following this right from the start. Can Starmer last the week? How will the Prime Minister actually try to shore up his position?
Yeah, it's looking very difficult for him. I mean, tonight he's going to address Labour MPs at the Parliamentary Labour Party's weekly meeting, and that will be a pretty crunch moment where he has to convince them that he is still the right person to be in this job, that he has the authority to stay in this job, something that has been quite significantly undermined by the whole Mandelson episode, and the fact that the person who advised on the appointment of Peter Mandelson, Morgan McSweeney, he's resigned, but the person who actually did the appointing has not, and that's the Prime Minister. So there are clearly, knives out for him amongst Labour MPs. Indeed, some in the cabinet might be on watch to be potentially telling him he should go. So, the walls are kind of closing in around Keir Starmer here, and he's got a real job in his hands to fight back.
But Joe, I mean, I've been told a couple of times that actually Labour are not as aggressive as the Tories, and they actually don't have a mechanism to make sure that the PM stands down. So how does this work? Do they wait until there's also this special election later this month, and if he does really badly, then they'll force him out?
I mean, if you're one of the people who wants to be Prime Minister, perhaps someone like an Angela Rayner or a Wes Streeting, you are looking ahead to those moments. Like you mentioned, February 26th, there's special election in Gorton and Denton where Labour is expected to lose. Plus, you have local elections in May where Labour is again expected to suffer heavy losses. And you would have thought that those two events probably would definitely finish Starmer off in terms of enough Labour MPs would want to see a change, and that might be the optimum moment to strike as a rival and try and push him out. And the mechanism is you get 80 Labour MPs to formally nominate you to the Labour governing body, and that would trigger a contest. Now, Starmer might himself just resign of his own accord before that moment. There are different ways it could happen. But yes, there's a reason why here Starmer could remain as like a lame duck Prime Minister until those events happen. But either way, it's looking very, very bad for him.
Joe, as always, thanks so much, and also fantastic reporting from you and the team. Joe Mays there, our UK government reporter. Now, let's see what impact the crisis is having on markets. We're joined by Ven Ram, cross-asset strategist at Bloomberg MLive. Ven, as always, thank you. What's having a bigger impact on the pound? Is it politics or the Bank of England's dovish stance?
Morning, Francine. At the moment, it's definitely all about politics. I mean, we have seen the pound come off about 2% from its peak, just seen a couple of weeks ago, and it looks like it's going to fall another 2 to 3% if these rumors about pressure on Keir Starmer persist, and it looks like he may be ousted from office. I think that, you know, what will add to the tailwind against the pound is the fact that, you know, the Bank of England is willing to cut rates. We saw the Bank of England deliver the most dovish policy outcome in a long time. It was the most dovish statement that we got. So I think that, you know, both are going to collude, both factors are going to collude and keep the pound lower for longer.
So could there be more pressure on the pound if the next leader of Labour is from the left of the party?
I think so, because, you know, if we get the impression that, you know, this political stalemate is going to work at cross purposes for the pound, I think it will weigh on UK assets as well, and definitely we have already seen the reaction in long-ended gilts where the yields are rising. So that is a definite sign that there is a risk premium being embedded into gilts and indeed into UK assets. If you look at Euro GBP, that's pushing up as well to the highest this year. So I think that, you know, if there is a sense that, you know, the next Labour Prime Minister could be someone who is fiscally less conservative and more willing to spend, I think that, you know, that will put the pressure, that will heap up the pressure on the pound.
Then what are you looking out for in the next couple of weeks? I mean, again, if there is some kind of leadership contest or if he gets put down, again, what's worrying the markets more? Is it fiscal? Is it, you know, is it that the fiscal has an impact on the Bank of England afterwards?
Well, I think in the short term, it's definitely the implications for fiscal that will override what happens with the Bank of England, because the Bank of England has a reaction function that is also predicated on politics. So if there is heightened political uncertainty, they have the wiggle room to defer their decision that may hurt the pound, which i.e. hold off on an interest rate cut. But I think that in the short term, to the extent that there is greater political uncertainty, you will see the 10-year and the 30-year yields bobbing higher, and definitely the bigger asset, the bigger security that will take the hit is the 30-year yield, which we have seen repeatedly in the past couple of years. It's come under pressure because investors are risk averse to holding longer dated gilts in the face of lack of fiscal discipline in the UK.
Ven, thanks so much. Ven Ram there, MLive's cross-asset strategist. Now, oil prices falling as tensions in the Middle East ease after Iran and the U.S. engaged in indirect talks on Friday in Oman. Iran said it agreed with the U.S. to continue these discussions to de-escalate tensions and avert a military confrontation. Now, for more, let's talk to Paul Wallace, Bloomberg's Middle East managing editor. Paul, thank you for joining us. What did the two sides have to say about the outcome of the talks?
I've seen they were both broadly positive about them, both the Iranians and the Americans, and they agreed to hold more talks, which we think will happen late this week, perhaps on Thursday, again in Muscat, the capital of Oman. I think that was the best possible outcome for those who do want a diplomatic deal between the U.S. and Iran, and for U.S. strikes on Iran to be averted. They weren't going to reach a deal in a single day. The issues they're dealing with are too complicated for that. But the fact they basically agreed to talk again, like I said, probably this week, was a positive sign in that sense. And I think that's why we've seen oil prices fall off a bit.
Well, we know that the Israeli Prime Minister Benjamin Netanyahu will visit Washington this Wednesday to meet with President Trump. So how much pressure is he putting on the White House to broaden the scope of these talks beyond Tehran's nuclear program?
Well, I think this is a very interesting visit to Washington from Prime Minister Netanyahu, because it wasn't in his schedule last week. At least we didn't know about it. The Americans still haven't announced it publicly. So it seems to have been, hashed out quite last minute. Seems as if Netanyahu was the one that wanted this. I think there's clearly some concern among the Israelis about a deal per se. They say the Iranians are simply not trustworthy, and that any deal they sign with the Americans, won't be worth the paper it's written on. They're also nervous about any deal that excludes issues such as Iran's support for proxy militias around the Middle East and its ballistic missile programs. Those ballistic missiles are very much a threat to Israel, and they've been fired upon Israel both last year during the 12-day war in June and in 2024. So that is something Israel wants to see discussed. There is certainly some Israeli commentators and officials in government they would like something that pushes for regime change in Iran. Whether they'll get that or not is of course unclear, and it'll be up to Donald Trump to decide. But there's certainly still a good chance of U.S. strikes on Iran at some stage, even as these talks between them and between the Americans and Iran seem to make more headway. They could still break down, and in that event, I think, the chances of strikes will be quite high.
Paul, thank you so much. Paul Wallace there, Bloomberg's Middle East managing editor. Now, UniCredit says it plans to return about 50 billion euros to investors over the next 5 years. It follows a 10% rise in fourth quarter profit that beat estimates. The bank has also forecast net revenue to grow at an annual rate of 5%, hitting 13 billion euros by 2028. We'll be speaking to the chief executive, Andrea Orcel, on this program at 9 a.m. London time tomorrow. Now, some of the world's biggest mining industry executives and government ministers are in Cape Town for the annual African Mining Indaba. The event is the continent's biggest such investment conference, with discussion this year focused on critical minerals and their role in Africa's development. Well, Jennifer Zabazaja, Bloomberg's chief Africa correspondent, is also there. Jen, good morning. So how have global tensions over critical minerals changed conversation at this year's Mining Indaba?
Good morning, Fred. I mean, if you take a look at where geopolitical discussions are right now in the conversations that we're having here, they really are the backdrop going into these discussions over the next few days. If you start with the conversations that had been had just a few years ago when I first started coming to Mining Indaba, it was one about extraction and exploration. Now there is really a focus on shared prosperity throughout the whole value chain. So focusing in not just on upstream and exporting raw minerals, but also this focus on how you can capture downstream value, not just for a lot of the developed world and their own idea of critical minerals, but also what does that mean for Africa? So earlier in the morning, I was speaking with the Africa Finance Corporation president and CEO, Samaila Zubairu, who was talking about the opportunity that exists right now, just given a lot of the reframing and the shifting of narratives and alliances globally. And potentially this is the opportunity for Africa African mineral producers to actually step in and have a seat at the table and talk about how can this work integrated regionally throughout the whole entire continent. So a lot of the discussion today and throughout over the next few days is focused then on what are the needs then for a lot of the developed world, what in fact can some of these governments capture as export revenue, but then also how can they focus in on what this looks like for them domestically and also regionally, and how can they use their own mineral resources to develop and industrialize themselves. One of the key focuses, Fran, is this idea that critical minerals potentially looks different in different parts of the world, and potentially instead of saying critical minerals as a blanket term, it should instead be strategic minerals, in fact.
Jen, how do Africa's critical minerals compare with China's? And again, what role can they play in the development of Africa's continent?
Right. Well, Fran, if you take a look at some of the numbers, I was actually just looking at them here. Africa actually hosts $29 trillion in mine site mineral value, but actually they're actually only capturing 8.6 trillion is actually underdeveloped and undeveloped. And a lot of that speaks to really the opportunity that exists here just because of the fragmentation and the lack of data that has existed in the past. But still, the opportunity to be a part of the global value chain and the need for critical minerals more broadly is definitely of the moment. If we take a look at where Africa sits in comparison to China, as you were just alluding to, Fran, there is an opportunity with countries like Angola. There's also opportunities with Zambia, the DRC, which is one of the major producers of cobalt. And of course, we talk about gold. West Africa has quite an opportunity when it comes to capturing some of the value that we're seeing from gold prices right now. But still, what we were speaking about earlier with the Africa Finance Africa Finance Corporation president and CEO is that it's not necessarily that Africa is, in particular, the focus in on rare earths, right? But there is still an opportunity to focus in on some of the other minerals that could potentially be a part of the whole entire value chain, not just for the industrialization of the developed world, again, but potentially of some of these African economies. So still could be a major player long term. And so there really is a focus not just on what is it that other countries need, but how can this be a long-term play? How can they be a part of the development of this moving forward?
Jen, thanks so much. Jen Frizabazaja, there, Bloomberg's chief Africa correspondent. And Jen will be speaking to some great guests throughout the event, including Robert Friedland, the Ivanhoe Mines founder, a little bit later on this morning. Now, the Hong Kong pro-democracy activist Jimmy Lai says he has been sentenced to 20 years in prison for collusion and sedition. It's the harshest sentence to be given under the national security law imposed by Beijing in 2020, and is effectively a life sentence for the 78-year-old. Lai is a UK citizen, and the UK Foreign Secretary has described it as a politically motivated prosecution. Coming up, what next for Japan following Sanae Takashi's landslide election victory? We'll dive into the conversation with a professor of Japan's international relations from the University of Sheffield. That's next, and this is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
The trading
day is about to start.
And you're already looking for that edge.
The Opening Trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your Opening Trade.
Only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Takaichi is unbelievably pro-business. You know, she is going to build national champions. She's going to mobilize more public resources to actually build industrial champions in Japan.
So Takaichi, in fact, although she does have this very powerful new majority in the lower house, still faces some quite daunting problems in trying to help Japan overcome a long period of deflation, which now has turned into a period of pretty dramatic inflation.
Her very large supermajority victory ensures that there's at least stability and consistency in her economic policy going forward, and you're not going to see these constant wavering policies.
Just some of the guests we've had on Bloomberg TV reacting to the Japanese Prime Minister's landslide election victory. Now, we also just had that press conference. Despite the extraordinary, actually, nature of the appointment, the nature of her victory, that was a pretty by-the-books press conference. She largely reiterated her policy pledges without too much detail, but also reiterated the need to cooperate with opposition parties despite their overwhelming defeat. Now, we're joined by Hugo Dobson, professor of Japan's international relations at the University of Sheffield. Professor, thank you for joining us. What are you expecting the Prime Minister, after this pretty incredible victory, to do for Japan?
Good morning, Francine. I think first and foremost, we should probably take stock of this extraordinary victory that you just referred to. I mean, let's appreciate the scale of this. It's historic. It really goes beyond the interests of Japanese election nerds like myself. You know, she surpassed her mentor, Abe Shinzo, who managed to secure 294 seats. She surpassed the LDP's record of 300 seats in 1986. She's basically delivered its largest ever victory and really sort of breathed life into a party that 2 years ago really seemed to be on the ropes. It was breaking apart. Its factions were moving away from each other and disbanding. It had lost its majority in both houses. It really, people were talking about the end of the LDP. Well, Takaichi personally has sort of led it back to a position of not wholly dominance, I would say, but it's definitely in a strong position so Takaichi can progress with her domestic and international agenda. I'm sure she is probably feeling a sense of pride, a sense of vindication, and a sense of relief. She called a snap election a strategy that was often used by a predecessor, and she's delivered on it.
But, Professor, what does it mean? So if you look at foreign policy or domestically, where do you think she makes a bigger difference?
So I think in terms of domestic agenda, as some of your experts have said previously, she's going to provide that stability that's been lacking in Japanese politics since Prime Minister Abe resigned. She's going to be able to pursue her agenda of tax cuts and stimulus. Markets are responding positively to this. The yen has strengthened, but the devil is going to be in the detail. Clarity is going to be required on how these stimulus packages are going to be funded. So there's still work to do there. So that suggests that she can forge ahead, but there's still going to be battles to be fought and compromises to be made. So I think generally speaking, we can see that, yes, she's in a strong position, but she will have to work with the opposition parties, as she has mentioned already. Remember, she may have a dominant position within the lower house, but she still lacks overall majority in the upper house, which will could be circumnavigated through the 2/3 majority in the lower house, but isn't likely to be approached in that way, and will require her to work with opposition parties.
I mean, Professor, I mean, it's very clear that this feels like it's around her personality and her policy, you know, rather than her policy orientation. So I know many people are describing this as the kind of presidentialization of the parliamentary system. On fiscal policy, what can we actually expect from her? I know that, again, there's a lot of concerns about overspending or how she wants to you know, put state-led investments in areas critical to long-term strategy and security at the heart of her policy.
So, as you said, Francine, at the outset, this does appear to be the presidentialization of Japanese politics, which is something that's been happening for a while. You know, I think we can understand this victory in the election as we can with any election. It's partly the weakness of the opposition parties, but it's also the strength of Takaichi. And it seems to me that she's sort of combining the strengths of two former prime ministers. Your viewers will probably remember Prime Minister Koizumi, who definitely played the popular card and seemed to have some kind of infinite aura that went down very well with voters. So she's tapping into that. She's providing a bit of colour in Japanese politics, which, quite frankly, can be quite a drab, grey world. But she's also combining it with ideology and policy from her mentor, Abe Shinzo. And she'll carry on some of that ideological position that Abe has followed. In terms of what we can expect fiscally, as I say, the devil will be in the detail, but we can see a slight move away from her mentor's position of Abenomics with her not putting so much emphasis on structural reform as Prime Minister Abe did. Instead, she's trying to look for areas where investment can lead Japan in new industries like AI, or possibly including defense industries within her economic strategies.
Yeah. Does this almost force the Bank of Japan's hands not, you know, to avoid rapid tightening?
I would think so. I think we'll see this play out over the next few weeks. I don't think we're going to see a huge change immediately. It's going to be a process of negotiation. So although the headlines may look like this provides a carte blanche, if you like, I think it's going to be a much more incremental approach.
I know there's been, again, she was very cautious in that press conference talking about China. Is this the trickiest of relationships, or is it Japan-US?
I would say the US relationship is always the trickiest for Japan. It's the central relationship for Japan. And again, Takaichi can take a leaf out of Abe Shinzo's playbook here. He positioned himself as sort of Trump whisperer number one, if you like. He exploited the interpersonal relationship. He got as close to Trump as possible and tried to influence him that way. And I think you can see that Takaichi is doing something similar. You know, Trump did come up before the election and endorse her, which is rare, if not unheard of, in Japanese politics for a US president to take a position. So I think she's in a good position to double down on Abe's approach. As regards balancing against China, that will obviously be the other major concern. But I think, again, you're going to see continuity. You're going to see Japan trying to sort of balance against China by exploiting its relationships in Southeast Asia, where similar concerns exist as regards China. And you're also going to see strengthen bilateral relationships beyond the core bilateral relationship with the US. So already Japan is collaborating with its G7 partners like the UK and Italy on defense cooperation, and also with regional partners like Australia as well. This is all part of a long-standing continuum in Japanese foreign policy. So I don't think Takaichi's landslide election is going to represent a huge sea change. I think we're just going to see more of the same.
Thank you so much, Professor Hugo Dobson there, Professor of Japan's International Relations at the University of Sheffield. Up next, it's, of course, Bloomberg Brief. They'll have a full roundup of what's happening in the markets. Now, I'm looking at treasuries. I'm also looking at yen, given what we had in Japan. The other thing we're looking out for is, of course, Starmer's UK premiership seems to be teetering on the brink as one of his key aides has quit. But Treasury slipping, the dollar falling again. This comes as Chinese regulators are calling on banks to scale down holdings of U.S. government debt. So we'll have a full roundup shortly, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
You know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning, I'm Lizzie Burden in for Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. The dollar slips and yields rise across the curve after China urged its banks to trim their treasury holdings. Meanwhile, the yen is also on the move, strengthening against the dollar following Prime Minister Takaichi's landslide victory. And all of that in a busy week for data, with a delayed US jobs report and a fresh inflation print. Well, happy Monday, everybody. We saw the gains on Wall Street on Friday carrying into the new week. We've already seen a firmly risk-on mood in the Asian and European sessions, which leaves futures stateside actually the laggards globally. You can see here we are in the red across the screen now. And meanwhile, as I say, a massive week for the bond market, not to mention the politics. Sanai Takaichi knocking it out of the park in Japan, UK Keir Starmer hanging on for his political life, and a raft of US eco data on the docket. Already we have, as you can see, Treasury yields up across the curve, led by the long end after China urged banks to curb their exposure to US government bonds. But let's dive into the single stock story now. For more, we've got Abu Omar.
Hi, Lizzie. Yes, we are watching Hims and Hers very closely today in the pre-market. You can see it's 14% down. And that's on the back of a story about them pulling back on selling the copycat Wegovy pill. That was after the FDA said that it was cracking down on copycat pills. You know, the story on the healthcare side is with Eli Lilly as well. But that's a little bit different. The story on Eli Lilly is that it's teaming up with a Chinese biotech firm, $350 million deal there to tackle medicine when it comes to cancer. Novo Nordisk in the European Open was up more than 8%, but that is similar to the Hims and Hers story because, you know, Novo is the OG Wegovy pill manufacturer. Flip the board and we can see that Kroger is doing well this morning, and that's on the back of a new CEO announcement. Ex-Walmart chief, the stock is doing pretty well on that news this morning. And then finally, we've got Nexen, small cap in the S&P. But what we know about this is that there is a little bit of M&A activity here in the morning. We know that Sky reported this morning that a suitor is exploring an offer for at least $10 a share in Nexen. So stock is reacting pretty positively this morning, Lizzie, up 16.6% in the pre-market. Lizzie.
Okay, great stuff. We'll have you back later on this hour. And coming up on the brief, the dollar, the yen, the sterling moves. We're going to discuss all of them with Jane Foley of Rabobank. And live from the African Mining Indaba conference, we'll be talking to Robert Friedland, founder of Ivanhoe Mines as well. But let's start in the US. Treasury yields rising as China is said to have flagged banks its concerns around US debt from volatility and concentration. Bloomberg's Ven Ram joins us now for more. Ven, why do you think that China's issued this directive to banks to trim their exposure to treasuries now?
Morning, Lizzie. It's part of an ongoing saga of what China has been trying to maneuver. Well, China wants to steer away from its dominance on the US, whether it's in investments or whether it's in industry. And what we are seeing is the former one, obviously. And it's an interesting story. It's a big ship turning around, but it's going to take, it will take place over time, and the moves will be gradual. If you look at China's holdings of treasuries, they were about 1.3 trillion about a dozen years ago. Now that's come off a lot, to the extent that their treasury holdings are only about 682 billion. So that's already less than half of what they had about 10, 12 years ago. And you know what the story talked about today was China directing its banks. It's not the state holdings, but the holdings held by banks, which are much less consequential to their entire portfolio. So I think that the reaction in treasuries has been muted, but it's a big story that we need to be worried about, which is one of China circling and diversifying away from treasuries, and that will have an impact on treasuries over the longer term.
Yeah, it's not just treasury yields up, of course, it's also European bond yields. Ven, do you think that's going to last?
Sorry, can you come again?
Do you think it's going to last, Ven, that we've also got European bond yields higher, as well as treasury yields off the back of this?
Well, I think that, you know, it is going to weigh on long-dated treasuries. If you have seen the 30-year yield, we have not been moving meaningfully below or above 490, but I think that the risks are to the upside in terms of yields. But if you look at the German narrative, Lizzie, I think it's a different one, because, you know, if they are going to diversify away from US, where are they going to go? They can't go to Japan because yields are surging, and they will probably face losses in the coming years as the Bank of Japan normalizes policy. And they will probably look to diversify into the European Union, which is good for German bonds, because, you know, here is an economy where yields are going to be stable, where certainly the European Central Bank is not looking to move on rates in the short term. So I think that Germany is a natural home for China's holdings, and I think that bonds will benefit from this move.
And then President Trump's Fed chair pick, Kevin Warsh, of course, has called for a new Fed Treasury Accord. What's that likely to entail?
Well, on the face of it, given his pronouncements as Fed governor in his previous life, he would imagine that he is arguing, he's very keen on shrinking the Fed's balance sheet. But today's story kind of suggests that, you know, he may be willing to collude with the treasuries. But if he does that, the treasury is unlikely to want a shrinking of the balance sheet, because that will imply tightening of financial conditions, which is not what the treasury wants. They want lower yields. So it is going to be interesting to see how Warsh behaves as the Fed chair, as opposed to what he's been saying all along. So I think that, you know, it's an open question to what extent he will be willing to collaborate with the treasuries on this.
Okay, Ven, thank you so much. That's Ven Ram. Well, over in Japan, the ruling Liberal Democratic Party scoring a historic win in the snap election over the weekend. Bloomberg's Paul Jackson joins us now for more from Tokyo. Paul, a slam dunk for Takaichi, but the question in markets surely has to be, how fast is she going to get on with her fiscal agenda?
Well, that's a good question. She's been quite reluctant to firmly commit to a lowering of the sales tax to zero for 2 years. This is one of the campaign promises. She's been very careful with her language on that. She's talking about a lot of differences among other parties about how tax policy should be carried out and the need to reach a consensus in Parliament on this. She's talking about reaching a midterm conclusion on this around about the summer. That's just from her press conference now. And I think for investors, this is the key point. I think the sales tax has become the focus of concerns about, is the Takaichi administration going to fess up? Is it going to give the details about how it's going to fund its spending plans down the line? And without more clarity about how it's going to summon up the cash to pay for measures like a tax cut or aggressive investment in certain key industries, I think markets are still going to remain on edge, even though we saw in the reaction today in markets a very positive move in stocks, as you would expect. And essentially in the yen and bond markets, a kind of reasonably calm response. And with such a landslide victory, there are a lot of positives just from the fact that we will have stable government in Japan over the coming years.
Yeah, the yen actually strengthening against the dollar this morning. How do you interpret that? How do you interpret the comments from the currency czar?
Hey, I think that could be the calm before the storm. It's kind of like a honeymoon response to the election landslide. I think we should be wary of concluding that this means she's out of the woods and that's the end of the pressure on the yen. I think still there are many factors in play that suggest there could be another move down towards the 160s. And I think at this point, that would have to end up in some kind of intervention. But let's see, over the coming days, I think we'll get a better idea as to how markets are going to absorb and digest this result.
Okay, Paul, thanks for the update. Looking at the yen at 156 per dollar right now. That's Paul Jackson in Tokyo. Thank you. Well, here in the UK, Prime Minister Starmer's future is in the balance as Chief of Staff Morgan McSweeney has resigned over the appointment of Peter Mandelson as ambassador to Washington. I was speaking to the Reform UK Party chairman Richard Tice earlier on about Starmer's premiership. Just take a listen.
Morgan McSweeney's resignation, it's just the beginning, because over the next few weeks, what is going to be released via the Intelligence and Security Committee is the depth of messages and emails that have gone on in and around number 10 in the run-up to the appointment of Peter Mandelson and subsequently, and also his involvement at the heart of this Labour government in the run-up to the election and afterwards. And I think as those come out, if the Prime Minister is still Prime Minister at that time, that will effectively finish him off.
Let's bring in Rosa Prince of Bloomberg Opinion for more. Rosa, we're looking at gilt yields higher across the curve, only a touch, but nonetheless. Starmer, of course, will have hoped that McSweeney's resignation would draw a line under the Mandelson fiasco. Has it actually done the opposite?
I don't think it's moved things very much forward, actually. I mean, it's a big deal. Morgan McSweeney was integral to Keir Starmer's premiership. It's very strange for him to be in office without McSweeney at his side. But I don't think it's either done much to shore Starmer up or to push him over the edge. I think he still remains a Prime Minister in crisis whose opponents seem unable to give him that final shove and actually get him out of Downing Street, which is sort of a lose-lose for both sides.
So do you think that it's more likely he would go after the May elections or even further out than that?
Yeah, I mean, I think that a lot of Labour MPs have wanted Keir Starmer gone for quite some time. This crisis is more acute than everything that's gone before, just because it's such a horrific scandal, really unpleasant reports we've heard about what Mandelson was up to with Epstein. It's not good at all for the image of the Prime Minister. But they keep coming back to this same issue, which is that they don't have any obvious candidate there to replace him, and they don't have any very easily pulled lever to actually trigger a contest and get him out. So he kind of clings on by default. One suggestion is that he might kind of have enough himself and think, look, I've got so little support, I don't want to do this anymore. The fact that he's actually sacrificed his closest ally in government sort of gives the suggestion that he's not ready to do that, because what would be the point of doing that if you're going to go anyway? So yes, I think unfortunately he clings on. I say unfortunately because I don't think that's good for our economy, for our country, and Britain really needs a stable government at the moment, and we haven't got that.
So you say one of the reasons that Starmer is clinging on is because there isn't a challenger ready. Of course, there are runners and riders lists going around. I wonder what you think those runners and riders would make for them, the impact of them for the markets.
Yeah, I mean, if he does fall, then there will be a battle for the soul of the Labour Party. And there are some that are more palatable than others. We have already seen wobbles in the markets in the past when some of these contenders look like they might be in pole position. Someone like Angela Rayner, for example, the former Deputy Prime Minister who's on the left of the party. You've also got a figure like Andy Burnham, not an MP at the moment, so couldn't run in this contest. But if an opening came about and he was able to get into Parliament, again, he has said we should stop being obsessed with the bond markets. So I think the bond markets wouldn't take too kindly to him, probably. I mean, I think probably the most interesting position, if Starmer did go, would be what a new Prime Minister would do about the Treasury and who they would put in as Chancellor. I think if even one of these quite left-leaning candidates put someone seen as sensible, perhaps Darren Jones or Pat McFadden, then things would calm down. So I think that's the real thing to watch once we get into a post-Starmer scenario.
I do wonder whether Burnham really means we shouldn't be in hock to the bond market. Andy, if you're listening, you can come and tell us. But Bloomberg's Rosa Prince, thank you very much for your analysis. Now, to some other top stories trending on the terminal this morning. Goldman-led traders say US stocks could face more selling this week from trend following algorithmic funds. They warn that the decline could trigger about $33 billion of selling this week. And if the S&P 500 falls below 6,707, it could unlock up to $80 billion of additional systematic selling over the next month. Elsewhere, UniCredit plans to return about $59 billion to investors through 2030. The CEO, Andrea Orcel, vows to further improve profitability and capital generation over the next 5 years. The bank will pay out 80% of profit in a mix of cash dividends and share buybacks as ordinary distribution. And a Hong Kong court sentenced former media mogul Jimmy Lai to 20 years in prison for collusion and sedition charges. The sentence is the heaviest penalty yet meted out under a 2020 Beijing-imposed national security law. Lai has 28 days to file an appeal. The pro-democracy activist family and supporters condemned the sentence. Well, coming up, easing US-Middle East tensions, bringing oil down. More on that story next. This is Bloomberg. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
This is Bloomberg Brief. I'm Lizzie Burden in London. Well, oil is falling as easing tensions in the Middle East reduce concerns over supply risks. That's as Israeli Prime Minister Netanyahu is planning to visit Washington on Wednesday to speak to President Trump. Joining us now is Bloomberg's Honor Ant. Honor, good morning. Just talk us through what was actually achieved in Oman.
Well, after the brief mediated talks between Iran and the US in Oman last week on Friday, both countries have come out and said those meetings provided the basis for a continuation of talks, which we expect will happen later this week, again in the region. The Iranians have basically said that the talks were a step in the right direction, were a step forward, whereas in the US, we have seen that President Donald Trump said that from the talks that their key takeaway was that Iran wants a deal, and Trump's own words, they want it very badly. Perhaps the most telling bit coming out of the US is the fact that Donald Trump said after Friday's mediated talks that they could be okay with a somewhat more limited deal with Iranians that focuses on the nuclear enrichment issue alone. And that is very important because we have seen opposition from that proposition, especially from Israel, since these talks have been made public about 10 days ago, where the Israeli authorities have been pushing for a more sweeping deal between the US and Iran that would focus on not only nuclear enrichment issue, but other issues such as the militia and the ballistic missile capabilities as well, Lizzie.
Okay, so you think that pressure is going to be the main thrust of Netanyahu's message to Trump when he visits the White House this week?
Absolutely. The Wednesday meeting, the Wednesday Oval Office meeting between the two leaders are expected to be mainly about this. Both Netanyahu and members of his government have made it clear from the get-go that they would like the U.S. to push Tehran in their negotiations to seek a deal that is not only about nuclear enrichment, but the deal, any possible deal, should A, limit the ballistic missile capabilities of Iran and its efforts to develop more of them, and B, it should also force the Islamic Republic to end its support for various militant groups in the Middle East, the so-called Iran Axis. As you know, all of those groups are openly hostile to Israel. So for Israel, any agreement between the US and Iran must include clauses that would force Iran to diminish, if not completely stop, its support for these groups. But obviously, that's a very tall order. It's a big ask. And we have seen no evidence so far, we have seen no evidence that Iran might be willing to agree to anything other than agree to a deal that would look at anything other than the nuclear enrichment issue, including the proxy militia.
Okay. Honor, thank you so much. That's Bloomberg's Honor Ant as we look at Brent at $67 a barrel. We're coming up on Bloomberg Brief. President Trump's clampdown on immigration extends to the UK. More on that and look at what else is making headlines in your front page news next. This is Bloomberg.
phone is, what's great about it is it's a well-developed gaming ecosystem, right? So it, folks know to find games there, but it's also a highly competitive gaming ecosystem. So it's developed, this gives you both that upside and the downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is, social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are going to like unleash this with a bunch of creators, and they're going to go figure out stuff that we didn't even imagine that they can do with that interactivity.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
This is Bloomberg Brief. I'm Lizzie Burden in London. Time now for your front page news. First up, on the Washington Post, President Donald Trump planning to keep Democrats out of a traditionally bipartisan White House gathering of governors. According to the governor's offices, at least 2 Democrats, Maryland Governor Wes Moore and Colorado Governor Jared Polis, were uninvited to a White House dinner. Next up, let's take a look at the Financial Times. The US Embassy in London denying visas to top-level business executives over minor criminal offences. According to immigration lawyers and visa consultants, people looking to travel to the US on tourist and business visas who have petty offences on their record, some dating back as far as the 1970s, are frequently turned down. And let's have a look at the Wall Street Journal as well. They're leading on the grocery giant Kroger, planning to hire ex-Walmart executive Greg Foran as its next CEO. Kroger, the biggest grocer in the US, of course, by sales after Walmart, has been searching for a permanent leader for almost a year after the departure of longtime CEO Rodney McMullen for an undisclosed ethics violation. There are your front pages. Checking in on these markets, we've got futures stateside in the red after strength in the European and Asian sessions, dollar weakness on the flip side of yen strength, and the fact that China's urged banks to curb their exposure to US government bonds, and that pushing Treasury yields up as well. We'll discuss this next with Jane Foley of Rabobank. This is Bloomberg.
Such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety, and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
5:30 a.m. in New York City, 10:30 a.m. here in London. Good morning, I'm Lizzie Burden in for Bonnie Quinn with your Bloomberg Brief. Let's set you up for the day. The dollar slips and yields rise across the curve after China urged its banks to trim their treasury holdings. Meanwhile, the yen's also on the move, strengthening against the dollar following Prime Minister Takaichi's landslide victory. And all of that ahead of a busy week in data, with a delayed US jobs report and a fresh inflation print on the docket. A very good morning if you're just joining us. Happy Monday. And those gains that we saw on Wall Street on Friday carried into a risk-on mood in the Asian and European sessions, but sadly, as you can see, not into the US futures picture. The mood rather more dour stateside. And if we flip over to the cross-asset picture, it is also a massive week for the bond market. A slew, as I say, of US economic data on the docket, not to mention the politics. Sanai Takaichi knocking it out of the park in Japan. The UK's Keir Starmer, though, hanging on for his political life. And as you can see here, we already have Treasury yields up across the curve, led by the long end, after China urged banks to curb their exposure to US government bonds. Let's dive into some of the single stocks that we're watching. Here's Abir Abu Omar.
Hi, Lizzie. Pretty staggering drop in Hims and Hers in the pre-market, down 15%. Now it's spared some of those losses, but this is essentially on the back of the news that came out over the weekend that Hims and Hers is no longer going to be pursuing the sale of its copycat Wegovy pill. And obviously, on the flip side of this, we had Novo Nordisk this morning at the European Open, the biggest gainer by points. It was up more than 8% in the morning as Hims and Hers said that it was no longer pursuing that, and also on the back of the FDA saying that it will crack down on copycat pills. The Eli Lilly story, another story in healthcare, but it's on the back of a different deal, $320 million that it will put in with a Chinese biotech company to create or to develop cancer research pills. Now, when you flip the board, we've got Kroger, and as you mentioned earlier, Lizzie, Kroger is up 1.2% in the pre-market today. That's on the back of a new CEO announcement, ex-Walmart executive. And then finally, we have ST Micro, that's on the back of news that came out, teaming up with Amazon to essentially, the deal that came out with Amazon was essentially a multi-year, multi-billion-dollar deal where Amazon received warrants to acquire as many as 24.8 million ordinary ST Micro shares, and ST Micro will be providing semiconductors and tech to AWS. Lizzie?
Okay, great stuff. Thank you so much. Now, let's get back to Japan. The yen gaining against the dollar after Prime Minister Takaichi's historic election win. We've got the perfect guest to discuss this. It's Jane Foley, of course, Head of FX Strategy at Rabobank. Morning, Jane.
Good morning.
So the yen actually strengthening this morning. Do you think that's going to last?
You know, I would agree with your previous Bloomberg journalist who said that we need to be careful here because, yes, we could have this re-emergence of weakness, but we've also got to really absorb the fact that there's lots of nuances here. This may not be quite so straightforward. Now, the first thing that we must sort of acknowledge is the market started off with this Takaichi trade, which is essentially this expectation that she was a fiscal dove, that she would spend lots of money, that they were worried even in case some of that wasn't funded, for instance, and also that she would pressure the Bank of Japan not to hike interest rates. Now, the latter has faded. The Bank of Japan has hiked interest rates at the end of last year. And actually, the Prime Minister has offered various reassurances about the fiscal position. So, for instance, when the Cabinet approved the budget, she said, look, it's not going to result in a lot of issuance of JGBs because the tax take is going to be stronger this year. And there's also added to that these other post-election nuances, which means that, you know, if we look at the election campaign, we know that the main opposition party was even more fiscally dovish than she was. And it's quite likely that some of the pledges, maybe with respect to the tax cut on food, for instance, was really in response to what the opposition was saying. But now that she's won the election, maybe she won't have to be as dovish as the market implied that she would.
And maybe she won't have to make it all happen as fast. Well, maybe she doesn't need to upset the market.
That's the other thing. She is very conscious about the bond market. And also, you know, within the LDP, there are a number of fiscal hawks. Notwithstanding, you know, the views of Ishiba, the previous Prime Minister, you know, she will have to sort of clear some of these points with them. So she's got the bond market on her shoulder. She's got some of the fiscal hawks on her shoulder. And she doesn't really have to sort of speak to the opposition in the same way that she had to. So I wonder if maybe we're not going to get these big shocks to the JGB market. But the other thing is that if there is more growth in Japan as a result of these policies, well, it's quite likely that the Bank of Japan may have to accelerate the pace of interest rate hikes. We might get perhaps one more, maybe than the market's pricing in, and that is something that could also soothe the yen. So this could go in a variety of different ways. I don't think it's as straightforward as perhaps the market assumed it would be, you know, when she won that leadership election back in October.
Okay, so what's bigger for the Treasury market then? You've got Japanese politics, a load of US data coming out this week, delayed as it is because of the government shutdown, and then this Bloomberg scoop this morning that the Chinese officials are saying trim your Treasury holdings to banks in China.
Well, to be fair, they have been trimming them for a while anyway. You know, we know that. They're no longer, you know, the biggest owner of Treasuries. Japan is. And if we look at that data that came out a couple of weeks ago with respect to the holdings of Treasuries, and this is for November, this is the latest data we have, what we know is that actually holdings of Treasuries rose to a record high. And the buyers there, or the ones that increased their holdings, were the Japanese, they were the UK, Canada even, Belgium. Now, China did reduce those holdings. So assuming that it's only China perhaps reducing the holdings and there's still appetite for treasuries from other parts of the world, well, that should be some solace for the US Treasuries. But of course they're going to be anxious about this sort of news.
And when it comes to that data, our economists say that it could show weak hiring and spending plus high inflation. Is that too pessimistic? If you got that situation, how would it leave the market?
Well, if we look at some of the activity data in the US, it really hasn't been that bad. You know, if we look at retail sales, for instance, if we look at consumption patterns, and we know, you know, from Trump's point of view, that that's not necessarily a broad-based recovery. We know that most of the strength in consumption, for instance, is amongst higher earners. We know that lower income people are feeling the cost of living pressure. Now, that may not be coming out in the whole data, but they still have votes. So that is a concern, you know, from the election campaign for the Republicans ahead of the midterms. But actually, the activity data hasn't been so bad. Now, if we do have higher inflation, well, you know, the Fed has been saying, look, it could be just transient this year. You know, we'll have to wait and see. But, you know, the market is still anticipating, with a political edge on the Fed, that we'll still get 2, maybe 3 interest rate cuts this year. And I'm wondering if this data on its own will really change that view. So perhaps this data won't have the sort of impact that it might otherwise have.
Okay, really interesting. Now, this is not the sort of environment that you want uncertainty in UK politics, right? We've been discussing with Rosa Prince, Morgan McSweeney's resignation, Keir Starmer's chief of staff, or former chief of staff, of course. How much of a drop in sterling could we see if Starmer quits this week?
It depends who could take over. So, for instance, the market won't like it if the next leader of the Labour Party and therefore the next Prime Minister of the UK will come from the left wing of the Labour Party.
If it comes from the more sort of Blair-esque part of the Labour Party, the market could show some relief. So again, it depends who that is going to be. So there's a lot to play for, I think, within the UK.
But of course, Keir Starmer presented himself as left-wing when he was trying to lead the party, and then, lo and behold, he ends up being a centrist. Do we just have to assume that of the likes of Andy Burnham when he says, I don't want to be in hock to the bond market?
Well, I think the market would be wary about Burnham. I think they think he is going to be left-wing. I think the market will be wary about, obviously he probably can't stand in this Parliament anyway because he's not an MP, but going yet. The market will just generally be wary of the left wing, less so perhaps of Streeting. But then again, you could say, well, look, if you look at the Chancellor, what she has tried to do, for instance, if you look at welfare reform, has been rebuffed because of the amount of left-wing MPs within the Labour Party. So even if we were to get someone who wasn't from the left wing, you've got to try and work out, well, would they just come up with the same sort of problems because of the dominance of the left wing, or the number of left-wing MPs anyway? So yes, we need the stability. It's not clear that even if we had a new Labour leader, that we would necessarily get that.
Okay, Jane, thank you so much. That's Jane Foley of Rabobank. Now, to some other top stories trending on the terminal this morning. Apollo is teaming up with London-based Schroders to develop funds for wealth and pension clients. The firms will offer new investment products to wealthy investors in the UK. The first vehicle is set to be rolled out later this year. Elsewhere, Treasury Secretary Scott Bessent cited Chinese traders as a reason behind last week's wild swings in the gold market. Bessent was responding to a question about a record-breaking rally in precious metals on Fox News on Sunday.
The gold move, things have gotten a little unruly in China. They're having to tighten margin requirements. So the gold looks to me kind of like a classical speculative blow-off.
And in sports, Seattle Seahawks beat New England Patriots 29-13 to win the Super Bowl 60. This is the Seahawks' second Super Bowl win. Kenneth Walker became the first running back to be named MVP since Terrell Davis in 1998. Puerto Rican artist Bad Bunny made history as the first Latino and Spanish-speaking artist to headline the Super Bowl halftime show as a solo act. Well, coming up live from Cape Town at the African Mining Indaba, Ivanhoe Mines founder Robert Friedland joins us on the discussions around supplying the US with critical minerals. That conversation next. This is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzone.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
This is Bloomberg Brief. I'm Lizzie Burden in London. Now, Ivanhoe Mines has confirmed that it was in talks to supply critical minerals from its mine in Congo to the Trump administration's proposed $12 billion stockpile. Bloomberg's Jennifer Sabasaj is standing by in Cape Town with the company's founder. Jen, over to you.
Yeah, that's right, Lizzie. I am standing by with Robert Friedland, who is the co-chairman and also founder of Ivanhoe Mines. Robert Friedland. Robert, thanks so much for joining us. Lizzie was just mentioning you just came from Washington, did participate in that launch of Project Vault. What do you think this $12 billion stockpile will mean for the mining industry, not just in Africa, but more broadly?
It's good, very good news for the mining industry, Jennifer, because this is the beginning of a scaled vault to attract critical raw materials for the non-military side of the U.S. economy, so that major companies that are trying to build data centers or electrify the economy or build things or industrialize the country have access to critical raw materials. So it's part of the general understanding that we can't build a better, more modern world without the same materials that are being mined here in Africa.
Well, and that just leads me to your companies and some of the mining sites you have. Do you expect, or how do you expect your companies to be involved in this project?
We're going to help fill that vault. The mining industry is very happy that the United States government, led by U.S. Exim Bank and other arms of the United States government, recognize the need, and that $12 billion, which is roughly $2 billion of equity and $10 billion of long-term financing from Exim Bank, is scalable. And so it's really a very interesting scheme because it's market-driven. If General Motors, Mary Barra was there, right. She's the CEO. If she needs a particular metal, she can go to the vault, and the vault will go out and find it. So it's driven by market forces, and there's no reason why it can't be 48 billion or 72 billion and keep growing. And that's very good for the people that are here in Indaba.
How does that factor into supply disruptions that yourself and others experience, let's say, perhaps in the DRC mine and other mines that you work with? How do you factor in some of those supply disruptions if you want to expand this vault over time?
Well, our job is to reduce those supply disruptions because we've gone from a perfectly integrated, just-in-time world economy to an economy that's balkanizing. It's breaking into little groups, and that creates a real problem for critical raw materials. It creates friction in the world economy. It's inherently inflationary, and illogical though it may be, each nation is worried about their own supply chain because everything you touch, we either grew it agriculturally or we mined it. And lately, those metals that we mine are absolutely critical to the world economy, and that's why they're called critical raw materials.
Right. Are you on track with some of your mines? Let's talk in the DRC in particular. Are you back on track after some of those disruptions?
Sure. We're still producing. We're one of the biggest copper mines in the world. Yeah. We have enormous prospects for continued expansion. We built the only modern copper smelter on this continent. It's the greenest copper smelter that's ever been built. It's a direct-to-blister smelter. It's very advanced technology. It's better than any smelter in the United States of America. We have hydroelectric power. We have very high-grade copper in the Congo. So the Congo will be a world leader. Currently, Congo's #2 in the world, coming up in the world ranking to Chile. But yesterday, Louis Watem, who's a brilliant minister of mines for the Democratic Republic of the Congo, warned the Chileans that Congo's coming for the Chileans to be the #1 copper producer in the world. And the rate of growth of copper production in the Congo is by far the fastest in the world. So that's very achievable.
Do you think the market then has caught up to the supply dynamics right now, or do you expect potentially we see prices go higher, in particular for copper?
I don't worry about prices. They will definitely fluctuate. That's the only thing we know about metals. but copper has a very bright future with 8 billion people on the planet, everybody wanting green, sustainable power, data centers, lots of national security-related demand, lots of electrification demand, almost everything you touch, including these cameras and lights that are enabling us to broadcast this to the whole world. If you go to Bloomberg World Headquarters, it's copper, 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 very high tech. So most of the old known mines are gradually declining in grade. Most of the easy mines of the world have already been found, but there's tremendous exploration potential, in particular on the African continent, to supply world demand.
Is the capital there, though? Why is capital still sitting on the sidelines? What's needed?
There's plenty of capital. We've raised close to 50 billion United States dollars for mineral development. We've reached a strategic investor agreement with Qatar, they have plenty of capital. The Saudis are also interested in this. There's lots of developing countries that are providing capital. A very good project today, if it's high grade and can be developed in a responsible way, has no trouble at all attracting capital.
What is the risk, though, to your bullish outlook, not just on copper, but also the precious metals sector more broadly?
We like precious metals because they're precious. And sometimes you find precious metals associated with base metals. So we're mining zinc in the Congo, but it has a lot of silver associated with that. We frequently find gold associated with copper. And precious metals have been doing very well against the United States dollar. The United States dollar has been weakening against a lot of these hard assets. That's a process that could easily continue.
You believe that's going to continue?
If you lower the interest rates on fiat currency, if the Fed is in fact going to lower rates, then one could argue that these precious metals and base metals will do very well against the United States dollar. That's not something we worry about because we don't want to waste time doing that. We look for the highest quality ore bodies where they can be developed sustainably in partnership with local communities. And that latter element, the partnership with local communities, is what's essential to be a sustainable miner.
All right, we'll leave it there with you, Robert Friedland, Executive Co-Chairman of Ivanhoe Mines and also the founder, joining us here at Mining Indaba in Cape Town. Lizzie?
Jennifer, great stuff. Thank you so much. That's Bloomberg's Jennifer Zabasajja out of Cape Town. Well, let's take a quick look at some of the stocks we're watching this morning. US shares of Novo Nordisk and Eli Lilly both jumping in the pre-market after the telehealth firm Him and Hers announced that it would stop selling a copycat version of Wegovy. Let's get more now with Sam Fazeli of Bloomberg Intelligence. So, Sam, we've had Novo really on the back foot. I wonder how much of a reprieve this is for the company.
I mean, it's a big one. So a couple of weeks ago, they said, and before the end of the year, they said that they expect the compounding environment to be stable. And they repeated it, and just before, as they were on the results day, they repeated that. The next day, Hims turned around and said, right, we've just launched a copy of the oral pill, which everybody went, including us, how?
What?
Because, yeah, exactly. This is protected by patents. And in that communication, they said, well, we've got our own manufacturing or method of making it or, product, which, of course, you can't because you would have had to do clinical trials with it. So the whole thing just seemed completely out of any norm that you would expect to see in the world of drugs and drug approval. So this is a big reprieve.
But there are so many other headwinds for Novo, right?
Yeah. I mean, it could be a bigger reprieve if they decide to also not continue with the injectable version. That's a lot easier. There was a period where they were allowed to because there was lack of supply. Then the FDA, I think, didn't do much when supply came back on and the compounders still carried on. So that would be a bigger possibility, a reprieve, for your want of a better phrase again, for Novo. And of course, they do have other headwinds, and those include the launch of an oral product from Lilly in the second quarter.
And does it actually show the FDA is sharpening its teeth now when it comes to knockoffs?
Well, yes. We were always wondering where they are with this rule, because you can't just go and make something somewhere and say, here we go, we've got a product. The whole point of the FDA is to be regulating efficacy and safety, particularly. And Him's product had never been through any of those tests or looked at by the FDA. So I'm really glad to see this happening and the rule of law coming back in.
All right, Sam, thanks for the context. That's Bloomberg's Sam Fazeli. Well, coming up, we are going to talk retail jobs and inflation data. All your week ahead coming up next. This is Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Bersecci. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
Now a look at what's ahead this week. We are chock-a-block with data thanks to the government shutdown. So first up, we've got US retail sales coming on Tuesday. Then we have the delayed January payrolls report. That's on Wednesday. And then we wrap up the week with CPI on Friday. Taking a look at your micro movers, we have Novo Nordisk shares stateside gaining after him and hers abandoned its Wegovy pill copycat, as we were just discussing with Sam Fazeli. We also have Kroger planning to appoint the ex-Walmart executive Greg Foran as CEO, up in the pre-market off the back, and ST Micro rising as well as the chip maker says it's expanding its partnership with Amazon's AWS through a multi-year, multi-billion US dollar agreement. Checking on your macro movers as well, we have US futures currently pointing south, so not following the risk-on mood that we've seen in the European and Asian sessions. The Bloomberg dollar spot index lower as well, and treasury yields higher after we have seen yen strength and China urging banks to curb exposure to US government bonds. That's your Bloomberg brief. Surveillance is next. This is Bloomberg.
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
There are lots of cross currents. This isn't just about software. This isn't just about AI.
Everybody says there's insatiable demand for AI. I'm not sure we're quite seeing that yet.
There is a lot of companies that are going to benefit significantly from the AI build.
It does feel, though, that we're starting to approach maybe the end of that sell-off.
This is such a generational transformation. We're going to live in this bumpy ride.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Monday with a big week on deck. Economists anticipating payrolls Wednesday ahead of CPI Friday. As Takeichi is winning big in Japan and unleashing a rally in Japanese equities, China is fueling some selling in treasuries, urging banks to curb U.S. exposure, citing concerns over concentration risk.
Look, this fits a really nice narrative of Sell America and what happens if China liquidates its entire treasury holdings. It doesn't really do much for me on the market side. Maybe, yes, you are going to see a couple of basis points higher on long-term yields. But the reality is China has a combined $683 billion of U.S. Treasuries, 7% of foreign holdings, and just 2% of total securities outstanding. Half of that comes in the banks. And didn't U.S. regulators warn U.S. banks about concentration in long-term Treasuries right after the Silicon Valley collapse? So a real question here about what's fact in market terms and what's potentially narrative.
It's trimming is what it feels like rather than dumping, and some diversification. What is really going to matter this week, of course, given the fact that we had the longest government shutdown in history, is we're going to get clean data, finally. And it's a double whammy. We're going to get payrolls on Wednesday and then CPI on Friday. And what does this all mean for the Federal Reserve as they deal with two dual risks?
You want some optimism? Torsten Slock over at Apollo. Check this out. Software will not become a macro problem because the underlying economy is about to take off. He goes on to say, later this year, the conversation in markets will change from talking about Fed cuts to instead talking about the Fed having to hike.
You know, there were some interesting comments about that particular note yesterday out on social media saying, I want to take whatever he's taking. But at the same time, that is partly because nobody is expecting this to be part of the discussion, in part because of the Kevin Warsh Federal Reserve. If he is Fed chair, how likely is it he's going to be talking about some sort of rate hike in the face of pressure from President Trump? At the same time, should some of the projections come to pass with both the fiscal, the monetary boost, as well as the like 4,000 trillion dollars of capex, we could see some incredible growth.
Well, you led me there on fiscal. It is a midterm election year, which is why a lot of people think there's going to be more of a fiscal push in Washington. We should note there is potential for DHS to shut down on Friday. And that means Coast Guard, that means what's going on at the airport when you have your airport workers. That is something to keep in mind. But it is an election year, which means this administration wants to run it hot on monetary policy and on fiscal policy.
Japan might be running it hot too. Speaking of fiscal pushes, check out Japan. Japanese equities up overnight by 3.9%. A major election win over the weekend for Takaichi.
It was the biggest post-war really win for any single party going forward. She has more than a 2/3 majority. This is absolutely a clear mandate. Now the question is, what does she want to do with it? And this is increasingly going to be the focus. Jordan Rochester said, pointed to the fact that she held this election to try to get a mandate for her responsible and proactive fiscal policy. What is it? We aren't sure.
What does it actually look like in practice? Great note from Jordan a little bit earlier this morning. Framing really matters here. Fifth biggest economy on the planet, pushing for stimulus, boosting stocks, or fifth biggest economy on the planet, pushing for stimulus and being rejected by the bond market. Which one is it?
Yeah, you know, I'm not sure, and right now the market's not sure either, and that's the reason why you're not seeing a bigger sell-off in JGBs. It's a reason why the yen is actually strengthening. Right now, there is a real question about how much she can be successful in strengthening an economy that has been behind some of its potential for many years.
Lots to talk about this morning, following a ton of volatility in the last week. Equity futures on the S&P down by 0.25%. Coming up this hour, Cameron Dawson of New Edge Wealth with stocks looking for some stability. Amy Gower of Morgan Stanley as gold swings back above 5K. And Dana Peterson of the Conference Board looking ahead to a key week of economic data. We begin this hour with stocks pulling back following the biggest one-day rally since May. Cameron Dawson of New Edge Wealth writing, for now, we see recent market volatility as a positioning and valuation recalibration, not a growth scare. Cameron joins us now for more. Cameron, good morning.
Good morning.
It did not feel like a positioning recalibration through much of last week. All that volatility, and we were down just 0.1% on the S&P. What was last week?
Well, at the beginning of every bout of market volatility, we always ask ourselves, did anything happen that would cause EPS or GDP estimates to get revised lower? If the answer is no, it shortens shallow. If the answer is yes, it's typically deeper and more protracted. And so as we looked at the outlook over the course of last week, we thought that the answer to that growth question was no. And the way that we got to that is looking at something like high yield spreads not blowing out. High yield spreads are at 348 basis points. This is not a bond market that is freaking out about growth. You also look at market leadership. You've had really strong leadership out of industrials, energy, materials, financials, all areas of the market that would not be rallying if we were really concerned about growth. So the net of everything is that it seems to be more about positioning, valuation, and sentiment recalibration, not a deeper growth scare.
Well, let's stay on valuation. Could it have a damping effect on valuations through the year ahead?
Yeah, I think that that is probably the biggest risk. If we all sit back and think about all of the justifications as to why the U.S. equity market should trade at 22 times forward or 38 times on the CAPE ratio, the argument went that because the components of the S&P 500 are that much more quality than they used to be, because of the higher weighting in tech, you have things like higher free cash flow margins, higher return on invested capital. But if we're starting to ding the outlook for free cash flow margins for the big hyperscalers, lower potentially return on invested capital for the software names, given AI uncertainty, it raises the question of, is that justification for ever higher valuations something that we should push back on?
Well, and this is a reason why, and we'll get to the fundamentals in just a minute. People are saying it feels more than just a violent shift in positioning that can really revert back. There has been a change in the way people view tech companies, how cash rich they are, how much they can keep giving dividends, and how much they can keep doing share buybacks, which have been a huge tailwind to this stock market. At what point do you see the technicals really turning against the U.S. equity market?
Yeah, I think it's first important to note that at the peak of the growth trade back in November of last year, you had max positioning in mega cap growth and max underweight positioning in cyclical. So there has been a big, huge positioning recalibration. I think your questions are really important because the whole notion is that these are very capital-light businesses that don't need a lot of incremental investment. And if you look at that over the past, what you saw is that all of these companies were able to grow earnings by double digits without having to spend any money. That was incredible. But now they're growing earnings by double digits, but they're having to spend hundreds of billions of dollars to do so.
Well, this raises the issue of the fundamentals, right? And we've seen this broadening out trade, and you think that it might have legs. We see the equal weight reaching all-time highs, even amid the carnage that we're seeing in the SaaScopocalypse. I think I said that correctly. Going forward, how much is that broadening out, and frankly, the entire index going higher, crimped by the story that's taking place with a fundamental shift in the way that tech companies are being valued and, frankly, are performing and existing in this world.
Yeah, I think it's such a fascinating point because if you think about the driver of all of this growth within tech spending, which is now also leading into growth within value sectors, how much of this is dependent on some of these software names continuing to make investments that would be demand of AI? So I think some of this is all just a circular reference. If we start questioning the CapEx growth going forward, does that also question some of these value rallies that we have seen lead the market since November?
You also talk about how these software companies are the ones that are going to be the ones to lead when it comes to AI, and they're the ones that have the most to gain. So would this be a moment to step in and get some of those stocks after the apocalypse?
Potentially the most to gain. They have the most to lose, but I think if applied properly, they actually have a lot to gain given the fact that they typically have high headcount, they typically have very strong customer relationships, but if they don't move quickly in AI, then they have a lot to lose. I think it's important with the software names to take a step back and think about the technicals because they are very, very oversold. If you look at them on a daily, they're oversold. On a weekly, they're oversold. If you look at them, they're now trading at the 200-week moving average. That was support back in 2025, back in 2022. So that would suggest that you have some kind of bounce. I think the big question is, can the software regain its leadership coming out of this bounce? I think that's a lot more in question just simply because there's all these doubts of things that effectively software companies can't disprove at this point because it's AI risks that could be out 1, 2, 3, 4 years in the future.
Look at where the leadership's coming from right now. Regional bank stocks up every single day through last week, on the week up by 7%. And it wasn't just the smaller names. Bank of America, Citi, JP Morgan up somewhere between 5 to 6% through last week. What do you think that speaks to?
Deregulation. I think it speaks to this question if banks would be allowed to grow their balance sheets further, if they're allowed to take on more leverage. I think it's fascinating that for the banks, they have been growing earnings over the course of the last 2 years at a faster pace than even prior to the great financial crisis, which just suggests that banks have been in an extraordinary period of operating leverage as they cut costs and still see really strong top-line growth. But it also, I think, is a reflection of this cyclical optimism, because just as you saw the regional banks rallying hard, you also saw things like transportation stocks rallying hard. And if you look at everything within the transportation side of things, you're seeing better shipping rates, you're seeing better rejection rates coming out of the truckers, you're seeing demand start to really cause a capacity tightening, which all suggests that there's cyclical underpinning of a little bit of a fire being lit in that part of the market. The question, of course, is can it continue?
Well, let's talk more about that at the index level. This is something Jim Reed of Deutsche Bank has raised. Many other people are pondering the same question at the moment. Can you have the kind of vicious rotation we're having over a prolonged period without index level stress?
If you think of times like 2022 or going back to 2000 to 2002, the answer would be no. If the largest weights in the market are continuing to come under significant pressure and really leading the market lower, then it's really hard for names that are a much smaller portion of the market to drag the overall index higher. So you could be in an environment where index level returns are kind of shoulder shrugging and ho-hum, but you have very strong returns in pockets of the market that are much smaller. And I think it's an important point as well that you're effectively moving liquidity out of very deep liquid parts of the market in tech and into much shallower, smaller parts of the market in these cyclicals, which can help explain some of the magnitude of these upside moves.
It was the story of the week. Will it be the story of the year? Cameron Dawson of New Edge Wealth is going to be sticking with us. Cameron gave a nod to this. It's from JP Morgan's Mark Murphy. It's difficult to prove a negative that AI won't disrupt software in a few years, which puts a cloud over some of those names, maybe for the time being.
Which raises this issue of even as we get earnings from a number of these SaaS companies, these software companies, how much will that matter if they come out with blowout earnings? You know, we have people pointing to the fact that actually people's expectations for earnings have been increasing over time. It doesn't matter because you cannot prove that they won't be rendered obsolete in 3 minutes from Anthropic that then puts out an ad complaining about why they're useless.
And we're getting this for the next several months from Anthropic. This is the IPO roadshow. It started. This is it. And you're going to see it from other names in the mix as well.
And I have to say that their advertising was pretty much on fire. So clearly they are gaining steam on the social side of things with some pretty significant burns. But at the same time, you know, this is the real question. What's the overhang for some of these business models?
There is a massive marketing effort underway, and it's disrupting this equity market in a big way too. Let's get you an update on stories worldwide this morning with your Bloomberg Brief. Here's Yahara with more. Hey, Yahara.
Good morning, John. In Japan, Prime Minister Sanae Takaichi secured a historic election win, her Liberal Democratic Party winning a 2/3 supermajority in the lower house, which positions her as the nation's strongest leader in decades. In remarks, Takaichi vowed to build trust with financial markets amid concerns over how she'll pay for a planned tax cut. Meanwhile, here, Treasury Secretary Scott Bessent suggesting the Senate should begin its hearings on Kevin Warsh's Fed chair nomination. This despite GOP pushback to block the nomination until the criminal investigation against current Fed Chair Jay Powell is resolved. Bessent's pushing to get the hearings underway and, quote, see where the investigation goes. And in sports, the Seattle Seahawks are Super Bowl champions after a dominant performance over the New England Patriots. Seattle held New England scoreless until the fourth quarter, finishing the game with 6 sacks, 2 interceptions, and a fumble recovery. Running back Kenneth Walker was named MVP after rushing for 135 yards. It's the second title in Seattle franchise history. That's your Bloomberg Brief. John?
Yara, thank you. I'm not even going to pretend. Forgive me, it's so un-American. But I go to bed so early. I didn't watch a single minute of this.
As an American,
none of it.
I can tell you that you probably didn't miss that much. Certainly the game itself was incredibly boring, and I can tell you the Norwegian cross-country skier, the American, the figure skater, I'm telling you, the Olympics has some incredible
I'm so dedicated to the craft that I wake up to watch the Japanese close. You know, that's what I'm in the business of doing.
Well, I don't think that you missed much last night, so congratulations.
Saw plenty in Japan. Up next on the program, a test for treasuries.
Thus far, the market has been very resilient. We've had some of our best auctions in a long time this year. We're seeing very good foreign demand.
Up next on the program, Bloomberg's Tyler Kendall, live from New York City this morning. Good morning.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Stacked with economic data this week. Check out the calendar. Tomorrow we get retail sales, Wednesday payrolls, Thursday claims, Friday CPI. CPI on Friday. That's how things are shaping up. These are the scores going into all of that. Equity futures on the S&P 500 pulling back by just 0.25%. A volatile week last week. If you asked someone to guess what the index did, down 0.1% probably wouldn't have been the answer halfway through last week. Just amazing to see. On the Nasdaq, down about 0.5%. On the Russell, down 0.3%. Check out Japan. The Nikkei 225 closing at an all-time high. We rallied by 3.9%. in the Japanese session. On dollar-yen, down to 156.57. Yields just about unchanged at the long end of the curve. Takaichi getting a little bit of an endorsement from the market after a big election win over the weekend.
It seems like people are excited to see what she has to say and don't think that she'll be so extreme as to allow wild depreciation of the Japanese yen, or frankly a Bank of Japan that does not hike rates in order to allow the economy to really gain steam. Just to highlight how big of a majority she got. She got 316 of the chamber's 465 seats. This for the Liberal Democratic Party. This is an absolutely astounding win that is the biggest going back to the 1940s.
Jane Foley was speaking earlier, talking about that she knows she has the bond market on her shoulders, and the fact of the matter is the election's over. She doesn't need to outdove the opposition, which were actually going to run an even looser fiscal policy than she wanted to. So that's why potentially the market is also taking her in stride.
A bit of yen strength this morning. Dollar yen down to 156.59. And the surveillance this morning, a test for treasuries.
We need to get back to something with a 3 in front of it in terms of deficit to GDP. That's why at FSOC, we are focused on growth as desirable, but also a lack of growth as a financial stability risk. Thus far, the market has been very resilient. We've had some of our best auctions in a long time this year. We're seeing very good foreign demand.
So here's the latest this morning. China pushing back on U.S. debt. Sources telling us here at Bloomberg that Chinese regulators are urging Chinese banks to pull back holdings of U.S. treasuries, citing concentration risk and volatility. With the latest, here's Bloomberg's Tyler Kendall. Morning, Tyler.
Hey, John, good morning. Well, people familiar with the matter tell Bloomberg News that the guidance reflects a growing wariness among Chinese officials that large holdings of U.S. government debt could expose banks to sharp swings. Now, importantly, this does not extend to Chinese state holdings of U.S. treasuries, but comes amid what has been growing concerns from global investors about fiscal discipline here in Washington. The backdrop, of course, being what's been unpredictable policy making, the president's recent, perhaps more relaxed comments on weak dollar policy, and of course questions about the Fed's independence as we wait for Kevin Warsh to be confirmed. Plus, as you've already mentioned on the program, we've been watching closely the Japan Prime Minister Takaichi's election victory. She was endorsed by President Trump, and her coalition's now mandate and sweep in these elections will likely mean a bolstering in defense spending to combat China. Now, it's probably worth mentioning that U.S.-China relations have actually been relatively stable recently. In fact, the Treasury Secretary Scott Bessent went as far in an interview yesterday to applaud China for holding up their end of the U.S.-China trade truce that was struck late last year. Still, I will point out that our analysts at Bloomberg Economics say that this really does fit a longer-term strategic trajectory for Beijing, which has been limiting its exposure to U.S. dollar assets over the last decade. Now, John, worth mentioning, President Trump did have a phone call just last week with Chinese President Xi Jinping. Our reporting indicates that this guidance to Chinese banks came before that discussion between the two leaders happened.
Tyler Kendall with the latest down in Washington. Tyler, thank you. I think also worth mentioning that 10-year bond yields are only up by 2 or 3 basis points off the back of this story, higher to 4.23. Cameron Dawson of New Edge Wealth joins us now for more. Cameron, let's continue this conversation. The South America trade, are you actually seeing it in the data? Because we're seeing it in the headlines.
Yeah, definitely not. If you look at last year, we saw record numbers of inflows into treasuries as well as equities. So we ended 2025 with record foreign holdings in both treasuries and equities. You saw $500 billion worth of treasury increase in the overall holdings. So Sell America was definitely the narrative last year. It did not play out in practice. But it is good to remember that prices are set at the margin. And there's a great Bloomberg screen that's debt go. And what you can see is the treasury holdings of different countries. And for the last 13 years, China has effectively cut its treasury holdings in half. So this is not a news story. The question is, do you see less treasury buying from China? Do you also see less treasury buying potentially from Japan because home yields are higher, and potentially less treasury buying from Europe? You've seen a huge increase, a 3-fold increase in treasury holdings from the UK, for example. So could you see that at the margin start to come down and put pressure up on long-term yields?
Have we already seen that priced in? I mean, I'm asking this this with respect to how much the Bank of Japan and, frankly, Takaichi is putting pressure on U.S. 10-year yields.
Yeah, I think you have potentially seen some of the fiscal worries get priced in early on within Japan, because you're seeing the response this morning is not nearly as violent. The sell-off in bonds is not nearly as violent as what we're seeing as the rise in equities. I do still think that there's a very little direction within the 10-year Treasury. It's at 4.2%. All of its moving averages are just kind of coalesced in one tight area, which says that there's really no conviction within the 10-year Treasury yield. If the 10-year Treasury believed the equity market and the cyclical rebound, I don't think that we would be seeing 10 years at 4.2%. They'd likely be closer to 4.6%.
Which is the reason why people are looking at Kevin Warsh, the new, potentially a new incoming Fed chair, should he get confirmed or even heard. Secretary Bessent had some really interesting things to say over the weekend about how it was probably going to take about a year or more in order to really start to wind down the balance sheet in any significant way. And he made some other comments at a time when we're looking at something of a Fed Treasury Accord or something like that. Do you have a sense of what that could look like?
Yeah, well, we've been joking that they should rebrand quantitative easing as quantitative freedom in order to be able to navigate this balance sheet runoff. I think it's a really big question because we know that Treasury wants yields to move lower, not just on the front end in order to reduce Treasury borrowing costs, which interest expense is over $1 trillion. It's larger than defense spending, so this is something that they want the front end to come down, but they also want the back end to come down. They want to have relief within the housing market with mortgage rates coming lower, cyclical areas of the market getting stimulated by lower long-term yields. It's really hard to do that in a very pro-growth, pro-stimulus kind of backdrop, which means that it suggests in order to accomplish 3% growth and 3% Treasury yields, you need some kind of Treasury market intervention. It can't do it alone.
So what would that look like? And I'm glad you bring this up because just a few hours ago, the president actually put on Truth Social a Bloomberg story talking about a Barclays note about how this president wants to see mortgage rates drop to 5% this year. Can they actually get to that?
Well, some of the things are within their control. We saw the mortgage buying that was pushed through back a couple of months ago. And then there's, of course, things that are out of their control. And the best way to think about the yield curve is that the shorter you are in the yield curve, the more it's controlled by the Fed. As you move longer and longer out, it's controlled by supply and demand. The supply side, of course, is what's going on within the fiscal side of things. And the demand side is demand from not just domestic owners, but foreign owners. And I think that that's one of the big questions that everybody's wrestling with this morning.
Final word on Torsten Slok of Apollo. You saw the quote. I'm sure you read it over the weekend. Rate hikes at the end of the year. You think that's the conversation?
Well, if you look at the warp screen, they actually have a slight probability of rate hikes starting in 2027. I don't think that this is something that Warsh will necessarily want to push through, but it is a committee vote. And think of us going forward in just June. If we have this kind of strong economy where we see some reacceleration, are we in an environment where the chair could be the only one voting for rate cuts? What a wild world.
Cameron Dawson of New Edge Wealth. Cameron, it's good to see you. Just imagine that 6 months out.
Yeah, I'm just trying to imagine the truth postings, or maybe this comes right after the election. Should there be a change in leadership, maybe it won't be a problem to raise rates. But I'm curious going forward about what kind of pushback we get from the president. And frankly, to Cameron's point, what kind of consensus do you get on a committee that has been really named by the Fed chair in each consecutive era? And is it going to be the same? Is it going to be the Warsh Fed, or is it going to be the Warsh, Waller, etc.?
I don't think a rate hike conversation is going to go down to one of the confirmation hearing when we eventually get a confirmation hearing. Coming up on the program, Amy Gower of Morgan Stanley on the swings, the wild swings in precious metals. Plus, Yahira has your morning movers. Novo shares surging as Hims and Hers abandons a copycat weight loss pill. We've got Novo up by close to 7%.
crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Max Kenner of HSBC calling it rotational pain, and it was painful for a lot of you, I know, over the last week. Yet still, we closed out last week within 1% of all-time highs and down on the week just 0.1% on the S&P 500 futures. Down another 0.2% on the S&P. On the Nasdaq, down by 0.4. It was on the Nasdaq, the big tech players, where we saw a lot of that volatility. The Nasdaq having its worst week of the year so far, but elsewhere, the equal weight S&P 500, the Russell 2000 posting a gain of 2% on the week. And at the moment, we pull back from those record highs. On the Russell 2000, we're down by about 0.2%. Switch to the board and get to the bond market. There is a tug of war. How much weight do you put on the ISMs versus the labour market data of the last week? Because those two data points tell a very different story. ISMs are telling you that things are fine and they're going to pick up, particularly ISM manufacturing. Elsewhere, the labour market data, dreadful. Will that be validated by payrolls this Wednesday?
Yeah, payrolls, and then, of course, we get a CPI, and it's really good that you pointed to the ISM because we have someone coming on later, Jill Carey Hall of Bank of America, who thinks that ISM actually leads this rotational trade that the likes of Max Kettner is talking about, that is part of the whole rejuvenation of the U.S. economy story. At the same time, is this still the jobless recovery, right? Can you still have that optimism if you don't have the hiring to accompany it?
Remember all those headlines? Sell the US dollar, dollar debasement, all of that stuff, and then risk appetite gets a bit of a punch in the face, and what happens? The dollar rallies, one of the best weeks we've had this year. The dollar index, the best week since the first full week of January. Euro dollar this morning up to about 118.65, but you really do start to understand the correlation, or lack thereof, between risk appetite and the US dollar, and when risk appetite unwound, the bid came back into the US dollar.
Yeah, and arguably, and some people might say that the strength that you saw in the US dollar that really stemmed from Kevin Warsh getting the nod to be the next Fed chair was part of what unwound the entire market. There's an entire theory about how the sort of sell America trade was so embedded in conviction trades that alone, getting sort of questioned, really unraveled a lot of what was out there.
The dollar index a little bit softer this morning. We're down about 1/3 As we count you down to the opening bout 3 hours away, let's get you some morning movers with Yahira. Hey, Yahira.
Hi, John. It looks like the drama between Novo and Hims may finally be over, at least for now. We are seeing Novo shares rising 6.6% in the pre-market after Hims & Hers backed away from its plans to sell a copycat version of its Wegovy pill. This comes after the FDA said it would crack down on knockoff weight loss pills. It was a much-needed reprieve for Novo, which has had a rough week. Hims & Hers having a rough morning so far. It is plunging down more than 15%. Meanwhile, we move on to Once Upon a Farm. This is actually a company by Jennifer Garner's organic snack food company. They sell things like fruit pouches for kids and babies. It had a stellar debut on Friday, rising nearly 17%, up another 9% this morning. It's a welcome sign for the IPO market, as analysts say broadly that we will see a pickup in listings this year. And we end on the supermarket chain Kroger. Shares are rising 5.25% on our reporting that it's set to announce it has plans to name a former Walmart executive as its next CEO. Our sources say Greg Foran, who used to run Walmart US, is set to take the top job, and it would mark the first time that Kroger appoints an outsider to run the company. John?
Yahara, thanks for the update. More from Yahara a little bit later this hour. On a rate out this morning, Chinese regulators urging the nation's top banks to scale back holdings of U.S. government debt. Sources telling us here at Bloomberg the move is framed around diversifying market risk. Elsewhere, Japanese Prime Minister Sanae Takaichi securing a historic election win, positioning herself as Japan's strongest leader in decades. Her ruling Liberal Democratic Party achieving the largest post-war victory for a single party in a general election. And finally, the Treasury Secretary, Scott Bessent, turning up the heat on the Senate.
And Senator Tillis has come out and said he thinks that Kevin Warsh is a very strong candidate. So I would say, why don't we get the hearings underway and see where Janine Pirro's investigation goes?
The Treasury Secretary adding Kevin Warsh's nomination for Fed chair should proceed despite a blockade attempt from his own party.
Let's see whether that gains any steam. He also really backed away from saying the Department of Justice was going to drop the case, which is what a lot of people are pushing for in order to get this underway. There does seem to be an eagerness, though, to get the new Fed chair in place. Some people are wondering if the Department of Justice inquiry does not get resolved, how long does this go on, and does Chair Powell become the Fed chair for the remainder of 2026?
Well, Senator Tillis told us he'll go on and basically for another 300 plus days until he retires. But the Treasury Secretary clearly wants to get the show on the road. And what he was pointing to there was a parallel track. He can't come out and say the DOJ is going to drop it, especially since the president just last week said, you know, we have to investigate, see to the end. The issue is what is going on right now with the investigation. We really haven't gotten an update, and there are reports that the Fed hasn't complied with the probe. So potentially that is going to be a drag. At the same time, Scott Bessent is just saying, at least at the minimum, start the hearings.
Really reading the tea leaves here, so forgive me, but I think that was the first acknowledgement that this might become a problem down in Washington, D.C., because the Treasury Secretary is offering an alternative.
Yeah,
because there is an understanding here that this is going to take some time.
That alternative, though, isn't going to be taken. So I wonder what kind of back channels are going to be explored in order to get the Department of Justice to drop the case. But it's clearly on his mind, and I think that you're right to say that. Also interesting, though, he started to talk about the Kevin Warsh Fed and what that looks like, raising a question, and Krishna Guha raised this issue. Does he have veto power over things? How much control will he have over Fed policy wearing his Treasury hat?
Might be comfortable with the timeline now, but the closer we get to May and June, I think that conversation is going to take on some additional urgency if we haven't addressed things. Let's turn to the metals market. Some major moves in the last week in both gold and in silver. The Treasury Secretary, Scott Bessent, also pointing the finger over the wild swings in precious metals.
The gold move, things have gotten a little unruly in China. They're having to tighten margin requirements. So the gold looks to me kind of like a classical speculative blow-up.
Gold hovering around 5K after a stretch of historic volatility. Amy Garrett of Morgan Stanley seeing more upside ahead with a bull case of 5,700 for the second half of the year. Amy joins us now for more. Amy, good to see you. Welcome to New York.
Great to be here.
Wild swings, not just in gold, but silver too. And if we can bring up the silver chart year to date, the silver chart is one of the most ridiculous things I've ever seen covering financial markets. A rally of 60% and then a complete round trip. On what?
Yeah, look, I think with silver, you do always expect more volatility. It has generally lower liquidity. There's smaller trading volumes going through. I think we could say, look, the setup was reasonably supportive in terms of we'd eroded a lot of the inventory. And so when somebody needs metal immediately and that metal is not available, it sort of goes to the highest bidder and the price can accelerate very rapidly. And clearly there was an element of momentum here as well. And then, of course, when we had that turnaround in both gold and silver with potentially the nomination of Warsh coming through and some of that momentum coming off, it's not surprising we pulled back a long way. I think what we've been struggling with is what is the right valuation for silver here, and especially when you see a $50 trading range for something that only started the year at $75, that's quite difficult to do.
The Treasury Secretary was pointing the finger at China with regards to gold. He said things were getting a little unruly in China. Can you translate? What does he mean by that?
So I think definitely there's been an element of momentum and high volumes going through, and we've seen this across the metals, very, very high trading volumes in China. And so we've seen some sort of controls from the exchanges and position limits trying to curb things back into place. We might also be seeing a bit of positioning taken off ahead of Lunar New Year because things will generally be slowing down there. So I think partly that's probably been having a hand here, but I think also unsurprising when you get sort of a straight line up in metals to have a bit of consolidation, take a pause. That's not unusual.
So it seemed like Scott Bessent was talking about the hat. He's currently blaming this one trader who had an incredible slew of losses in China and then fled the country. I mean, it just raises the question of how financialized some of these metals markets have gotten. The idea that suddenly people are turning to precious metals as an alternative to things like treasuries, which are a very deep, liquid market. How comfortable is the gold market, is the silver market with this moniker of an alternative, as an alternative, to be treated as an alternative to full faith and credit in the United States government?
So I think gold has kind of always had this role as a safe haven traditionally. So you have had, yes, financial flows, but also real physical buying from central banks, from ETFs, and kind of we're used to this sort of flow in gold. I think for silver, because it's also got that industrial metal hat, probably this is where it's a little more difficult because there are real end users who also need silver. So when people are suddenly trying to buy quite large volumes for financial reasons, and then you still have the physical buyers, that's where things get a little tense. So gold, I would say, should be okay with this. Silver, obviously a lot of volatility as we're seeing.
Then you overlay the fundamentals, which is that every country in the world is trying to build up its strategic reserves of some metals, as well as try to build out their infrastructure. We heard about the vault from President Trump, that he wants to stockpile certain metals. Do you have a sense of how much that could really skew valuations? Is that already priced in?
Yeah, so I think the stockpiling theme is super interesting. So we have, as you say, Project Vault launched in the US, which is looking for any critical minerals. Now, the US critical minerals list is about 60 different metals. Some of these are very, very small markets. Some of these are much bigger. And so I think we need to see what ultimately is going to be top priority in terms of stockpiling. I can think, it's probably, it could be any of those metals, but the larger ones could be more easily able to absorb that stockpiling. You could say for copper, actually, already, the US has already built quite a large stockpile. Last year, the US imported probably 2/3 again what it would normally need, and most of that is just sat in the warehouse system. So actually, you could say the US may have an incentive to try and keep that in the country rather than letting that be exported.
I was going to ask you about copper too, because really this matters with demand in China. How weak is the demand, is soft the demand right now for copper in China?
Yeah, I think it's remarkable how strong copper has been considering what we're seeing in the Chinese demand. And this is not a new story. This is something that started back in September, October time. Q4, we saw Chinese apparent consumption down around 12% year on year. So that really weighing on the sort of total full year 2025 demand number. We're going into Lunar New Year, which is where activity typically slows down. So often you see the semi-fabricators slowing down their activity. But yet copper has proved remarkably resilient, which I think tells you there's broader macro factors at play. There's this theme around the AI trade, stockpiling, scarcity, supply chains, and then also these macro overlays of rate cuts still coming through, demand for real assets from investors.
Lisa mentioned Project Vault. What about the fact this administration also has tariffs on some of these metals?
Yeah, so at the moment you've got your steel and aluminium tariffs in place, and what it looks like, if anything, is actually the US has been importing less aluminium than it needs at the moment. So that would imply actually destocking rather than stocking. And copper, we only have tariffs on things like copper wire, not on copper itself, but we are due to hear whether those might come in for 2027.
Do you think they're going to do it?
It's a tricky one to call. I'd say the US is probably more reliant on imports of aluminium than copper. So arguably, if they can do it on aluminium, they could do it on copper. The market is not really pricing that is going to happen at the moment. There's very little premium for US metal at this point. But the other thing they could do is, of course, just kick the can down the road and say, look, let's see again in 6 months from now. And that is more likely to keep the metal on shore, but without really having too much impact on domestic US copper prices.
And just how tight is the copper market at the moment?
So we do have a lot of inventory. We've had this big inventory build in the US, but I would almost disregard that for now because it's sort of locked in the US. If you think of that as a strategic reserve, then you'd say the copper market's pretty tight. London inventory is low. Chinese inventory, yes, is building, which we think is this demand weakness, but we always get builds around this time of year. To me, the big signal for us is going to be as we come out of Lunar New Year, what happens in China? Does activity pick up or not? And that's going to really tell us, is China just pausing because prices have moved a lot, or is this China actually stepping away from the market? Normally, they pause, they kind of get used to the new price levels, and then they come back in.
Can we finish on supply? Back in the day, give a miner $1, they'll dig a hole. Are they still digging holes?
Not so much. So we are now 10 years on from the 2015-16 metals price downturn, which is where mining companies largely cut their budgets, and we're really starting to feel the effects of that. And the challenge is this long lead time. So we can't give you like a big list of new mines that are coming on in the next few years. And even now, where copper prices are really high, you'd argue probably most copper projects in the world would make sense here. We're still seeing companies trying to buy each other or buy assets rather than building from scratch. So really what we're then hoping for is a bit of scrap, a bit of brownfield expansion, but nothing major.
Amy, appreciate your time. It's good to see you in person as well. Amy Gallagher there of Morgan Stanley. Back in the day, that was the story. They've become very disciplined since then, scarred by the events of 10 years or so ago.
Yeah, and how much prices went down and how much they've had a difficulty in actually getting projects through. I mean, I'm surprised that we got through that whole conversation without talking about Resolution mines down in the southwest of the United States. I mean, they're still kind of looking for those copper reserves that they know are there, but they just can't extract out of the ground.
We'll find time to talk about Resolution Copper another time. Don't worry, Amy. We'll make that happen. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Let's cross over to Yahira for more. Hey, Yahira.
Hi, John. Apollo Global Management has set a new lending record. The firm originated $97 billion in the fourth quarter, pushing the total to $309 billion for the year. But Apollo remains delayed in returning capital to investors in its private equity and hybrid funds, blaming the dynamic exit environment. Meanwhile, hedge funds are betting on more pound weakness as UK Prime Minister Keir Starmer's future hangs in the balance. The PM's chief of staff resigned yesterday amid backlash over his appointments of Peter Mandelson as ambassador to the U.S., despite his ties to Jeffrey Epstein. Starmer is expected to either try to shore up his position or potentially be forced out. And Bad Bunny making history at the Super Bowl, the Grammy-winning artist becoming the first to perform on the big stage entirely in Spanish. The 14-minute set included guest performances by Lady Gaga and Ricky Martin. President Trump weighing in on the performance, calling it one of the worst ever and criticizing the dancing. That's your Bloomberg Brief. John?
Yahira, thank you. Thanks for the update. Appreciate it. Up next on the program, the Fed's tug of war.
The labor market looks weaker, right? And this whole kind of battle that the Fed is fighting, this tug of war between inflation and labor, it feels like the labor market will win out.
Up next on the program, Dana Peterson at the Conference Board, live from New York City. You're watching Bloomberg TV.
This is a 15, 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now, and very light, like a ball. Put wasabi in the middle. Then my process 1 to 6. 1, this is putting the between the rice air. Then make the 4 fingers curl, make sushi shape. Then touch this. 2, then turn. Now that these 2 fingers, top to the bottom, make the sushi shape more beautiful. 3, then, looks like pushing, not pushing. 3, 4, turn, same way, 5, and 6. So this is 1 to 6.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Closed out last week with the best day since May. Closed out last week for a weekly decline of just 0.1%, even as software stocks finished the week down by about 8%. Equity futures this morning up by 0.25% on the S&P, on the Nasdaq 100 down by 0.4%, on the Russell 2000 negative by 0.3%. We're down to start the week, down across the board. Under surveillance this morning, the Fed's tug of war.
Certainly, the last handful of data points look like a kind of a re-acceleration to the downside. The labor market looks weaker, right? And this whole kind of battle that the Fed is fighting, this tug of war between inflation and labor, it feels like the labor market will win out. You need a lot more data to really determine a trend.
So here's the latest this morning. The Federal Reserve awaiting delayed reports on both employment and inflation. U.S. payrolls due on Wednesday, followed by CPI on Friday. Dana Peterson of the Conference Board writing, the next 5 days will be a blockbuster week. To look ahead to that, Dana joins us now for more. Dana, good morning. Let's talk about confidence first. The CEOs that we speak to sound confident. Are the CEOs you hear from bullish about hiring? Because that seems to be the story in the data at the moment.
Not really. They're still waiting on the sidelines, and we're seeing that in the actual data. Payrolls have been pretty small, but that's also consistent with a labor market that's still healthy, very close to maximum employment.
Is it a supply side factor then, if it's a labor market that's still healthy? Because at the moment, we're looking back 12 months and we could see jobs growth at 0. Nothing, Dana. That doesn't sound healthy.
Well, it's about levels, not the deltas, right? So, if you look at the data, either the establishment payrolls or the household survey in levels, most people are still working. And those levels have returned to the path that we had before the pandemic with a delta. And that delta is really the advancement of people retiring. Other than that, most people are still working if they want to.
Dana, in the Conference Board's own survey, a number of respondents, the greatest number of respondents going back to 2021, say that jobs are hard to get. You see an increasing amount of concern about the availability of work. And I'm just wondering how much of a forward-leading indicator this tends to be in prior readings.
Well, I think this time it's a little bit different. Yes, it is pointing to the fact that the unemployment rate could rise because some people, especially in industries like finance and tech, are being let go, and it's very difficult for them to find new jobs. And so that's accurate. The survey is saying, yeah, it's tough to get a job out there if you don't already have one. But when you look at the JOLTS data and even the unemployment rate, most companies are not letting anyone go. So we're kind of still in this low hire, low fire place. And again, it's about the level. The number of people who are actually working is very high.
That said, Dana, we have seen jobless claims start to tick up. And there is some concern that this particular reading that we get on Wednesday of non-farm payrolls is going to be really skewed to the downside from the revisions, the benchmark revisions that are going to come out. I'm just wondering what you're looking for to determine whether you're starting to see a shift from low hire, low fire dynamic to something slightly different, a little bit more pernicious, a little bit more protracted to the downside.
Sure. So I'll be looking at two things. Yes, you can look at payrolls in terms of the change. But again, when you're close to full employment, you don't need much change at all because most people are working. So I would look at the level of that. And certainly with the unemployment rate, I would dig beneath the surface and take a look at who's driving it. Is it people who are newly let go? or is it people who are still, looking for jobs? You have to look at those details to understand what's going on in the labor market.
And then, of course, Friday, we're going to get CPI. So as you say, blockbuster week for economic data. What are you focused on when it comes to the inflation report?
Absolutely. I'm looking at, again, underneath the surface, first looking at goods, especially those that are most likely to be imported. Are we still seeing prices increase for those items? And we've seen that in the data over the last few months. So the tariff effect is coming in. However, it's being offset mightily by slowing shelter costs, and that's a good thing. So I'll be looking at the shelter costs to make sure that's still putting downward pressure on overall inflation. But I'll also be looking at any services that are indirectly affected by tariffs, and also things like health insurance and car insurance, which we know have been rising.
When it comes to when you said earlier about CEOs, they're waiting on the sidelines. What exactly do CEOs want to hear in order for them to get back in and start hiring again?
Well, I think for a lot of them, any of them that are exposed in some form or fashion to supply chains are waiting for the trade deals to be completed. There's still some major trade deals that have not been affected. And also USMCA renegotiations start this summer. And if you are an auto company or a lumber company, you're curious to know whether or not you're going to have to pay different rates of tariffs, whether a product is moving from Canada to the US or from Mexico to the US. And so I think they really want to know what that looks like for them.
Dana, it's good to hear from you. Thanks for breaking things down. Dana Peterson there at the conference board. I think it's fair to say that Dana poured a bit of freezing cold water over their own survey with some of that analysis.
Yes, that this time might be somewhat different in terms of just how much it leads to the potential weakening in the labor market. The fact that a forward-leading indicator that in the past might have been somewhat predictive now is being sort of cast with some doubt from the person who's actually crafting that survey raises questions about how you get a clear signal about this labor market. I mean, this is something that we talk about a lot, especially at a time that does feel like an inflection in multiple levels.
I also feel like this was what we heard at Davos. There's a diversification where what corporate America feels and what the everyday consumer feels. They're amped up while everyday consumers are still worried about beef prices.
Big range of estimates going into Wednesday. The median estimate in our survey is around 70K. The high is 135, the low is -10. And if you ask the people at either end of the extreme, the 135 and the -10, both those individuals, Citi, Standard Chartered, are concerned about the labor market data.
Yeah, I was going to say, show me the number, but give me the interpretation, because right now people could get a number and it could be bad, even if it's 100,000 new jobs that are created, or it could be good if it's a negative. I mean, there are some questions here about whether we're seeing a secular or cyclical shift. You've talked about this many times. And ultimately, we're still not getting clarity, even as peripheral data does seem to suggest that there's some deterioration in the labor market.
You're exhausted after last week, even with the weekend.
I mean, no, I'm ready to go. I'm so excited for this week. I think it's great.
Absolutely nuts, the year so far. Just ridiculous. In the next hour of Bloomberg Surveillance, we'll catch up with Bob Elliott of Unlimited Funds, Henrietta Trays of Veda Partners, the former Fed Vice Chair, Richard Clarida, and John Belton of Gabelli Funds. The second hour of Bloomberg Surveillance, just around the corner.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Ahmed, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
We think that there's a potential for upside to global economic growth.
We've been on a gradual slowdown for months now.
The momentum seems to be improving.
If the labor market's turning, it tends to trend.
The real economic story continues.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now, and your scores look like this. Following a massive week last week, a week filled with volatility, 4 percentage points of outperformance on the Russell versus the Nasdaq. That is quite a week. Equity futures this morning negative by 0.25%. On the Nasdaq 100, we're down by 0.5. On the Russell, we're down by 0.3. The week ahead looks like this. Tons of economic data, including payrolls on Wednesday and CPI this coming Friday.
I am excited for this week. We're going to get data, we're going to get earnings, we're going to get stuff that actually is going to give us a picture of what the fundamental backdrop looks like. And this is all the more important after the SaaScopolis of 2026, because there is this ultimate question, and you pointed to Jim Reed's note of Deutsche Bank, where he's saying, this is what happened in 2000. For 6 months, the rotation trade was there, and it was creating a ballast under the carnage that we saw in the tech sector, but then it couldn't keep up. It couldn't really push back against the trend. Do we get the same thing if the U.S. economy doesn't have the same fervor that people like Torsten Slok think it does?
And this Wednesday's jobs report carries even more weight because every January it comes out with these job revisions that go through March of 2025. So we could get a downtrend in jobs. So that is why there's extra weight on this jobs report, and people are incredibly excited to see what happens from it. And at the same time, we're going to get CPI on Friday. Good Mary Daly over the weekend taking to Twitter saying it is important for Americans that the Fed make sure that we are on top of inflation, but at the same time, they're not losing their jobs.
I'm just excited to speak to our next guest. This quote: policy announcements, attacks on Powell and Fed chair pick make it clear they plan to be debased AF. He needs to define what all that means in just a moment.
Yeah, say it out loud, debased AF.
I literally wrote down a question. Please explain in your words what debased AF means.
We're giving him some time to come up with an answer now. Coming up on the program, we'll catch up with Bob Elliott of Unlimited Funds as equities seek a rebound. Henrietta Trays of Vader Partners as Scott Besson urges the Senate to open Fed chair hearings. And Richard Clarida, the former Fed vice chair, with the central bank's balance sheet in focus. We begin this hour with stocks inching lower at the start of a busy week filled with economic data. Bob Elliott Elliott of Unlimited Funds, seeing the case for US equities building, writing, not only are earnings growing double digits against low expectations, but macro surprises are strong with little reaction from the equity market. Bob joins us now for more. Bob, good morning.
Good morning.
Time to answer then. Okay, so here's the quote again. Policy announcements, attack on Powell and Fed Chair Pick make it clear they plan to be debased AF. What do you mean by that?
Well, I think there's a real question as we were coming into the year about whether the administration would pursue essentially a set of policies that would continue the debasement and easy money, easy street policies that they've sort of signaled and now sort of carried through in the first few weeks of the year. And, you know, the trade-off was whether they're going to do that or accept lower growth. And it's pretty clear they're going to do whatever it takes to juice the economy and markets. Now, there's always a question whether they'll succeed, but it's clear that they're going to choose a debasement path ahead. And it's a little play on based AF, which
of course,
which you know you can look up what the young kids are saying these days.
We'll let other people do that for us this morning. That's the move in precious metals at the start of the year. What do you think has led to the rewind of the move in precious metals since the start of the year?
Well, sometimes you get speculative manias, and I think if anything, the mania that you're seeing, you saw in gold, and then obviously extreme in silver, was really about showing how much liquidity there is out in the market. And so you saw incredible flows, like flows into silver that were the most extreme, you know, by 10x that they've ever been. That doesn't happen in an environment of tight money or of paring back risk-taking. That happens in an environment where there's lots of liquidity and people are just looking for the next mania and the next mania. Now, I think it's easy to sort of bring silver and gold and hold them together as the same trade. One is totally speculative by people who are tourists in those markets. That's silver. The gold trade is, you know, got hot for a minute and then pared back. But if you look at the underlying fundamentals of what's going on there, whether it's ETF flows, which remain relatively subdued, the Chinese Shanghai premium, which has come down a lot, like the underlying fundamental dynamic in gold, the bullish dynamic in gold, is quite intact. And that's why what we've seen is pretty sustained buying pressure over the course of the last couple of days. And, you know, things like today's announcement that the Chinese banks are going to get out of U.S. bonds is just further evidence that, you know, the hard money world is going to benefit from the easy street policies of the U.S.
You're saying two things that are somewhat contradictory. On one hand, you're saying it's a mania into metals. On the other hand, you're saying on the margins with gold, as with other assets, it's what you think is going to dominate this year, which is the get-out trade as foreign investors get out of U.S. assets. Where do you see evidence truly that the get-out trade is taking place?
Well, I think you see it across a wide range of different trades. I mean, first of all, you're seeing foreign stock markets crush the U.S. over the course of, to start off the year. And so you see, and driven by fundamental pressure. So you see today's moves in Japan. That's such a good example where you have a policy environment and a political environment that's going to be favorable to Japanese stocks. Why wouldn't, and the world is underweight Japanese stocks. But massively overweight U.S. stocks. And so you're seeing folks move. A lot of the moves initially are around in the currency hedging, right? The first move that you can do, which is super easy, is to just hedge back your currency positions and move to local currency. Because basically everyone in the world, every major allocator in the world has had an implicit long dollar position over the course of the last 15 years. It's traded well, but it hasn't traded well over 10 years, 10, 15 years, but it hasn't traded well since. And so that's the first move. Cut back on your implicit dollar longs, and then scale back. Every incremental dollar going into a domestic, meaning like a European or Japanese market, and not in the U.S. market, favors those markets.
How much is this really being driven, though, by a concern about being debased AF? And how much is this actually driven by the fact that this is a bull market and there is growth in a lot of places? And frankly, there's a catch-up act being played in certain emerging markets, particularly with technology. I mean, how do you decipher which is which?
Well, I think in some cases, when you look at the developed markets and you look at the breakdown of why they've been able to outperform, it's a combination of currency and PEs expanding, right? So expectations are being, are picking up in those markets. If you look at something like emerging markets in aggregate, and of course there's a wide range there, that story is actually quite fundamental. And so you see basically earnings growth describing 100% of the strength in those equity markets. And so in many ways, emerging markets, which are long forgotten by the developed world or major allocator, that looks like the most attractive place to be, and we're starting to see capital flow into those positions.
Bob, when it comes to the Fed, does Kevin Warsh make sense if this administration wants to be debased AF?
Well, I think the end of Trump's Truth Social post about him was most telling. Not the one about the fact that he was good looking, but the part that he said that he can be
Thanks
relied
for clarifying. That he can be relied on.
That he can be relied on, and even this sort of talk about the Treasury Fed coordination that has been highlighted over the last couple of days. The question is, what does that coordination look like? You know, back in the 50s, it was about independence. The question now is it about independence or it's about coordination to ensure low rates and cheap Treasury financing in the future? And so you have a highly political person. His language, his rhetoric has made it very clear he's favorable to administration policies and willing to be easy, even in the face of relatively strong conditions. And that's probably what we're going to see.
So you're not concerned that Kevin Warsh, or you don't think he's a hawk?
Well, I think he is a political figure, and he's demonstrated, and I think that's one of the challenges with him. You know, I argued that maybe we should have somebody who has some economics or real markets experience running the Fed. Instead, we got a politically connected lawyer again. And so I think that the challenge is what we get here is we get someone who is tied to the administration who's going to be doing the bidding. He's basically made that clear. His rhetoric has been very clear back through time in terms of his soft money rhetoric aligning very well with previous Republican administrations. And so I don't see why you would think that he would break out of that mold ahead.
Until the next election. Is that what you're implying? If there's a change in 28?
Well, I think it's pretty clear how he's behaved in the past. Actually, Anna Wong from the Bloomberg team has done a really good job highlighting how his language has changed in different periods depending upon who's in the office. And so I think it's one of the rare cases where we have years, decades of track record to see what his rhetoric is relative to what conditions are. And he's proved himself to be a political actor in making policy.
So let's talk about a hypothetical. Let's say Torsten Slok is right, and that later this year, the economy is running so hot that people start to think maybe a rate hike would be necessary. Kevin Warsh, you're saying, if he is a political actor, would not necessarily take action. What happens? How does this work if people are waiting until 2028 for that rate hike to happen?
Right, so it's an environment, you know, easy street monetary policy is an environment that's favorable to gold and stocks in that environment, and is challenging for bonds. And so what you'd see is you could easily see monetary policy on the short end that's too easy relative to conditions, and the long end is going to punish the market related to that. So trades, you know, even right now, when you look at what's going on with the yield curve is not that steep relative to the strength in the economy, relative to the upside surprises we've seen, relative to where we are in the cycle, and coming out of a significant easing already. And so I think trades that favor, you know, easy street stocks versus bonds, gold, and short dollar positions are all gonna win in that sort of environment.
2s10s at 73. How much steeper are you looking for that curve to get?
Well, remember, typically in growth rebounds coming out of easing environments, you see the curve steepen to hundreds of basis points. And so while we're squinting at whether it's at 73 and the nearby high and stuff like that, like from a macro perspective, the yield curve is very flat right now. And you have an administration that is very keen on delivering easy policy relative to conditions.
Just quickly, what do you think is going to drive foreign exchange, the front end or the longer end of the curve?
I think it's much more about how the foreign investors see the over easy monetary policy that's being delivered. And so it's all about that hedging on expectations that easy money is going to happen.
Bob, thoughtful stuff, lots to think about. A very provoking framework to think about the financial markets.
Yeah, although interesting to me that the Sell America trade is not necessarily driven by antipathy toward statements coming out of the White House, but rather having to do with easy money coming out of the Federal Reserve. This all comes down to how the Federal Reserve acts if there is a Torsten Slok-like scenario down the line, which is a reacceleration and a Federal Reserve that maybe ought to be, in the market's eyes, talking about a rate hike, but might politically be disincentivized to do so.
You'd have to think that Chair Walsh is going to let that rip if we do get that rapid acceleration into year-end.
Which goes to the question of, is it going to be the Warsh Fed or is it going to be the everybody Fed? Chime in and let's see what we get.
Hey, Bob, thank you. Thanks for dropping by. Bob Elliott of Unlimited Funds there. Your equity market is doing okay. It's negative this morning by about 0.1% on the S&P. With an update on stories worldwide with your Bloomberg Brief. Here's Yahira. Hey, Yahira.
Hi, John. Wegovy maker Novo Nordisk sharing it is suing Hims & Hers Health for making knockoffs of its obesity medicines. The lawsuit alleges Hims is breaching its U.S. patent on semaglutide. Shares of Novo Nordisk are rallying in the early trade, while Hims & Hers are extending declines, down 17.5%. Meanwhile, House Minority Leader Hakeem Jeffries saying Democrats will not pass a Department of Homeland Security funding deal without getting a full reform of immigration and customs enforcement, known as ICE. The demands include prohibiting officers from entering private property without a judicial warrant and requiring agents to wear body cameras and ID badges. Lawmakers have until Friday to reach a deal. And Kroger is reportedly naming former Walmart executive Greg Foran as the supermarket chain's next CEO. Sources telling us here at Bloomberg, Foran would be the grocer's first CEO brought in from outside the company. The announcement is expected to come as early as today, as the nation's largest grocer looks to carve a new path after the unexpected exit of its former CEO. That's your Bloomberg Brief. John.
Hey, Yahira, thank you. More from Yahira later this hour. Up next on the program, turning up the heat on the Senate.
When Kevin Warsh was up to be a governor of the Fed, he got 100 votes. So I would say, why don't we get the hearings underway and see where Janine Pirro's investigation goes?
Up next on the program, we'll catch up with Henrietta Trays of Vader Partners, live from New York City this morning. Good morning.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities. It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Coming into the week, believe it or not, the equal weight S&P at all-time highs after a rally of 2% last week. Same story on the Russell, 2% move, even with the volatility in big tech. Nasdaq futures this morning, negative by 1/3%, down just 1/10 on the S&P. Small caps softer by 0.1%. That's the story in stocks. Here's the story in the bond market. A story out of China. Our colleagues at Bloomberg reporting that China's telling Chinese banks to curb their exposure to U.S. treasuries. The move? Not even 2 basis points, the 10-year 422.59, and maybe that speaks more to what developed in Japan over the weekend, a massive blowout win for Takaichi.
Yeah, and really highlighting how her mandate to really make fiscal changes is significant and resounding, which raises questions why there isn't a more predictable reaction in markets, which is sell the yen, you're seeing the opposite, or potentially sell JGBs en masse. You're seeing a bit of an increase in terms of yields there, but not necessarily some wholesale exodus, which goes to the question, what's more important? Fiscal dominance or growth? And right now, people are saying maybe the growth side of things, in addition to more discipline, will really drive some strength there.
Japanese equities record highs overnight. Japanese equities rallying by close to 4%. Let's bring it back home. Under surveillance this morning, turning up the heat on the Senate.
I would point out that when Kevin Warsh was up to be a governor of the Fed, he got 100 votes, and that was led by his home state senator, Chuck Schumer. So, and Senator Tillis has come out and said he thinks that Kevin Warsh is a very strong candidate. So I would say, why don't we get the hearings underway and see where Jeanine Pirro's investigation goes.
So here's the latest this morning. The Trump administration ramping up the pressure on the Senate to be in confirmation hearings for the president's Fed chair pick. The Republican Senator Tom Tillis vowing to block any nominations until the criminal probe into Jay Powell is complete. Tyler Kendall joins us now for more. Tyler, welcome to the program. What will the Senate make of that suggestion from the Treasury Secretary?
Well, John, at this point, I'm not quite sure if it's really going to make that much of a difference, because at this point, Senator Tom Tillis is holding firm that he's going to block the nomination until the legal matter is resolved. And the Treasury Secretary here is appearing to suggest that the Senate confirmation hearing should happen in tandem with the DOJ's investigation, because this is a process that is going to take some time, right? Warsh needs to sit down privately with individual senators before his testimony. And I was on Capitol Hill last week, and I have to say, no one on the Senate Banking Committee could give me a timeline for when those meetings are going to be set or when that confirmation hearing date is going to be set. And while we still have time, of course, before Powell's term is up, if this standoff extends beyond May 15th, there are unresolved legal questions about what exactly will happen next year. Because while the Treasury Secretary is right, there is broad support among Republicans when it comes to Kevin Warsh's nomination. There is not broad support for the Department of Justice's investigation into Jerome Powell. In fact, we're seeing a mounting number of those on the Senate Banking Committee raise doubt that there is anything even to investigate when it comes to Jerome Powell's testimony before this very committee. Multiple of them told me last week that they do not think that Jerome Powell had any criminal intent in his testimony to them last year. Now, John, there's a few different dates and things that we could keep on the radar, but I will say I am closely watching for when we get to the deadline for the Federal Reserve to comply with the grand jury subpoenas that were issued. There are still some big questions about this investigation, including whether or not compliance is happening. But once we get that date, that could give us a little bit more of clarity or a timeline to look for about whether or not the DOJ is satisfied with the information they're receiving and whether they will ramp this up or tone it down.
A chorus of Senate Republicans pushing back over the last week. Tyler, thank you down in Washington. For more, Henrietta Trace of Veda Partners writes the following: Senator Tillis can and will hold up the nomination process, and he has the implicit but silent support of Republicans in positions of leadership. Henrietta joins us now for more. Henrietta, welcome to the program. Play this out with us. What if we're in exactly the same place that we are now in May, in a few months' time? What happens at the top of the Federal Reserve?
Yeah, I mean, that's a little bit of my concern here is I'm not sure why the administration is being so hard-headed about this. You really want for there to be a fresh slate at the Federal Reserve. And I think one of the biggest issues, and I hear this from clients all the time on the road, is that if you get Warsh confirmed through the Senate, through the Banking Committee, and then he goes to the Senate floor, and as Secretary Bessent suggested, he has been able to get unanimous consent from the members in the past. Jay Powell wants for this candidate to get robust bipartisan support. That's the goal. 80, 90 votes in the U.S. Senate, and that is achievable. And at that point, then you could have Jay Powell feel potentially comfortable stepping aside, clearing more room, and giving the president really what he wants. But instead, we're having this really contentious back and forth, and it's created this groundswell of questioning around whether or not Jay Powell would actually get off the board after his term as chair is up. And that's something that could be resolved, honestly, by some of these votes on the floor for Warsh and his confirmation.
But Henrietta, to John's point, what actually does happen logistically if we do not have Kevin Warsh nominated and sailing through the Senate at that point? Does the Federal Reserve current chair, Jay Powell, stay as the chairman? Or does the president get to put someone else as an acting Fed chair, which some individuals say that that is a legal path forward?
Yeah, that's definitely what the White House is pursuing. That option creates a real pressure point that allows him to have his nominee there without having to go through the United States Senate. And that's I think when I have these conversations, those are the parlor games that are playing out. What we've seen from this administration is that they can try to stress test the legal argument. They will. So I think we should count on that being the route that they take from here.
Are you seeing anything in the Senate, especially with Senator Tom Tillis, that he's willing to maybe back down?
No, I'm not. And I've been really close with Senator Tillis's office for years now. The senator has taken a very strong stand, and I stand by what I wrote over the weekend to clients, which is Senator Tillis is doing the Lord's work for a lot of members who feel exactly the same way. They do not like what they have seen from the White House on Jay Powell. They do not like the pressure campaign on the Federal Reserve, whether it be with Lisa Cook or even back to the BLS firing of Erica McIntyre. But they don't like this extreme aggression from the White House. And so Tillis might be the face of all this. He doesn't have to run again for re-election. But the other members behind the scenes, including the chairman of the Banking Committee, Tim Scott, do not like what they're seeing out of the White House.
Henrietta, there's a larger point here, and I think it's an important one. How much is there a groundswell of pushback to President Trump that could make itself much clearer, even in the Republican Party, after the midterm elections? Do you feel that starting to build, or is this just sort of a one-off issue where the Federal Reserve's independence is sort of a different kind of topic?
I think that both of those are true. The Federal Reserve is very much a different kind of topic, and members know that the Fed chair is an incredibly important, needs to be, overwhelmingly accepted. Very unlike a Supreme Court justice, for example, who you can get in with 50 votes and J.D. Vance breaking the tide. Nobody wants that for the Federal Reserve. So that's the first piece. The second piece actually has two layers. As we get beyond the primary election cycle and into the general, where a Republican will have to run against a Democratic challenger, especially in this cycle, where the president is materially underwater on handling of the U.S. economy, of prices, inflation, jobs, and immigration now, those Republican candidates have to start deciding whether they want to run very closely tethered to the president or if they want to pull away and try to win a general. That's going to happen even before we get to the post-midterm period and get into the 2028 cycle of who's going to be the front runner for the Republican candidacy. Is it going to be a J.D. Vance style candidate that will keep the MAGA mantle, or are we drifting into a Todd Young, Josh Hawley, and maybe a middle ground foreign policy focused Marco Rubio? Those questions are all coming our way, and they start when we get into the general election of this year, not just the primary season we're in right now.
Starting to see just a bit of pushback, aren't we? Henrietta, thank you. Henrietta Trace there of Vader Partners. So the chairman's last meeting is at the end of April, and we've got some time before we get there. He steps down in May. Possibly. I've got no idea. But you can start to envision a situation where this mess is not sorted out by the time we get to the Fed's April meeting.
And we don't really have a sense of what the clear path is ahead. I mean, if you do get a Fed chair that presides over, presumably, his last meeting in April, and then there is no Fed chair, does he just stay on, or does it become the Waller Fed in the meantime as one of the governors take the helm? Ultimately, the lack of clarity here is going to become messy for markets as we get closer to this event.
I wonder if it becomes so messy for markets that you have Senator Tillis back down, or the White House putting pressure on the DOJ and saying, all right, you need to wrap this up because we need to move this train along.
It only gets messy for markets if markets actually want something from the Federal Reserve. And I don't think we're there just yet. If the data continues to worsen, then we're in a very, very different spot with regards to the Federal Reserve. But at the moment, if the Fed was to have a meeting tomorrow, I think that meeting would still be a little bit meh for a lot of market participants.
Depends if Warsh's commentary changes the picture in terms of what he plans to do, if we get a sense of who this Kevin Warsh really is.
That could change with a little bit of payrolls data on Wednesday and CPI on Friday. Richard Clarida joins us next.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the Dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Equity futures this morning down by 0.1% on the S&P, following a super volatile week last week, which closed with the biggest one-day gain since May on the S&P 500. The regional banks are the story for me, though, up every single session through last week, Monday through Friday. The regional bank stocks, record highs, and up 7% last week. Will this economy hold up and justify the rally? In the bond market, 2-year and 10-year yields lower on the week just marginally. The 2-year at 349.75. A tug of war between ISM manufacturing, services, and some weaker than expected labour market data. And we'll get some extra data later this week, which will breathe some life into the debate of the past few days.
We get finally the non-farm payrolls report for the month of January, as well as some of the benchmark revisions to the quarterly household survey, which is going to be really interesting in order to get a sense of the broader 2025 picture. We've gotten weaker employment data, and it hasn't really meant much for the reacceleration. So what do we do if we get data that shows weakness or that shows strength? Can we infer anything about the momentum that we're seeing under the hood in some ISM services and, frankly, in a lot of the earnings as well?
10-year bond yields this morning up just 2 basis points, just about unchanged at 4.23. Let's count you down to the opening bell. 2 hours away with some single names, some morning movers. Danny has more. Hey, Danny.
Hey, John. It's the drama between Hims & Hers and Novo Nordisk. First, Hims & Hers comes out with a cheaper GLP-1 pill around $50, and then Novo Nordisk sues them, and then the FDA says that they're investigating, going to ban those copycat medicines. Well, over the weekend, Hims & Hers saying they will not be selling those pills. Hims & Hers taking a beating on that, down almost 20%. Novo Nordisk, those ADRs in the U.S. rally some 5.5%. Meanwhile, Kroger's has confirmed that it will have a new CEO. Greg Boren, coming from Walmart, largely credited with turning around the U.S. business at Walmart, making it more friendly, making it more bright. The previous CEO of Kroger was ousted because of an investigation into personal conduct, so those shares up 5.2%. Finally, ST Micro, the semiconductor company, reaching an agreement with Amazon, will be supplying it with semiconductors. STM has seen largely behind on the AI data infrastructure race, so this is a boost to get it there. Also, this allows Amazon about 7 years where they can buy STM stock. So again, shares moving on that news up more than 6.5% in the pre-market, John.
Hey, Danny, thank you. Thanks for the update. More from Danny in the next hour. On our radar this morning, Chinese regulators advising banks to curb their holdings of U.S. treasuries. Officials framing the move around diversifying market risk rather than geopolitical maneuvering or loss of confidence in American credit. Elsewhere, the Goldman Sachs trading desk sounding the alarm, saying the U.S. stock sell-off is not yet over. The team warning of more trades from trend-following algorithmic funds. They say a renewed decline could trigger $33 billion in selling later this week. And finally, President Donald Trump taking ownership of the current U.S. economy after months of blaming the Biden administration.
The one thing that they don't say anymore is affordability, because I fixed the problem that they created.
You said you inherited a mess from President Biden when it comes to the economy. But at what point is it on you? At what point are we in the Trump economy?
Oh, I'd say we're there now. I'm very proud of it.
The president predicting an economic boom this year, saying in a recent cabinet meeting growth could reach, quote, numbers that have never been hit before.
This goes in counter to a number of different polls where people aren't necessarily feeling it, and they feel fairly negative on average toward some of the developments. It raises a question, and this, just bear with me. If you're a conspiracy theorist, sometimes President Trump comes out with things ahead of data releases because he's seen the data. Does this mean that the data is going to actually be better on Wednesday? Or is this signifying more stimulus down the pike, especially if we don't have that kind of boost? In other words, how much of a commitment is this to trying to make this a good economy this year, regardless of anything that develops?
I think the president is just trying to market what he's doing, given the fact that this is the Super Bowl, of course, interview that he knows millions of Americans are going to have their eyes on. What I do think is interesting, though, is that they are taking ownership. I was looking back at our March interview with Howard Lutnick, where this entire phrase came to be. We were questioning him about the data, and I think he turned around to you, Jonathan, and said, you're looking at Biden data. That is not Trump's data. And at this point, now this administration, we are at more than a year in to Trump's second term. They are now owning this data, and they have to.
There are many lessons from the Biden administration. Number one, don't gaslight the public. They'll see right through it, and you'll get punished at the polls when the voting comes around. And I think the administration is very, very aware of where this economy actually is and the way people feel. Otherwise, you wouldn't have seen this pivot at the back end of last year coming into this year and leaning into some very populist ideas ahead of the midterms.
So what's next? If people still feel this way, right, how much are we going to get proposals to try to offset what people are still feeling? Because people aren't feeling like this is the best economy in the world.
Well, Friday night, it might have been missed by a lot of individuals because it came out late, but there was a directive from this White House about beef imports. Now, this is going to hurt farmers and cattle ranchers. They are upset. They need those high beef prices because of what is going on right now in reduction we have in cattle, but they are letting more Argentinian beef in. And do you know why that is? It's because beef is at record prices, and this continuously shows up in polls. Higher groceries, it's a problem.
Inflation data coming this Friday. Jobs data, of course, this Wednesday. Let's turn to the Federal Reserve. The U.S. Treasury Secretary Scott Bessent sharing his expectations for a Kevin Walsh-led central bank.
It was pretty clear to me. I wrote a 7,000-word essay in the International Economy magazine. I called it gain of function monetary policy.
That's right.
Saying that the Fed had gotten kind of out of control. And I think that Kevin Walsh is going to be very independent, but mindful that the Fed is accountable to the American people.
The former Fed Vice Chair and Global Economic Advisor at PIMCO, Richard Clarida, writing, Walsh has argued for a new Treasury-Fed accord that could provide a framework for the Fed working in tandem with the Treasury to shrink the size of the balance sheet. Rich joins us now for more. Rich, good morning.
Good morning.
Want to give you some more time to explain how you're thinking about an incoming Chair Walsh and what might change at the institution you worked at for so long.
Well, thank you for that. Look, Kevin Walsh I've known for a dozen years. He's accomplished. He's respected. He has a paper trail, and he's been quite specific in his assessment and in many cases criticism of Fed practice, really along three dimensions. The balance sheet he thinks is too big. The Fed has gotten into credit allocation and mortgages. He's been critical of forward guidance information the Fed provides about future rates. And he's been critical that the Fed has not really anchored its policy in policy rules. And so over time, not on day one, but over time, Jonathan, we could see the Fed adjusting policy along all three of those dimensions, including the balance sheet.
Well, let's start with communication and then turn to the balance sheet. The post-GFC Federal Reserve and the communication apparatus, I'm sure there were certain things that you were frustrated with yourself when you were at the Federal Reserve. What would you like to see change, and what do you think ultimately Kevin Walsh will change?
I think there are a couple of things I would highlight. First of all, it's very possible to run a successful monetary policy without any forward guidance. Paul Volcker did it for 8 years, and Alan Greenspan did it for his first 17 years. Forward guidance providing information about future rates really came into focus at the Fed in the global financial crisis. Rates were at zero, and the markets kept pricing in rate hikes. And so the Bernanke Fed said, we're not hiking rates. And so I think it is legitimate for the Fed to have a conversation and discussion about the costs as well as benefits of forward guidance. It could be about the dots. I think it's more than just the dots. So I think that's probably a direction they'll move, but it's not going to change overnight.
So I'm just thinking, is this basically going to spike the dots? And you're saying, well, you know, that's a big part of it. I mean, do you expect there to be some sort of limit on how much other Fed members can speak, right? So there's this question of how much the Fed has been dominated by the person at the top.
Yeah.
It has always been the Bernanke Fed, or what we got with respect to Fed Chair Powell and the Powell Fed. Yeah. Is this going to be the Warsh Fed, or is there going to be a different dynamic given some of the dissents that we're likely to get?
I think it will be the Warsh Fed. I think it's helpful that Kevin knows the institution. I think that will be important in terms of shaping it in his direction, but it will take time. As you point out, it's a good question. The chair has the power of persuasion, but at the end of the day, he or she only has one vote. Congress set up the Fed to require that interest rate decisions, hike or lower rates, require an affirmative vote of a committee, and the committee has 12 members. Now, in the time we've all been following the Fed, the chair almost always gets his or her way. But if you go further back, we've had situations where the chair has been outvoted on both discount rate and federal funds rate changes. I'm not predicting that, but what I am saying is Kevin Warsh will have to work with the committee and will have to bring the committee along with him if he wants to make the changes that he says he wants to make.
Does the committee include Treasury Secretary Scott Bessent? And I ask this because we're talking about a potential accord between the Federal Reserve and the Treasury. We also have heard Treasury Secretary Bessent talking about Fed policy, what he expects them to do with the balance sheet, which raises this issue of whether, as Krishna Guha says, he has a soft veto over what Kevin Warsh would do. I mean, what's your sense of what this looks like?
Well, it's a complex issue, but let me distill it. The Fed balance sheet and profitability is ultimately consolidated with the Treasury. And so ultimately, the stock of Treasuries outstanding is going to reflect the issuance that Scott Bessent oversees and the Fed's programs of quantitative easing. And I think it is appropriate to have a discussion with the Fed and the Treasury over time about the way to balance off the objectives of the securities outstanding, without, of course, impinging on the Fed's ability to set monetary policy. It's possible to do that. The Fed could run monetary policy with a much shorter duration portfolio, as was the case before the global financial crisis. And also, remember, if you go back to the early days after the global financial crisis, the Fed was actually talking about selling securities and very quickly getting back to a small balance sheet. And so these are complex issues. It's not going to change overnight, but I think they are legitimate areas to have a conversation.
They're not going to change overnight, and the Treasury Secretary made that clear in his interview over the weekend. He said, I wouldn't expect them to do anything quickly on the balance sheet. So what kind of timeline are we actually looking at?
Well, given that the Fed's been talking about this off and on for 15 years, it may be a very long timeline. And in particular, the Fed has made the decision, which could be changed, that it does not want to sell any securities. And so when the Fed is shrinking its balance sheet through so-called QT, it's not selling anything. It's just letting existing securities roll off. Other central banks do sell assets. The Bank of England regularly sells gilts into the gilt market. The Fed itself has talked about selling mortgage-backed securities. And so these are all ideas that have sort of been in the conversation at the Fed for a while, but it's not going to happen overnight.
The Trump administration says they want to take politics out of the Fed. We just heard from Bob Elliott. He was saying how Kevin Warsh isn't hawkish or dovish. He's a political animal. I don't know if you saw over the weekend, but there was a chart really going all over Twitter where you could see his rhetoric changing depending on if it was a Democrat or Republican in the White House, especially depending on if he was maybe in the running to be Fed chair, how dovish he became. What do you make of that, given how long you've known him?
I didn't see that chart. What I would say is the Fed under Jay Powell in the last year and a half has been cutting rates, and the dots, those infamous dots in December, showed that a majority of the committee thought at least one rate cut this year would be appropriate. And so I don't necessarily infer anything other than Warsh sees the economy as the Fed did, at least in December. I do seem to remember Kevin not being entirely complimentary of the Powell-Clarida Fed either during my time there. So I don't think it's entirely driven by any of those considerations.
Rich, can we finish on Torsten Slok of Apollo? He put out this over the weekend. I'd love your reaction to it. He said the U.S. economy is about to take off. Later this year, the conversation in markets will change from talking about Fed cuts to instead talking about the Fed having to hike. What's your reaction to hearing that?
I think I've said on this show, I think there is an upside case for the economy this year. The tech CapEx boom is real. There will be those big, beautiful bill tax cuts that people are getting. Foreign companies are building plant and equipment in the U.S. Whether or not, Powell was asked that question perhaps by Mike McGee at the press conference recently about rate hikes, and he more or less said that's not something that we're thinking about right now. But it gets to the forward guidance issue that we discussed a moment ago. It may well become part of the conversation if we get an economic boom this year, especially if inflation doesn't return back towards the target. And at that point, the forward guidance, the skepticism about forward guidance that some have indicated, including Kevin Warsh, may come to a test.
Rich, it's good to see you. Always great to catch up. Thank you, sir. Richard Clarida there, the former Fed Vice Chair and now back, of course, over at PIMCO. Let's give you an update on stories elsewhere this morning with your Bloomberg Brief. Joining us now, here's Yahara. Hey, Yahara.
Hi, John. In Japan, Prime Minister Sanae Takaichi secured a historic election win, her Liberal Democratic Party winning a two-thirds supermajority in the lower house, which positions her as the nation's strongest leader in decades. In remarks, Takaichi vowed to build trust with financial markets amid concerns over how she'll pay for a planned tax cut. Meanwhile, here, a federal judge ordering the Trump administration to unfreeze funding for the Gateway Rail Tunnel project after construction shut down due to a lack of funds. This came after the White House offered to restore funding if Senator Chuck Schumer pushed to rename Dulles Airport and New York Penn Station after the president. And if you didn't stay up late enough, the Seattle Seahawks are Super Bowl champions after a dominant performance over the New England Patriots. Seattle held New England scoreless until the fourth quarter, finishing the game with 6 sacks, 2 interceptions, and a fumble recovery. Running back Kenneth Walker was named MVP after rushing for 135 yards. It's the second title in Seattle franchise history. That's your Bloomberg Brief. John.
Yahara, thank you. Thanks for the update. I'm next on the program questioning the AI trade.
There's not just questions about valuations, but it's actually the models. Can they actually deliver? Which part of the market could they cannibalize themselves, etc.? So increasingly for investors who once upon a time could see this as a one-way trade, this is really about dispersion.
Up next, we'll catch up with John Belton of Gabelli Funds from New York City. You're watching Bloomberg TV.
The phone is, what's great about it is it's a well-developed gaming ecosystem, right? So, folks know to find games there, but it's also a highly competitive gaming ecosystem. So it's developed, this gives you both that upside and the downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are going to unleash this with a bunch of creators, and they're going to go figure out stuff that we didn't even imagine that they can do with that interactivity.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Hazlida Amin in Davos, Switzerland, and this is Bloomberg.
Let's start with the scores. Equity futures negative by 0.1% on the S&P. On the Nasdaq 100, down by a third. Massive volatility for tech stocks last week. Huge numbers as well. $650 billion of CapEx intentions announced by some of these guys. And a big one coming from Alphabet. Google. Alphabet this morning kicking off a 7-part dollar bond sale. That is going to be closely watched after announcing $185 billion of CapEx just last week.
Yeah, how does the market handle this? We already dealt with Oracle's bond sale, it cleared. How does the market handle a 100-year bond sale from Google, which evidently there is a pound-denominated tranche that's 100 years long? I mean, how much do we get people bidding into 15-year Alphabet debt at a time when they clearly need the money? It used to be they didn't need the money. Now they're selling bonds because they actually need it for some of their CapEx ambitions.
When credit and credit issue, this big issuance, comes through, sometimes it kicks around the Treasury market, and you're seeing that this morning. Yields up by an extra basis point, 424 on 10s. That's a lot of supply to absorb, and something we'll closely watch through today's session.
And who's going to buy it, and how are they going to finance it, and how much are they financing it on the longer end of the Treasury curve, given the fact that some of these tech behemoths have leaned on long-duration bond issuance. I mean, think about this. Long-duration bond issuance to buy NVIDIA chips that are going to go out of date in 3 years. I mean, it just sort of highlights the situation. It's like a sieve.
US Treasury issuing debt later this week as well, 10 and 30-year bond issues. So lots of supply coming this week, going into CPI on Friday and payrolls on Wednesday. Under surveillance this morning, questioning the AI trade.
In Q3, Q4 of last year, the narrative around tech and AI was really about questioning of valuations, about bubble, the CapEx spend. And now you're seeing it shift even further, so that there's not just questions about valuations, but it's actually the models. Can they actually deliver? Which part of the market? Could they cannibalize themselves, etc.? So increasingly for investors who once upon a time could see this as a one-way trade, this is really about dispersion.
So here's the latest this morning. Waking up following a massive week of volatility. Nasdaq 100 wiping out $700 billion in market value. John Belton of Gabelli Funds writing, valuations have had a healthy reset. Longer term, the reality is that, as always, there will be winners and losers. John joins us now for more. John, welcome to the program, sir. Can we live in a world where CapEx is both a waste of money and AI is ridiculously disruptive?
I don't think so. I think that's why you're seeing these types of CapEx numbers, because this technology is very clearly transformative. It's already got a couple major commercial use cases. I think so far we've seen digital advertising, digital commerce, cloud computing, and now it seems like software development are three massive use cases that are already proven. Many more to come, but I think that's why you're seeing these huge CapEx numbers.
John, last week in the price section, as you know, a lot of people were preoccupied with the pain, the disruption. What about the benefits? Where are you focused on the benefits?
Well, again, I think I'd go back to the comment I just made, where clearly digital advertising, the big giants in digital advertising, specifically Alphabet and Meta, clear beneficiaries. These are, you know, several $100 billion ad businesses that are re-accelerating at that kind of scale. That's kind of amazing to think about. So I think that's beneficiary number one, and the way they're using AI to support these businesses. So it's not just about, you know, delivering the right ads in front of the right people and defining those audiences. It's about automatically generating ads and making the process easier for their advertisers. So I think there's still so much to be done in that area. And then I think cloud computing is the next, and that's obviously a broad term, but you're seeing these cloud businesses from the likes of Amazon, Alphabet, Microsoft, and Oracle similarly re-accelerate at $100+ billion scale. So I think those are the early beneficiaries seem pretty concentrated in those areas, and I think we'll see how that unfolds going forward.
John, if you buy, and I think a lot of people do, that AI is going to change the world and be incredibly profitable for companies that are able to adopt it, that's one thing. It's another thing to say that the multiples that we currently have on some of these tech stocks are justified based on the fact that they're no longer asset-light companies. They're increasingly incurring debt. Google is selling debt now with 40-year maturities in the United States, according to this latest prospectus, and suddenly they're burning through cash and not able to buy back their shares. How much does that make you have to re-rate some of the valuations on these stocks, regardless of the view forward on AI?
Yeah, I would just clarify a couple things you said. So first of all, none of these companies are burning cash right now, right? I think Oracle would be the one exception among the big cloud companies. But, Meta, Google, Amazon, Microsoft, these are still positive free cash flow companies. They're still, 30+% operating margin companies. So I don't think, yes, they are in an investment cycle. That is true. But burning cash, I think, overstates, the extent to which they're spending. And then I think you look at these balance sheets, these are all by and large net cash balance sheets. So I think issuing debt, that's just a matter of capital structure optimization. That's just a prudent way of optimizing the mix of funding for these businesses. So these companies have no balance sheet issues. They have no cash flow issues. And in terms of valuation, I think we'll stick with the Mag 6. Being Alphabet, Amazon, Microsoft, Meta, NVIDIA, and I forget who else I'm forgetting right now, but I think at least 3 of those companies are trading at a below market price earnings ratio, and valuation's not an investment thesis in and of itself, but I really don't see valuation or balance sheet health or cash flow as a big risk right now. I think the risk is more so, are these earnings estimates for the next couple of years going to prove too lofty? And are they going to be able to deliver on the technological progress that AI does offer?
Hey, John, this was super well framed, and we appreciate your time. Thank you, sir. John Boughton there of Gabelli Funds with an important point on Alphabet at the end. Alphabet tapping the US high-grade bond market, looking to issue a 7-part bond sale through today.
Yeah, including a 40-year piece that's priced 1.2 percentage points above Treasury. So if you want to know why long-term Treasuries are selling off in response to this, it's because evidently Google is a competitor to the U.S. government, 4-year dollars, and maybe some people would prefer to put it with Google. We shall see. This is going to take place today.
The Oracle debt was taken down really well in the last week, so another test for the debt market from a company with a much more healthier balance sheet, Alphabet. Coming up on the programme, Jill Kerry-Hall of Bank of America, Frank Lee of HSBC, Luke Tilley of Wilmington Trust, Austin Kwon of Wells Fargo. The third hour of Bloomberg Surveillance up next.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in 1.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
There are lots of cross currents. This isn't just about software. This isn't just about AI.
Everybody says there's insatiable demand for AI. I'm not sure we're quite seeing that yet.
There is a lot of companies that are going to benefit significantly from the AI build.
It does feel, though, that we're starting to approach maybe the end of that sell-off.
This is such a generational transformation. We're going to live in this bumpy ride.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The third hour of Bloomberg Surveillance starts right now. Your scores look like this. Equity futures down not even 0.1% on the S&P 500. The Nasdaq down by 0.2. A week that is stacked with economic data, including retail sales tomorrow, payrolls Wednesday, claims Thursday, and then CPI coming up on Friday.
This is going to be the data that we've been waiting for. Whether it gives us clarity is another question, but it really was emphasized last week how important it is for the U.S. economy to remain strong, for the overall index to not fall out of bed. Because even though we saw huge drawdowns in some of the tech stocks, we saw a basically flat market because of the strength in the cyclicals. Can this continue? It really hinges on the real economy.
Down just 0.1% on the week on the S&P, which is crazy to think about, within 1 percentage point of all-time highs.
And what's going on in terms of the data that everyone is looking forward to, the scope could not be wide. -10 to upwards of 100,000 are right now, when you look at our street economists estimating 69K. But the more important for this data is it's going to be clean after a massive government shutdown. And then right after that, we're going to get CPI. So putting this all together, I think is what the market's going to be focused on.
Plenty of people out there still really bullish on the U.S. economy. The rate cuts we've already had, the tax refunds we're about to see, and this. $650 billion of capex coming from 4 companies, and this is what's happening in the debt market. Equity side of things, up by 0.6%. Alphabet on the debt side, a $7-part dollar bond sale announced by the Google parent company, just moments ago.
It is going to be, I can't emphasize enough how important it is to watch how this debt is received in the market. As you were mentioning, John, Oracle sold its bond offering, and it was cleared in flying colors through markets. Investors definitely were welcoming the bonds. Do we get the same dynamic from Google? Google has a better balance sheet. Google has a better story to tell even than Oracle does. Do they get the kind of spreads that they're looking for? And if they do, does that say green light to all of those CapEx spending plans because the capital markets will finance that?
They're funding a lot of that through cash flow anyway. These are cash machines, some of these companies, but there is a lot of paper that's going to be issued this year. The Treasury, corporate America, and we're going to get some big IPOs as well. That's in the mix when we have this conversation too. Anthropic being one, maybe OpenAI, SpaceX another. These are some of the biggest IPOs this country has ever seen, and everything feels like it's come in all at once.
And it raises the question of how much capital markets will tolerate some of the hopes and dreams of the big tech names and, frankly, the whole broader space. Right now, they are showing some nerves. And that, I think, is the reason why people are saying watch each consecutive debt sale. If there is one that does not clear, watch that to trickle out in magnified form throughout all of markets. This really is important to watch.
We've got a lot of supply to absorb this week, including issuance from the Treasury, 10s and 30s, 3s as well, I think, through the week. Yields a little bit higher this morning, up by 3 basis points on 10s at the very long end of the curve on a 30-year maturity. Yields up by 4 basis points to 4.89. Coming up this hour, we'll catch up with Jill Carey-Hall of Bank of America with stocks edging lower, Frank Lee of HSBC, as NVIDIA is silencing the latest AI concerns, and Luke Tilley of Wilmington Trust previewing a big week of economic data. We begin this hour with stocks wavering following a volatile stretch for big tech. Jill Carey-Hall of Bank of America Securities writing, given the risks, investors may be best served looking for inexpensive opportunities that have overly discounted the risk or that are AI beneficiaries. Jill joins us now for more. Jill, good morning.
Good morning.
It's good to see you. Where does that take you? Where do you land?
Well, I think, with respect to software within the Russell 2000, where, overall we've obviously seen a big correction in the broader software industry. And I think the sentiment is obviously still uncertain there, but still, given how much it's sold off, certainly some opportunities. I think, within the Russell 2000, though, where potentially some bigger opportunities could be are areas that, are still inexpensive. And, given the ISM print that we saw last week, this is something that has been highly correlated not only to corporate earnings, but to relative performance of small caps relative to large caps. And I think, that manufacturing recovery can help sort of cement investors' confidence in the earnings recovery and benefit some parts of small caps that, are historically more sensitive to the ISM.
For us, that's what's changed coming into 2026. The small cap story through the Russell has been less about rates and much more about the economy. Are you seeing the more cyclical parts of the market more broadly pick up in anticipation of a pickup in economic growth?
Well, I think we've generally seen, a broadening out of, even within the Russell of what's been working so far this year. And, I think within small caps, there are areas like financials and energy that are still, even though the Russell 2000 is now trading a bit above its historic average valuation multiple, those are areas that are still cheap. Financials in particular is still ranking very well in our work. And these are areas that historically, when the ISM has crossed above 50, these have been areas that have historically outperformed.
Is this entirely driven at this point about the economy? And is it fair to say that any kind of rate cutting cycle has already been fully priced in to this particular sector?
Well, I think, it's important that we still get rate cuts this year. Our economists are expecting to, and the Russell 2000 has been extremely sensitive to Fed expectations. So I think the fact that, we've been discounting Fed cuts, and if we get those Fed cuts, that'll be enough to support the Russell. But if we start to get cuts priced out or even expectations of hikes, then that becomes a lot more challenging because the index has been so highly correlated with the Fed and data that feeds into Fed expectations.
It's not just small caps, it's all of the cyclicals that have really been outperforming. And some people can say, as Max Kettner did earlier today of HSBC, this is going to continue and it's going to keep driving optimism in the overall index. Jim Reed, as John was mentioning earlier, talks about how this is very similar to 2000, where you saw that rapid broadening out in the first 6 months of 2000 and then the rest is history. Why are you confident that this is going to be more of the Max Kettner version of things, where this is sustainable, even if you get those potholes in some of the big tech names?
Yeah, I mean, even within the S&P 500, even though earnings growth will still be driven largely by tech this year, we and consensus are expecting that you see, a deceleration of earnings for the Mag 7, the big names, versus a pickup for the rest of the market. So, within the S&P 500, we're more bullish on the equal-weighted S&P 500 than the cap-weighted index. And then, even down in small and mid caps, that's where the big earnings recovery is expected to be after we were in this prolonged earnings recession, manufacturing downturn. So I think, we were in a period where that earnings recovery kept getting pushed out, especially for the small and mid cap segment. So I think if we continue to get data like the ISM we just got, that helps cement investors' confidence in this earnings recovery and more cyclical recovery. And the fact that corporate guidance has actually been pretty supportive, I think gives us and can give investors a little bit more confidence this time around. Usually at the beginning of the year, guidance is very weak. Corporates have incentive to be conservative, but it's actually been much stronger than it usually is in January and February. So that's been an encouraging data point as well.
One reason why there has been also optimism is because capital markets have been wide open. It's being tested right now. The capital markets collectively, based on all the activity that's expected, John laid it out earlier, and we're now getting debt sales that are only escalating to finance some of the CapEx ambitions of the big tech names in particular, but more broadly. How important is it for all of these sales to go well in order to keep some of the optimism in the rotation and just frankly the growth trade in the United States?
Yeah, I mean, I think, some of the ones that you mentioned will be important to watch. And I think just, the hyperscalers, if they are becoming more, levered in general, these stocks have become so capital intensive, in many cases more so than even the oil majors. And, typically big CapEx spenders historically tend to underperform. So, what we've seen in recent years has been an anomaly versus what typically happens. So, I think there's a lot more focus on, that aspect of things. And I think in general, with the M&A and IPO backdrop, that's going to be, impactful to watch. Everyone had kind of been expecting that we could see a pickup this year if economic growth and conditions remain supportive. I think it's not necessarily for something like small caps, will the outlook for the Russell 2000 hinge on M&A or IPO backdrop? Not necessarily. We haven't necessarily seen that historically, surprisingly. The Russell's actually underperformed more frequently than it's outperformed in years where we've seen heavy M&A activity. But I do think, for certain sectors, especially if we see an M&A pickup in financials, regional banks, that can help sentiment there. Tech and healthcare. Healthcare has been an area where we did see a lot of M&A activity, but case for that to continue. IPOs have been, an area that's been a bit more challenging for small caps because a lot of companies have been staying private longer, going public larger. So, I think the opportunity set for small caps has become a bit more narrow, and the growth backdrop for small caps is not necessarily what it once was, in the 90s, early 2000s.
Joe, you put a lot of emphasis on the ISM manufacturing, but how much of that was because of what we saw with basically the inventories being drawn down?
Well, I think overall, if indicators like the ISM and just the demand backdrop, I think if we continue to see reshoring of U.S. manufacturing, anything that leads to a continued prolonged CapEx cycle in the U.S., small cap sales growth is highly correlated with U.S. CapEx growth. So, I think that overall, any of the indicators that suggest that story is continuing should be kind of a positive multi-year story for domestic small and mid-cap companies. So, I think we'll continue to watch those indicators, but the fact that we finally came out of this, manufacturing downturn and potentially that continues, is something that had been one of the bear cases for small caps this year if that doesn't occur.
Is there any tension between what's happening with small caps and what's happening with staples at the moment on the S&P?
With consumer staples?
The fact that they're up 14% year to date.
Yeah, staples is an interesting one. I mean, within our large cap work, we had recently upgraded consumer staples in our year ahead. It's obviously been kind of this bombed out sector. And, now potentially you're starting to see kind of guidance, second derivative turn in terms of revisions. Even within small caps, it's been ranking better. I mean, if you see pockets of tariff relief that benefits staples. And so I'd say that's one sector. Even when I looked at the ISM, that's been kind of the one defensive sector, even within small caps, that actually tended to do well after the ISM crossed above 50. So that's one that even though some of our preferences have been for more of the cyclical sectors, that is one more defensive sector that we do see potential for recovery. And if there's a focus on affordability, for low-income consumers who have struggled, potentially we see those tailwinds there.
One to watch. Jill, thank you.
Thank
As
you.
always, thank you. Jill Carey-Hall there of Bank of America. Speaking of recoveries, the S&P 500 no longer negative on the session. We're just about unchanged on the S&P. Let's give you an update on stories worldwide this morning with your Bloomberg brief. Yahira has more. Hey, Yahira.
Hi, John. We're seeing Alphabet shares edging lower after the tech giant announced a $7 bond sale. It's the latest in what's been a borrowing spree by companies at the forefront of the AI investment boom. Sources telling us here at Bloomberg, Alphabet is also offering debts in pound sterling and Swiss franc denominated bond. And Bank of France Governor Francois Villeroy is stepping down from his post. Villeroy is set to leave office on June 1st, more than a year before his mandate ends. The central banker saying his decision to leave was personal, and he plans to take over as head of a foundation. And moving on to golf, which was surprisingly more exciting than the Super Bowl. Chris Gotterup won the Phoenix Open this weekend, defeating Hideki Matsuyama in a playoff. Matsuyama entered the final hole with a one-shot lead, but struggled off the tee box as Gotterup drilled a long birdie, securing the victory. This is Gotterup's second win on the PGA Tour this season. That's your Bloomberg Brief. John?
This I did actually watch, of course.
I can tell. Look at your face.
No, I'm laughing because I just felt like it was just me and maybe five other people.
I don't think so. I'm pretty sure that Yahira also, and I think a lot of other people as well. People looking for excitement.
I was wondering how this got into the news, and I was like, oh, of course, it's probably the only thing John watched this
I
weekend.
didn't make this happen. It's just, it was pretty funny. Because if this had carried on, I still would have watched this instead of the start of the Super Bowl.
Oh, I know that. But you know what the
Me
truth
and
is?
just supporting Jim Nantz over at CBS.
But I think that actually wouldn't be the only one. I mean, I was watching figure skating, so there you go.
Up next on the program, the Morning Calls Plus, Frank Lee of HSBC as NVIDIA is silencing the latest AI concerns. That conversation just around the corner from New York City this morning. Good morning.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
I think it's important
important with the software names to take a step back and think about the technicals because they are very, very oversold. I think the big question is, can the software regain its leadership coming out of this bounce? I think that's a lot more in question just simply because there's all these doubts of things that effectively software companies can't disprove at this point because it's AI risks that could be out 1, 2, 3, 4 years in the future.
That's part of the difficulty right now. That was Cameron Dawson of New Edge Wealth, joined us a little bit earlier on this morning. If you're just tuning in, welcome to the program. Equity futures on the S&P 500, just about negative. No drama though. We're down about 0.1%. Drama-filled week last week on the Nasdaq 100, the worst week of the year so far. This morning, down another 0.1%. That's the price action. Let's get you some morning calls. First up, Medias downgrading Microsoft to hold, expecting free cash flow to dip in the near term. Elsewhere, JP Morgan raising its price target on Cisco to 95, citing accelerating revenue growth. And finally, D.A. Davidson upgrading Oracle to a buy, saying it will benefit from OpenAI exceeding expectations this year. That stock's bouncing back. It's up by 5%. In focus last week after a big debt issue from that company, taken down really well. Speaking of debt issues, we will get one from Alphabet, the Google parent company, kicking off a 7-part U.S. bond sale through this morning.
Yeah, including a 40-year tranche. This follows, as you mentioned, the $25 billion sale of Oracle debt that went quite well. This is expected as part of at least $40 billion of investment-grade bond issuance in the United States so far this week. A very heavy slate ahead. And really, it raises a question of how differently each of these issuers will be treated. In other words, are there going to be winners and losers when it comes to these sectors and how easy it is to clear the bar for debt investors who are seemingly okay with the debt issuance that they're coming out with because they still are cash cows and they aren't necessarily negative profiles, even if equity markets are concerned.
One of the winners should be NVIDIA, as the headline crosses the Bloomberg that they're looking to raise $15 billion over at Alphabet. One of the winners should be the chip players. They're going to be spending a fortune on CapEx. Who wins? This is what was odd about last week. As these CapEx intentions rolled out, and the fact that we were seeing Broadcom and NVIDIA up until Friday trade really soft on the week, it was just really difficult to get my head around. Aren't they going to be spending money on the chips these guys produce?
It seems like people finally got around to asking that question and answering it and saying, yeah, because on Friday we saw some of that rebound. Does it continue? Because ultimately, a lot of this CapEx is going to go to buying the latest generation of chips and frankly, not even buying them, solidifying their order books for future deliveries. So definitely a lot of people thinking the same thing that you are.
Frankly, if HSBC has a buy rating, 320 price target on shares of NVIDIA, I'm pleased to say that Frank Lee joins us now for more. Frank, welcome to the program. Last week was curious. We had this drip feed of massive numbers coming from big tech, and yet some of the major chip players were trading soft through the week. Could you make sense of that, Frank?
Sure. I think what you've seen over the last couple of months, though, that there's already been a little bit of an AI diffusion trade. So, you know, NVIDIA and Broadcom have been underperforming overall for the last few months, as I think as the market has shifted to things such as the memory shortage with ongoing price hikes. That's offering better near-term earnings momentum as prices keep going up almost every month. We're also seeing, I think, you know, a bit more focus on AI networking. You know, so you're seeing names like Coherent and Lumentum. They're seeing very strong earnings beats and guidances, very similar to the way people started looking at the ASIC story. So I think that's part of the reason is there just seems to be, you know, more growth in other areas relative to the big blue chip semi names that started off this AI cycle.
So, Frank, that raises the question just how these names will perform when these big IPOs materialize later this year. Anthropic, OpenAI, what's going to happen to the story of yesteryear?
Yeah, so I think, you know, what we need to see really, if you look at the CapEx spend of these big hyperscalers, what was interesting was that the initial reaction was some muted because even though we saw $150 billion of incremental CapEx since the beginning of the year for 2026, yeah, I think there's some debate about how much of it is going into the actual GPU and the ASIC chips. Because one thing that we've also seen is memory has seen a significant, almost, you know, once in a generation upturn. So that is driving a lot of revenue revision on the memory names. So if you look at how much memory revenues have been revised for 2026, it's also been about 150 billion. So it's almost a one-to-one match, meaning that the incremental CapEx we saw seems to be going some of it to the memory space, and how much is left over for the, you know, for more upside to the actual chip guys like Broadcom and NVIDIA. I think that was a question the market was contemplating earlier.
So what's the answer, Frank? I mean, do you think that ultimately this is going to go more to the Qualcomms of the world or even the Samsungs, or do you think that ultimately there's a lot more to flow up to the top of the chain?
I think what you need to see is two things. I think the velocity of these price hikes on the memory side, as it starts to kind of level off, that will be good for the original AI chip guys, because then I think we'll see this increased spending come back to the original chip makers. And secondly, I think that also suggests that perhaps this $150 billion upward revision in CapEx is not enough for this year. We may see actually further revisions throughout the year, and that's part of the fundraising that we're seeing from these hyperscalers. Because remember, if you look at 2025, we started off the beginning of the year with higher than expected CapEx, and it kept getting raised throughout the year. And so we're starting off this year in a similar spot where, again, these numbers have beat the market expectations for this year's CapEx, but it could continue to go higher throughout the year.
Frank, why is it so important for the likes of NVIDIA to have strong investments in the likes of OpenAI? And I ask this at a time when there is a lot of concern about circular financing and how much there needs to be essentially vendor financing, right? The likes of NVIDIA giving a company money to then buy its chips. I mean, what's the rationale behind this?
Well, I think NVIDIA's dependency on the original hyperscalers driving their overall revenues, that narrative isn't quite as the same as it was 2 years ago, because we've seen these hyperscalers looking to develop their own chips, right? The ASIC chip that's driving Broadcom with Google and TPU. So NVIDIA needs to really increase their TAM opportunities outside of the core CSPs, and that's enterprise, that's sovereign, and empowering that is our companies like OpenAI. I mean, Stargate is basically a sovereign project. So I think that's why it's more important that NVIDIA needs to find a way to expand its original market beyond the hyperscalers.
Frank, just pulling you away a little bit from hardware, forgive me, but I do think that it's associated with the conversation you're ultimately having. Isn't Gemini and Alphabet and the money they're throwing at this market right now to win just crushing the OpenAI story?
I think it's it's been a back and forth over the last couple of months. I think the narrative has shifted in favor of Google, not only because of Gemini, but Google has done a lot on a hardware side, both on the chips as well as the networking. That's closed the gap. But at the same time, we do expect there will be another upgrade model for OpenAI coming out in the next few months. And so we'll see whether that momentum can start swinging the other way. So I think it's still a little too early to say definitively who's going to be the long-term winner. I think at the moment, everyone's expanding and still very much in the game.
Frank, forgive me for going back to an earlier question, but I do want to get your ideas on what this might mean for semis. This OpenAI IPO, how much of a market event that will be for the whole ecosystem?
Well, I think it's very important because OpenAI sort of kicked off that whole narrative of this much bigger TAM with a number of gigawatts and how that's going to drive much more revenue. We've done some work looking at if the 18 gigawatt expansion for OpenAI materializes as expected, that could potentially double NVIDIA's data center revenue by almost 100% from where we are this year. I mean, they're going to probably approach $350 billion in revenue just on data centers. The magnitude and scale of these gigawatt announcements could almost double the revenue from where we are this year.
Interesting. Frank, thank you, sir. Thanks for being open and honest with us. Frank Lee there of HSBC on NVIDIA and the whole ecosystem. If you're just joining us, a few headlines I want to get through this morning. So this was from Alphabet a little bit earlier. So they're going to raise about $15 billion from a 7-part US debt sale. This follows Oracle in the past few weeks or so. They issued about $25 billion, and that was taken down pretty well. Bear in mind that Alphabet has a super strong balance sheet relative to, say, an Oracle. So I'm not anticipating massive concerns there, but we'll track the numbers anyway. This came from the NEC director moments ago. And this, I think, is material from Kevin Hassett. We should expect slightly lower jobs numbers, and lower jobs numbers shouldn't trigger panic. What's that headline about going into payrolls on Wednesday?
It seems like we're not going to get a good number, and two-year yields are rolling over as a result of this. They're lower, not by a significant amount, just by about 2 basis points, but it highlights people are taking this as forward guidance on what we should expect on Wednesday's non-farm payrolls.
Coming up on the program, we'll catch up with Lou Tilley of Wilmington Trust, previewing a big week of economic data.
technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Stocks are down by about 0.1% on the S&P, and the Nasdaq we're down by 0.2. In the bond market, curious story emerging in the last hour or so. Yields were up at the long end of the curve. 10-year bond yields higher by about 3 or 4 basis points at one point. A couple of reasons for that. A story out of China that Chinese banks were urged to curb exposure to US treasuries, the massive performance out of Japan, the fact that Japanese bond yields on a 10-year maturity rose just a little bit. And then we also had a $7-part dollar bond sale from Alphabet, $15 billion debt sale coming from Alphabet a little bit later this morning. All reasons for high yields. And then this happened moments ago. Kevin Hassett, the NEC director, with a strong steer going into Wednesday's payrolls report, saying that we should expect slightly lower jobs numbers, and those lower jobs numbers shouldn't trigger panic. Those headlines crossing just moments ago. And for all the reasons for high yields this morning, yields reverse course. Lower, particularly at the front end of the curve. We're down by about a basis point or two to 348.
So you say giving a steer, and that is certainly how the market is treating it. It would be highly unusual for someone who got a forward look on the data that doesn't come out until Wednesday at 8:30 a.m. Eastern to deliver that in sort of a wink, wink, nod, nod. So it raises this question, what exactly is he talking about in terms of what he's expecting? Is it based on his own analysis? And then furthermore, how much is this going to drive some skepticism in equities as we're seeing right now? Because ultimately, it speaks to the real economy that needs to keep chugging along in order for the overall index to remain at a higher level.
Well, I can't speak to exactly what Kevin Hassett is seeing. Is this his own analysis, or did he actually see the jobs report? What I do know is that the White House does get the jobs report ahead of the release. It's a little bit awkward now because we're supposed to have it on Friday. It was Wednesday. He could have gotten it last night or seen it this morning, and then that is potentially where some of these remarks and what he's thinking about in terms of the labor market are coming from.
So the estimates, as you know, going into Wednesday, super wide, 135 at the high end, -10 at the low end. The median is 69. I think a lot of people also on Wall Street would say you can get a low number, but I wouldn't panic because ultimately the break-even rate is so low right now. If that's the point the NEC director is trying to make, I don't know, going into Wednesday, but the headline's certainly unhelpful. If you're trying to put together an estimate based on the data we've seen so far, I think you've got to sort of revise it down lower just a little bit after those comments.
It's a great point. The market hasn't been freaking out even when we've gotten a lower number because there is this nuance. So again, a curious comment that I'm sure will be dissected. We'll see a lot of notes, I'm sure, with very clever headlines that come out in the next couple of days, and I'm looking forward to them. Please send them my way.
The South Side will do their bit, no doubt. 1 hour away from the opening bell, equity futures on the S&P down by 1/10% with your morning movers. Danny has more. Hey, Danny.
Hey, John. Tech might be underperforming this morning, but here is one bright spot for it. ST Micro, reached an agreement with Amazon. They'll be supplying the semiconductors for Amazon Web Services for their cloud providing, and we know Amazon has a lot of CapEx to burn. STM had been seen behind on the race for AI infrastructure, so this kind of gives them a little bit of a boost forward. Amazon also gets to buy warrants, which allow them, STM, stock over the next 7 years. Elsewhere, some pharma news, starting with the drama that has been Hims and Hers. First, they unleash a pill, a Wegovy copy pill, for less than $50. Novo Nordisk sues them. The FDA says stop making that. And over the weekend, they say we are going to stop making that. So shares down 21.6%. Novo up 4.8%. Finally, some other pharma news. This one, a deal, Eli Lilly agreeing to buy Orna Pharmaceuticals, a multi-billion-dollar deal that will give it access to autoimmune disease treatments. And it just shows that Lilly is trying to widen its portfolio beyond just obesity medication. Those shares up more than 2%, John.
Danny, did Matthew Miller make it into work this morning?
He did. Why were you worried? Did something go wrong?
Super Bowl weekend, you never know.
I see. Well, he is going to be speaking with Lawrence Stroll of F1, so that sport reigning supreme for him, so he made sure to get in.
Now we know why Matt's here. All right, Danny, thank you. You never know with Miller, do you?
He definitely seems like
weekend.
a guy who's having a Super Bowl rager at his house.
No doubt about it. Matt Miller, Danny Berger coming up in about 30 minutes' time. Let's turn to the economy. A key week of data on deck, headlined by payrolls and CPI data. Enda Curran joins us now for more. Enda, I've got to ask you, did Kevin Hassett just drop a hint, a big hint, going into Wednesday?
Look, it's very unusual comments coming so close to the official release of jobs data, John, as you were mentioning earlier in your show. And the other part of course, is the fact that before the last jobs release, the president on his social media account did release a partial pre-release of some of that jobs number. So obviously these kind of comments will stoke questions around, was this a signal of what's coming down the pipes or not? We just don't know until he clarifies it. But either way, the monthly jobs data are supposed to hold up okay. They're meant to come in around 69,000 according to the Economist survey. Unemployment holding around 4.4%. That's meant to have leaned into the idea of a stabilising jobs market. But maybe, and this is perhaps what Mr. Hass is speaking to, we do also get the annual revisions on Wednesday, and they're expected to show fairly hefty downward revisions for the previous year, the year to March 2025. Maybe 650,000 less jobs created, according to Bloomberg Economics. Now, if that happens, then we get a headline that the jobs market really was much weaker than people thought it was. But again, we don't know. We'll have to hear more clarity from the White House in terms of what they're speaking about. But certainly this will stoke speculation about whether it was or was not a signal.
So, Andrew, it just raised the question, what is and what isn't good right now in the jobs market? Is 20K okay? Is 10 okay? Is zero break even? I've got no idea. Andrew, this is what Governor Waller thinks. And his opinion on the matter is far more important than mine because he sets policy at the monetary policy level with the Federal Reserve. He said this in a recent statement. Last year's data will be revised downwards soon to likely show that there will virtually be no growth in payroll employment in 2025, zero zip nada. And he went on to say that all of this suggests that a substantial deterioration in the labour market is a significant risk. And what is good? What is bad? And where is break-even right now in this economy?
Well, break-even is certainly a very academic exercise right now, John. As you know, very different estimates because of the impact of the immigration crackdown and the like. So hard to get a precise number on that. But Governor Waller, of course, yes, he was in the race to be the Fed chair. That's probably part of the story here. But Governor Waller, of course, has been very strong in the labour market. He's made early calls ahead of others on the FOMC policy committee about where things were going. He was early in calling for cuts last year, for example. So, you know, when he speaks in the labour market, he will be listened to. But we know the backstory is that for all the mood music and for all the narrative, that we still don't see much evidence of broad-based mass layoffs. So there's an argument out there that we're still in this low-hire, low-fire environment. The Fed last month talking about signs of stabilization in the jobs market. That was a little bit of a change of tune from them. And as I mentioned earlier, the jobs data on Wednesday is meant to show that things are holding up okay. Now, of course, if we see a much weaker jobs number on Wednesday, that might again reignite the idea that, hold on a second, we're now starting to see catch-up, you know, labour market being a lag, maybe it is softer than people thought. So we really need to see what these numbers on Wednesday tell us to give us an update on where things are at.
And thanks for the coverage down in Washington. And Curran there of Bloomberg. Let's stay on the data. Luke Tilley of Wilmington Trust writing the US labour market is in an extremely weakened condition. We are officially projecting a 60,000 gain in private payrolls and the unemployment rate to tick up to 4.5%. Luke joins us now for more. Luke, welcome back. I feel like I've been asking this question for the best part of 12 months now. What is a good number on Wednesday? What does that look like these days?
Well, it's obviously a lot lower because of the low labor force growth that we have. But I don't spend a lot of time thinking about what a, quote, break-even number is. Because you could construct a mathematical example where you had negative job growth and negative labor force. You know, the unemployment rate could mathematically hold stable. but you would get much weaker spending and you would get much weaker economic performance. So I really think that break-even concept is just sort of an academic one, like Enda just said. We're expecting pretty low growth, and what we've really been noticing and focused on is the fact that the private sector has shed almost 150,000 jobs when you remove the healthcare sector. And the healthcare sector is important, but it's also not sensitive to the cycle at all. It was adding jobs through the global financial crisis. So we've seen that job loss, and that really points to a lot of reticence and a lot of reluctance for private firms and the private sectors to be hiring, and that's gonna weigh on growth, we think.
This is important, Luke. You're emphasizing the demand side of the employment picture, the fact that a lot of employers are really holding off on their hiring plans. Kevin Hassett, the economic advisor to President Trump, in his comments was talking about how we should expect a lower jobs number. He was referring to productivity. He was referring to less immigration. He was saying that that was the reason that we should maybe expect just a little bit less of a robust number. Do you think that that's a huge part of the picture?
Yeah, I haven't seen his full statement yet. Obviously, as Enda said, it's a little bit unusual for somebody to front run the report like that, if in fact that's what he's done. I am a little surprised that he introduced the word panic on his own to talk about the jobs report. So perhaps that weighs on the expectations a little bit. We see this as mostly a demand side phenomenon. Yes, there's going to be slower job growth because of low immigration. Yes, we are losing some labor demand because of the impacts of artificial intelligence. But if you look through all of the company commentary, whether it's the ISM manufacturing number, which was very strong, but look through the comments, a lot of discussion of weak demand and just sort of holding the line on hiring, not replacing people. The Richmond Fed's survey of CFOs, large and small companies, the National Federation of Independent Business, all pointing to trade tariffs, uncertainty about overall demand as the driver and their concern. So we mostly see it as a demand side phenomenon, even though there are definitely supply factors at work too.
I just want to veer a little bit to the far askance. I don't want to say left or right because it might be viewed as political, but I'm just curious going forward how you view some of these types of statements that could be forward tells or that couldn't be forward tells, or statements about investments in certain areas, or some of these strategic reserves that we could get, say, in metals. I mean, how do you view some of the political discourse when making certain investments? Do you take this as sort of gospel? Do you ignore the noise?
Well, in our investment committee, we really focus on a 9 or 12-month horizon going forward. So we're looking at where the economy is going to go. And we are pretty optimistic about long-term growth in the U.S. when you get out to 12 months and 24 months. What we're trying to figure out right now is how big this short-term impact is, because companies are adjusting to the significant hike in tariffs and also trying to digest and make those decisions about long-term CapEx plans. Yes, we do think that there is going to be reshoring of manufacturing activity, not so much jobs, but manufacturing activity, but that does take a long time. So the real question here is, are we going to have larger short-term pain in terms of these companies not hiring as much before you get that long-term gain? And we think that it is a little bit on the risky side. We expect the unemployment rate to rise to 4.8% by the middle of the year. So that's going to be challenging as we look forward. But this is fundamentally an adjustment. It's not a bearish view or that we think that there's something fundamentally wrong with the economy. We're in a rapid adjustment period, and companies have to make some pretty tough decisions. So long-term positive, but short-term there could be some weakness.
Luke, as you know, Wednesday's release is important because we'll get the annual revisions to the job count. What are you expecting on that front for 2025 revisions?
Yeah, we had the preliminary look at that last year with something like 900,000. This will be a more solid count of the revisions. This and we don't have our own official number, but it is really clear to us that the Bureau of Labor Statistics is having a very hard time pegging the birth-death model and trying to figure out how many firms were created, how many firms went away. We know that Chair Powell has said that the FOMC is operating on the assumption that the BLS is overstating job growth by as much as 60,000 jobs per month. So we'll get a little bit more information about that on Wednesday, of course, as you said. And it just points to the fact that we need to be very careful about every single jobs release that comes out. We have to look and see if there are downward revisions for November and December, for example. So it just makes it a little bit more challenging to read into each jobs report, and we will get that update, but we're a little bit more focused on the look ahead.
Hey, Luke, it's good to see you. Thanks for sharing your thoughts. Luke Tilley there of Wilmington Trust on the labour market and the general US economy. Getting the fuller transcript now from the NEC director, Kevin Hassett, engaging with the American press a little bit earlier on this morning, saying the break-even job number is quite a bit lower than it was under Biden, when there were people, you know, basically coming across the border willy-nilly. Direct quote, not mine. And so I think that you should expect slightly smaller job numbers that are consistent with high GDP growth right now, and that one shouldn't panic if you see a sequence of numbers that are lower than you're used to, because again, population growth is going down and productivity growth is rocketing. It's an unusual set of circumstances.
So that is the context, which I think is really important to his fuller comments, which is this has to do with immigration coming down. That lowers the overall number of population growth. And two, it's productivity. And the productivity boom is going to continue to power the economy. And this also is going to have a negative effect necessarily on the overall jobs growth in the near term. So that is what he is talking about. It is being interpreted by markets as being a tell on what we might get on Wednesday. It could easily be inferred also, though, as really describing his overall picture. Nonetheless, it does come at a sort of interesting moment in the week.
If you're wondering what the follow-up question was to that particular statement, it was on the government shutdown, and there wasn't really a follow-up question, so that's disappointing. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Yahara with more. Hey, Yahara.
Hi, John. Just recapping those comments by NEC Director Kevin Hassett. He warned we could see slightly lower than expected jobs numbers this week, and that the weaker data should not trigger a panic. Hassett citing a slower pace of population growth. As for the market reaction, you are seeing two-year yields moving slightly lower. U.S. payrolls were delayed last week due to the brief partial government shutdown and are set to be released on Wednesday. Meanwhile, Treasury Secretary Scott Bessent suggesting the Senate should start hearings on Kevin Warsh's Fed chair nomination. This despite GOP pushback to block the nomination until the criminal investigation against current Fed Chair Jay Powell is resolved. Bessent's pushing to get the hearings underway and, quote, see where the investigation goes. And we're seeing Alphabet shares edging lower after the tech giant announced a $7 dollar bond sale. It's the latest in what's been a borrowing spree by companies at the forefront of the AI investment boom. Sources telling us here at Bloomberg, Alphabet is also offering debt in pound sterling and Swiss franc denominated bonds. That's your Bloomberg Brief. John?
Hey, Yahara, thank you. Thanks for this morning. Up next, we'll set you up for the day ahead. Plus, we'll catch up with Osun Kwon of Wells Fargo, remaining cautious on the hyperscalers. That conversation up next.
Crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked, and we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when We're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
In a period where that earnings recovery kept getting pushed out. If we continue to get data like the ISM we just got, that helps cement investors' confidence in this earnings recovery and more cyclical recovery. And the fact that corporate guidance has actually been pretty supportive, I think gives us and can give investors a little bit more confidence this time around.
That was Joe Carey-Hall of Bank of America a little bit earlier on this morning. If you're just joining us, good morning. Counting it down to the opening bell, about 41 minutes away. Equity futures negative by, let's call it 0.2%, down by 0.26 on the Nasdaq 100. As we count you down, your trading diary set up as follows. Big calendar full of data. Today, you'll also get some Fed speak. Waller, Bostic, Myron in focus. Tomorrow, retail sales plus earnings from Coca-Cola and Ford. Wednesday, the main event on the data side, payrolls Wednesday. Thursday, another round of claims. And on Friday, CPI data. Let's turn back to the markets. Austin Kwon of Wells Fargo writing, we continue to expect the CapEx cycle to be much bigger and much longer than expected. We remain cautious on the hyperscalers. Osung joins us now for more. Osung, good to see you. It's been a mixed earnings season for the hyperscalers. Some stocks getting rewarded, others being punished. I'm thinking of Microsoft down by 10%. You expecting to see more of the same in the year ahead?
Yeah, I mean, that's been the case for the past 3 quarters or so. For the hyperscalers, it's really a stock pickers group, right? It's about who's going to win this race and who's going to lose this race. As a macro person, that's not a very attractive group to us. We rather much own the semis and the AI infrastructure side of things.
Where the money's going.
Yeah, exactly. I mean, the market hates companies that are in an investment cycle, which are basically hyperscalers. Their return on incremental invested capital, that's actually similar to the rest of the index. They're a lot more asset heavy than the rest of the index now. And I think the CapEx cycle is likely to continue for a very long time.
So cautious on the hyperscalers, quote, very long time, lots of spending, go to where the beneficiaries are, the chip players. Now we have to talk about what got hammered last week. Where's software fit in with all of that?
Yeah, I mean, software is interesting. So for what it's worth, our newly launched systematic sector strategy is ranking software as #1. And that's a very short-term trading model, but sentiment is atrocious. It's at an all-time low. Fundamentals are actually pretty good. So in Q4, software companies posted 25% EPS growth year over year, which was the strongest growth rate in 2.5 years. They beat consensus by 5%. So it wasn't anything to do with earnings. It wasn't anything to do with fundamentals today. It's really sentiment overhang that they are going to get disrupted. And the market basically decided that everyone's going to get disrupted by AI. There are going to be some winners. There are going to be infrastructure software companies, consumption model software companies that are actually going to benefit from this. So the market just shot first and is going to ask questions later. And I think this is time to do some analysis, deep dive analysis on which stocks are actually going to do better and not be disrupted.
There's a broader question about whether you could see this rotation away from some of the hyperscalers, putting software aside, and whether you can see the overall index continue to grind higher. And we have seen that in part because of this expectation of growth. Do you see this as something that is sustainable? Or do you think that this is like 2000, the way that Jim Reed of Deutsche Bank laid out, where you're going to see 6 months of equalization and then a huge downdraft where everyone gets caught up in the same?
Yeah, I don't think we're there yet. I don't think it's a bubble. I mean, NASDAQ's entire outperformance since the end of tech bubble has been driven by better fundamentals than the S&P 500. I think what we're starting to see is more of a rotation out of those tech and everything tech is going to be winners of AI, to now you gotta be more selective. Also, I think we're in a reflation cycle, meaning all these cyclical companies are going to start to benefit from the PMI upcycle that we think we're in. We're in a restocking cycle. So back in January, we saw the sharpest rebuild in inventories in 3 years. So after 3 years of destocking, I think we're finally in a restocking cycle. And I think the best way to play that is through commodities. I think that's why energy stocks are higher, material stocks are higher. For different reasons, I still like gold as well. So I think commodity prices are going to continue to grind higher. And to do that, to play that, I think you own cyclicals and small caps.
Well, it's just, I keep going back to this question of what kind of cycle are we in when we get to 7,800 at the end of this year, which is your forecast for the S&P 500. Can we do it without the big drivers of this that account for market capitalizations equal to the spending of a variety of different governments in 1 year? I mean, it just raises a question how we get there, especially if all this stuff costs money and people don't like it when it costs money and they got to pay for it.
Yeah, I mean, I think semis are going to do well. We still like semis. I mean, this, like I said, I think the AI CapEx cycle is going to be much bigger and much longer than what a lot of people expected.
You've said that a few times now. How much bigger, how much longer? What kind of numbers are you thinking about? 650 is a big number to me. How much bigger, how much longer? I
mean, every quarter since 2024, there was a step-up increase in AI CapEx consensus numbers. And we saw the same thing this quarter too. I think we see that as long as these companies are in this AI arms race, which I think are in, they continue to raise debt. I mean, we saw the Alphabet bond issuance today too. In Q4 alone, the Big Four issued $150 billion of bonds. So, and they're going to spend it. And I think we are still in like the middle innings of the AI CapEx cycle, and I think we're moving much higher.
But to your point, we're already at the point where there are some market constraints, a bit of pushback. Mm-hmm. Now, what kind of numbers are you thinking about where we get to the point where actually the pushback is so vicious they have to stop? How much further can they go is what we're asking.
The market was pushing back in 2024 as well. This isn't the first time that the market started pushing back. Yet companies still are investing in CapEx. So this is really an arms race. And the biggest reason why they're investing is it's more because they don't want to be disrupted than to make money, at least for now. And as long as they have that disruption risk, it's an existential risk that they're seeing. So they kind of have to invest.
Awesome, good to see you. Lots to think about. Austin Kwon there of Wells Fargo.
With their $15 billion offering later today.
650 isn't big enough, apparently, and that's a pretty big number. I'll be interested to see how big that number is at the end of the year. Bigger, according to Osung, maybe a lot bigger. Coming up tomorrow, Francis Donald of RBC, Eric Johnson of Cantor Fitzgerald, Mike Pyle of BlackRock, Michael Kantrowitz of Piper Sandler from New York City. Have a wonderful week. Looking forward to covering it with you. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
In such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies. which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
This is a 15, 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now, and very light, like a ball. Put wasabi in the middle. Then my process 1 to 6. 1, this is putting the between the rice air. Then make the 4 fingers curl, make sushi shape. Then touch this. 2, then turn. Now these 2 fingers, top to the bottom, make the sushi shape more beautiful. 3, then, you know, I mean, looks like pushing, not pushing. 3, 4, turn, same way, 5, and 6. So this is 1 to 6.
Bringing you up to the minute news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
Good Super Bowl Monday morning, 30 minutes until the start of the cash trade. I'm Matt Miller.
And I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, a pharma fight. Novo Nordisk rebounds as Hims & Hers pull a copycat version of its Wegovy weight loss pill.
And Alphabet tapping debt markets for about $15 billion, adding to the AI investment borrowing boom.
Plus, China urges banks to curb their treasuries exposure, while Goldman tells traders to buckle up for the week ahead. And yet, we don't really have a lot of massive movement.
No, I mean, if you look at what the S&P did yesterday, by the end of the week, it had barely moved. It was like nothing even happened.
Yeah, even though all the things. China says stay away from treasuries.
Right.
Another Mag 7 company taking on loads of debt.
Yeah, you'd read the headlines and you'd be like, are we in a bear market? What's happening? One area where there is some movement, and there has been a lot, is this whole ongoing drama between Hims & Hers and Novo. So Novo Nordisk said that it's suing Hims & Hers for making a knockoff version of its obesity medication that they were going to charge less than $50 for. But Hims & Hers scrapped that because, 1, the threat from Novo, and 2, the FDA saying we're not going to allow any of this copycat obesity medication on the market.
That's right, and like forwarding the email to the Department of Justice. Right. So that makes you back away pretty quickly. Shares of Kroger are rising in the pre-market after the company named ex-Walmart executive Greg Foran as its next CEO after nearly a year-long search. And for those of you who don't live near a Kroger or know, this is the largest grocery store chain in America. I mean, that's focused solely on groceries, right, Danny? Because, you know, Walmart still is bigger.
I actually didn't realize that. I've only ever been to one Kroger in my entire life in Southern Virginia. I don't know really where else.
Did you get the best of everything, including the price?
Sure. I'm sure I did, Matt. And if not, I'll have a word with you, Kroger. Let's begin with Novo Nordisk suing Hims & Hers, accusing the telehealth firm of infringing its U.S. patent on key ingredient in Ozempic and Wegovy. Let's get the latest with Sam Fuseli. He's the senior pharmaceutical analyst at Bloomberg Intelligence. Sam, we were just talking on Friday, and you were telling us there is a danger to this. This isn't good. It sounds like Hims & Hers has finally listened to some of the criticism and threats coming from regulators.
Yeah, well, Danny, the point here is not about one company listening to another, to regulators. There is law. There is international law. You are not allowed to copy a drug that is still covered by a patent in the jurisdiction that you're selling the drug. Novo Nordisk's drugs are covered by a patent. That is the rule of law. You can't just go ahead and copy that. Whether it's safe or not safe, I know that is not incidental. Of course, it's not good if it's not safe, but it's just not the way that things work. Generic companies create a whole set of trials, compare drugs to the product that they want to compete with, then go to the FDA for approval. Here's a company that's just making them in the pharmacy, selling them to people. It's just not right. And I think finally we're seeing some logic creep into the system.
I'm here to tell you, Sam, don't put too much faith in international law these days. I'm looking at Eli Lilly shares versus Novo, and this is, I guess, a good day for Novo, but Lilly has absolutely trounced this stock, even though Novo Nordisk invented this whole sector of drugs. Where did they lose the edge? Where did Novo go wrong, and how has Lilly been able to dominate?
Yeah, so Lilly had two things going for it. One, they had a really good device when it was just in the diabetes space, and that device really helped them in terms of the injection pen. That really helped them get some good momentum. And then they took a gamble on this tirzepatide molecule. That's not, everyone calls them GLP-1s, but tirzepatide or Mounjaro, Zepbound, is not just the GLP-1, it's two actions, GLP-1 and GIP. Nobody expected the GIP part of it to do what it did in the end, which is what has resulted in a product that beat Wegovy in a head-to-head trial. It's got better efficacy, higher efficacy, better weight loss, similar kind of side effect profile. So that, along with a good pen, now I'm not saying that Novo doesn't have a good pen, but everything lined up. And there's one other element here. Lilly has been in the business of selling products to the mass market type settings. Novo has been mostly specialist endocrinologists, if you like, diabetes specialists. So that perhaps has played into this as well. But Novo now has got itself a new head of US, which I think we'll see how that impacts things.
All right, Sam Fazeli there, Bloomberg Intelligence. Really appreciate your work. I can confirm also that the Novo pen is fine. Doesn't hurt, works well. Turning to tech, Alphabet is kicking off a 7-part bond sale, adding to a borrowing spree by companies at the forefront of the AI investment boom that is supposed to scare us off, but doesn't seem to be doing that in the case of Alphabet shares. Okay, they're down 0.7%, but they've tripled in 5 years, and they're clobbering Microsoft and Amazon. Joining us to talk about this is Caroline Hyde, co-host of Bloomberg Tech. So it's a gigantic company. I guess no one's really worried about $15 billion of borrowing.
And at the same time, they're tapping the Swiss market and the sterling market. In fact, they're looking to sell a really rare 100-year sterling bond as well. So Alphabet is out there across every type of part of the debt market. Alphabet and Infineon, the chip maker in Germany, just tapped the bond market very successfully over in Europe as well. You've just got hot on the heels of Oracle having sold $25 billion of debt at the beginning of last week. They've got $129 billion of demand, a record set. You might be bracing for $400 billion of investment-grade debt coming to finance AI. That's what JP Morgan thinks we're going to be getting. Thus far, the pricing is enough to tempt people in, and everyone's saying that Bloomberg Intelligence is saying Google or Alphabet, the parent company, has a rock-solid AA credit rating. It is best in class in terms of its overall balance sheet. You don't need to worry here.
The idea of a 100-year bond for one of these hyperscalers is crazy to me because we don't even know what the next 3 years is going to look like, let alone 100 years. Maybe it's safe for Google to be doing this, for Alphabet to be doing this because of its cash and its balance sheet.
Yes.
But for the likes of Oracle, for these companies that are starting to go through some real cash burn, how are they still staying afloat? How are investors not completely revolting against them right now as they had been to end the last year?
I guess they pay enough. So it's enough that there is just this wall of demand that in the debt markets, yes, people have been talking about equity. Everyone's been demanding so much of Oracle, Amazon, Alphabet, all of the hyperscalers and cloud providers equity. But the debt markets only get to tap in on these new issuances every year or so. Infineon's coming for the first time in a year. No wonder everyone wants to have the wall of opportunity to be buying in on this AI trade across the capital structure. And for now, it seems as though the price point, even though BI is saying, if you're looking at Alphabet, for example, they think you could maybe see the bond market, the yields come in about 40 basis points, but they're pricing them pretty on the nose for Alphabet. They obviously clearly got a syndicate issuance vibe from their banks that the demand is there. They don't have to suddenly go way over treasuries. You're looking about 125 basis points at the longer end. But as the year progresses, maybe you start to see these companies have to pay up more. Maybe you see pressure on the issuance of older bonds. Remember, Oracle was actually taken to task by some of its bondholders. They were sued by saying, look, when you first tapped for 18 billion at the end of last year, you never made clear you were going to be coming time and time again. We didn't realize you were going to be financing this much in AI infrastructure, and they got a suing tap on their wrist, whether or not who wins out on that particular fight. But clearly Oracle then, when they issued last week, really were very clear on this is how we see our year going. This is the only time we're going to be tapping this year. And overall, you're starting to see companies having to be really transparent about the amount. No, I mean, they kitchen sinked it. It was a mic drop last week. 200 billion is how much Amazon's going to be spending. 185 billion is what Alphabet's going to be spending. They're being very clear with investors how much they need to get.
I mean, and Oracle got off another 25 billion last week with 200 billion of demand. So, like, they could shoot somebody in Fifth Avenue and they would still be able to sell these bonds. I want to ask about Apple. The new iPhone 17e apparently coming on. I read Mark Gurman's reporting last night. So what do we know about the new product offerings?
Imminent. Yes, you're going to get the magnetic BIC on the back to be able to help your charging. Yes, you're going to be getting the A19 chip inside, and you'll be getting some better chips that they make internally for wireless connectivity. But more broadly, it's kind of like the 16e. But a little bit of an upgrade, and the idea that they know that demand is there. They're really going to be going for the emerging markets. They're really going to be going for corporate buyers in this particular phone.
The E is the cheaper phone.
E is but basically the marketing is, it's got everything inside. Look, I've got a 16e, because when I walked into Apple, they were like, well, if you're not like a photographic genius, this is exactly all you need. You're still going to be able to use Apple Intelligence as and when it gets to us, and you're going to be able to have all of the memory that you currently need. So a lot of people are liking these slightly cheaper, really high-end phones. And remember, Samsung is just really going for the top end of the market at the moment. We haven't seen that much of an upgrade, which we're likely to get from Google Pixel. Their phone isn't going to have many bells and whistles being built on. So they're kind of in a league of their own at the moment. Apple can just keep on cashing in on this demand for their latest phones.
Caroline, thank you very much for joining us this morning. Bloomberg Tech co-host Caroline Hyde-Catcher at 11 a.m. on Bloomberg Tech. Let's turn to this bond market, because yields have started to retreat after something curious this morning. National Economic Council Director Kevin Hassett said that we should expect slightly lower job numbers on Wednesday. Joining us is Bloomberg macro strategist Michael Ball. Michael, there were a lot of reasons for yields to be drifting higher this morning, between what China had been talking about of telling banks to back off, between what's happening in Japanese markets. What do you make now, adding Kevin Hassett's comments into the mix?
Yeah, I think he's talking about the demographic shifts and trying to set a tone now that expectations are lower, that we're not in this Biden era where we should expect 100, 150,000 to be the norm. Instead, now a flat number would be around 40 to 60, which is what we've seen from sell-side research, and it's not going to be really news. It's just an admission that we're in a slower job growth world, and it's not necessarily worrying if these numbers don't come in. Now, markets may disagree with that, and we certainly are watching that closely to see where the gauge is for the break-even number.
I hear so much about this Sell America trade that supposedly is on, the debasement trade, and yet it doesn't really seem to be coming through, right? We're still at under 422 on the 10-year yield.
Right, and that tells you everything you need to know, the price action itself. But also, we look at the tick data, or we look at the indirect bids at the auctions. None of it's flashing any worries. And to be honest, China's been reducing its treasury holdings for some time. And this looks more like some sort of regulatory risk management exercise than an actual message to the American administration about geopolitics or the trade negotiations going on right now. So I don't take too much worry in it. And finally, just China really wants lending to go to the consumer, to boost the domestic economy. They're very worried that they put this policy backdrop in place and yet nothing is happening. It's pushing on a string still.
All right, Michael, thanks so much for joining us. Bloomberg's macro strategist, Michael Ball. You can check out his work and the work of his team by typing MLIV-GO on your Bloomberg terminal. In terms of futures, after the bounce back that we got on Friday, a little bit of a sell-off here today, and I stress little bit. The Dow, S&P futures, sorry, down 0.25%. NASDAQ futures down about 0.4%. Let me go ahead and look up, because we don't have the Dow Jones Industrial Average for you here. And we'll start playing that throughout the day, because of the 50,000 mark that we overcame on Friday. Right now, Dow futures down 0.2%.
Dow did well, equal weight did well. It's the old school rest of the index coming back. Coming up on the show, Apollo sets a lending record in a push to rival Wall Street. We're going to get the details for you as those shares move higher by nearly 4%. That's coming up next. Stay with us on Open Interest.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Only on Bloomberg.
Let's get now to high interest. Look what's making headlines around the world. China's President Xi Jinping faces a choice after Japan's new Prime Minister, Sanae Takaichi, won an historic landslide victory. Beijing can keep economic pressure on Tokyo over her Taiwan comments or seek a reset. Takaichi has implied that a Chinese invasion of Taiwan could prompt Japan to deploy its military. And while the new prime minister says she wants stable ties, she also said she won't back down on security, raising stakes for China, Japan, and the U.S. Tuition for New York City private schools has now crossed the $70,000 mark at several of the elite schools here in the city. The median tuition is up nearly 5%, far outpacing inflation, driven by higher teacher salaries and operating costs, while millions are being offered in financial aid. Even high-earning families say the sticker shock is growing. And Ferrari has revealed the interior of its first electric car, co-designed with former Apple design chief Johnny Ive. It is called the Ferrari Luce. It rejects giant screens and autonomy hype, favoring tactile switches, physical controls, and driver-focused experience. Ferrari says more details, including the exterior, are coming later this year.
In your review, what do you think?
I mean, it looks pretty good, but it does look pretty iPad-ish. And I mean, I'm open-minded because it's a Ferrari. It's going to be amazing. But I prefer a manual transmission, a naturally aspirated motor.
Yeah, I was going to say, if someone brought you this car and was like, here you go, Matt, I'm sure you would not say no.
Be very happy. I'm glad they have an analog clock there.
Yes, bring back analog clocks. Matt, elsewhere, another story we're tracking today. Apollo has set a record in its business of making loans. The company originated $97 billion in the fourth quarter. It's pushing to become the largest underwriter on Wall Street. Let's get more with Silas Brown, Bloomberg senior private credit reporter. Silas, this comes back. I remember there's this FT story on private credit, and they quoted someone from Apollo saying, we're becoming a bank and it sucks. I feel like that's also what this earnings kind of tilts its hat to.
Yeah, I mean, look, I think Apollo is often lumped in with other private credit or private capital providers, but actually the way that they originate their assets, I mean, due to the nature of Athene and other insurance providers that they own, is somewhat different, and actually it means that they have a lot more capacity to lend to more investment-grade portions of the sector, and I think I mean, not knowing precisely where their lending records have come from, I would assume that a lot of it comes from these kind of large ticket private investment grades deals that they've been doing more and more.
So Apollo also announced a deal with Schroders. Not all American investors will know, but obviously legendary in London. Doing something that a lot of these big firms are getting into a business a lot of these big firms are trying to crack into, and that is, I guess, high net worth individual or family office wealth management. How do you think this is being received?
Yeah, look, I mean, I think it's somewhat of a classic partnership. I mean, you know, there are several. Apollo has done others as well, like L&G and Blackstone and KKR and Capital Group. I mean, I guess the kind of general thought process behind it is that there are these big beasts like Schroders and L&G that have these networks of wealthy clients, but also pension relationships and things like that. And then there are these kind of great origination beasts, like Apollo and KKR, and so that's kind of, I guess, the thought process behind it. I think with the Schroders one, it seems to be quite an expansive relationship. They have tie-ups on the public side and the public and private fixed income portions, which is kind of bigger than other tie-ups that have come out.
So it's one of the things that Mark Rohn, the CEO of Apollo, just said on the earnings call, saying our software exposure in PE and Athene is near zero. If that's true, and I'm assuming it is because he said it, is that kind of remarkable? I thought software was a pretty loved asset class by private capital across the board, and for Apollo to come out of the wreckage last week saying we have basically nothing, is that unusual, or is that common among their big publicly listed peers?
Well, so not having listened to the great Mark Rohn speak in his earnings thing yet, I think I would say no. I mean, we did a story last week about private capital software exposure, and I think Apollo had taken a view early on, kind of earlier than some peers, about the sort of bearishness around software, particularly due to the rapid adoption of AI. And so I think if my memory serves me right, it's in the story, they cut some of their exposure from 20% to about 10% last year, and I think some of their leading kind of players like John Zito have been quite public about their bearishness on software. I think they are. I mean, there are others that I think are more bearish, but I don't think that's a broadly held view across private capital.
Silas, great to catch up with you as usual. Hope you have a fantastic week. Silas Brown there covers private assets for us out of London. Coming up, Keith Lerner of Truist sees market leadership broadening in the U.S. and abroad. He joins us to talk about that next. This is Bloomberg Open Interest.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Only on Bloomberg.
Goldman's trading desk has warned that stocks face more selling this week from trend following algorithmic funds, or CTAs, writing in a note, quote, the inability to transfer risk quickly lends itself to a choppier intraday tape and delays stabilization in overall price action. Buckle up. Joining us now is Truist CIO and Chief Market Strategist, Keith Lerner. Keith, great to see you this morning. This piece on the terminal has been remarkably well read because I think everybody is digging through, I don't know, wreckage is extreme, but digging through the volatility of last week that ended us down only 0.1% and thinking, is there more to come? How are you thinking about last week and what it means going forward?
Yeah, well, Danny, great to start the week with you guys. I think last week, if you zoom out beyond the headlines, it was a really interesting week because below the surface, we had a very strong market and a very cyclical tilted market, meaning look what we had by the end of last week. We had small caps, and I'm looking at the S&P 600 at a fresh 52-week high, mid caps at a fresh 52-week high, the equal weight index at a fresh 52-week high, the international markets at 52-week highs. So you have this transfer from tech into the broader market. And that was really the story last week beyond the headlines and the sell-off that we're seeing in software.
I wonder if you expect the sell-off to continue or if that was it, Keith, because it was crazy volatile, but it looks like a lot of investors have bought the dip and brought us back to levels where we were before.
Yeah, you know, I would say, Matt, the key I would look for this week is on tech. We went right to that 200-day moving average and bounced off of it last week. I think that's a positive sign. So listen, I think it will be maybe a choppy week, but I think the underlying trend still deserves the benefit of the doubt. And again, the way the stocks are acting, they are buying into this economic uptick, which is also our base case.
Right, Keith, you're going to stay with us, and after we get to the open, that's Keith Lerner of Truist with your opening bell less than 5 minutes away. You are looking at an equity market that is down after recovering. Friday was the S&P's strongest day in 8 months. It rallied nearly 2%. You give a little bit of that back this morning, down 0.25%. Kevin Hassett warning that the jobs numbers might not be that strong this week is bad news again. Tech underperforms, down 0.4%. Equal weight, that hit a new record on Friday. The Dow crossed 50,000 for the first time ever. So to Keith's point, there has been a broadening out. We'll talk more about that when we come back. And we'll be back with your open after this commercial break.
cidade estava sitiada.
Isso, ao começo, eu não sabia o que fazer.
Foi
mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
We are moments away from the start of trading on this. It's a Monday morning, and typically, especially after the Super Bowl, you'd be kind of bleary-eyed and sleepy, maybe a little hungover, but wake up, because Sydney Sweeney is ringing the opening bell at the New York Stock Exchange, along with American Eagle, everybody wearing their denim there, the star of, what's the new movie she's in, The Housemaid or something like that?
Oh, yeah.
It's an awful movie, but I love Sydney Sweeney, and not because she's so beautiful, she's really into cars. I think she was on Jim Farley's podcast. She has a Mustang and a Bronco. And she works on them herself, so that's why she needs the denim. Anyway, good reason to be happy today. Also, American Eagle stock, by the way, it's up 60% in the last 12 months. So they have been crushing it for a retailer. Zebra Therapeutics, another company that's really been on the comeback trail. If you look at the 5-year chart, they're still down 5-6%, but over the last year, they've gained 10% back. Over the last 2 years, 40%. Over the last 3 years, 60%. So they're really coming back over at Zebra.
It's just hard to compete when, like, the rival opening bell's got Sydney Sweeney at it.
That's true.
I kind of feel bad for
That's
Zebra
true.
this morning. Not a lot of
I'm
people
pretty
are looking
excited
at
for all the traders on the floor of the New York Stock Exchange.
Oh my God, I fear for Sydney Sweeney. I hope she makes it through unscathed. Matt, I'm looking at shares of Novo Nordisk and Hims and Hers this morning. The drama continues. Novo Nordisk said that it was suing Hims and Hers for making a knockoff of its obesity medicine. Hims said that they have scrapped plans to sell a copyright version of the Wegovy pill because the regulators also got involved. So Hims really struggling this morning. Novo gets a pop of about 5 1/3%, Matt.
We're watching shares of Kroger as well after the grocery store chain named ex-Walmart executive Greg Foran as its next CEO after nearly a year-long search. I know that he has plans to try and make the stores cleaner and, I guess, lower prices. It all seems pretty obvious, but that's what they're looking to do.
Friendly.
And
that was
and
like
more
he made them
friendly.
more friendly and
right.
nice.
I mean, as a boy from the great state of Ohio, where we used to frequent the Kroger,
Right.
it seemed pretty clean and very friendly.
Yeah,
obviously,
but doesn't Walmart have like mandated like happy greeters, that smile when you come in? I don't know if Kroger goes that far.
Yeah, no, I never saw any greeters at Kroger, but
Which
I
is
haven't
maybe
been
okay.
there in a while.
Yeah, no, they're
right?
not.
There aren't any around here.
Yeah, good point. Yeah. So
Maybe they should move back to New York. Truist CIO and Chief Market Strategist Keith Lerner is back with us here. And Keith, we haven't mentioned much that the Dow Jones Industrial Average went over 50,000 on Friday. When I was a kid, that would have been like headline news, Wall Street Journal, front page. Does it not really matter that much anymore?
It still matters, but I think in some ways, kind of where we started our conversation, like the move up, this kind of broadening trade that we're seeing domestically and globally has got lost somewhat because we're seeing like the S&P 500, which has such a concentration in tech, be relatively flat, where underneath the surface, you're seeing some really, good action for the overall market. So it still matters, but maybe a little bit less than when you and I were a bit younger and I had some black hair.
And I had hair at all.
I'm sure someone still out there has made a 50K Dow hat that everyone's prancing around wearing. Keith, away from the company news, the macro news has not been great. The jobs data we got last week was pretty lousy. We're going to get another jobs figure delayed on Wednesday. And Kevin Hassett of the NEC is out saying expect a jobs number that might disappoint. If we do continue to get jobs data that disappoints, is this an equity market that's going to sell off alongside a rally in bonds?
Yeah, well, I think initially, Danny, the way I'm thinking about it is the jobs data at this point is somewhat lagging. We know we have this kind of fiscal punch coming through or stimulus in this first quarter. And the market is clearly saying that it believes, look at transports making a fresh high along with the Dow Jones as well. So, I mean, I guess that is the risk. If you really start to see more of a meaningful slowdown in the economy and this perceived disconnect between GDP growth and labor really further expand. But I would say our base case is that we actually will start to see some stabilization in the labor side. And also, we are seeing some productivity gains as well. So I think that comes into the equation. The immigration, the AI stuff. So I think the jobs market by itself is just it's more nuanced today, and the market is clearly sending a signal of economic growth.
Well, it seems like it matters less and less. Like the Dow, maybe. We had a great conversation with Rick Reeder about this on Friday, and he pointed out, like the people that are at risk in the jobs market just aren't as important to GDP growth. I mean, as you're mentioning as well, Keith, right? Because we've got high net worth individuals doing all the spending, the giant, hyperscalers doing all the CapEx. The government is pouring stimulus into this economy. So even if we get larger unemployment, it's not going to mean a slowdown in GDP. And frankly, the interest rate tool isn't as effective. How important is the Fed for this market?
In the near term, I don't think it's the main driver. I think corporate profits are the main driver. That's the North Star of this bull market that we've been speaking about over the last year. And what we're seeing is forward earning estimates for the S&P are at a record high. But what's important is we're seeing that broaden to small caps and mid caps. We're seeing strength there. But we're also seeing that international emerging markets just had a strong uptick. And Matt, maybe one comment on the job market as well. I know a lot of times we focus a lot on how much job growth there is from month to month. What's really important in our view is we have about 160 million people working in this country. And what's really key for the economy to move forward is that wage growth stays above inflation. And right now, that's still what we're seeing.
Keith, one of the more cyclical parts of this market that's had a really good run has been regional banks. They gained every single day last week, which in itself was a feat considering what the rest of the market did. It's now trading at a record high. There's consolidation, there's M&A. Would you be adding to this sector?
We're more neutral to the overall financial sector. And as you mentioned, some of these areas have had a big move in a short period of time. So I think we would be more likely looking at pullbacks as opposed to aggressively adding here. But I will say that it does fit into this global trade, also a steepening of the yield curve and the M&A that you mentioned. These are all things that typically will bode well for the regional banks. And that's why you're seeing that strong price action also.
In terms of, the big movers, the gold, the Bitcoin, I guess software ETFs. Is there anything, Keith, that you think hasn't recovered yet that the market's overlooking? Maybe we should buy?
Yeah, well, on gold, we actually downgraded gold last Thursday morning near the highs. And we think there's going to be some time element with gold after being about 40% above its 200-day moving average. So that's going to take some more time. We still think structural drivers are there. On the software side, Matt, I think it's going to be one of the things where almost like gold, but the other side where the rubber band keeps getting stretched, and you'll have a snapback. I don't think it's going to be leadership because, it's something that's hard to disprove, even though the earning trends are relatively well. It's just getting a bit overdone. So at this point, I will say more broadly on tech, even though we have burned out our sector exposure, I would not give up on tech. Tech's multiple has moved down from about a 32 to about a 23 multiple. So a pretty sharp reset on fears in general, where the earning trends are still the strongest in the market. So I would say broadening, but don't forget about tech. I think there will be a point later this year where tech comes back in vogue.
Keith, I just wonder if something about last week, almost ending where we started, to be honest, is instructive, not necessarily in terms of the fundamentals of software or what's happening in the jobs market, but between correlations in this market. When you get volatility in things like gold and silver, and to Matt's point, what Bitcoin did, you add that in, and then its impact on equity markets. Does it show some sort of underlying sensitivity in this equity market that itself might cause more volatility?
Yeah, no doubt. I mean, some of these areas which they have different, you think profit trends are not even, earnings related, are looking the same. If you overlay a chart of software and Bitcoin, it looks like the same chart. So yes, I just think, and I think that's we're gonna kind of see this concentration of moves that kind of seem like, why are they moving together? But there's also some leverage plays, and we also know, even like on Reddit, we know that silver and gold were two of the hottest trending tickers, which 6 months ago that would have been crypto. So I do think that's a change in the market dynamic where things that seem uncorrelated become very correlated. But I would keep my eyes on those underlying earnings, which over time I think will be reflected in stock prices.
Keith, thank you so much for joining us this morning. It's great to kick off the week with you. That's Keith Lerner of Truist. Let's get a check on your equity market right now, almost 10 minutes into your trading day, and we are flat to slightly down. The breadth isn't great. We're down, 316 stocks are down for nearly 200 being up. To the upside, you have some of the big tech names. NVIDIA is doing well, Microsoft, Eli Lilly, after a new deal to buy a biopharmaceutical company, Oracle, that's seeing its biggest intraday gain since December. Shares are up 8.5%. Not totally sure what's going on there. It did get a sell-side upgrade, so maybe that's helping to drive it. On the downside, you do have Apple. We were just talking with Caroline Hyde earlier in the show about how they're going to be debuting one of their new cheaper phones. Amazon, that continues to fall after announcing a huge amount of spend in their earnings last week. Shares down 2.4%. Micron, Intel, so not a great day for the chip makers. And you will see some of the damage, even though the chip makers aren't doing well. Infotech is still at the top of the pile because of that NVIDIA move. Energy, that also picks up, but most of these sectors are down this morning. Consumer discretionary, Amazon lives in this category, so that's why it's down 1.3%. GM is down a lot today. It's actually the worst performing consumer discretionary stock. I'm not totally sure why that is either, but utilities, real estate, staples also not doing well. So some of those safety sectors not providing a lot of safety this morning, Matt.
I'm looking at, by the way, at Oracle. I mean, it's come down by so much.
True.
Since it reached a high, like in September of last year, it's down still more than 50%. So any buy here is not going to get you back to where it was. Coming up, Novo Nordisk. Speaking of stocks that have come down drastically and are now on the move higher, fires back, suing Hims and Hers over obesity drug copycats. We'll explore what it means for patients next. This is Bloomberg Open Interest.
Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal. With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television. After the best day for the S&P of this year on Friday, we try to continue those gains. We're now unchanged on the S&P 500. NASDAQ falls 0.1%. Let's get you some top calls to analyst action that we are watching this morning. First up, D.A. Davidson, they upgrade Oracle to a buy, saying that OpenAI is likely to exceed investor expectations, and that's going to directly benefit Oracle. Oracle, a huge rally, maybe off the back of that, up 9 1/3%. A very jumpy market where small things seem to be moving equities a lot. Next up, Wolf Research, they upgrade Robinhood, saying that the app will see upside from the growth of prediction markets. The analysts say the stock looks more attractive after recent pullbacks, even with weaker crypto trading. Those shares up 4.4%. Next up, Roth Capital, they upgrade Roblox to a buy after its latest earnings. The analysts there say that they have a positive view of the business based on stronger than expected bookings guidance. Shares, Matt, up 8.7% this morning.
All right, so big gain there for Roblox. Novo Nordisk also looking at a big gain. It is suing Hims and Hers, accusing the telehealth firm of infringing its U.S. patent on the key ingredient in Ozempic and Wegovy. Meanwhile, Eli Lilly agreed to buy Orna Therapeutics for up to $2.4 billion in cash as the company expands its pipeline beyond its blockbuster obesity drug Zepbound. Joining us now is Bloomberg Health reporter Madison Mueller. So, Madison, a lot going on for you on this Monday morning. Let's talk first about Hims and Hers. I guess you could have seen this coming. Why were they so bold in making that move to begin with?
I mean, they were so bold because really up to this point, they've been able to get away with this. I mean, Hims has been selling compounded versions of Novo's weight loss drugs for the last 2 years, really without any repercussions. I mean, Novo, Lilly, they've spoken out about this compounding issue, but as for the FDA and U.S. regulators, they really haven't done much to crack down on this sort of copycat gray market. And so this was the bet that they've taken, that would just continue, that regulators wouldn't do anything about it, that Novo wouldn't take steps to sue them. And then we've sort of seen it all crashing down in the last week as a result.
What degree is it just crashing down for Hims and Hers versus the entire compounding pharmacy market? Because there's still a lot out there. Exactly. I mean, I don't know if theirs are compounding or not, but like Ro, for example, having Super Bowl ads, I'd assume some of their stuff is compounding pharmaceutical medicals.
They did do compounding at first, and then they pulled back on it. They sort of saw where this was headed, I think, a little bit earlier than Hims. And so Ro has been able to work with both Lilly and Novo to offer discounted versions of the brand name drugs on their platform. So they have a better relationship with them. But there are still, you're exactly right, there are still compounding pharmacies, there are still other telehealth companies, there are still med spas that are selling these compounded products. And it's been really hard for the FDA, or maybe they just haven't prioritized this quite enough because they have a lot of other things going on, that they really haven't done much to stop this market from proliferating.
I always look at a 5-year chart of stocks on the Bloomberg terminal, just because the comp function defaults to that. And I think it's a fair window to look at performance. Novo Nordisk has underperformed Eli Lilly by 413%. And that's really only started in the middle of 2024. Is there any way that they come back and catch up, or is Eli Lilly's tirzepatide, their Zepbound, really that much better than Wegovy or Ozempic?
It is better. I mean, the drug is better, plain and simple, and that has been a huge advantage.
Losing more weight.
Yes, more effective, also potentially less side effects. So a lot of times if people are having a lot of side effects on Wegovy, their doctor will switch them to Zepbound. At the same time, Lilly has a deeper pipeline than Novo. So in terms of next generation therapies, they're ahead there too. Novo was really pinning its comeback hopes on this pill that Hims launched a copycat version of, a couple weeks after launch, and that's why it was such a big deal. Because Lilly has a pill that's coming in a couple of months, but Novo's had quite a bit of a head start. Few months head start makes a big difference. And so that is really important for them, and staying ahead in this pill market is going to be important, but we don't know if they'll be able to catch up.
By the way, so as you know, I think like the pill doesn't make much sense. If you can do the shot only once a week, why would you want to take the pill every single day? And I struggle to use the term shot because it's not like a painful, it's not like a needle, right? Where the compounding pharmacies, you have to stick yourself with a syringe. This is, easy. I know that there are other companies working on drugs that last even longer, so you would only have to take it once every quarter.
Yeah.
How far away are we from that?
Yeah, we have a couple of different companies, Pfizer and Amgen, that are working on less frequent dosing. The interesting thing is that it sort of comes down to patient preference. I mean, when it comes to the pills, some people just don't like injections, which, like you said, it doesn't really, it's not a full like shot, like a vaccine that you're getting. It's different, it's a smaller needle, you don't really see it. But some people just prefer pills. Some people prefer less frequent dosing. But some people don't, because then you're maybe not as conscious about it. So that's something we've seen with diabetes, that people actually prefer maybe more frequent dosing, because then they're thinking about it, they're monitoring it, they're also thinking about what they're putting in their body, exercise, other things that go along with it. So it sort of just comes down to patient and doctor preference, but drug makers are sort of betting on the idea that having more options is not a bad thing, and having all of these different options in the market at the end of the day is going to benefit patients.
Never a dull moment in this space.
Exactly.
Madison, thank you so much for joining us. That's Bloomberg's Madison Moeller. Coming up, Kroger taps a former Wall Street executive to lead the grocer. That's coming up next. This is Bloomberg Open Interest.
Your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
This is Bloomberg Open Interest. I'm Matt Miller. Quick check on stocks right now, about 25 minutes into the session. You're going to see a lot of red here, but it's not so bad, right? S&P 500 down, but only 0.1%. of 1%, 69.24, the level there. The NASDAQ also down by just about as much, still over 25,000 on the NASDAQ. You see the small caps falling further in Bitcoin, back down to under 70,000, so $69,345 a share. Take a look at NVIDIA right now up 3.5%, so that's holding us back from steeper losses. Oracle, as we've been talking about, up almost 10%, a 9% gain here on Oracle after an analyst upgrade, and of course, it had such a successful week last week. Hims and Hers is down. It's lost a quarter of its value now that it won't be able to, or now that it's pulled the pill version of its copycat Wegovy drug. Novo Nordisk bouncing back about 6%. You can see Apollo right now up 3% on earnings and a couple of announcements, one of which is with a team up, a partnership with Schroders, and then Kroger, which we're going to talk about right now, up 7% and change, Danny, on a new CEO.
So that new CEO, it's a retail veteran named Greg Foran. Let's discuss it because he comes from Walmart, and clearly the reaction is positive. Emily Cohn, she leads Bloomberg consumer coverage, joins us now. Emily, what do we know about Greg, and why would this be such a positive thing for Kroger?
Thanks, Annie. Yeah, Greg was once called the greatest retailer on the planet by Walmart's former CEO, Doug McMillon. He's known as an operator. He's known as someone who really gets grocery and retail. He is the person who was in charge of Walmart US during the mid-2010s when Walmart's really started to prioritize making the stores feel cleaner and friendlier, and the groceries got better. A lot of the things that Walmart is really benefiting from right now, as we see a lot of growth there, especially from higher income households who are shopping at Walmart.
Can he really do this at Kroger? Because Walmart is a different kind of store, right? I mean, we were talking today about the fact that Kroger is apparently the biggest grocery chain in America. And I thought, well, Walmart's bigger. And someone said, but that's not the same thing.
That was me.
Okay, there you go.
I think you nailed it. When you think of Walmart, it's Walmart. Of course, they have their e-commerce business and their stores, but everything's Walmart. Kroger is a chain of many chains.
At Walmart, you can get a bicycle, you know, a bow and arrow.
Kroger owns Ralph's. They own a lot of different grocery chains across the country. I think running, you know, an umbrella of many businesses is probably a lot different than running one chain where everyone knows what Walmart is. It'll be interesting to see what he does.
Is there any outlook for more consolidation in this space post all the Albertson kerfuffle with new administration? Maybe easier to get some of that through. Are we expecting anything?
Right. It's a good question. We know that Kroger was trying to do that with its acquisition of Albertsons. Obviously, that didn't work, and then they lost their CEO. But it does. You raise a good point. It does sort of indicate what this chain might be looking to do. I don't know what their plans are.
By the way, Kroger. You know, I grew up near Kroger because I'm from Columbus, Ohio, thankfully. But then I had to move here for work. And there's no Kroger here. I noticed there's also no Walmart. Is there something about New York City that these successful national chains just want to avoid?
It's true. I mean, I think both Kroger and Walmart really rely on large retail footprints, which is just nearly impossible here. The labor environment here in New York City is, of course, very different. But what you do see now, and I see it more and more, is that the doorsteps in my apartment building in New York City, you see Walmart delivery boxes. People can get Walmart deliveries as fast as they can get them from Amazon, and that's Walmart's new frontier. So maybe they don't need a big box in New York City, but they can deliver.
Right on. All right, Emily Cohn covers retail for us on the BN side. Coming up in the next hour, Kelly Coveley of Manning & Napier on risks to the labor market, and Edgewell CEO Rod Little following his company's latest earnings report.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
CBS News on the Hour, your home for original reporting.
I'm Deborah Rodriguez. The Jeffrey Epstein scandal is front and center today on both sides of the Atlantic. First, to the UK. King Charles heckled at an appearance after British police announced they were examining claims the former Prince Andrew sent confidential trade reports to the convicted sex offender. The BBC's Nick Johnson.
Just ahead of Prince William's official visit to Saudi Arabia, the Kensington Palace spokesperson released a statement saying, "I can confirm the Prince and Princess have been deeply concerned by the continuing revelations. Their thoughts remain focused on the victims."
Now to Washington, where imprisoned Epstein associate Ghislaine Maxwell is expected to plead the Fifth when she appears virtually before lawmakers investigating the Epstein case. Some will be getting a closer look at the records today. Correspondent Scott McFarlane.
Under the law that required the Department of Justice to release Epstein case files, members of Congress can go into the Department of Justice headquarters to view the entirety of the records, including the millions of pages that were not publicly released and those that have been redacted. We know at least one U.S. House member, the ranking member of the House Judiciary Committee, says he'll be there when the doors open today.
That's Maryland Democrat Jamie Raskin. Prayers for Nancy Guthrie more than a week after she was kidnapped.
We pray for Nancy's rescue. We pray for her release. We pray that she would be brought safely home.
The Reverend John Tittle during Sunday services at Guthrie's church in Tucson. With a second ransom deadline coming up later today, investigators need all the help they can get. Correspondent Jonathan Vigliotti is in Tucson.
Billboards have been popping up in neighboring states with Nancy Guthrie's details and a phone number for the FBI. The FBI continues to call on the public for their help, 520-882-7463.
There won't be much learning going on today for some kids in Northern California.
Teachers in San Francisco are on strike for the first time in nearly half a century, closing public schools for about 50,000 students. Cassandra Curiel is president of the San Francisco Teachers Union.
What they've proposed has concessions and takebacks, which means that our students in our schools would receive cuts if we were to agree to what the district said.
The last teacher strike in San Francisco in 1979 lasted for nearly 7 weeks, making it one of the longest in state history. Jim Crisula, CBS News.
A day after his Super Bowl halftime performance on NBC,
God bless America.
Bad Bunny occupies the top 5 spots on the U.S. Spotify chart. Dow down 172 in early trading. This is CBS News. A new survey finds hiring is getting harder.
A national survey by staffing firm Robert Half of more than 2,000 hiring managers reveals the issues impacting hiring plans for the first half of this year.
Businesses are entering 2026 with widening skills gaps and more complex hiring conditions.
Robert Half's Paul Flaherty.
While business confidence remains strong, many companies are struggling to execute their strategies. They simply don't have the right capabilities in place.
AI is making assessing job skills more difficult. Stephen Kaufman, CBS News.
A 106-year-old outdoor sportswear pioneer filed for bankruptcy this morning. It marks the third time in a little more than 2 decades Eddie Bauer has filed for Chapter 11 protection. The company says it'll conduct a liquidation sale at its 180 stores in the U.S. and Canada. Deborah Rodriguez, CBS.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Monday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, we are streaming live on YouTube. Head over to youtube.com and search Bloomberg Podcast. That's where you find us. We are also streaming on Bloomberg.com/videos. That's where all the Bloomberg Live video, radio, and TV is, as well as all the curated videos. So go check it out there. Coming up, we're going to check in with Brian Egger. He covers all the gaming industry for Bloomberg Intelligence, get his thoughts on how the big Super Bowl weekend went over in the world of gaming. Phil Orlando, Chief Equity Market Strategist at Federated Hermes, he's going to join us, give us his thoughts on these markets. Scott Levine, Bloomberg Intelligence Senior Energy Services Analyst, on Transocean's agreement to buy Valaris in a stock deal valued about $5.8 billion. So a big deal there in the energy space. Kevin Krim, CEO of EDO, to discuss best performing ads and key takeaways from the Super Bowl. Sam Fazeli is going to join us, give us the latest on what's going on in the world of healthcare. So a lot going on there with some of these obesity drug makers and some of the legal issues going over that industry about some companies like Hims and Hers and that kind of stuff. So a lot going on in that space. We'll break it down with Sam Fazeli. Let's go to John Tucker for a Bloomberg Business Flash and get this thing going.
All right, guys, this Bloomberg Business Flash being brought to you by IBKR. Will the U.S. Consumer Confidence Index be above 101 in March 2026? Turn your view into a trade at ibkr.com/forecast. The last trading day is March 22nd. Stocks makes a little change ahead of a heavy week of economic data. So Wednesday, we're going to get the delayed jobs report, and then Friday, we get the inflation data. After 50,000 Friday, Dow Jones Industrial Average 122 points lower right now. That's down 0.25%. 49,988. S&P 500 8 points higher. That's up 0.1%. 6940 on the index. The tech-heavy Nasdaq 40 points higher. That's up about 0.2%. You have 9 of the 11 major industry groups in the S&P 500 actually lower right now. The big drag, consumer discretionary and technology, is in the lead. Some of the individual names on the move right now: Eli Lilly is buying closely held U.S. biotech Orna Therapeutics. The price tag there, only $2.4 billion in cash, but it's the second deal in as many days. The company expanding its pipeline beyond its well-known blockbuster obesity drug Zepbound. Kroger plans to name Greg Foran as the supermarket chain's next chief executive officer. This, according to our sources, the nation's largest grocer looking to carve a new path after a failed mega deal and an unexpected exit of its former boss. Kroger shares right now 7.5% higher. And how's this for a fat thumb? South Korean crypto exchange Bythumb mistakenly distributed more. This is a mistake now. Distributed more than $40 billion worth of Bitcoin on Friday. They say they're going to reimburse customers who made losses when they sold their holdings in a panic during a brief but sharp sell-off on the platform. They had intended to award $424 to winners of the promotion. Wow. An employee keyed in a Bitcoin instead of the Korean currency. So, yeah, do they still have their job?
XBT versus BT KRW?
It happens. So
it's like a multi-factor.
They did identify the mistake within 20 minutes. Hey! Could you imagine? Anyway, we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash.
Cancel button. Cancel.
Nah, too late. Paul and Scarlett.
All right, John Tucker, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Brokers studio in New York City, streaming live on YouTube and on Bloomberg.com/videos. As John's just reporting, got red and green on the screen here. Let's see what stocks are on the move today. We can do that with Bloomberg's Alexander Semenova. Alex, what are you looking at today?
Hey guys, so we've been talking a lot about how companies are financing the big AI boom, especially given they're spending so much money on investing in this technology. We have some big news out of Alphabet today. It is looking to raise about $15 billion from a U.S. high-grade dollar bond sale. This is according to sources. This builds on a borrowing spree by companies that are at the center of the artificial intelligence investment boom. They've been spending a lot on cloud computing, data, chips, all these companies that we call hyperscalers. They're expected to spend more than $650 billion this year just to expand that infrastructure. And since last year, the group has been flooding the market with debt. So far, investors have been eagerly absorbing it, but it does raise concern that we are kind of getting into bubble territory. Just last week, Oracle also raised $25 billion from a bond that attracted a record $129 billion of its orders. And part of this issuance by Alphabet, it actually also plans to sell a very rare 100-year bond as part of this mega debt issue. This is the first such sale since the late 1990s. So there's a superlative for you.
Thank you. Lots of debt coming up from these big tech names. All right, what's next?
Yeah, another company that I'm looking at today is Hims and Hers. Those shares are down 27% right now. This is after Novo Nordisk said that it's suing the company for making knockoffs of its obesity medicines. This is even as Hims and Hers scrapped plans to sell their copycat version. Novo on Monday said that they are breaching their U.S. patent on semaglutide, which is the key ingredient in these anti-obesity drugs. And Novo Nordisk has been kind of cracking down on copycats, given the fact that it has had such a tough time with competition. It's really erased a lot of that big performance that it had when it first came out with the drug.
Tegna, which is the former TV station group owned by Gannett, which at one time was the largest newspaper operation in the country, What's going on with Tegna?
Yeah, those shares are up nearly 9%. This is after President Trump backed a proposed acquisition of the firm by the television broadcaster Nexstar Media Group. So a bit of a merger Monday going on here. Nexstar is also trading higher as well. Trump expressed his support for the deal in a post on Truth Social. So a lot of enthusiasm around this, given the support for the acquisition.
All right, good stuff. Thank you so much, Alexandra Semenova, with our Stock Movers Reports. And for more conversations like this, be sure to subscribe to our Stock Movers Reports, where you can listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. All right, yesterday's Super Bowl game. I don't know if you're tired or not. If you watched the whole game,
Watched
did you?
it. Watched
Watched
it. Yep.
It was kind of boring.
Yeah, I don't know. It was defensive play.
Yeah,
a lot of
boring.
scoring in the second half.
Okay. Well, I missed the second half because I was so bored by the first half. I did watch some of the commercials.
All right.
Yeah. Brian Egger, it was his job to make sure that he saw the whole game and to also analyze, what it means for the different companies. He is our senior gaming and lodging analyst. So, Brian, what was your big takeaway from the big game?
I think from a sportsbook perspective, it was probably mixed. The fact that a heavily favored team won, covered the point spread, on balance, that's not great for sportsbooks because the public generally bets heavily on the favored. The good news, I guess, from a sportsbook perspective is the game total point total 42 was below the over-under, which was low to begin with. I think the public, as I understand it, generally bet more heavily in the over. So those over bets didn't pay out. So in that sense, there was a benefit. And as you mentioned, a low-scoring game. I think there were 3 touchdowns all in the fourth quarter. So proposition bets that would have been linked to someone scoring a touchdown, generally speaking, not many would have paid off because there just weren't that many touchdowns. So that's the other, I guess, benefit to a sports book of a low-scoring game. So there was some mix, puts and takes.
How do the DraftKings of the world, how do they just give us a sense of the magnitude that's wagered on those sites on a big event like the Super Bowl?
Yeah, we don't have specific numbers on the Super Bowl specifically. We do get state numbers, but anecdotally, I mean, the Super Bowl and March Madness, which of course is spread over weeks.
Yep.
Those tend to be the 2 biggest overall wagering events in terms of volume wagered.
Okay, so there's DraftKings, there's FanDuel, and now there's also prediction markets, and those are operating everywhere.
Yep.
What kind of numbers do we have from that, or at least what are they telling us?
Yeah, we spent a lot of time thinking about prediction markets, and it's a big legal point of contention because the states and the regulators, and certainly the sportsbooks, argue this is not non-sanctioned gambling. I think our take is that particularly in non-betting states where you don't have legal sports betting, California, Texas, the most populous, that's an obvious place where a Kalshi would make an incursion because right now there's no other option to speculate on a game outcome. The real thing we don't know about is what happens in betting states. We do see that the download activity of Kalshi and these prediction apps was quite high, higher than the sports books. On the other hand, the average daily use was higher for the sportsbook apps who have more cumulative downloads. So, with data we have provides kind of a mixed picture.
How many states now have the sportsbooks apps? Where are they legal?
Yeah, so like the mobile legalized sports betting is about 32, 33, something in the low to 30s, yeah.
And the other states, they've said we're not going to do it?
So, I mean, there's, of the states you mentioned that I guess you argue are holdouts, maybe there's 19 some odd states. The big opportunity from a money perspective is Texas, California, just based on population. There was a referendum that failed in California. Texas has to go through a multi-year process to get it done. One of our theses has been that with prediction markets effectively operating there anyway, it may be an impetus for those states to turn around and legalize sports betting.
Are Super Bowl boxes legal?
I don't know, because I did a bunch of them.
Brian, do we know?
Super Bowl boxes,
at the Summit Elks, I did the box thing.
Yeah, I
filled in a box.
You obviously hear about boxes more, I guess, for March Madness, but
yes,
yeah,
I don't know.
Or
we won't tell anybody.
Yeah,
yeah. Well, I mean, a lot of different, like my kids' youth hockey league, for instance, used to use it as a fundraiser.
Yep.
Right, like whatever money you collect, half of it goes
to
the league, and then the rest of it gets distributed.
Well, that makes sense.
All right, so Brian, stepping back here, 2026. What's the gaming call here? Is it going to be a good year for the casinos?
So I think Vegas, starting with Vegas, on a bit of a comeback from a very difficult second half last year. Vegas kind of slowed down. The low end of that market is somewhat weaker. people are more value conscious. Seems to have done a little bit better in the fourth quarter going into the first quarter, first half. Regional markets are pretty stable, so it kind of varies. Macau has been kind of also coming back, particularly in terms of the mass business. Vegas went through a lot of turbulence in the second half of last year. It seems to be better positioned for this year.
All right, Brian, thanks so much. Appreciate it. Brian Egger, Senior Gaming and Lodging Analyst for Bloomberg Intelligence, joining us live here in our Bloomberg Interactive Broker Studio. Coming up, we're going to check on Phil Orlando, Chief Equity Market Strategist at Federated Hermes, get his thoughts on these markets. And Scott Levine, Bloomberg Intelligence Senior Energy Services Analyst, talk about an M&A trade there, Transocean to buy Valaris in a stock deal valued at $5.8 billion. So merger Monday. We got some deals hitting the tape here. Red and green on the screen here. The S&P's up 12 points. The Dow's down 79 points. The Nasdaq's up 98 points or 0.4%. 10-year Treasury yielding around 4.21%. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Right now, the major averages, I'm going to say they're mixed to little change. How about that? After 50,000 on Friday, we're above 50,000 on the Dow Jones Industrial Average. Still 33 points lower, so it's 50,078 on the Dow. S&P 500, 14 points higher. That's up 0.2%. 69.46 on the index. The NASDAQ Composite Index up 104 points. That's a rise of 0.5% right now. One of the stocks that's really taken on the chin today, Hims and Hers Health, that's down 24%. So Novo Nordisk says it's suing the telehealth company for making knockoffs of its obesity medicines, even as Hims did scrap plans to sell a copycat Wegovy pill. Eli Lilly looking to expand its drug pipeline beyond its blockbuster obesity drug Zepbound. So the company set its sights on a Massachusetts-based biotech. Lilly buying Orna Therapeutics for up to $2.4 billion. Orna is developing a new class of treatments. It allows the patient's own body to generate cell therapies that can treat underlying disease. A lot of excitement on the New York Stock Exchange this morning. Sydney Sweeney rang the opening bell for American Eagle. She's the brand ambassador for the retailer. And I have to turn to celebrity lodestone Scarlet Food to tell me who in God's name Sydney Sweeney is.
Oh, come on, John Tucker. You don't watch Euphoria? You didn't watch White Lotus?
No.
The answer is no to both.
Both of those people.
Sorry. But I did see that YouTube video on, the new math.
The new math?
Extrapolating things and, calculus.
Yeah, maybe Sydney Sweeney makes an appearance on that video. I'm not sure.
No, I'm kind of a geekazoid. But that's why I have you here to explain who these people are.
Yeah, no, she's a big star.
Okay.
She is also, I think, she's been making the rounds on the awards circuit, but I don't think she got nominated, if I recall correctly.
Okay.
So, but she will one day.
A lot
soon.
of excitement this morning.
Absolutely. I can imagine. All right, let's take a look at these markets right now. Thank you, John Tucker. We have the Dow Industrials little change. I bring that up, Paul, because not so long ago, in fact, Friday, it made a record high, and it's still holding above 50,000.
My first day on Wall Street, June 16th, 1986, Dow was 1,850. Now it's 50,000.
Well, there you go. So let's bring in Phil Orlando. He is the Chief Equity Market Strategist and Head of Client Portfolio Management. And Phil, you write about how we've seen this solid January to start the new year, in part because of this broadening of the rally beyond the Mag 7 to small caps, to value stocks. The Dow, for instance, now at this record high, holding above 50,000, even as it struggles to add to those gains today. However, you also point out that this might be the calm before the storm. Why do you say that?
Good morning, Scarlett. First of all, thank you very much for having me back. So we've got a very constructive longer-term view on stocks. We've had positive years 3 years in a row. We think this will be the fourth year in a row, and we think the S&P 500 will be up at 7,800 by the end of this year, which would be roughly a 15% total return, give or take. But this year, 2026, will be very interesting for two reasons. Number one, there's going to be a leadership transition at the Federal Reserve. And number two, it is a midterm election year. And if you go back and study the market over the last 90 years or so, those two events have only come together in the same year a half a dozen times. This year will be the seventh time. And that created a lot of uncertainty and chop and volatility over the course of the year. Now, the market ended up getting its sea legs and rallying to new highs. Ultimately, fundamentals are what drive share prices higher or lower, and we think the year is going to end up fine. But we do think there could be a couple of air pockets here in the middle of the year, and investors need to be cognizant of that.
Earnings, we're about 60% of the way through the S&P 500 reporting earnings here. Phil, what's your takeaway, and what do you think this market needs to see from an earnings perspective this year?
You're quite right. We're almost 2/3 of the way through the earnings season. Revenues are up about 9% year over year. Earnings are up about 14% year over year. Those are solid numbers. The numbers are going to move higher over the course of the year. The numbers over the next couple of years are going to move higher yet still. We monitor the our own numbers and the consensus expectations, and the corporate earnings season is pretty good. Ultimately, earnings are going to reflect economic growth. Our GDP forecast here at Federated for calendar 26 is 3.3%. The blue chip consensus is only at 2.1%. So we're very optimistic about the consumer and corporate CapEx, an improvement in the housing market, less drag from trade. And for all those reasons, we think the economy is going to grow stronger, and ultimately that's going to reflect in better corporate earnings.
But are comps going to get more difficult in the meantime because the economy has been holding up fairly well, and we know that consumers at least are being more discerning when it comes to their purchases?
No question. And the comps are going to get more difficult with the growth in the technology names that have largely been driving the market over the last 3 years or so. The areas that we like, this broadening out trade, small caps, value stocks, international stocks, those year-on-year comps were relatively much easier. So one of the reasons those stocks have been rallying in the back half of last year and the first part of this year is that they're giving us some good numbers, but the comps are relatively easy. We're seeing the Mag 7 names, the growth and technology names, struggle. Those stocks have done really, really well. The comps are tougher at a time when the revenue growth and the earnings growth of those companies are starting to decelerate. So the market is acting rationally in our view.
Phil, I'm looking at U.S. versus non-U.S. here. Boy, a lot of the non-U.S. markets really outperformed the U.S. last year and starting off this year. How do you think about U.S. versus rest of the world here?
Well, we've got an overweight in international, and within international, we think emerging markets the most attractive area. The dollar weakness, was certainly one of the reasons that was stronger last year, with the reason for that outperformance. That's a trend that we think is going to continue this year in terms of central bank policy, lower interest rates, et cetera. And to a significant degree, the way we've got our asset allocation recommendations set up, we continue to think that international and emerging markets are going to do really well.
All right, Phil, thanks so much. Appreciate it. As always, Phil Orlando, who's Chief Equity Market Strategist at Federated Hermes, joining us here on these markets, remains bullish here looking forward. It's Monday, which means we often get a lot of M&A activity, and we certainly did today in the energy space. Transocean, you remember them from the BP thing, Transocean to buy Valaris in a stock deal valued at $5.8 billion. Scott Levine joins us here. He covers the energy space for Bloomberg Intelligence. Scott, who's Transocean, who's Valaris, and why are they getting together here?
Yeah, so two of the bigger names in offshore drilling. Transocean has the largest backlog. Valaris has the largest fleet. Valaris's name may not be that familiar to a lot of folks here. It was actually a combination of two companies called Ensco and Rowan a few years ago. But they are two of the biggest offshore drillers. And I think that this deal really has both offensive and defensive motivations. Offshore drilling is in a little bit of a recovery mode, really kind of has been. Most of the drillers went bankrupt, actually, during the 2020-21 downturn. Transocean was really one of the only companies that did not go bankrupt. Valaris did. And so Transocean's kind of been saddled with all this debt as a result of not having their balance sheet wiped during a bankruptcy. And so that's been a limiting factor on their growth for quite some time. And this deal, which is an all-stock deal, will accelerate their deleveraging process and remove some of that burden from them and better enable them to capitalize on an upturn in offshore drilling. And the second thing that's important to note here is that it brings a jackup fleet. So a jackup fleet, jackups are basically shallow water rigs, okay, as opposed to the deep water drill ships or floaters. And Transocean had exclusively been a floater fleet. Jackups are more to the seabed. The seabed's lower in shallow water, and Valaris is one of the biggest players there. And so this gives Transocean exposure to the jackup or shallow water market, which has really undergone an interesting phase in that it was a bit of a downturn the last couple of years. The biggest jackup driller is Saudi Aramco. And a couple of years ago, Saudi Aramco made significant cuts to their drilling program. They essentially, Saudi Arabia abandoned plans to increase their oil production capacity to 13 million barrels a day. And what we've seen since then is a lot of jackup rigs being laid off effectively in 2024 and 2025.
Right.
Indications suggest those rigs will return this year, so that market is bottomed and maybe on the cusp of an upswing. So this deal will give Transocean the ability to participate in that recovery.
So in terms of why now, when it comes to the timing of this deal, the CEO of Transocean cited a multi-year drilling upcycle. Where are we in that cycle? Are we, first inning? Are we third inning?
It's kind of been an interesting upcycle. So we saw an inflection in 22 and 23, and 24 and 25, we've seen kind of a plateau to a slight pullback. Now, I do believe we're in a recovery and have been, and this has kind of been more of a mid-cycle pause associated rather than a downturn in offshore drilling. So I do think the recovery is intact, but I think the cadence has certainly slowed and in fact deteriorated. And offshore drillers like energy service companies have been off to the races this year. I think the oil price has held in better than expected. Some of that is due to some of the tensions in the Middle East, Iran, et cetera, Venezuela as well. So the punchline really is that we're still in, I think, a mid-cycle pause until maybe the second half of this year. And in terms of what inning we're in, I think we're probably like third, fourth inning, but it's been in kind of an unconventional recovery.
Will the regulators allow these two companies to get together?
Yeah, I think so, and it's a good question. These are the two of the largest players that are out there, and Rig's CEO expressed extreme confidence that that will be the case. It's a competitive market. There's a lot of fragmentation, smaller players in the market, and it's generally the quality of certain assets that determine which guys win which contracts. A lot of it depends on which rigs are capable of drilling for which projects. And so, no, I do think that this should get a relatively quick approval. Certainly, they're talking second half of this year. That's a much shorter timeline than the last major oil field services merger, which was Schlumberger Champion X. That took over a year to a year and a half to approve and required significant divestitures. But offshore drilling is a different market.
All right, Kevin, thanks so much. We got Scott Levine. Thank you very much. Appreciate that. As always, Scott Levine, he covers a lot of the energy services companies for Bloomberg Intelligence. Again, M&A trade, deepwater oil rig owner Transocean agreed to acquire rival Valaris in an all-stock deal valued at $5.8 billion. How about that? Keep an eye on that going forward. So big deals in the energy space. We're going to have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with his Bloomberg Business Flash. Another rally in tech companies after last week's AI-driven rout. And also, just ahead, a busy week for Wall Street. Wednesday, the government out with a postponed jobs report for January. And then 2 days later, Friday, the key report on inflation. We're also going to have a number of earnings, including Ford, Coca-Cola, and McDonald's. Novo Nordisk suing Hims and Hers for making knockoffs of its obesity medicines, even as Hims scrap plans to sell a copycat version of its Wegovy pill. And Hims and Hers really taking it on the chin right now, down 27% in the early going. Kroger shares, they are jumping right now 6.3%. The grocer naming retail veteran Greg Foran as its chief executive officer, also restating its fiscal 2025 guidance. Cleveland Cliff shares, they're down right now 17%. The steel company's fourth quarter adjusted earnings missing the average analyst estimate. Low sales volume, the problem there. And of course, the Alphabet, I mean, why not? Because they can. Looking to raise about $15 billion for the high-grade dollar bond sales, adding to a borrowing spree by companies at the forefront of AI. And notional short selling across single stocks. Last week, the biggest on record in Goldman Sachs data going back to 2016. Short sales outpaced long buys by a magnitude of 2 to 1. Right now, the S&P 500 up 23 points, 69.56 on the index. The Dow up 74 points, so anything higher, new record, 50,191. And the NASDAQ 100 up 89 points. That is a rise right now of 0.4%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Scarlett.
All right, thank you so much, John Tucker. I think we're all a little bit sleepy from having stayed up to watch the Super Bowl.
And then there are those people who never showed up today.
Really?
Shall I name names?
No,
I won't.
No need to get anyone in trouble here. They're working from home, John. Don't worry about it. It's all going to work out. All right. So when it comes to the big game, you know, I think it's safe to say, Paul, that the events on the field were less interesting than the commercials.
I don't know. I thought the game was okay.
I'm not into defensive games.
You know?
Yeah.
Okay, you want a lot of
maybe that's why.
Well, the fourth quarter was good for you. But
Yeah,
you
no, I had already changed the
Yeah.
channel, so too bad. Anyway, Kevin Krim, it is his job to watch the entire Super Bowl because he tracks and monitors every commercial. Kevin Krim is CEO of Entertainment Data Oracle, EDO. He's also a friend of Bloomberg, having worked here before. Kevin, great to see you again.
Great to see you.
So you tracked all the ads, and what you pointed out to me just now is that AI ads were just everywhere. In fact, they dominated. There were more AI ads than beer ads.
Yeah, more than beer ads and automotive ads combined.
Wow.
You know, and more broadly, I mean, what we do at EDO is understand how ads impact people's behavior. We call it outcome measurement. So like Nielsen measures audiences, we measure the behavioral changes from every ad across all of linear and streaming.
How do you do that?
We're looking at massive panels of people who are in a privacy safe way are being tracked through their day. We're also a huge consumer of Google's anonymous data that comes out through what they call Google Trends. And we're aggregating all of that together and looking at as ads air across streaming and linear, how does it change people's behavior in the minutes or weeks following an ad appearing. And we're looking at that against the baseline levels of behavior that we see all the time for these thousands and thousands of brands that we're tracking continuously. And so when you see an ad on a Super Bowl or just any old programming, we can see the lift in these behaviors like searching for the brand, going to the brand's website, using the brand's app. And why that's important is because it's a highly predictive set of behaviors that correlate nearly perfectly with changes in market share and sales. And it's something that hedge funds, I think, have been using for a long time. We brought it to media measurement.
So what does your predictive TV outcomes data show in terms of which advertiser really made an impact?
Well, it was a very interesting mix this year. I'd say thematically you had two things going on. It's almost two economies and a reflection of that. You had a bunch of brands and products demonstrating their capabilities to impact people's lives, either through AI or through healthcare related products. You saw GLP-1 drugs, you saw battles being fought between very heated rivals in their various sectors, whether it was Anthropic's Claude and OpenAI's ChatGPT, or Novo Nordisk and their Wegovy offering, and Hims and Hers, which we've heard in the news today, and Ro and these other providers, a lot of diagnostic tests as well being promoted. And what we saw was that consumers, if you tell them about what it can do for you, or more importantly, if you take an edgy shot against your competitor, you could score points, more points, frankly, than we were seeing on the field. And so that was one theme. And then on the other hand, if you don't have something innovative, tech-driven, you need to lean on the classic tried and true techniques that work in Super Bowls over the last decade. You needed humor, you needed nostalgia, you needed celebrities. And we saw some of those work as well.
At $10 million for a 30-second spot, is this money well spent? Do these advertisers feel like they get an ROI here?
It's if anything, the Super Bowl, because it's the last place you can reach 100 million plus people who are heavily engaged in the ad breaks, it is underpriced, if anything. Wow. EDO's data shows that to get the same impact as a 30-second spot in last year's Super Bowl, you would have had to have bought over 1,000 primetime 30-second spots. That's a good deal when it's priced at 8 to 10 million per 30 seconds. You'd have to spend a lot more than that to try to accumulate that kind of reach and that kind of engagement. And you simply can't do it in digital. You couldn't buy enough YouTube, TikTok, and Instagram Reels to come anywhere close to that kind of impact in any kind of reasonable time frame.
Okay, so I'm a Gen X, and you are Gen X as well. So I feel really seen because there are a lot of commercials targeted at me. Backstreet Boys came right at me. Ben Affleck, kind of as a Matt Damon guy from Good Will Hunting. Jennifer Aniston, Jason Alexander, Ted Danson as Sam Malone.
Yep.
That was all speaking to me.
It was, and you're absolutely right. Move over boomers. We're now in the driver's seat of economic power, and marketers know that. And so the nostalgia was all about late 80s to early 2000s, our sweet spot. And, you got some Gen Y and millennials coming into economic power as well. So catering to them
their
as well.
parents for that, really.
Yeah, exactly. And so we saw Duncan with a really well-executed idea, playing off of Good Will Hunting, but jamming in, I think, more celebrities and more very sharp, very funny references to the 90s than anything we've seen in 30, or in their case, it was 60 seconds, but it was jam-packed. It was a really impressive showing. It was in our top 5 in our rankings.
We see a lot of these big media companies spinning out their cable networks because that's a really challenged business with cord cutting and so on and so forth. Comcast has done it. Warner Brothers would like to do it. Disney should probably think about it. Where does that business go? I mean, we just come off a day where that's where the business was. It was big network television, and yes, there's different. You can stream it on Peacock and so on. But where does the cable TV business that we all grew up with? Where does that go? Do you think?
You saw it last night. Live sports still drive this whole industry. The entire industrial complex of subscription and advertising supported television, whether it's streamed or delivered over the air, that's all about the big events, and those drive the economics. That said, people are creatures of habit, and so between those big live events, there's a lot of habitual viewing, a lot of turn the channel on and leave it on. And so cable still will have a strong place in this economic environment, this ecosystem. But yes, you're going to see, I think, more of the dollars and more of the returns concentrate on the biggest live events. And so you're seeing the cable networks and their owners move to lower cost models to make sure that they still can maintain that high profit margin that they got used to in the heyday.
Makes sense why they keep coming back to live sports, right?
Yep, absolutely. So, and if it weren't for for ads for all the medicines that you can get now, there would be no network or cable TV advertisers.
Right, hard to pronounce pharmaceutical names.
Yeah, so I had to give a little two-letter kind of summary there. Kevin Cribb, thanks so much for joining us. Kevin Cribb, CEO, Entertainment Data Oracle, EDO, joining us live here in our Bloomberg Interactive Broker Studio. Kevin, you know the way out for sure, so we won't walk you up to the escalator. Looking at the markets here, we got a little bit of green on the screen here. The Dow, it's up 100. No, it's up 40 points. There you go.
New record high.
Yeah.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, good morning. This is Bloomberg Intelligence on Bloomberg Radio. We've got a lot of deal-making news today. It is Monday, after all, so M&A is to be expected. But Eli Lilly has been especially busy today because it made an investment over the weekend. It also has made a purchase, an outright purchase as well. And this is, of course, as the company is holding on pretty well with its obesity drugs, certainly in comparison, it feels like, to Novo Nordisk. Sam Fazeli is our Director of Research for Global Industries and Senior Pharmaceuticals Analyst, and he joins us now to talk a little bit more about what's happening with Eli Lilly. So Sam, our BI drug boss, thanks for joining us as always on this Monday. Eli Lilly buying a company called Orna Therapeutics for up to $2.4 billion in cash, shortly after it has announced it's paying $350 million to Innovent Biologics from China. Talk about what the common thread is between both of these acquisitions or these transactions.
Yeah, sure, Scarlett. The common thread is I've got cash that is producing at a very rapid rate, and I need to make sure that I've got a pipeline the day that people are going to start worrying about my patents expiring. So we're a long way off for these huge drugs. So the more assets that these guys have with their massive cash flow to invest in for R&D, the higher the probability that they'll be coming to that point where people start going, just like they're doing with Merck, oh gosh, your $35 billion drug's about to come off patent. That's in Merck's scenario. What are you going to be replacing it with? And of course, Merck has been doing some moves there. Lilly is doing these things. These are two very separate deals. They've done about 7 deals with this Chinese company that you're referring to, Innovent. And the deal they bought, and I love the name of this company, Orna. It's circular RNA. And I think I couldn't have imagined a better name for this company. It is another one of those ways of trying to use RNA to impact biology in the patient, in this person directly, like a vaccine, like a cancer, or whatever way you want to go. It's a very different approach, but it's a very interesting approach.
Boy, the gloves are coming off, Sam, in this obesity market here. Yeah. Novo Nordisk suing Hims and Hers for making knockoffs of its obesity products. This seems really cut and dry to me. How do you view this knockoff market here for some of these drugs?
Well, you shouldn't have a knockoff market for these drugs. There's a rules in the patent world. Yeah, you invent something, you patent it. You're supposed to have a while to make some profits of it before generic companies come. There's a very well set process for this. And of course, the companies try and extend their patents a bit and stay on the market for a bit longer. But at the end of the day, generics come. And that's how the model works. The drugs get cheaper, good drugs get cheaper, everybody gets access. So here, having someone to go and say, okay, I'll go and buy and source the active agent from somewhere and put it in a syringe and sell it to people, that shouldn't be allowed. During a period of lack of supply, especially if you have a very difficult to manufacture drug, which these have been, that's fine perhaps, and the FDA allows that. But that ended 9 months ago. Why hasn't this happened earlier? I don't know. And I tell you, I love the take the gloves off analogy. Are these guys heavyweights, obesity drugs, or are they lightweights or featherweights? Let's see who's the heavyweight in this fight.
Hims and Hers, that stock is down 25% today. Year to date, down about 50%, 52-week low. So it's definitely feeling it.
Definitely feeling it. Sam, Novo and Hims actually had a partnership, I believe, last year, but they scrapped that and their relationship has worsened. What did that partnership look like? And perhaps did that give Hims some room to feel like it could move forward on, coming up with these knockoff versions?
Yeah, wouldn't that be the easiest thing to do, is just to go to no, I don't think, actually, just to answer your question directly there, I don't think so. I don't think they could have back-engineered the Novo Nordisk product, because the latest thing that finally brought this to this hiatus that we come to this pinnacle of fighting that we've come to, was the oral drug. But they couldn't have had access to the oral drug. It was only just got launched. So reverse engineering something isn't something you do over 3 or 4 months. So I doubt that was the case. I think they could have had a good relationship. Novo could have carried on using them as a platform, but then Novo created its own platform, NovoCare, just like Lilly Direct, etc. So I don't know how much that lasted, how much revenue Novo got out of it, but it couldn't have been very much.
Sam, so having a drug here for obesity, just a gold mine, you could just think about how big this marketplace could be. How about some type of medicine for, I don't know, baldness that a couple of my good senior BI people in London may be interested in?
Who needs a drug for baldness? We are higher up on the evolutionary tree, my friend.
I know, but isn't something like that in the offing as well?
There's in fact a company that's just IPO'd that's got some ideas there. I think there are drugs already, alopecia drugs out there, but those are more for serious cases, not for someone like me that nobody cares anymore. I think that everyone would be shocked if I turned up with a bit of hair. So there are companies out there. This is something that folks who, for whatever reason, lose hair really early in their youth. I had a friend of mine who at the age of 18 was going bald. So of course that's very tough for somebody at that age. And even 40-year-olds who don't want to end up losing that beautiful hair they have. It was too late for me. But those guys, yes, there is a meaningful market there. Not going to be as big as obesity, though, I don't think.
Okay. Sam, always a pleasure. Sam Fazeli, Director of Research for Global Industries and a Senior Pharma Analyst there, breaking down some of the M&A trades in the pharma space. He's in Bloomberg Intelligence. He's based in London, giving us the latest there. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good post-Super Bowl morning from the Bloomberg Interactive Brokers studio. This is Bloomberg Intelligence with Paul Sweeney and Scarlett Fu. In our second hour of Bloomberg Intelligence, we've got a lot to cover today. Will Hoffman is our U.S. and Canada rate strategist, and he's going to join us to talk about concerns about a balance sheet shrinkage at the Federal Reserve under the nominee for the Fed chair, Kevin Warsh, and what that might mean for the bond market. We'll dig into all of that with Will Hoffman. Drew Redding is our U.S. homebuilding analyst. He's going to talk to us about this homebuilder antitrust probe that the White House has announced and what that means for these builders. We definitely saw a reaction in those shares last week. Jim Romer is a meteorologist and commodity trading advisor at Best Weather. We've had this frigid winter weather in the Northeast. In fact, all along the East Coast, down to the Southeast. Unbelievable. And I think we get some relief this week.
We do.
But it's obviously left a lot of damage in its wake, so we're going to check on what that means for commodity prices overall. Robert Schiffman is our senior tech credit analyst, and one of the big headlines today is Alphabet, the latest big tech company looking to raise, another tens of billions of dollars from a U.S. bond sale. So Robert Schiffman is going to join us to give us some context on the continued bond issuance from tech companies. But first, let's bring in Charlie Pellet with our Bloomberg Business Flash.
Hi, thank you very much. And here's what's going on. You mentioned Alphabet up now by about 0.4% of the Dow. The S&P NASDAQ solidly in the green, not just higher, but best level of the day right now on the S&P 500 index, trading at 69.66, up another 34, up 0.5%. The Dow, another record. Any close higher today in the Dow Industrials will be another record, up 0.1%, up 67 right now, 50,183 on the Dow. NASDAQ pushing higher by 0.8%. The NASDAQ 100 index up 0.6, and the Bloomberg Mag 7 index advancing by 1%. The 10-year 4.20%, the 2-year 3.47%. Gold is surging $97 the ounce, back above 5,000 at 5,061, up 2%. Silver volatile as of late, up another 6.2%, 82.68 on silver. West Texas Intermediate crude just above $60 $64 a barrel, up 9/10, and Bitcoin 69,535, falling back below 70,000, down by 1.6%. Phil Orlando is chief equity strategist at Federated Global. He was the guest last hour right here on Bloomberg Intelligence, and he told us, yes, he sees air pockets later in the year, but overall, it will be an up year for the S&P.
So we've got a very constructive longer-term view on stocks. We've had positive years 3 years in a row. We think this will be the fourth year in a row, and we think the S&P 500 will be up at 7,800 by the end of this year, which would be roughly a 15% total return, give or take.
And putting that call in perspective, S&P right now is 69.66, up 0.5%. By the way, you can hear more of that conversation on the Bloomberg Intelligence podcast. You can download it wherever you get your podcasts. We were just talking with our Sam Vazzelli about Novo Nordisk. It is suing Hims and Hers Health for making knockoffs of its obesity medicines. And Novo Nordisk today, the ADR is up 3.5%. Hims down 23.4%. Our Nora Melinda will have a whole lot more on that and other stocks for you coming up in just a moment. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Head over to youtube.com and search Bloomberg Podcast. We're also streaming on Bloomberg.com/videos. That's where you can find us there. Let's take a look at some of the stocks on the move today. We are joined by Bloomberg Television's markets correspondent, Nora Melinda. Nora, what are you looking at today?
Well, Novo Nordisk and Hims and Hers, we're really seeing this drama continuing. We do know that shares of Hims and Hers, ticker HIMS, shares are plunging more than 20%. This stock is hitting its lowest level since October of 2024. This is after Novo Nordisk said that it's suing the company for making a knockoff version of its obesity medicines. We know Wegovy's really been in focus here, but this is even after Hims and Hers scrapped the plans to sell a copycat version of the Wegovy pill after they were being hit with a lot of scrutiny coming from the government as well. But we are still seeing shares of Novo Nordisk up by about 3.7% right now in trading. So interesting. We'll have to see how this progresses here, Scarlett.
Absolutely. Keeping an eye on that one. What's next on your list?
Also looking at shares of Kroger, we're seeing the stock up as much as 8.4% today. That's the biggest jump we've seen on an intraday basis since June of last year. This is after we did see that the grocery company named a retail veteran, Greg Foran, as its CEO and also reinstated 2025 guidance. Wall Street analysts are saying that the new CEO, Foran's previous success at Walmart, should make him a solid hire for Kroger. And we are seeing shares of Kroger up about 14% so far this year.
All right, one more.
Lastly, looking at shares of Monday.com, this is ticker MNDY. The stock earlier falling to its lowest level ever, plunging as much as 26%. And this is after the company's forecast came in weaker than expected. So you're really seeing the stock getting hit today. Shares of the company down about 48% so far this year. So continuing that tumble there.
All right, Norma Linda, thank you so much. We appreciate that. Norma Linda, markets correspondent for Bloomberg Television. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, and anywhere you listen. We still don't have a chairman of the Federal Reserve Board. We're going to have Mr. Warsh presumably come under for confirmation hearings at some point, but some legal issues have to be cleared up before, but people are trying to get a sense of what a Warsh-led Fed would be like. One of them is Will Hoffman, U.S. and Canada interest rates strategist for Bloomberg Intelligence. He's based down there in Princeton. Will, when you talk to clients, what are some of the questions clients have about what Mr. Warsh may mean as chairman of the Federal Reserve?
Thank you for having me, as always. And by far, outside of how far will he cut rates, the questions that we've been getting are all centered around balance sheet policy. Several comments have been made in the last 2 years that reflect a pretty abrupt shift from the Fed's current, I'll say, implementation framework on how they conduct monetary policy, including an ample reserve regime. And so the idea of shrinking the balance sheet is just a policy choice, and we've written as much about that. There are impacts that will come from it, and whether or not those are attractive or unattractive for other goals from the Fed or the White House and Treasury remain to be seen. But largely, they can pursue a smallest possible approach, but we see very little likelihood that they or a Warsh-led Fed would materially alter the trajectory of the Fed's balance sheet, which has begun expanding December of last year again.
So if you look at the balance sheet of the Federal Reserve, we've seen that the Fed has shrunk it through quantitative tightening to about $6.6 trillion, from the almost $9 trillion that it got to during the pandemic. What is the damage, Will, from keeping the Fed's balance sheet at current levels? Is there damage?
I'll say the damage argument leans pretty heavily on economic theory, and I lack a whole host of PhDs to truly argue those with any sense or any semblance of expertise. But at the current point, shrinking the Fed's balance sheet without material changes to the Basel III capital rules, as well as, I'll say, the Treasury General Account and how the Treasury runs U.S. cash and its policy therein, you'll need to change those in order to get the balance sheet down. Bank reserves, as they start to test that 2.8-ish trillion, you see material impacts in the funding markets, which can, I'll say, have ripple effects out throughout the fixed income universe, as well as levered trades all across the ecosystem.
Okay, U.S. condition of all Federal Reserve banks, and this is where you get how much do they have on the balance sheet, as Scarlett was saying, $6.6 billion. Before the great financial crisis, that was like $1 trillion. Where does Mr. Warsh think the balance sheet should be?
Good question.
It's an excellent question. We have not quite gotten, I'll say, hard numbers around where they'd like it to be. Just, I'd say, similar to comments that were made by Treasury Secretary Bessent on a preference towards a shift in policy on Treasury issuance was spoken on the campaign trail. But the biggest piece of why we can't actually come back to, say, a pre-GFC balance sheet size is the banking sector has grown materially. The Treasury market has grown orders of magnitude larger since then. And the amount of bank reserves that banks need to make intraday payments to one another are much, much higher than they used to be. I mean, as a share of the Treasury market, the Fed's balance sheet is actually below its historical average. There's some compositional issues where they own a lot more 20 and 30-year debt than the rest of the market. But largely, you're going to have to make wholesale changes to how monetary policy is implemented, which will have knock-on effects throughout the yield curve and risk assets, as well as completely upend, I'll say, the Basel capital rules in order to bring the size of the Fed's balance sheet back towards those levels, which we just don't see as feasible at this time.
Okay, so a domino effect, certainly, that we're looking at here. Will, you mentioned that your clients are mainly asking about how much Kevin Warsh will cut interest rates by, and then secondarily, the balance sheet and what he's going to do about it. How is this going to come up in the hearings for his confirmation? Are senators and congresswomen going to be able to ask intelligent questions on the balance sheet and get answers that might help them understand what's next?
I certainly hope so. I will say it'll likely end up being a party line vote, in which case, I mean, assuming that the Powell investigation is dropped and Tillis does what he said he will do, which is vote in favor of Warsh as he views him positively as a candidate. I think there'll be quite a few questions about what the Fed's balance sheet or the shrinking of it would do, which largely involves asset sales of treasuries and potentially MBS into the open market, which will steepen the yield curve, obviously hit mortgage spreads, and affect, I'll say, borrowing conditions for households as an entire borrower base. But should they pursue that? I think there will be material questions that pop up from Congress as well as Fed watchers on why they're doing this and what the ultimate goals are. Can they? Yes, they can shrink the balance sheet. It'll just require changes and a little bit of collusion between the White House, Treasury, and the Fed on how to do that while keeping volatility low. It's certainly possible, but it will largely end with a steeper yield curve, all else equal.
All right, Will, thanks so much for joining us. Appreciate it. Will Hoffman, U.S. and Canadian rate strategist for Bloomberg Intelligence based down there in Princeton. Bloomberg News has been reporting recently that the Trump administration is considering a potential antitrust probe into U.S. home builders. Presumably, this kind of goes to the issue of affordability or lack thereof in the housing market. The question is, how impactful is it for this industry and for the companies, the home builders in this industry? To get some answers there, we turn to Drew Redding, who covers all the home builders for Bloomberg Intelligence. He also is ensconced down in Princeton, New Jersey, at our campus down there. Drew, talk to us about this potential lawsuit by the Trump administration. How serious is the industry taking this?
Right. So, according to the report, there's actually no indication that any formal investigation has started. I guess what's at play here is that it was hinted at that one of the industry trade groups, the leading builders of America, builders within that, including some of the large public builders that were highlighted, like D.R. Horton and Lennar, were sharing information that could be used to restrict home prices or inventory. We've seen this tactic from the administration in the past, where they'll leak some information to the public, kind of as to put out a feeler for what the industry's response will be. But to this point, it doesn't appear that there's actually any concrete evidence of wrongdoing. It's interesting because the home builders have been in the crosshairs of the administration since the end of last year. There's been rhetoric saying that if the builders don't put their lots into production and start building houses, that the GSEs could pool liquidity. There's been dialogue suggesting that the public home builders shouldn't be buying back their stocks. They should be putting that into production. And that's actually become a big part of their business model. And there's also been talk about them, not being able to utilize their forward purchase commitments, which is how they've gotten buyers' monthly payments so low, by buying down mortgage rates. So, I think this certainly heightens the rhetoric, and I think it's something that's going to continue as we go through the year.
Okay, so even as there's been tension between the White House and the home building industry, there's also some talk of them working together, right? There's all this discussion about Trump homes, builders working on a plan for a massive program to develop these so-called Trump homes that would at least address the supply shortage.
Yeah, that's a great point, Scarlett. And it's interesting because, the tone of this relationship between policymakers and the home builders seems to change by the day. I just mentioned that they've been in the administration's crosshairs, but at the same time, we've heard from the administration and from the large public builders during their earnings calls that they have been working collaboratively to find a solution to housing affordability's problem, whether that's through demand side stimulus or finding ways to bring new supply to market. So it is interesting to hear that just a day after you mentioned that the builders brought the concept of Trump homes, which would essentially be a rent to own program, that we're hearing this from the administration.
Interest rates, mortgage rates, what's the industry saying about mortgage rates and where they may go throughout the course of this year?
Yeah, so we've actually made pretty good progress on mortgage rates. We're down about 100 basis points from last year. The administration's directive for the GSEs to purchase $200 billion worth of MBS has certainly helped. I think the consensus is that a lot of the juice from the policy end has been squeezed. If you look at spreads between 30-year mortgages and 10-year treasury rates, we're approaching more normalized levels. There maybe is a little bit more room you can make up there, but I think the bulk of the move has already happened. I think, in order to get lower mortgage rates, you probably have to see lower 10-year treasury yields, which are going to respond to, fiscal policy and things of that nature. Affordability has improved a little bit from last year, but we still haven't seen that significant demand response I think that a lot of builders have been hoping for. And, the reason for that, and we've highlighted this several times, is that there's just more concern out there in the market as to the direction of the economy, what's going to happen with the labor market. So it's taken a lot of urgency out of home shoppers. And, the other thing to point out is I think that there's a lot of people sitting out there on the sidelines who are saying, I think in the next 6 to 12 months, mortgage rates and or home prices are going to come down. So I think there might be a better time to get into the market.
Very quickly, Drew, we also know that we have some home builders reporting results in the weeks to come. Toll Brothers, which of course is big in luxury housing, is reporting on February 17th. What's the tone going to be like?
Yeah, so by and large, I think the move up in the luxury segments of the market have done better on a relative basis. And, it makes total sense. You have the lower end whose buyers are more sensitive to fluctuations in mortgage rates. So pricing has held up better at the higher end. I think we're going to continue to hear that. What's important to remember is, though, just because you're at the high end, you're somewhat insulated from what's happening in the market, but you're not immune because housing is an ecosystem. And in order to get more volumes at higher price points, you need to see demand funnel up from the low end.
All right, good stuff. Drew, thank you so much. Drew Redding is our U.S. home building analyst here at Bloomberg Intelligence, suggesting that maybe this antitrust probe into home builders might just be more bark than bite. This is Bloomberg Intelligence on Bloomberg Radio. We're looking at the Dow now in the red after climbing to a record high, but still near those record territories. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow lower, S&P, NASDAQ, both advancing. This Bloomberg Business Flash is brought to you by Gold and Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. A retreat since our last update on the Dow Jones Industrial Average. Have been at a record right now, but lower by 15 at 50,104. Little change, down under 0.1%. S&P up 33, up 0.5%, holding close to session highs on this back-to-work Monday. NASDAQ up 201. The NASDAQ Composite Index is surging 0.9%. NASDAQ 100 up 0.7. On the Bloomberg Mag 7 index up 1%. The Bloomberg Russell 2000 index of small cap shares up today by 0.8%. The 10-year 4.20%, with the 2-year 3.48%. Gold is surging 2.2%, up $109 the ounce now to $5,074. Silver, 83.06 the ounce, up 6.7%. West Texas Intermediate crude up 1.2%, 64.33 a barrel. Bitcoin down 1.9%, 69,358 on Bitcoin. Apollo Global Management set a record in its business of making loans, a crucial plank in the firm's ambition to become one of the largest underwriters on Wall Street. The New York-based firm originated a record $97 billion in the fourth quarter, totaling $309 billion for the year. Apollo up now by just about 2%. For on-demand news, 24 hours a day. Subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube and also streaming on Bloomberg.com/videos. That's where you find us. Well, for the last 3 or 4 weeks, the North Atlantic, the Mid-Atlantic, most of the country, it seems like, has been gripped by this polar vortex with just brutally cold temperatures. And the question is, what impact is that having on commodities out there? Jim Romer joins us. He's a meteorologist and commodity trading advisor, and he's also a publisher of the Weather Wealth newsletter, which is the only all-commodity weather-related newsletter that helps farmers and traders trade natural gas, grains, and soft commodities. You know, he knows what he's talking about here. Hey, Jim, we've been living here, much of the country, in this polar vortex, brutally cold temperatures. It looks like it might break, at least for us here in the Northeast, tomorrow. You know, your world of commodities.
Yeah, well, certainly we've seen the most volatility. Thanks, Paul, for that introduction. Great to talk to both of you. Pretty much the second strongest polar vortex in like 20 years, one in mid-December and one obviously 2 weeks ago, creating this incredible volatility in natural gas. But whenever it warms up, even for 5 or 10 days, bang, we see like the ETF oil collapse 50%, a record last Monday, the ETF oil inverse one, with natural gas prices collapsing. So the volatility is going to continue, as I do see after this warming trend, a much colder late February and March. All these traders are watching the weather outlooks. And the way to really trade this stuff, it's very sophisticated, is to be using actually option strangles.
Okay, that already sounds complicated, but I'm curious about what you had said, that when we get some relief, it might just be for a couple of days or weeks. What does that say about where things stand? And I don't even know if you can predict out what things look like in March, for instance, and what you're using that might differ from, you know, what meteorologists that we listen to on the radio, that we watch on TV would do.
Well, I have a program called Climate Predict that looks out months in advance for farmers, for cocoa traders, coffee producers in Brazil, all over the world, natural gas people. And I look at what's a teleconnection is a staple, a climatological feature, sometimes thousands of miles away, like Arctic sea ice, for example, or El Nino or La Nina. And I put all these together, go back about 100 years and say, when this particular climatic feature looks like another one, what analog year comes up? And one that comes up is 1996, a weak La Nina. We had certain things going on with the polar vortex at the time. And 1996 saw a very cold March after a 2-week warming trend this month. So we could see natural gas prices rocket higher again. I don't think you'll see it squeeze with the wells freezing in the Gulf of Mexico, but certainly we'll probably see a platform in prices, maybe a 10 or 20% rally later this month, if the month of March looks colder than normal again.
So I'm looking at my global commodities screen here, and I see that coffee is down 13% year to date. And from all of us that like to drink coffee, that's a good thing. What's causing that?
Yeah, you know, you saw Starbucks stock, for example, many other coffee producers and stocks fall because of the higher prices, doubling and tripling on what I believe is climate change and El Nino a couple of years ago, created droughts all over the world. Coffee prices went from $1.50 to $4. And many of these coffee companies really can't pass that on to the retail coffee drinker like ourselves. So as a result, these corporate profits were hurt. But now, as I saw about 4 months ago from my Weather Wealth clients recommending selling coffee, everybody's long the market, too many specs long. And when I see a change in the fundamentals, improving global crops like I do this year, that's when people run for the hills. That's what I look for when people are heavily long or short a market. How do the fundamentals and the weather change? So I'm still bearish coffee. The market's broken actually about 30% here in the last few months with the end of trade tariffs against Brazil. But also what I see is a big rebound, not only in Brazil, but Vietnam and Colombia coffee over the next 6 months.
Okay, important information for all those coffee addicts out there. Jim, you mentioned El Nino. I believe La Nina has been around this past year. I'm confused as to what La Nina is versus El Nino, but how did they change up what you are projecting for crops in different parts of the world?
Yeah, Scarlett, great question. So La Nina in its simplest form are cool ocean temperatures off the coast of Peru that extend a few thousand miles out into the central Pacific east of Australia. That cool water can disrupt weather patterns all over the world. Usually it's bearish soft commodities and improves crops like India's sugar, Thailand's sugar, the number 3 biggest producers in the world. We saw a collapse in sugar prices here over the last 6 months, partly because of that and lower crude prices. It also helps the cocoa crop in West Africa, La Nina. We saw after incredibly a bull move of chocolate, of cocoa, hurting companies like Hershey's Chocolate, M&M Mars a couple years ago. We've seen cocoa prices come back to earth, dropping 75% because of increased production because of La Nina, right? Okay, so with El Nino, you see the temperatures reverse in the Pacific. That may not happen till later on this summer or fall. If we see a strong El Nino, that is bullish soft commodities, maybe 6 months to a year from now, like cocoa, sugar, and coffee. But right now, this La Nina, this weak La Nina, we have kind of a neutral situation, kind of normal ocean temperatures in the Pacific along the equator, has been bearish most commodities. I know that's kind of confusing, but in my newsletter, I talk a lot more about this.
Jim, thanks so much. Appreciate it. Jim Romer, meteorologist and commodity trading advisor, and also the publisher of the Weather Wealth newsletter. He's down there in Florida, so he's in good shape. Not to worry there. Another big deal in the tech space, and I mean not in the M&A space, but in the bond issuance space. Alphabet looks to raise about $15 billion from a U.S. bond sale. Just the latest big tech company hitting the bond market here, and why not? The market seems to be wide open. Let's check in with a professional here, Rob Schiffman. He covers the bond markets for the big TMT companies here. Rob, you've told us in the past that these tech companies, they raise money because they can, not necessarily because they need it, but now they kind of need it a little bit. Has that changed the narrative at all because they try to fund all this AI build-out?
Yeah, I'd say they don't really need it.
Okay.
But there's plenty of access at reasonably low cost, obviously all along the curve with a 100-year deal on the market and in multiple currencies. So I think since demand for AI is so insatiable, I actually think you can still say that demand for these AI tech companies' bonds are insatiable as well.
Okay, you mentioned a 100-year bond. I thought 40-year bond for Oracle was kind of bananas, but a 100-year bond, I mean, we don't even know if this company is going to be around. And granted, they're going to refinance a lot of things. So, you know, this isn't like in 100 years people will necessarily be collecting on this. But how does that make sense?
Yeah, well, listen, based on what might happen with AI, we don't know if any company is going to be around in 30, 40, or 100 years. So the world changes sort of quickly. But when you actually think about the duration of a 100-year bond, it's pretty much the same as a 40-year bond or a 30-year bond. So it sounds sort of astronomical, but really the risk to the credit is pretty much the same. So I wouldn't really think that too much about that. The one thing to think about is, again, we continue to talk about how much excess capacity these companies have, how much borrowing capacity they have. This morning when S&P affirmed Alphabet's AA+ rating, they said they have $180 billion of additional debt capacity before they get to S&P's rating trigger. So it's not just that they have a lot of capacity. That's how much capacity they have at AA+. What does that mean? What if they wanted to borrow $1 trillion? Could they? So obviously that's not realistic, but there's just a lot of room here. And as these numbers get bigger and bigger, we also have to remember there's a flip side to this. Cash flow is also getting a lot bigger as well. So in the near term, though, leverage is climbing a little bit. Again, there's a tremendous amount of capacity from both raters and from bond markets. I think all the skepticism here is really on the equity side. It's all about multiples, what the right trading price for the equity is. What bondholders are telling you is we're trading at the right prices. We're actually near historical tights for the corporate bond market. And, you know, these bonds don't offer tons and tons of yield. The bondholders are screaming, we are not worried.
They're not worried, and that's why these bonds don't offer tons and tons of yield. Isn't there a risk of concentration risk where investors, I mean, there's a lot of debt coming to market, a lot of it coming from big tech, and everyone wants this stuff because these companies are good for it, but won't they be too overloaded on big tech debt?
Yeah, we've heard this historically for the last few decades. Luckily, I've been around a long time, and I've seen this happen before, where, the market, people come back and say, we're full. We can't have another bond. We have too much exposure to either one individual name or to this sector. And you know what changes that? Spreads. You offer a bigger concession, and people will come in. There's a price for everything. So if Alphabet a year ago or 2 years ago or 5 years ago might have printed a bond at Treasuries plus, 30-year bond at Treasuries plus 50 or 60, so now they're going to print a bond at, let's say 100 over. So there's just that right clearing level. We actually saw that with Oracle. We talked last week how that's sort of the poster child for everything that people are worried about. And then they got $130 billion of demand because they boosted concessions higher. So I don't think that's really an issue.
They're not just issuing in dollars, are they?
No, they're doing Swiss francs as well as pounds. I also think there's other currencies they can go to. I mean, I've actually had a lot of people ask me this morning, why aren't they doing euros? There's a huge bid in the euro market for tech paper because all of these companies are effectively U.S. denominated names issuing U.S. dollar paper. So I think there's another market in euros. There's also, I think, could be a huge yen bid as well. Historically, we've seen, particularly in telecom and media, attracting a lot of Asian capital. So I wouldn't be surprised if that might be the next market. The reality is some of these names, they don't really need to worry about it at this point. There's so much dollar demand, but it's interesting to see that I think they can price their bonds at tighter levels because there's demand around the globe in multiple currencies.
I suppose it's a good position to be in if you're a big tech issuer. All right, thank you so much. Robert Schiffman, he is our senior tech credit analyst here at Bloomberg Intelligence, and I can tell you now we're going to be talking to him a lot over the next couple of weeks.
Yes. And he said earlier today, which I've heard many times on bond trading desk and syndicate desk, you raise it when you can, not when you need it.
Yeah.
Yep. And that's what I've always pitched to my clients.
All right, the opportunity set is definitely there. This is Bloomberg Intelligence on Bloomberg Radio. The S&P 500 up 0.5%. The Dow Industrials unchanged at the moment. Keep it here on Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg Monday morning. We got stocks right now holding on to gains with the S&P up by 35, very close to session highs. Right now, the S&P is at 69.68. That is a gain now of just about 0.5%. Dow Industrials, though, in the red. Dow Jones Industrial Average, lower little change, down 3. Any close higher today on the Dow will be a record, up 3 points right now at 50,121. The Russell 2000 index of small cap shares up by about 0.8%. The NASDAQ Composite Index up now by 1%. 10-year, 4.21%. Spot gold up $108 the ounce, 5,072 on spot gold, up 2.2%. Silver up 7%, 83.28 the ounce. And West Texas Intermediate crude up 1.5%, 64.47 a barrel. Bitcoin down 1.6%. Bitcoin 69,560. So it is an update today. Stocks in the green, but as for last week's volatility, Cam Dawson, Chief Investment Officer at New Edge Wealth, was the guest this morning on Bloomberg Daybreak.
We wouldn't be surprised to see more chops simply because we're still sitting at levels of valuations that remain extraordinarily high, which just suggests that there's a high bar to surprise to the upside and to push markets ever higher. So having some chop we actually think is healthy because it allows us to be able to shake off some of the more speculative parts of the market as well as grow into these higher valuations.
Cameron Dawson of New Edge Wealth interviewed on Bloomberg Daybreak. Sources tell Bloomberg Alphabet looking to raise about $15 billion from a U.S. high-grade dollar bond sale. Shares of Alphabet, they're higher now by 0.8%. Recapping, S&P at 69.69, up 0.5%. Dow Industrials at a record. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube and streaming live at Bloomberg.com/videos, and that's where you'll find us here. We've been talking about how hot and tight this real estate market is, residential real estate market, but there are parts in the country, I'm thinking Florida, some in Texas, some in California that are seeing some weakness, and that's putting some strains on the credit markets there. Let's get the story. It's the big take story here today from Patrick Clark, real estate reporter for Bloomberg News. Talk to us about, some of these lending, some of these mortgage markets that have developed kind of easy money lending in some of these markets. I think about Florida and some of those hot markets. What's happening there these days?
Right. So these are what used to be called hard money loans. They used to be very local lending markets. You'd go to some high net worth individuals and you borrow from them to go flip a house, maybe do a ground up construction on a one-off level, right? Very small time real estate investors. Over the last decade, I would say broadly speaking, institutional capital has discovered this space and poured a lot of money into it, made it a lot easier to get sort of consistent, dependable, and often cheaper, better term loans for these investors. Go back to 2021, 2022, first half of 2022, real estate markets were going great. And, in places like Southwest Florida, but also Texas, also elsewhere, a lot of people went and launched these projects, and then the cycle kind of turned on them. And that's what we're seeing play out. My colleague Prashant Gopal, who was in Cape Coral for this story, drove around, and you see all these homes which are like half finished, right? They started building them with the intention usually of selling them when they were done, sometimes renting them out, and then home prices fell, and they basically just stopped construction. So you got a bunch of concrete shells.
Sounds familiar. We've been here before. So what happens now? How are these loans issued by private lenders playing out versus how banks would traditionally deal with mortgages?
Yeah, that's a good question. I mean, I think there's some flexibility in these. On one hand, there's some these lenders have some flexibility. Nobody ever wants to take back the property. Maybe not never, but very often it's a better outcome if they can try to nurse borrowers along and get them to a place where they can actually finish a process. Nonetheless, like in Cape Coral, on these private loans, foreclosure starts. The beginning of the foreclosure process is, I think we had it up up to 7%. I think it's up several times from what it was a couple years ago. But so some of this pain is starting to come through. I mean, what happens to the homes, I think, and very often what you're looking for, and whether it's the original investor or the lender who's had to take it back, what they're looking for is someone to come in and finish the project.
So I'm just looking at some of the numbers you guys have in this story here. In Cape Coral, Florida, private lenders have started the foreclosure process on 7.4% of the 2,000 properties they financed in 2023. Typical mortgages go bad at a rate of less than 2%. So it's getting a little dicey out there in some of these markets for these lenders.
Yeah, absolutely.
So who are some of these lenders? I see, institutional money. I know, see in your piece here, large investment firms, including private credit funds, such as those run by KKR, have driven a surge in some of these hard money deals. Are they feeling the pain, or are they too smart for that?
Well, the first thing to say is that, well, this market has grown. It's now $145 billion in private lending that got put out last year. That's broken up, it's still fragmented. So I don't know what KKR's exposure was. I'm sure it's quite small in relation to the amount of money that KKR put out in private credit broadly. So to think that a handful of foreclosures in Cape Coral or somewhere else is going to, really kind of change the business for a massive global asset manager, I'm not sure. I think it could affect the way some of these companies approach these businesses going forward. Of course, everyone will tell you, we're not the ones doing easy credit, right? Everyone will tell you that our numbers are good and we're taking smart risks. But you also see, and that may be true, but you also see, if you look around, the sort of advertised terms for these loans keep getting more and more friendly. I mean, in some cases, you can see. There's the fix and flip loans. That's what much of this story is about, or construction in this case. There's also these loans that people take out to hold a rental property long term. In some cases, the interest rates on those loans are cheaper than they are on a conventional mortgage. So cheaper to be an investor in that sense than a regular home buyer.
Which cities in Florida? I mean, you mentioned Cape Coral, and I guess Florida being kind of vulnerable to this kind of thing is typical, and a lot of the hijinks in property tends to happen in Florida. But where else are we seeing this really proliferate?
Yeah, I mean, again, you look at this. You look at the markets in the U.S. where home prices surged, when things were going good. In many of those places, there's been some reversal, and so you've got Cape Coral, you've got Sarasota, which is not so far away. You've got St. Petersburg, Lakeland, Florida. But, you've seen a version of this in some parts of Texas. You could say Austin, El Paso. It's generally speaking the places where prices were surging, people got over their skis, and, now they're in a little bit of trouble.
What are the banks here? Where are they in these markets? Are they active mortgage writers, or are these hard money folks kind of filling a void here?
So I think banks have wanted to dabble in some of this space too. I mean, it's in big investor markets, investors wind up soaking up a lot of the demand, right? They're buying a lot of the homes, and so if you're a lender in that market, you want to have some way of serving those people. But I don't think I think this has become more of a sort of specialty lending market, and so it does tend to be lenders who are backed by big asset managers, insurance companies, and so forth.
Is there any implication from the president's plan to ban institutional investors from buying single-family homes and renting it out, or is that completely unlinked to this?
Listen, I guess what remains to be seen in the president's proposal is what they consider an institutional investor. I mean, I think Secretary Bessent said at some point that it could be someone who owns as few as a dozen homes, or at least he suggested it in one of his remarks on the subject. And so, someone who has 12 rental properties could be lending in this, borrowing in this market, yes.
All right, Pat, thanks so much for joining us. Pat Clark, he's a real estate reporter for Bloomberg News. He's got the Bloomberg Big Take story today. We love the Big Take stories, really good, well-reported, deeply reported stories here. This one's entitled, Easy Money Loans Backfire on Rookie Home Flippers Seeking Riches. I think as Scarlett said, we've seen this story before back in the great financial crisis. We all learned about that end of the market. Looking at the market here, the S&P is up 41 points, the Dow's unchanged, and the Nasdaq's up 250 points. That's 1%. So tech-heavy Nasdaq making a little bit of a rebound here. A little more coming up. This is Bloomberg.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio in New York City. We're streaming live on YouTube. Head over to youtube.com and search Bloomberg Podcast, or go to bloomberg.com/videos for all the live streaming from Bloomberg Radio and Television, plus all the curated Bloomberg video. That's where you will find it in one spot here. Robo-taxis, they're coming. Elon's telling us they're coming. Get ready for it. But it's kind of expensive to deploy a robo-taxi fleet. We're learning that as well. So let's talk to somebody who does this stuff for a living. Andrew Grant, he's head of intelligent mobility at BNEF. He's over there in London here. Andrew, would love to get the lay of the land of the world of robo-taxis. I know they're in a handful of cities and growing and growing. Where are we, and what should we look forward in 2026?
Well, thanks for having me, Paul. So at the end of 2025, there were about 8,000 working robotaxis globally. Some of those had safety drivers behind the wheel. Some of them had safety drivers in the vehicle, but a significant number fully driverless and operating in various cities around the globe. I'd say about half of those 8,000 based in the US. But we expect that number in total to more than double by the end of the year to around 18,000 robotaxis globally.
Who are the players in this business? Names, other than Tesla, Waymo. How do you think about the competitive environment out there?
I mean, we spend a lot of time looking at the actual operations and number of vehicles deployed. So really you're looking at kind of 4 companies globally that have the biggest fleets of vehicles on the road. So Waymo, as you mentioned, Alphabet backed and has just raised a significant amount of money. But also you're looking at 3 Chinese companies with a big robotaxi fleet and growing. So Baidu's Apollo, and then WeRide and Pony AI, which are robotaxi specialists that are based out of China but looking to expand globally.
I think about the battery electric vehicle market, and I think with the exception of the U.S., BYD and some of these other Chinese manufacturers, it just feels to me at this early stage might be able to take over the world of electronic vehicles. Is that a similar view for robotaxis?
Yeah, I mean, it's interesting how different geographies are going to react and different regulators are going to react to foreign companies coming in and deploying their technology in those areas. We are really seeing kind of a race at the moment for new territories. So you've obviously got the US-based companies, the Chinese-based companies that I just mentioned, and kind of in the middle, you've got Europe, Middle East, Southeast Asia, where a lot of these companies are setting up roots and looking to deploy, and kind of 2026 is the year where they're really looking to expand those services. So Uber has just announced in the earnings call last week that they'll be expanding to Houston, Hong Kong, Madrid, Zurich. There's a variety of really competitive battlegrounds across those kind of markets in the middle.
What's the safety record so far in these early testing stage?
I mean, it depends how you measure these safety standards. It's whether you're needing some type of intervention with the safety driver in the vehicle. On the whole, these vehicles are tending to kind of show safety records that are similar to what humans have displayed, and in some cases it's far surpassing that. But again, the measuring of these standards is kind of a tricky, nuanced subject that a lot of regulators are digging into at the moment, and it's really about companies working with regulators to try and figure out and kind of try to prove their safety record over time as they expand their services.
Talk to us about these things are expensive to develop, maintain, deploy. Waymo just raised $16 billion at $126 billion valuation. Tesla's committed $20 billion in R&D this year. Where's the money coming from?
I mean, a variety of venture-backed investors and kind of the big tech companies themselves. So you mentioned Waymo. A lot of that money is coming from its majority owner, Alphabet. And then Tesla is putting a lot of money into this. It's also about where they are putting their money. So Tesla is going with a strategy of deploying a much cheaper vehicle, but they're putting a lot of money into the data centers to try and improve their self-driving algorithms and their self-driving system. Whereas Waymo's got a more expensive vehicle, kind of 2 to 3 times at a minimum, more expensive. So it's going to take a lot of money to kind of build out that robotaxi fleet and deploy it in the various parts of the globe where they want to deploy. They've just announced that they plan to launch a service here in London in September.
Great. Some of those little streets. Good luck there. What's some of the gating issues here? Is it regulatory? Is it capital? Is it technology? What's the gating issue here for this industry at the moment?
I mean, it's kind of all of the above, and there's improvements that need to be made on all of those, but also just finding a business use case for these services. I mean, as we've been talking about, it takes a lot of money to build them and deploy them. So finding a kind of meaningful market for them and completing kind of useful rides or meaningful rides rather than just kind of being a theme park attraction and driving small parts of the city. You actually want to kind of get those more lucrative ride-hailing trips from, say, city center to airports. And that's been a bit tricky for some of these robotaxi companies to actually sort out. They, if you look at just about a week and a half ago, Waymo announced that they would be opening up to San Francisco airport. But really, what you're seeing from that is they are doing pickups and drop-offs at the car rental center, which is kind of a 15-20 minute journey from there to the actual airport itself. So it's kind of compete with curbside drop-offs from ride-hailing vehicles. They still have a bit of way to go.
All right, it's fascinating stuff. It's coming. Better get ready for it. Andrew Grant, Head of Intelligent Mobility at BNEF. He's in our London office there as well. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metal. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up in just a moment, with the S&P up 43 points, the Dow up 20, and the NASDAQ up 255 points. That's 1.1%. More coming up. This is Bloomberg.
CBS News on the Hour, your home for original reporting. I'm Peter King. House Oversight Committee members have said they didn't expect much from Ghislaine Maxwell's deposition this morning, and their low expectations were met after Jeffrey Epstein's imprisoned confidant refused to provide any information about the convicted sex offender. California Democrat Ro Khanna.
Now she's pleading the fifth about things that don't implicate her, but may implicate many of the other powerful people.
More from CBS's Jake Rosen.
By pleading the fifth, she's essentially stonewalling this committee. This is kind of this long-term and long play by her and her legal team to potentially see if they can get any kind of either commutation or pardon of her sentence in exchange for more information, of which lawmakers and potentially the Department of Justice believe she has.
Lawmakers are getting a look at unreleased and unredacted versions of the Epstein files at the Justice Department. We're about 5 hours away from the second ransom deadline from someone claiming to have kidnapped 84-year-old Nancy Guthrie more than a week ago in Arizona. CBS's Andres Gutierrez is in Tucson.
First one came and went, and there was no, the captors did not reach out to the family. And now the second one is coming up later today. We'll see if it passes, and if at this point, if there is no communication, it may be that this note is not real.
Today's show anchor Savannah Guthrie and her siblings have posted their second video asking for contact with whoever has their mother captive, saying they're willing to pay to get her back. The Trump administration's crackdown on dangerous and violent criminals in the country illegally turns out to be a very small percentage of people that ICE has taken into custody.
Less than 14% of the nearly 400,000 immigrants arrested by Immigration and Customs Enforcement in President Trump's first year back in the White House had charges or convictions for violent criminal offenses. That's according to an internal Department of Homeland Security document obtained by CBS News. The Trump administration has repeatedly said its crackdown on illegal immigration is primarily targeting dangerous and violent criminals. Jim Krasula, CBS News.
President Trump, of course, is not running, but the midterm elections could be a referendum on his policies. CBS's Stacey Lynn says it's still mostly a mystery as to who gets his support.
The president has a massive campaign war chest, but he hasn't given any details on how or when he plans to use it. And it's still unclear which Republican candidates he'll back. The Washington Post reports the uncertainty is making party leaders nervous, especially with Democrats showing momentum in recent races and Trump's approval numbers slipping.
On Wall Street, the Dow is up 32 points and the NASDAQ up 266. This is CBS News. CBS's Deborah Rodriguez has the story behind a poignant moment from last night's Super Bowl halftime show.
A child and his dad watching a TV on the field at Bad Bunny's halftime show was an actor, Lincoln Fox, who looked a lot like the 5-year-old picked up with his dad by ICE agents near Minneapolis last month. Bad Bunny handed him a Grammy and patted his head as part of his tribute to his Puerto Rican hometown. It set off speculation on social media that the star had awarded one of his prizes to little Liam Ramos. He and his father were released from detention in Texas a week ago. Deborah Rodriguez, CBS News.
And by the way, the wedding scene during the show was a real wedding. The couple had invited Bad Bunny to their wedding. He suggested they be a part of the halftime show instead. His representative has confirmed that the wedding was indeed the real deal. I'm Peter King, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
5 days to another partial shutdown, and Jeffrey Epstein re-enters the picture. Welcome to the Monday edition. As lawmakers stare down another funding deadline for the Department of Homeland Security, no deal on ICE. And lawmakers are now, as of today, allowed to privately read the unredacted Epstein files for the first time. We're going to get up to date on both with Bloomberg's Washington correspondent Tyler Kendall. Now we'll compare notes with Nathan Dean from Bloomberg Intelligence. He's running odds on a shutdown, and we'll spend time with our political panel as the Super Bowl becomes the microcosm of American politics and culture. Rick Davis, Jeannie Shanzana with us for the hour, all after we look at Wall Street, getting a bit of an upswing this morning, and Charlie Pellet has the latest from World Headquarters in New York. What do you have, Charlie?
Right now, looking at a record on the Dow Jones Industrial Average, Joe Matthew. Any close higher today on the Dow will be another record. Has been fluctuating between gains and losses right now. Higher by 9 points, little change. Perhaps the key takeaway, at least for the Dow, 50,122. The S&P, best level of the day, up by about 43 now, 69.76. That is a gain of roughly 0.6%. NASDAQ tech names doing a little bit better. The NASDAQ Composite Index up 1.1%. The NASDAQ 100 Index up 0.9%. And we're back to the Russell 2000 Index, just about in line with the S&P today, up by 0.9. Our Mag 7 Index outperforming, up by 1.6%. The VIX now with a 17 handle today, the 10-year 4.20%, the 2-year 3.48%. Gold, meanwhile, up another $104 the ounce to $5,068, back above 5,000, up 2.1%. Silver up by 6.8%, 83.08 for an ounce of silver, and Bitcoin down 0.7%, 70,180 now on Bitcoin. It is a busy week for economic data. We've got that delayed jobs report on Wednesday. Consumers and economists, meanwhile, looking to Washington, specifically tax filing season, for a potential lift. Kelly Kovley is an analyst at Manning & Napier Advisory.
On the consumer side, it's looking like we're going to get a pretty robust tax refund season, and I think that's especially helpful coming at a time when the labor market appears to be softening a little bit, and consumers really could use that little extra boost.
Kelly Kovley of Manning & Napier Advisory. Novo Nordisk is suing Hims & Hers Health for making knockoffs of its obesity medicines, even as Hims scraps plans to sell a copycat version of the Wegovy pill. Novo Nordisk ADRs today trading higher by 3.1%. Hims & Hers Health plunging 23.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. And back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie. Peeking out of one eye after a late Super Bowl night, Charlie Pellet had a very important morning as well. Did you see who rang the opening bell? New York Stock Exchange. Sydney Sweeney was apparently asking for Charlie Pellet because she thought he was at the stock exchange this whole time. Of course, he's up at World Headquarters on Lexington Avenue. The voice of Wall Street, not forgotten. I hope you had a good night. We're back to reality. Welcome to the Monday edition of Balance of Power here on Bloomberg Radio. And yes, we express condolences to those listening on 92.9. Streaming live on YouTube, unless you're watching us right now on Bloomberg Originals. Thanks for being with us. Bitcoin just sliding back below 70. I thought crypto would get a lift out of the Super Bowl with Alphabet's dollar bond sale drawing over $100 billion in demand. This is something that we're going to be talking about quite a bit. Google shares, Alphabet up 1%, $326. I have news. It has nothing to do with the Epstein files or the potential closure of the Department of Homeland Security, because tomorrow is a big day around here, and I want you to just file this away for Balance of Power Tuesday editions. Do you know who's coming back? Producer James knows. We told her we'd keep the seat warm, and I want you to know that Bloomberg's Kaylee Lines is going to be back here tomorrow on Bloomberg TV and radio. It's been a 6-month walk through the desert, although I met many roadside prophets along the way. And if you were with us, you know exactly who I'm talking about. I've been able to spend time with some great professionals, but we're super excited to have Kaylee back. Yeah, it just went right on the terminal. I said it out loud, and I hope that Kaylee is listening and watching. Actually, I hope not. Just wait till tomorrow. It was like a walk through the Revenant getting in here this morning. Washington, D.C. is still ensconced in ice. It is so cold outside, I might have to sleep inside a horse to stay alive. Watch the movie. And as we come off this Super Bowl, I know you're feeling terrible right now if you're listening to us on 92.9. You've experienced this feeling before, but a bit of consolation. The Super Bowl indicator. Does Charlie know about this? I haven't heard anybody talk about Super Bowl indicator this year, but think about this. This goes back to the 1970s, New York Times. The indicator suggests that a Super Bowl victory for the NFL's National Football Conference team, the guys who won, portends a bull market for stocks in the year ahead. A win for the American Football Conference team, a bear market. So there you go. Now, you're going to tell me that this hasn't been so accurate in years past, but consider, starting from Super Bowl I, have you guys seen this? This is amazing stuff. The LA Coliseum, 1967, tracking market reaction to the various champions all the way to 1997. The Super Bowl indicator had a 90% success rate. This was a big talker back then. Granted, it has slumped to around 40% since then, so we don't talk about it as much. But hey, Seahawks, rally. Now, the president's been talking about the Super Bowl. He was posting about the halftime show. You knew he wasn't going to like it, even though we know for a fact, we've seen the videos, that the halftime show with Bad Bunny was on the big screens at Mar-a-Lago last night for the Super Bowl party. There are big questions as everybody gets back to reality here about, the Epstein files. Lawmakers are getting their first unredacted view in a private room without electronic devices today. And the fact that no one's getting along, and the Department of Homeland Security is likely to run out of money on Friday. We're 5 days out from a partial shutdown, a single department that includes some pretty important stuff, like FEMA and the TSA. And Bloomberg Washington correspondent Tyler Kendall's been spending half of her career counting down to shutdown, and here we go again. She's with us in our Washington bureau. You must have been exhausted this morning, Super Bowl day after.
Yeah.
Okay, 5 days from now, what happens?
Well,
I'm going to ask Nathan Dean that too, so I'm not putting you on the spot here.
Well, as you alluded to, it appears that Congress loves a deadline, particularly one that goes up against a holiday. We have a long weekend. Lawmakers are going to be out of town next week, so perhaps that could spur some momentum. But at this point, Joe, it doesn't look that likely. And to your question about what's going to happen, we know that a partial shutdown, a shutdown that only impacts the Department of Homeland Security, is ultimately not going to have that big an impact on Immigration and Customs Enforcement, because that agency received federal funding under the One Big Beautiful Bill to the tune of $75 billion they can use over 4 years. So that means that we are looking for potential implications here for other agencies under DHS, like FEMA, like TSA, which we know was really impacted during the last and longest government shutdown in U.S. history, and ultimately helped to spur a compromise. And I would expect Republicans to really hit on this point this week. They're going to try to blame Democrats for any delays that you may see, saying that this tactic to try to codify some changes to ICE, tack it on to tangible legislation, isn't going to impact ICE if the government is shut down when it comes to that specific department.
Wow. All right. So then it becomes a question of, could they put together a patch? And I know that is something that's a bit elusive right now. Remember, for the last partial shutdown, there was a debate over how long the continuing resolution should be. They landed on 2 weeks, which clearly was not enough. Are we talking about another 2, couple of months, full year?
I actually asked a few lawmakers this on the Hill last week. I was up there running around towards the end of the week, and nobody seemed to really have an answer on how long it could take to actually hammer out a deal, because at this point, Democrats have put on the table a list of their 10 perhaps concrete demands that they want to see, these new requirements for judicial warrants, what has been called demasking of federal agents, having them not wear a mask during any sort of immigration operations. And some of them, especially that latter one, feels like a non-starter for Republicans. They feel very far apart on this issue. In fact, President Trump himself has said that at this point they're not negotiating on those. So that leads to questions about how long this could potentially be drawn out for. Maybe something could happen. It was our understanding that over the weekend Democrats had floated actually a more concrete proposal to Republicans, but any indications we've gotten so far is that it doesn't seem like they're biting.
Boy, this is a tough moment here because they do seem like they are far apart on some really key issues here. We could be in a world, I guess, where the rest of the government is chugging along, but this one department, dare I say, is on ice. Tyler, talk to me about Jeffrey Epstein today. The president, coming off the halftime show last night, is watching all this from the sidelines, knowing that his name, Howard Lutnick's, and other members of the administration are named, realizing not accused of any wrongdoing. But Keir Starmer's name is not in the files, and he could be looking at the end of his political career. What's happening?
No, you're outlining a really keen split screen here that we're seeing. There has been this mounting pressure on the United Kingdom Prime Minister Keir Starmer to step down after we saw a flurry of his key aides step down from their posts over the weekend. This has to do with how Starmer had appointed Peter Mendelsohn to be the UK ambassador to the US. He removed him from that post back in September. But as we keep seeing these tranches of files come out in recent weeks, that's really renewed spotlight on that relationship. Now, one of Starmer's key aides took what he said was full responsibility for recommending Mendelsohn for that role, but there have been some prominent members in that government that say that the man that actually appointed him should step down. With that said, Starmer has actually gotten a lot of support in just the past few hours from some key cabinet members. The Chancellor of the Exchequer, Rachel Reeves, for example, threw her support behind him, and he's expected to convene and perhaps release more information, he suggested, about how the nomination of Mendelsohn ultimately came to be. But you're exactly right. He's not implicated in the files at all. He didn't know Epstein, and that is perhaps the split screen that we're seeing as the White House faces pressure. And President Trump himself says that it is time for the U.S. to move on, in his words.
Boy, it's really something. So the offense here is that he hired those who were implicated in the Epstein files, which is a very different scenario than we're dealing with here in the U.S. Ro Khanna and Tom Massey, the D and the R, the two members of Congress who forced the discharge petition on releasing the files, are going to be marching over to the DOJ today to review unredacted files. This is the first day they're available, Tyler. They're going to be holding a briefing later. Any sense of what we're going to hear?
Well, at this point, we'll have to see what they ultimately are able to share and what they do learn. I believe you were the one that actually pointed me to the fact that Thomas Massey has been crowdsourcing on X.
Isn't that something?
What people, what specific files he should be focused on. We'll ultimately see where it lands. They can only make hard copies, written copies, no electronic copies of what they see in the room today.
So we're not going to see screen grabs or photographs.
Not
really
today.
Interesting here. Tyler, thank you so much. It's just another Monday in Washington. Tyler Kendall, our Washington correspondent, getting us rolling here on the Monday edition of Balance of Power. America's Dad is coming in next. We run the odds with Nathan Dean on a potential shutdown here on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow lower, the S&P, NASDAQ. They are both advancing right now. The NASDAQ 100 index pushing higher by 1%. NASDAQ Composite Index up 1.1%. The S&P up 0.6%. Dow Industrials have been fluctuating between gains and losses. Any advance today for the Dow will be another record, but right now lower by 42 points, down under 0.1%, holding at 50,072 on the Dow. The VIX at 17. We've got the 10-year 4.20%. Spot gold up $105 the ounce, up 2.1%. 5,070 right now on gold. Silver up by 7.1%. 83.32 the ounce on silver. West Texas Intermediate crude oil up 2%, 64.80 on WTI, and Bitcoin down $600 to 70,070. Has been moving above and below that big round number. Bitcoin right now down by 0.9%. Cuba is at risk of losing vital airline service as it prepares to run out of aviation fuel. A1 jet fuel will not be available at Jose Marti International Airport beginning tomorrow through March 11th. Among U.S. airlines that do serve Cuba, American down now by 0.4%. Delta lower by 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. And back we go to Washington. Once again, your host, here he is, Joe Matthew.
Charlie Pellet, thank you so much. We'll be back with Charlie, the voice of Wall Street and the New York subway, in about 20 minutes' time. With a pretty decent start to the week on Wall Street, we'll see if that remains the case as lawmakers start figuring out how to pull this one out of the fire once again. Thanks for joining us on Balance of Power. We're having the same conversation today as we were on Friday when it comes to government funding, and nothing got better over the weekend. Is it possible it got worse? Nobody trusts anyone, even when it comes down to a halftime show. Incidentally, we talked a little bit about the president's reaction to the halftime show last evening. He didn't like it, knowing, of course, that they suggested he wouldn't watch it. Remember, the press secretary last week said that the president clearly would prefer the alternate Turning Point USA show headlined by Kid Rock. He writes here, the Super Bowl halftime show is absolutely terrible, one of the worst ever. Makes no sense, is an affront to the greatness of America and does not represent our standards of success, creativity, or excellence. Nobody understands a word this guy is saying. And the dancing is disgusting, especially for young children that are watching from throughout the USA and all over the world. I'm not sure I understand that part. A slap in the face to the country, he said. Then again, Kid Rock was clearly doing, well, it wasn't just lip syncing, he was doing a poor job. It wasn't even close. The denim shorts and white sneakers were a different look, too. So I guess everybody had a problem with halftime. We're going to talk to our panel about that coming up. Rick Davis and Jeannie Shanzano on the microcosm that the halftime show has become in terms of reflecting American politics and culture. Bring us back to Washington. No one's trusting each other. And it looks like the Department of Homeland Security is going to shut down again. Didn't we just go through that? Then we reopened for 2 weeks, and now here we are at the end of a CR. Body cameras, you get those. But when it comes to restrictions on ICE and the list of demands that Democrats put forth last week, that might be literally all Republicans are willing to offer. That's why we're looking at a shutdown. Remembering that inside DHS, not only do we find ICE, but we find the TSA, we find FEMA, we find the Coast Guard. They would all be defunded if they can't figure this out. Nathan Dean knows this. That's why he's got his eyes on it. We talk about this every week here. Bloomberg Intelligence senior U.S. policy analyst. I said he's running odds, but do you run odds on a single agency shutdown?
No, we're not.
You don't run odds.
No, I mean, most of the clients that we talk to, for the lack of a better word, this isn't all that big of a deal for the market because, the market impacts just aren't there. We're getting data, we're getting BLS. And actually what we've been telling our clients is like, look, because you have 11 of the 12 appropriated through September 30th, and you're most likely not going to have a shutdown 1 month before the elections, you're probably getting another year of clarity in terms of data and so forth outside of DHS. So this is actually somewhat of a positive measure that they've passed 11 out of the 12 already because, look, for the things that the market care about, and apologies to the 266,000 people that work at DHS.
Sure, yeah.
But the markets really don't care all that much about it.
It's as close as we've come to regular order in a long time when it comes right down to it, however dysfunctional it may be.
But I do think that there is this chance that you will see another kick of the can, and I'm being snarky here.
Yeah.
But the Munich security conference is this week.
Yeah.
And members of both
Got a bunch of
sides, they don't want to be here. They want to go to Germany and eat schnitzel. So, I mean, I wouldn't be surprised if they kick the can on this one. Yeah. But again, if you have a shutdown, the next pressure point is that paycheck, and you're looking at essentially 10 days after that.
Okay, so it would be 2 weeks again? Is that what we're thinking for duration here, or have they not even established that idea?
I don't think anybody's talking. Like, I mean,
full year CR?
Tyler was reporting this morning that, the president's not involved.
Well, if you're not hearing it, nobody is.
Nobody's talking about anything in terms of like what a solution here is. So you look at the pressure point. Pressure point is DHS shuts down on Friday.
Yep.
Both sides are going to look at it and say, are we going to pay a political price for that? And I'm not exactly hearing anybody on either side of the aisle saying you're going to pay a huge political price. So, this is one of those situations where I think, you may see both parties walk away and say, you know what? We're good if the agency shuts down for now, because as you've said before, $75 billion of ICE is funding it through fiscal year 2029. Yeah. So I'm not exactly sure how this is going to play out.
Our friend Patrick McHenry, Bloomberg Politics contributor, former Speaker pro tem. I just like saying those two things together. He reminded us last week of the Cromnibus back in 2014. We've seen this movie before. You get an omnibus for all the other agencies. In this case, we have some actual spending bills, but you get a CR for, in this case, DHS, goes through the year, ends the argument, keeps the TSA, keeps the airports running. Is that a plausible solution here?
I think so. I mean, I think there's 2 points here. There's probably one big point, and that is, how does this impact the midterms? The Democrats are looking at Virginia, New Jersey, all these special elections, and they're saying, look, let's not rock the boat here. We have a solution that actually may play into 2026. Obviously, progressives are saying we need changes in terms of ICE tactics and so forth. That debate has to play out. Yeah. But from the Republican perspective, it's how do we get back on message? And I think there are elements of both parties will look at this and say, look, let's just get this out of our portfolio at the moment so we can get back to messaging to 2026. So that's where this Cromnibus argument could play out. But again, this is one of those things where pressure points decide how the shutdown ends. Mm-hmm. And the pressure point isn't all that big with DHS specifically.
Yeah, sure. Maybe for airline investors? Are you getting calls from that would be the most direct impact of a TSA shutdown, for instance, right?
Yeah, but we have to go back to the 45-day shutdown from last year. That was FAA that was actually causing a lot of the airline disruption.
Absolutely right.
Not TSA.
Fair enough.
And so, this is
so even if the security lines are too long, you're probably still taking off.
But you're also talking about security contractors who work for the TSA but aren't part of the TSA at a lot of American airports. So it's a very muddled message. And so this is one of those things where we're not hearing it from the airline investors.
I love the nuance. Producer James dares to ask, how far behind are we on FY27 appropriations? Is this conversation even happening?
Well, I mean, I'm not even going to have a conversation about FY27 appropriations until. Well, no. Let me joke. For every moment we're talking about this, it's now a moment that we're not talking about something else. We're not talking about stimulus checks. We're not talking about reconciliation. We're not talking about crypto market structure legislation or housing bills. Every single moment we're talking about this, we're not talking about something else. Mm-hmm. And look, in an election year, showing how difficult it was just to get to fiscal 2026. You'll have some conversations because appropriators want to appropriate, but I'm not exactly sure we're going to get anywhere close.
Well, French Hill loved that answer because you just dropped a housing bill and a crypto market structure bill. Will both of those get to the floor?
So I think the housing bill will, because it's overly bipartisan. And for people looking at it from the market perspective, we've looked at this bill, at least the House side, the Housing for the 21st Century Act. Yeah, sure. There's nothing in there that really excites us all that much in terms of impacts to equities. Mm-hmm. Housing is extremely difficult because, it's not federal legislation that drives a lot of policies here. It's state and local, and it's the third rail of politics. I want to bring home prices down when then you hurt people who have homes, and so it's one of those things where it's just very difficult to coalesce around a strategy. So the bill that's the House is voting on and the Senate's going to be working on their subsequent bill this month really isn't all that impactful from our point of view in terms of equities. When it comes to crypto, we're thinking maybe April or May. Senator Lummis just said last week that Senator Thune assured her that there would be floor time, quote, in the spring. So, but we have to see how the negotiations play out between the crypto and banking sector over stablecoin yield.
How are crypto prices, if at all, impacting this? We're back above, I'm looking at Bitcoin, just back above 70,000 here. We went all the way down 60. I might have even broken through into the high 50s for the low of last week. People are talking about another crypto winter, massive unwinding, massive deleveraging. Can Democrats still have this same debate with a straight face?
So, I watched all 5.5 hours of Treasury Secretary Scott Bessent's testimony last week. And one thing he said is, and I'm paraphrasing here, that he's not going to use taxpayer dollars to go out and purchase Bitcoin for the bailout of Senator Warren.
I heard that very awkward exchange.
I think they could use the Exchange Stabilization Fund, but we don't think they're going to. I mean, it's 30% chance of this year that you're going to see the United States actually go out there and purchase Bitcoin. So the idea of propping up this idea of
the reserve.
Exactly. But then in terms of the crypto market structure bill, I'm still at 60% chance of passage because the White House is putting pressure both on crypto and on banking to get to a solution on this stablecoin yield argument.
Right, okay.
But again, they're focusing on housing and affordability at the moment. The Senate banking has said we're going to push this off for another month so we can focus on housing. But at the end of the day for crypto, all these people that say that no bill is better than a bad bill, you're not going to get a bill if Maxine Waters chairs the House Financial Services Committee after the election if the Democrats take.
Wow, yeah.
And so I ultimately think crypto and the banks are going to come together and say, we need a bill now, because if you don't get it now, the odds of it getting in 2027 much less.
I don't know if French will like that answer. Nathan Dean, have you heard about the time capsule? If these guys can't get along, I just want to know what these letters are going to say. If you haven't heard about this, the House wants to create a time capsule to be buried in the Visitor Center, which is, kind of underneath and behind the U.S. Capitol building. It will include a letter from the House and Senate leadership mandating the 244th Congress open the capsule July 4, 2276, 250 years from now. So we got 250 this year. We bury this sucker for 250 years. Can you imagine what House and Senate leadership would have to say about each other if they sat down to pen a letter? Is this going to be either is this a blank page or a highly redacted one?
Well, if they write it themselves and not have ChatGPT write it, then,
yes.
But maybe they'll include the $2.50 coin that their House is talking about this week.
Okay, sure.
There's legislation, but ultimately, if they were to write this letter, they are right now transitioning from a governing Congress, and we can talk about whether they're governing or not, to a campaigning Congress. And so, the mindset of Congress is changing right now because in about a week or so, maybe even a month,
bye-bye.
They're gone. They're focusing on the elections because every day they're here in Washington is a day that their opponent is out campaigning against them. So I think you are seeing the mindset of Congress change over these couple of weeks right now.
Wow, fantastic. What did the kids think of the game last night? You had the touch football group together. Were they bored?
They were so bored after the second quarter.
What was their favorite ad?
They were downstairs playing Fortnite, so I don't.
They didn't get through.
They didn't even get to the ads.
These are the players. All right, I got it. Nathan Dean with the read on legislation on crypto on America. Bloomberg Intelligence senior U.S. policy analyst. America's dad would try to bring the team home, watch the game, hand out the orange slices. Did you get wings, pizza, both? And they still left?
Still left.
Outrage. I'm Joe Matthew in Washington. We'll assemble our political panel next. I wonder what they would put in the time capsule. Rick Davis and Jeannie Shanzano are on the way in, only here on Balance of Power on Bloomberg Radio.
1240 on Wall Street. We do check markets all day long here at Bloomberg. Dow back in the red right now. Been that kind of a day. Choppy session now with the industrials down 34, down by 0.1%. Any advance at the close in the Dow will be another record. Right now, Dow Industrials holding above 50,085 right now on the Dow. S&P just about the best level of the day, up 40, 69.72, up by 0.6%. NASDAQ up 1.1%. The NASDAQ 100 index up 0.9%, and the Bloomberg Mag 7 index up by 1.5%. The VIX just above 17. 10-year 4.20% with a 2-year 3.48%. Gold is surging $102 the ounce, back at $5,067, up 2.1%. Silver up 7.1%, 83.34 on silver, and Bitcoin little changed on the day at 70,615. Get ready for the Warsh Fed, so says former Fed Vice Chair Richard Clarida, now Global Economic Advisor to PIMCO. Clarida says he expects Kevin Warsh to focus on 3 areas of change at the Fed: the balance sheet, credit allocation, and forward guidance.
It's very possible to run a successful monetary policy without any forward guidance. Paul Volcker did it for 8 years, and Alan Greenspan did it for his first 17 years.
Former Fed Vice Chair Richard Clarida, a guest this morning on Surveillance. Eli Lilly has agreed to buy closely held U.S. biotech Orna Therapeutics for up to $2.4 billion in cash. Its second deal in as many days as the company extends its pipeline beyond its well-known blockbuster obesity drug Zepbound. Shares of Lilly down now by 0.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, we do thank you. Charlie Pellet live from New York. We'll have more on the markets coming up at 1 p.m., top of the hour, as we welcome our global television audience to the conversation. A lot of TV for a lot of folks. Freezing outside, you hunker down on a Super Bowl weekend, and we saw more ads than we can remember this morning. Interesting, though, what the ads told us, right, about American culture. It was all AI, gambling, and GLP-1. That right? Did you even see a beer ad? I think maybe there was one in there. Nobody drinks beer anymore because of GLP-1. Then, of course, we had the halftime shows and the standoff that was created for some reason between Bad Bunny and Kid Rock. There were others who were playing at the Turning Point USA thing, but they had a lot of trouble with the lip sync in there for Kid Rock. They had pyrotechnics. He had the denim shorts on. Maybe it was a monitor thing, but he was really far off the lyric. Anyway, they were supposed to be on Twitter. That didn't work out, so you had to get on YouTube. It was difficult to see. Even with that, 6 million people turned away from the television broadcast and onto YouTube to watch Turning Point USA. Not bad. The weird part is Mar-a-Lago was not among them. If you look at the videos of the big ballroom, you see Lindsey Graham and others looking up. There's Bad Bunny with the grass on the field. So I guess they did have a chance to see it, and that explains why the president was posting about it last night. The Super Bowl halftime show is absolutely terrible, he says, one of the worst ever. Now, this is written in present tense. He posted it after it was done. It makes no sense, is an affront to the greatness of America, and does not represent our standards of success, creativity, or excellence. This is a pretty long post. Nobody understands a word this guy is saying, he writes. And the dancing is disgusting, especially for young children watching from throughout the USA and all over the world. The show is a slap in the face to our country, which is setting new standards and records every single day. I mentioned, well, it's interesting because there was no politics in this. I guess he didn't like the dirty dancing, but actually there was no mention of Ice Out or anything like that. It was actually a message of inclusivity at the end with the football. Maybe you saw it. The microcosm of American politics and culture, remembering that it was, right, young, male, Latino voters, and to a smaller degree, young black voters who delivered Donald Trump back to the White House on top of the usual base. That was the demographic that broke Trump. And so there are questions now about whether we're watching that evolve before our eyes. And we assemble our political panel for their take on all of this. You got to love dissecting a halftime show with Rick and Jeannie. Bloomberg Politics contributors Rick Davis, Jeannie Shanzano. Rick is our Republican strategist and partner at Stone Court Capital, and Jeannie is our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. Jeannie, were you encouraged by the fact that Bad Bunny didn't get political or terribly controversial last night?
Yeah, Joe, I have to say it was not a great night for my children who are both big Patriots fans. So, it was a pretty ugly night. You know, being from Massachusetts, I'm from Connecticut, they're big fans. So it was ugly that way. Bad Bunny's performance, I don't follow Bad Bunny. I don't know his music. I'm probably like Lindsey Graham, not his target audience. But he is the #1 streamed artist in the world. And boy, he delivered. As a fan of musical theater, it felt a lot like watching a musical go off. And the messaging was absolutely beautiful. It was heartwarming. There was a live wedding. He gave his Grammy Award to an adorable 5-year-old little boy. He sang his heart out. And, Donald Trump's got to go back and look at his statistics. About 40 to 60 million Americans speak Spanish, including almost everybody that lives in Puerto Rico, who are all Americans. So while he may not have good high school Spanish to understand what was being sung, many millions of people in the United States and around the world did. And it was an absolutely upbeat and unifying performance where he echoed what was said at the funeral that Donald Trump talked so much about with Erica Kirk, where they talked about, the only thing that can overcome hate is love. And that was absolutely the message that Bad Bunny was sending last night.
Politico compiled reactions from a number of Republicans and from within the MAGA sphere in many cases. Harrison Fields left the White House recently, former press aide to President Trump. Last time I checked, he wrote on X, my Puerto Rico-born grandmother was a full American citizen and she voted for Trump. Former Trump campaign official Bianca Rodriguez says she loved the show and attacked MAGA fans for complaining. Way to go alienating your Puerto Rican conservative base, she wrote. Is any of this going to matter in November, Rick, or is this very important for Republicans to pay attention to?
I don't think it's that important to November. I think this is one of those things that kind of drives eyeballs for today. We probably won't be talking about it tomorrow. The fact that the president invested so much of his time and effort talking about it in advance, complaining about it, and then attacking it after the fact. It probably was more of a base issue. I don't think anybody else would be interested in this. I doubt if there were very many swing independents watching the Turning Point program out of that $6 million. Let me see, the trade, $120 million for $6 million, which one would you take? So, yeah, I think this is an issue that I think is symbolic, right? And when you use the bully pulpit of the White House, of the Oval Office, to set a standard, and that standard is, that we're not going to entertain entertainment in Spanish, we're not going to entertain excellence in performance, and we're going to politicize it, actually is the opposite of what Donald Trump said in his statement, which is he wants, creativity and excellence. And I think Bad Bunny, like Jeannie, I'm not, I can't claim I'm a Bad Bunny fan, but you got to admit that he's been wildly successful, incredibly creative, and he has created a level of excellence. So he meets Donald Trump's standards for what a halftime show is. Personally, Alabama football, you know what? If you get the marching band out there, you'd make me perfectly happy.
Yeah, I've said that. I got a lot of criticism last time I said that, but there is something to be said for the big brass band. Rick Davis, if you were watching, Jeannie, at the very end there, and it's all over social media, Bad Bunny holds up football, and it imprinted on the ball, it says, "Together we are America." Then he said in Spanish, "We're still here." So is he going to be on the campaign trail at some point between now and November?
I don't think so, but who knows, Joe Matthew? He has never been shy about his politics. And last night there were some infused in there, but just watching and listening to it, and with the flags, you mentioned the unification message, particularly as it pertains to the Americas, is something that aligns very much with what the Trump administration says or portrays as their approach to foreign policy and the unification of the hemisphere. So it is astonishing that he looked at it and then posted what he did. But of course, I had a sense that he perhaps wrote that in his mind and then posted it before he even saw the show, but who knows? But absolutely, Bad Bunny is somebody who speaks to a large contingent of people in the United States and around the world who embrace his messaging. And what he talked about last night was nothing controversial. It was a wonderful performance. And so I don't think it is going to work to Trump's advantage. In fact, I think he disadvantages himself with posting this kind of stuff. If anybody is being un-American, it is the kind of things he has said about poisoning the blood of our country, criticizing immigrants for coming here speaking other languages that nobody has ever heard of, which is a horrible thing. This is the kind of thing that is indeed truly un-American.
Rick, what'd you make of the fact that the Bad Bunny halftime show was on at Mar-a-Lago? There's video everywhere from the ballroom last night. You see Lindsey Graham and the president looking up at the big show on this jumbo screen. Kid Rock, I don't know if they had him on in another room, but it wasn't where the people were. Does that tell us all we need to know?
Well, it probably indicates that they need to update their tech with some Roku TVs so they can actually get YouTube TV at Mar-a-Lago. That was my bet when I saw it, is their standard cable isn't going to get them there. Yeah, I think it's making a lot to do. But look, Donald Trump was going to attack it, so he had to watch it. So he could say, I watched it and I was aghast by it. Right. The only thing that would have allowed this to be a big deal is if Donald Trump himself had actually attended the Turning Point event. That would have been more interest and more on brand for him. So the fact that he didn't do that probably doesn't mean much.
A lot of ads in this game, of course, that people are talking about, Jeannie, and that's part of the fun. Did you see Mike Tyson speaking from Maha and RFK Jr.? We're the most powerful country in the world, and we have the most fudgy people. I saw a picture of RFK with the face tattoo that they tweeted out as well. What do we make of the politics in this game, especially from this administration?
Yeah, it's been infused throughout. And I was trying to think back, Joe. It feels like post 9/11, when they started with U2, and then when we had the wardrobe malfunction with Janet Jackson, it seems from then on, this is what we've been getting with both the halftime show and increasingly with ads. Somebody reminded me that there wasn't that long ago when more men were watching football than women, that a lot of the ads were very different than we're seeing today. So things have changed. A lot of them are infused. But Joe, my favorite ad was the one with Neil Diamond's song, because Andy Samberg, Sweet Caroline. I'm sorry, I know I'm supposed to be talking politics, but you can't get better than Neil Diamond. So that was my favorite. And yeah, Mike Tyson, I can do without RFK Jr. on Super Bowl night.
There's a Wall Street Journal story that says the food industry is not happy about this ad, by the way, which was paid for by the Maha Center. The Consumer Brands Association, which represents the big food snack companies, were disappointed to see this kind of rhetoric on such an important topic, seeding fear and misinformation. Interesting reaction here, Rick Davis. You mentioned it, 120 million people. Is this the right venue for that kind of political message?
Well, everybody had a political message some way and form in the past, with these ads. But I got to tell you, Maha, they really get the award for being totally out of sync on this. They have Mike Tyson in an ad in the Super Bowl talking about wanting to eat real food. Last I heard, he ate Evander Holyfield's ear. Do we want to talk about that? I'm sorry, I have to. 1997. Big bite right out of that ear. Does he consider that Maha grade?
We're all trying to get more protein in our diets here. It's a GLP-1 world that we're living in, I guess. This is, wow, we better shut this down before we go any further. I'm so glad Rick and Jeannie are with us this day after the mighty Super Bowl. And we're going to have a lot more with our panel coming up in our second hour as we welcome our global television audience. Bloomberg Politics contributors Jeannie Sheehan Zaino and Rick Davis, our great panel. They'll be back with a lot more coming up here as we turn our attention to not only what's happening here in Washington. We'll update this review of the Epstein files by lawmakers, reading them privately today, counting down to a possible shutdown, and the way forward in Iran. Natasha Hall from the Chatham House will join us, coming up only on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew.
Still no deal on ICE with 5 days to another partial government shutdown. Welcome to the Monday edition of Balance of Power here on Bloomberg TV and radio as Democrats and Republicans fail to make progress on ICE restrictions up against a Friday night deadline. We're going to get you up to date on all of the stories we're covering with Bloomberg Washington correspondent Tyler Kendall, and we'll have insights from our political panel with Bloomberg Politics contributors Rick Davis and Jeannie Sheehan Zaino. Iran calling U.S. nuclear talks a step forward, but with a deal still elusive. We will compare notes with Natasha Hall at Chatham House to see where we are as this new week begins, with our eyes always on Wall Street. Charlie Pellet has his read on the markets live from World Headquarters in New York. Hey, Charlie.
Well, hello there, Joe Matthew. We got you covered with the Dow lower right now. The S&P, NASDAQ, they are both advancing. If we do see any gain today for the Dow Jones Industrial Average, it will be another record. Right now, the Dow is holding above 50,000 at 50,069. As of now, it is down 0.1%, has been fluctuating between gains and losses. The S&P 500 index up 33 at 69.66. That is a gain of 0.5%. NASDAQ up 213, up by 0.9%. The Bloomberg Mag 7 index up 1.3%. The 10-year, 4.20%, with the 2-year currently yielding 3.48%. Spot gold is up $84 the ounce, 5,047, up 1.7%. Silver at $82.60 the ounce, up 6.1%. The VIX, by the way, holding just above 17. Bitcoin trading lower by 0.1%, and West Texas Intermediate crude up 1.9%, $64.74 for a barrel of WTI. Sources tell Bloomberg Alphabet's looking to raise about $15 billion from a U.S. high-grade dollar bond sale. Shares of Alphabet today up 0.6%. And Meta Platforms has been given a European Union warning over policies that block the use of rival artificial intelligence assistants on WhatsApp, raising the possibility of further tensions with the Trump administration over the regulation of American tech companies. Meta Platforms rallying today by 2.8%. Recapping, S&P up 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to Washington. Balance of Power continues, and once again, your host, Joe Matthew.
Charlie Pellet, many thanks. We'll hear more from Charlie on the markets in about 20 minutes' time, so do stay with us on Balance of Power. It's the Monday edition on Bloomberg TV and radio, day after the Super Bowl. And as we listen to Charlie's commentary on the markets, we're, of course, all too aware of the Super Bowl indicator. If you're listening on 92.9 right now in Boston, we see you and offer condolences. But of course, the old Super Bowl indicator that you don't hear so much about anymore, it goes back to 1978, New York Times, suggests a Super Bowl victory by the National Football Conference team means a bull market for stocks in the year ahead. There's a pretty good track record on this until recent history, I realize, but let's just keep that in mind as we count the days to another possible government shutdown. And when I say that, I mean one department. The Department of Homeland Security will run out of money at the end of the night on Friday. And you probably feel like you've seen this movie before because it just happened a week ago. They, at that point, decided to do a 2-week continuing resolution so they could hammer out details on new restrictions for ICE. This was following the 2 fatal shootings, the 2 ICE shootings in Minneapolis. Democrats have asked for any number of things, from body cameras, which they're getting, to demasking, which has been very controversial, to much stricter use of judicial warrants, which Republicans have balked at, suggesting that no deal may emerge in the next 5 days. Bloomberg Washington correspondent Tyler Kendall is with us for the latest on this as we count things down. Tyler, lawmakers start coming back into town tonight. We don't have a way forward here.
It looks increasingly unlikely that there's going to be a broader-based deal to fund the Department of Homeland Security through the rest of the fiscal year. Though, of course, we should say anything could happen. Congress does love a deadline. They particularly like a deadline when it's up against a holiday recess and they're going to be out of town for at least part of next week. So maybe that could spur some action. But it really feels like the question now isn't, are they going to reach a broader deal when it comes to potential curbs on immigration and customs enforcement, but are they going to reach a deal for another continuing resolution? Kick the can down the road to fund DHS, maybe another 2 weeks, maybe a month. I was on Capitol Hill last week, and nobody could give me an answer on whether or not they're considering what would be considered essentially a patch so that they can keep negotiations going, because at this point, it feels like the sides are just so far apart. It's hard to glean any details on whether or not they're talking to each other or just past each other at this point.
Well, we talked to any number of lawmakers on the program last week, including a number of Republican senators, Cornyn, Cruz, Budd. They were all just NO on demasking. That was a deal breaker. And based on what we've heard from Hakeem Jeffries and Chuck Schumer, that's a deal breaker for them without. So we either shut down on Friday night or there's going to be a CR of some sort. John Thune has suggested he'd be open to a full year, bringing us back to the Cromnibus in 2014. Is that possible?
I mean, it could be, considering that the most prominent Republican in the Senate is saying that maybe that could be an option on the table. But at this point, Joe, when we're looking at the 10 demands that Democrats have laid out for Republicans, a lot of them, as you're alluding to, are non-starters for the party. And really, when we talked about the last government shutdown, we spoke a lot about what the pressure points were going to be. And at this point, Democrats are really holding firm that they think they have a winning agenda when it comes to potential curbs on ICE. But Republicans will tell you that this potential shutdown of just DHS, of course, we're only talking about this one department, isn't going to have any intended impacts when it comes to ICE, which did receive a huge amount of money under the One Big Beautiful Bill to the tune of $75 billion that they can use over the next 4 years. So instead, we're going to be talking about impacts to other agencies like FEMA, like TSA, though there has been a lot of concern about TSA, and we know that can impact lines at the airports. It was pointed out that it's really the FAA that controls the air traffic controllers, and they were already funded because the Department of Transportation got their full fiscal year funding.
Important distinction, Tyler. It's also important to note that lawmakers today in Washington are getting their first look at the unredacted Epstein files. They have to go to the Department of Justice. Apparently, a room has been set up. No electronic devices are allowed. And so we may be hearing from Ro Khanna, Tom Epstein, and others who were pushing for these files to be released. They're, I guess, going to have a briefing when they emerge later. But this is bringing some major ripple effects overseas as Keir Starmer fights for his political life. We just came up on the terminal with news that Starmer's cabinet members are voicing their support for the Prime Minister. But listen to Nigel Farage, the Reform UK leader, Member of Parliament.
The Scottish leader, Anna Sarwar, has called on him to go. The cabinet are coming out one by one being loyal, because none of them want to appear to be the person that wields the knife. And he has to meet the backbench Labour Party at 6 p.m. this evening, where I expect the conversation will be of a rather franker nature. He won't be there for long. He'll be gone and replaced by somebody undoubtedly far worse.
Okay, so we should note here that Starmer's name does not appear in the Epstein files, even as many members of this administration find their names with no wrongdoing alleged. Starmer is guilty of hiring people in the files?
Yeah, so I think you framed it really well by saying this has had ripple effects in the last few days as more files came to light. So this is over the hiring of the former UK ambassador to the US, Peter Mendelsohn. We saw 2 top aides to Starmer resign over the weekend, one of them taking full responsibility for recommending Mendelsohn to that top post. Now, of course, his name was in the files, and once that had come out late last year, Starmer did dismiss him as the ambassador in September. But now it's really started to take this renewed life of its own in recent days amid this flurry of resignations, as some are now calling for Starmer to step down because he was the one that actually made that appointment. Now, Starmer, we have a new headline on the terminal. Every member of the cabinet has lined up against him, sort of buying him a little bit more time so that he can explain the decision a little bit more fully. He has vowed to release additional information, but it's been just a really stark morning for the UK Prime Minister as these calls really ramped up. And to your point, sort of a split screen, as here in Washington, lawmakers are trying to glean additional details while President Trump has told the US that they should just move on from the Epstein files.
2 different sides of the ocean on this one, Tyler. Thank you. Bloomberg's Tyler Kendall with us in our Washington bureau. As we try to keep tabs on what's happening as well with Iran, the president hasn't said anything about this today, coming off a weekend that some had thought might include military strikes. And of course, that's following a meeting on Friday in Oman as nuclear talks continue between our 2 nations. President Trump speaking here a bit earlier this month. This is the 6th of February at the on Air Force One. Let's listen.
Iran looks like it wants to make a deal very badly. We have to see what that deal is. But I think Iran looks like they want to make a deal very badly, as they should. Last time they decided maybe not to do it, but I think they probably feel differently. We'll see what the deal is. It'll be different than last time. And we have a big armada. We have a big fleet heading in that direction. We'll be there pretty soon.
That big fleet, of course, has been there for some time, including the carrier strike group led by the USS Lincoln. Natasha Hall is with us to talk this out and get a sense of maybe what we should be looking for. Associate Fellow at Chatham House. Natasha, it's great to have you back on Bloomberg TV and radio. Are you surprised there was no military action over the weekend?
Thanks for having me, Joe. I mean, I wasn't necessarily surprised, but I don't think it's off the table either. We know that President Trump is meeting with Benjamin Netanyahu, the Prime Minister of Israel, on Wednesday, possibly, I would think, to mainly discuss Iran and potential strikes on Iran in the days leading up. So I don't think we're out of the dark yet at all. Of course, 8 months ago, when we were in the midst of U.S.-Iranian negotiations, we did see those surprise attacks on Iran's nuclear program in the midst of those negotiations. But again, it doesn't have to look the same this time around.
Of course. And I guess we should focus then on the talks that are taking place in the meantime. We had a change of venue last week and an ask by Iran that we isolate talks to the nuclear program. Is that something that would help to hasten a deal, or does that make you concerned because the U.S. wants to talk about the ballistic missile program and any other number of issues?
Well, it just seems like we're in Groundhog Day, unfortunately, except this isn't a rom-com. This is a really serious endeavor that involves nuclear weapons and potential regional war. We have been talking about Iran limiting or eliminating enrichment, and that has been the issue that has precluded negotiations from going further for the past several years now. And Iran seems to be intransigent on this point. And then at the same time, Israel in particular seems to have moved the goalpost, adding Iran's ballistic missile program to the negotiations framework. We saw that Trump said that he would be happy with an agreement that was limited to Iran's nuclear program. But I do suppose that the meeting, again, this Wednesday with Netanyahu will make Trump potentially change his mind and move the goalpost himself.
I'm glad that you just pointed us to that. What's going to happen at that meeting, and what is Benjamin Netanyahu asking for?
Well, Netanyahu is asking for a lot. Again, I said Iran is going to be a major player in these talks. Of course, Gaza is also going to be part of the negotiations and the discussions. But it does seem that Israel wants to see real constraints and limits on Iran's ballistic program. In the meantime, those in the region had always been worried about this program in Iran, even more so than the nuclear program, but had been told by previous administrations that they needed to essentially look to diplomatic negotiations with Iran over military warfare to deal with this issue. And of course, the Trump administration has been quite different. And so they've had to change tone and really negotiate with the United States and Israel on these points. But I do suspect that Iran will say that their ballistic weapons program is off the table completely, entirely, as it had been with the JCPOA earlier, as well as Iran's proxy network throughout the region, and who knows what else. I mean, at this point, we've also seen thousands of protesters killed in Iran, and that is apparently on the table as well. So it just seems like the negotiations framework is broadening at an alarming level at a time when we really need to see some movement on enrichment in particular.
Well, when you refer to an alarming level, that doesn't sound great. We know that Benjamin Netanyahu is in one of the president's ears, but he's got any number of other allies in the region in his other ear. When you consider Saudi Arabia, Qatar, UAE, what are they saying?
Well, we know that Iran actually just recently threatened to hit the King Fahd industrial port. Now, as your audience members might know, this serves for around 20% of Saudi's trade and transit. So this would significantly affect oil markets, global trade. And they've made similar threats to other entities sort of throughout the region. And so I think, the pulse in the region is very high right now. They're extremely nervous. And this is why, of course, for many reasons, the U.S. has brought in this armada into the region to protect all of these facilities throughout, both in terms of, economic issues and also military issues as well. But I think that they are in high alert mode. They would probably like for this to dial down a bit. And they're probably worried that Israel is continuing to move forward, sort of regardless if there are any concessions made during this negotiations process with Iran.
Interesting. I have to ask you about Gaza. I'm assuming this is on the agenda when Benjamin Netanyahu arrives, which then invokes this idea of the Board of Peace and exactly where we are on the next stage or next phase of this ceasefire agreement. Natasha, will there be news this week?
That sort of remains to be seen. We've seen a lot of rhetoric in terms of the Board of Peace, in terms of the launching of so-called Phase 2 of the 20-point peace plan. But we haven't really seen reality change for Palestinians on the ground. We've seen all of the hostages, both alive and dead, returned, but we haven't seen the withdrawal of Israeli forces in any substantial way. We haven't seen the scale up of humanitarian aid that was promised. So the situation remains extremely dire for most Palestinians on the ground. And at the same time, we've seen a lot of U.S. allies refusing to join the Board of Peace, which is essentially this entity that Trump created in which he is the chairman for life and has full power over. So it's not moving in a positive direction, despite a lot of the rhetoric, despite a lot of the glossy presentations that we saw in Davos from Jared Kushner, looking at this sort of AI-inspired Dubai-style, sort of territory within Gaza. And the reality on the ground is just so separated from that it's hard to be optimistic about this moving forward, unless there are really serious discussions between Trump and Netanyahu on Wednesday. But I suspect that Iran will be the predominant player in those discussions.
Really interesting. Natasha, it's great to have you back. Thank you so much for setting our direction on what could be a really important week on both of these stories. Natasha Hall at Chatham House, that meeting again Wednesday, and we'll have full coverage here, as you would expect, on Balance of Power on Bloomberg TV and radio. Also, full coverage this week of what could be another partial government shutdown. We're going to turn to that next. The Department of Homeland Security is set to go without money at the end of the day on Friday, midnight, unless, of course, lawmakers can craft a deal or find some sort of agreement on restrictions surrounding ICE, if not the actual leadership at the Department of Homeland Security. We're going to get into this with our political panel next. Rick Davis and G.D. Shanzano with us on the Monday edition of Balance of Power, only on Bloomberg TV and radio.
121 on Wall Street. We do check markets all day long here at Bloomberg. Most stocks higher now, with the S&P 500 index advancing 29 points, up 0.4% as investors gear up for a busy week of economic readings. We've got the jobs report, the delayed jobs report Wednesday morning. The Dow trading lower now by 57 points, down 0.1%, had been higher for part of the session today. Any advance will be another record on the Dow, but right now down 56, down 0.1%, 50,058 on the Dow. NASDAQ up 0.8%, with Russell 2000 index climbing higher by 0.5%. The VIX just above 17, the 10-year 4.20%. Gold up 1.7% at 5,055. Silver up almost 6%, 82.46 the ounce. West Texas Intermediate crude up 1.6%, 64.59 a barrel, and Bitcoin down 0.6%, 70,219 right now on Bitcoin. A headline off the Bloomberg Professional Service: Alphabet set to raise $20 billion from its U.S. dollar bond offering, exceeding earlier expectations for a $15 billion deal. It comes amid booming investor demand for artificial intelligence-linked debt, with the offering attracting more than 100 billion of orders at its peak. In terms of Alphabet shares, they're up now by 0.6%. Recapping, S&P up 33, up 0.5. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. And back we go to Washington. Balance of Power continues now. Your host, once again, here he is, Joe Matthew.
All right, Charlie, thank you so much. Charlie Pellet with us every day here on Balance of Power. We'll have more on the markets coming up in about 20 minutes' time as we count down to two major events this week. You know about the one on Friday, the potential partial government shutdown, the shutdown of Homeland Security. That's when DHS runs out of money again. Just like it was going to a week ago, there was a 2-week continuing resolution to buy time to negotiate new restrictions around ICE. Those requests that Democrats have made have landed with a thud, and it looks like there may be no agreement before Friday. So we either get another continuing resolution or DHS shuts down. The one that you might not know about is that we are only 1 day away, counting down 1 day to the return of Bloomberg's Kayleigh Lines at this desk. Yes, 6 months later. And we have missed her greatly. I can't wait to sit here tomorrow with Kayleigh and tell the story from Washington as we do every day. Not only on this program, but the late edition of Balance of Power, which starts at 5 p.m. Eastern. Tomorrow's a big day in the nation's capital. Kayleigh's back. As we assembled our political panel for their take on both, I'm pretty sure I know how they feel about Kayleigh. But getting our heads around what's going to happen this week on Capitol Hill could take some work. Even the people we trust the most with the shiniest and clearest crystal balls are all saying, this looks weird this time. Talked to Nathan Dean at Bloomberg Intelligence. They're not running odds on this. And it's very difficult to see the way forward here. We'll see if Bloomberg Politics contributors Rick Davis and Jeannie Shanzano think otherwise. Jeannie is our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. Rick is our Republican strategist and partner at Stone Court Capital. Rick, does DHS shut down Friday night?
You know, the rule I always use is who wants a shutdown, right? Does the majority want to shut down? Republicans? And if so, that's highly likely. If the Democrats want to shut down, but in this case, both parties seem to want to shut down. And so my sense is you might have a shutdown at just DHS and only some agencies within DHS. It's kind of like a drive-by shooting for TSA agents, right? I mean, like, they haven't done anything wrong, and they're showing up for work when they weren't getting paid for 45 days during the last shutdown. Yeah. But they're the only ones likely to really be impacted along the sidelines. So at the end of the day, I mean, Democrats, you know, they're making a calculation that people blame Republicans for shutdowns, and they'd be more right than wrong over the years. But Republicans have an attitude that the only way to negotiate anything on ICE reforms is going to be to play hardball. And so my guess is this is going to be a messier one than usual.
Boy, that's not good. Jeannie, the TSA just gets no respect, right? It's already got to be one of the hardest jobs to stand there and deal with all of us lined up and being jerks at the airport. Now you go without pay for the longest government shutdown in American history, and you're one of the only ones on the block this time around. Is there any way that Democrats can carve this up? I guess it doesn't matter because ICE is funded through the big, beautiful bill. So what's the point of this exercise?
I know, Joe, we're going to have to start like a thank the TSA agents as you go through because they have the toughest job. And by the way, I can't wait to see Kaylee sitting there right next to you, Joe, where she should be. So it's going to be fun. The only bright spot in D.C. this week. You know, I was listening very carefully to Hakeem Jeffries over the weekend, and I agree with Rick. They're on both sides, and just you go to Hakeem Jeffries, and he said very, very clearly, we put out our demands. There are no negotiations going on at this point. This was yesterday. Donald Trump, who would have to be involved to get this over the line, doesn't seem to be involved. And he said it is going to be Republicans who have decided that they want to shut down this department because they are unwilling to require ICE agents to follow the rules of the Fourth Amendment and the rules that all other security agencies and police forces in the country follow. And so Democrats feel very strongly that it is going to be Republicans shutting down, as Rick said. And I would suspect on the other side, as we keep hearing, they are not in a mood to negotiate on most of these 10 points. So another week, another shutdown potentially, Joe Matthew, coming on Friday.
Jeez. I mean, is there any way that the White House can help by redirecting funds? Or I don't know if there's any kind of maybe there's a year-long CR for DHS. Rick, is there any way to do this where Democrats feel like they made a point, but we don't defund the TSA and FEMA and Coast Guard the rest of the year?
Yeah, I think that like all of these, you get to this point of, you know, diminishing returns, right? And you saw that just take a long time in the last shutdown. And so how long is this going to be an issue? And how much does the public really understand about it? I mean, the advantage the Democrats have is because, you know, these issues with Minneapolis were on the front page of every newspaper for a week or more. And it's been hurting the administration. The president had to send, you know, his representative, his border czar Homan there to clean things up. I mean, it was a total mess for Republicans. Now, you know, we're spending our time talking about Bad Bunny. I mean, all of a sudden, Minneapolis isn't on the front page of every newspaper in America, and yet the Democrats continue to believe that, you know, that the public outrage related to it and other things happening in their own communities of L.A. and Chicago and other places around the country is enough to empower them to hold this funding up. And Republicans are kind of making a gamble that you know the skies are clearing and they're not going to get punished by this. Well, all of this goes into the cauldron of 2026 midterm elections. And I must admit, I mean, unless Republicans are talking about the economy, they're off message and they need to get back on it. So if I were them, I'd be in the group saying, let's cut a deal, let's get this over with, and let's start talking about affordability.
Really interesting, Jeannie. We could argue, by the way, that we would not be talking about Bad Bunny if it were not for the ICE situation. Remembering the stand that he made at the Grammys, that was a big moment here. A lot of folks thought he might go there last night, but he did not. When you back away from this debate on DHS funding and consider the politics surrounding the halftime show in the Super Bowl, the angry post that President Trump made after watching it, how does that inform outcomes here in Washington?
It's such an important question because so much of what has happened in this debate has been driven by what's happening on the ground quite unexpectedly. So, you know, 2 weeks prior to when the government was going to shut down, or say a week prior, we all thought the government was going to be funded and everybody in Washington would go home and work on the midterm. And then the horrific killings of the two residents of Minneapolis in terms of Freddie and Good occurred and changed the entire conversation. So the Super Bowl is another example of that. The Grammys are another example of that. Certainly when Bad Bunny handed his Grammy Award over to a child that looked like but was not the 5-year-old boy from Minneapolis who had been picked up by ICE. That created another in a long line of memories for people as to what has been driving so much of the concern here. And I think as you look at the Democrats' 10 demands, what you see is this has a lot less to do with immigration and border policy and a lot more to do with federalized troops and forces on the ground who are violating basic American rights in the Fourth Amendment in particular. And that is something that people left, right, and center believe is an overreach. And so it's part and parcel of a story that Democrats want to tell about corruption, costs, and chaos on the ground that they think is going to help them with 26. And if the president doesn't roll back some of what he keeps putting online, including the video last week about President Obama and the First Lady, that just sort of feeds this entire machine. So I think these events keep feeding what is going to be an impasse here over DHS funding.
Boy, Rick says that Republicans don't want to talk about anything or shouldn't than affordability, so this is not going to help. You know, who else who's being talked about on Capitol Hill today is Jeffrey Epstein and Ghislaine Maxwell, who, by the way, had a deposition today, a virtual deposition before the House Oversight Committee. It was over in about a minute because she didn't answer any questions. She pleaded the fifth. Interesting, though, indicated that if President Trump ended her prison sentence, she'd be happy to testify. But he, or Bill Clinton for that matter, never did anything wrong in their relationships with Epstein. I mention this, Rick, because lawmakers today are able to go over to the Department of Justice and enter a special room that's been set up to review the unredacted Epstein files. And, of course, Tom Massey and Ro Khanna are at the front of the line. You can't take pictures, no electronic devices, as I mentioned, but they're going to walk out and do a news conference after, and I'm guessing they're going to be naming names and talking about things that we haven't heard yet. How important is this development today? How much of a distraction is that going to be to keeping the government running?
You know, I think it's just overall a distraction. It's a distraction to the midterm messaging, really for both parties. It's a distraction to getting a deal done. I mean, how many members are going to be over there looking at the salacious, reports on the Epstein files all by themselves, come out, and then the first report asks them, hey, what'd you see? And they have to sit there and figure out, what am I allowed to tell these people? What am I, going to get upset? A bunch of the victims. I mean, like if I were the chief of staff of a member on Capitol Hill, I said, do not go anywhere near that reading room. It's a trap. You're going to have to answer for it. But like, again, tomorrow, we're going to have all kinds of shenanigans happening over there. People wanting to know what they read. Today, we're talking about, Maxwell, who, is serving a 20-year sentence. What's the point? She comes to Capitol Hill and takes the Fifth Amendment. Shocker.
Shocker. And there could be some actual shockers. If Rick is right, based on what we hear, Khanna and Massey are going to be at the cameras and microphones the minute they walk out of there. Rick Davis and Jeannie Shanzano, Bloomberg Politics contributors, thank you for the insights in a great panel. We'll ask Patrick McHenry about this. It's interesting what Rick said. No chief of staff would let his member go in that room, would he? This is Bloomberg.
140 on Wall Street. We do check markets all day long here at Bloomberg with the Dow, the S&P, NASDAQ solidly in the green. Dow has been bouncing around between gains and losses, but right now trading at a record. Any advance today on the Dow will be a new high, up 15 now, up under 0.1%. Little change, but Dow Industrial is now at 50,130. The S&P 500 index up 37, 69. That is a gain of 0.5%. We've got NASDAQ up 225 on NASDAQ, a gain right now of 1%. The Bloomberg Mag 7 index up 1.3%. The VIX just above 17 with a 10-year currently yielding 4.20% and the 2-year 3.48%. Gold at $5,000.58. That is a gain of 1.9%. Silver up 6.3%, 82.76 on silver, and West Texas Intermediate crude oil advancing 1.4%, 64.44 barrel. Bitcoin down 0.6%, 70,277 on Bitcoin. Alphabet set to raise $20 billion from its U.S. dollar bond offering, exceeding earlier expectations for a $15 billion deal. Alphabet shares, meanwhile, are advancing, part of a broader tech advance, up now by 0.6%. And Cuba is at risk of losing vital airline service as it prepares to run out of aviation fuel. A1 jet fuel will not be available at Jose Marti International Airport beginning tomorrow through March 11th among U.S.-based carriers that do service Cuba. We have got shares of both American Airlines and also shares of Delta. They are both trading lower today. Delta right now actually little changed, up under 0.1%. American down 0.8%. Balance of power continues now, and back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie Pellet sets the table for Nora Melinda. Thank you, Charlie. He'll be back with more on the markets in about 20 minutes' time as we take a deeper look under the hood just to see exactly what's happening with quite a nice rebound in tech following the severe selling that we saw last week, culminating with this massive rally on Friday and a lot of questions over the weekend about what was going to happen today. Nora is our markets correspondent live from World Headquarters in New York. It's like it never happened almost, Nora, although I see the NASDAQ composite is still below the 50. We're charging higher.
Yeah, certainly charging higher. We're seeing the NASDAQ 100 bouncing for a second straight session. You're really seeing a reversal from what people were doing last week, where we saw it was a bit chaotic. It was a bit volatile when we think about all of the outflows that we saw from a lot of those software stocks. I'm keeping an eye on AppLovin, Palantir, Microsoft, all of these stocks charging higher. Essentially, you're seeing people in the market out here, they're trying to not only focus on the software stocks, but really broadening out a lot of those gains. And when you see gains in Microsoft, which we know tends to be a bellwether in the space, it really shows you that it's not just isolated to some of these smaller, the software names. It's really Microsoft pushing a lot of these other names higher as well. So really seeing a broad-based rally as it pertains to tech, definitely a different story than what we saw most of last week.
Yeah, even Salesforce is catching a bid here, Nora. Are the analysts talking? Because, it's not like we're moving on earnings on a Monday here. Is this just some bottom fishing that's going on after last week?
Yeah, from a lot of my sources, they're telling me that people are buying the dip. They're really looking for any areas where they can avoid risk and really just trying to assess the landscape to see where opportunities lie. But, you do have some people still a bit split. We did see that Microsoft was hit with its second downgrade in less than a week, that coming from Melius Research. So even as though there still maintains and continues to be AI optimism on a broader scale, you are still seeing people punching holes in the idea of an optimistic, forward-looking event.
There's always somebody here to punch holes in things, Nora. But Bitcoin's back above 70,000, so there does seem to just be a broader sentiment here to move things higher following last week. Or do we think that this was the big washout?
You did see last week where we saw Bitcoin really falling for some historic lows, and you're really seeing it trying to recoup a lot of its losses, as you mentioned, now hanging around that 70,000 handle. But when we think about Bitcoin more broadly, it's really speculative. So the fact that you're seeing it alongside tech rallying today, it really just shows you that traders are out in the market and they're really looking for opportunities in a way that they maybe were a little bit apprehensive about just last week.
We're through the bulk of the high-tech earnings, right? I see McDonald's, Coke, Cisco, DraftKings this week. Anything have your attention, or are we through the bumpy stuff?
Yeah, I mean, we saw a lot of bumpy stuff, that's for sure. But I mean, looking ahead, I've just really got my eyes on a lot of the different companies that are going to be reporting. You mentioned McDonald's. I mean, so when we're thinking about the consumer, it's going to be really interesting to get a read on how the consumer is doing in terms of affordability. And speaking of the consumer, we're also going to be getting a lot of data out this week. We're going to get that jobs report finally coming through on Wednesday. We're going to get CPI, a read on inflation as well, retail sales. So there's a lot to digest this week in addition to the earnings that still continue to come through, Joe.
Yeah. All right. Let's keep talking about it. Nora, thank you so much. Nora Melinda live in New York as we watch the markets get closer to where they were before last week's sell-off. We're almost there on the NASDAQ, up 1%. Up 234 points, 23,264, and the S&P 500 is up about 0.5% right now, 69.70. Thanks for being with us here on Balance of Power. As we turn back to Washington, the prospect of a DHS shutdown, and of course, which halftime show you watched last night. Nothing has changed. Well, maybe that last part, but nothing really has changed in the story since the last time we spoke with Patrick McHenry, and that doesn't mean he isn't hearing things that I'm not. Bloomberg Politics contributor, former Republican congressman, former Speaker Pro Tem with us here in studio, former chair of the House Financial Services Committee. Great to see you, sir.
Always great to be with you.
You improved all of our Sunday morning. I want to just let you know, and it's nice to see you back here. So let's park the halftime show for a minute. This is going to be no deal this week, is there?
No. Look, when we had this agreement for the Senate for a 2-week continuing resolution for Department of Homeland Security, we talked about it here. There was obviously a deal that you had in form in order to have such a tight timeline for action on the next appropriations bill. It takes 3 or 4 days for the Senate to do anything, and that is if you have agreement. And if there's disagreement, it takes longer. So I thought then that there was a deal that we did not yet see, but it's evident at the end of last week that there was no deal. Coming into this week, they would have to have an agreement within the next 48 hours in the Senate for some real deal to actually be passed into law in time to keep the Department of Homeland Security open. That's not going to happen. It's apparent that will not happen. So then the question is for the Democratic minority in the Senate, do they permit a continuing resolution to keep the Department of Homeland Security open, or do they have a shutdown?
Yes.
And I think that's where the politics shift. If you have a shutdown of the Department of Homeland Security, that would then advantage the administration and President Trump in what has been a pretty rocky month that they've had.
So CR is the answer then, eventually. And I guess the question becomes duration, and I can't get an answer from anybody on do we do another 2 week or just say, all right, rip off the Band-Aid, full year, check back in 2027.
I think a full year is less likely because of the politics of the left and what the left is saying to the leaders of the Democratic Party. So then it's a question of to what end? If it's a shorter duration and there is no deal evident, why do that? Why extend the pain? Why keep bringing this issue up if you can't come up with some legislative win to advantage one party or the other? So we're all watching, and we're all going to watch in live time of what that number is. It'll be something odd. It's not going to be some number built off of science. But I think the best outcome for both sides would be a long-term continuing resolution for the Department of Homeland Security, and then fight it out on the campaign trail.
I'm hearing chatter that Democrats might be impressed by a deal that does not include their demands. Granted, body cams were already out there per order of Kristi Noem, but in fact a change at the top of the agency. We're giving you body cams and we're giving you Secretary Noem. Do we have a deal? Have you heard anything like that?
Oh, that's a nice rumor, but I don't think President Trump is in that type of deal making. That is not. And if you've listened to his response, yes, he sent Holman in to take over the Minneapolis situation, which in traditional Washington parlance is the cabinet secretary getting demoted and some special operator coming in to fix the problem. It's clear that's what it was, but the president has not talked in those terms, and the politics haven't evolved in those terms. So I don't think the president is likely to sacrifice a cabinet secretary. And then that cabinet secretary would have to be filled. That goes through the whole nominating process, which would be a huge challenge to fill that secretary position.
There's nothing else that Republicans can offer, right?
No. And so this is a question of whether or not Democrats see the political advantage of continuing to continue the agency funding and then on the campaign trail to let this go, or do they insist on a shutdown, at which point they are potentially giving President Trump that upper hand when the Democrats are shutting down Homeland Security. Just the name of the agency is enough that you should see the bad politics of it.
It's fascinating. I'm just looking down at the calendar here. It's 2 weeks from tomorrow, State of the Union.
February 24th. Big night.
Is that an inflection point in this debate? Do they need to get something done by then? Or does it advantage the president to say Democrats are holding up the Department of Homeland Security when he's in the speaker's rostrum?
And thus why a long-term continuing resolution is to the Democratic Party's favor. And President Trump will use that bully pulpit that every president has in the State of the Union to drive his message. That is the opportunity for the president, if nothing happens before then, to turn this debate on immigration back to his advantage. It has been a political winner for him since he came down that golden escalator a decade ago. Immigration has been his biggest winning political, I would say, not policy, but the biggest, boldest sort of statement of who he is built around immigration. He needs to get the advantage back. He's got to get the groove back, and in order to get on with the midterm elections and hopefully bring a little more support for Republicans that we're currently seeing in polls.
Does Mike Johnson need to worry about decorum this year, or we assume that this is the octagon every year?
I think when Nancy Pelosi ripped up President Trump's speech,
that was it.
I think we've got full-blown no decorum in the House of Representatives.
Where were you in the chamber for your last State of the Union? Were you sitting like right in front of Marjorie Taylor Greene? I mean, what was it like to be in there with people
it's
yelling?
Like this.
Yeah, I bet.
Hide yourself.
I can't imagine.
Oh, I've seen everything. I've seen everything, and nothing would surprise me about this State of the Union. And now you see the progressive activists left when they're winning primaries, like in New Jersey, special election in New Jersey a couple weeks ago. You see the energy of the Democratic Party is in those progressive, loud, outspoken folks like Jasmine Crockett and the far left of the Democratic Party. So I think you're going to see some shenanigans here.
Oh, my God. Yeah, I don't doubt that at all. And I guess it's made for TV. We'll be there one way or the other. I'll be curious to hear how the president attacks this whole issue and exactly what the response will be. Did you watch Kid Rock last night?
So we can't even have one halftime show.
No, what do you make of it? But that was the microcosm last night, wasn't it? You saw the president's reaction. By the way, I'm sure all your friends at Mar-a-Lago were texting you, Bad Bunny's on the big screen. They had him on the big screen. It wasn't Kid Rock. We saw the videos last evening. What does that tell us about our politics and culture in the country, where actually Bad Bunny, love him or hate him, didn't say anything about ICE, or it was actually a pretty inclusive message. And the president had that very critical post waiting the second he was done.
Well, so the halftime show, let's just go back in time.
Sure.
This has always been a standout performance from a standout global star. And even a special moment for whatever the biggest act on the planet is at that moment. I think we saw that last night with Bad Bunny. I think you saw the NFL seeking a new demographic here in the United States. You saw this emphasis from Bad Bunny about Americans, right? The emphasis there. So there's a big statement there. But you also had a big statement by the president that this is a divided moment for America, and we need to think of it as a divided moment. So we'll see how the politics shake out on this. This is more representative of the divide than in creating the divide.
Sure.
And our politics have become far more tribal now than in generations.
Well, yeah, it's the definition of tribal, I guess, when you have several halftime shows to pick from. But if you're a congressman from North Carolina and you just saw this president elected with the help of young Latino men, and we've got a midterm election where we're going to keep driving here, are you worried that the politics have changed already in a year?
You look for omens, and the bad omens that Republicans saw last was a special election in Texas that swung 31 points against my party.
Yeah.
It is a message that you have to focus in on what the American people care about. And if you're listening to the American people, they do want safety in their communities. They do want criminals deported, criminal illegals deported. Yes, they want border security. Yes, but they don't want to see activists gunned down in the streets and watch it over and over on video. So this is a moment where the president needs to get back to immigration in the way that he was winning on in the last election. And he needs to get back to an economic message and delivering on an economic policy set on affordability. Sure. Those are the driving forces of turnout for the midterm.
We know he can get along with anybody. Mamdani in the Oval. Why doesn't he have Bad Bunny come to the Oval Office? We'll hang out for the day. Wouldn't that be something? Play the tape back,
You heard
James.
it first.
You heard it first. Patrick McHenry. I think I know which one you were watching last evening. Kid Rock couldn't get the lip sync to work. I'm Joe Matthew in Washington. Bloomberg Politics contributor Patrick McHenry. Bloomberg Business Week Daily is next.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, across Bloomberg platforms. Welcome to Bloomberg Business Week Daily. I'm Carol Masser, along with Tim Stenivek, live here at Bloomberg headquarters in New York City. We had actually stocks up across the board, and we've got kind of, though, if you look at the S&P 500, Tim, an even split of gainers and decliners.
Yeah, we're going to have more from Charlie Pellet in just a minute. Tech stocks rallying today. The NASDAQ composite up close to 1%. We'll get a full update in just a few minutes.
Yeah, some definite outperformance there. We'll get into that. Also this week, keep in mind we get key readings on both the U.S. labor and inflation scene. So we're going to get into that in just a moment. Also this hour, we are pulling out our crystal balls. Yes, we have one. No, we don't. But we're going to look into the future of U.S. Treasuries and the Fed. There's a couple of stories among our most read on the Bloomberg, which is why we are doing this. We'll get to that in a moment.
Also, Stuart Kaiser is stopping by. He's head of U.S. equity trading strategy over at Citi. He's going to talk a little bit about what we're looking at as the market's tug of war.
Yeah, looking forward to that. Also, we have been dying to catch up with our Madison Muller. She covers the GLP-1 space. There's a lot going on. She's going to weigh in on Novo's lawsuit against Hims and Hers Health, which was one of the folks that you could see in the Super Bowl ads. There was a lot of GLP-1 related ads, along with a lot of ads. Where else were there a lot of ads?
AI.
That was the other one.
That's a little tease for what's going on.
You know what wasn't so prominent front and center? Crypto.
There was a Coinbase ad.
Un.
Yeah, there was a Coinbase ad. Okay. Also, Amy Rubenstein is going to be joining us. Opportunities in distressed real estate. She's a CEO over at Clear Investment Group. She's coming up in just a few minutes.
All right, folks, let's get to it. Let's get a check on the trading scene. Here is Charlie Pellet. Hey, Charlie.
Thank you very much. Well, hello there, and happy post-Super Bowl Monday. We've got the Dow fluctuating between gains and losses. A choppy session, at least on the Dow. Higher right now, we begin there, looking at a gain of 4 points. Any advance today will be another record on the Dow. Right now, trading at 50,120. S&P up 35, gain there of 0.5%. We've got NASDAQ up right now by 1%. The NASDAQ 100 index up 0.8%. The Russell 2000 index of small cap shares up 0.7%. All of this with the VIX holding just above 17. The 10-year 4.20% with the 2-year 3.48%. Spot gold up $98 the ounce, 5,063. Spot gold now up by 2%. Silver doing a lot better, up 6.7%. 83.06 on silver. West Texas Intermediate crude up 1.4%. 64.45 the barrel on WTI. And Bitcoin down 0.6%. 70,271 on Bitcoin. Converse employees have been instructed to work from home this week as the Nike-owned brand makes what's described as strategic changes in order to recapture sales. Novo Nordisk suing Hims and Hers Health for making knockoffs of its obesity medicines, even as Hims scraps plans to sell a copycat version of the Wegovy pill. Madison Muller will have a whole lot more on that topic coming up right here on Bloomberg Business Week Daily. As for the shares of those two companies, right now we do have Novo Nordisk trading higher by 3.8%. Hims, though, Hims and Hers Health hit hard today, down by 17.5%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I can't help but feel it's like that, hey, stay home. We're going to have some announcement has replaced the, hey, can I see you first thing Monday morning?
How do you get all your stuff back?
I'm not making, I shouldn't, connect the dots here, but it just feels like we are seeing that more frequently.
There's an economic angle to that.
There is, and that's where we want to go right now. Thank you very much for that, Tim. Hey, let's get to one of the most read stories on the Bloomberg today. Former Fed governor and President Trump's pick to be the next Fed chair. We're talking about Kevin Warsh. Floated plenty of ideas for how he would run the Federal Reserve during his campaign for the job as chair. For Wall Street, few are as cryptic or potentially consequential as his call, Tim, for a new accord with the Treasury Department.
Yeah, with what you need to know and why the U.S. bond market may find it unsettling, let's bring in Bloomberg Economics U.S. and Canada economist StartupPal. He joins us here in the studio. So Kevin Warsh has voiced support for overhauling the relationship between the two institutions, a new version of agreement that goes back, all the way to 1951. We've had guests on who agree that perhaps the Fed has overreached its actions. Can you explain a bit these fears that investors have?
The primary fear that investors have is that monetary policy is going to end up completely playing second fiddle to fiscal policy, and the Fed itself is going to become an institution that just monetizes the national debt, sparking an inflation spiral. That's really the fear. And if we...
How does that logistically work? Explain that for those Perhaps
Treasury,
Tim and me.
the Treasury auctions, the Treasury and the Congress run massive deficits. They finance that deficit with bond issuance. Those bonds are auctioned into the private market, and they know that they can rely on the Fed to just continually and perpetually soak up those bonds from the private market, thereby monetizing the debt. The Fed is printing money, putting it into banks' balance sheet as it pulls bonds out of the private market to just hold them in custody on its balance sheet. That's the major fear, right? By buying up all those bonds in perpetuity and putting reserves and just cash into the real economy, the bank is monetizing the debt and thereby stokes inflation. That's the big fear.
So you have a constant buyer, essentially, for treasuries. And so if you have someone creating demand for U.S. treasuries, it brings down rates, which makes servicing the debt cheaper.
Well, it makes servicing the debt cheaper as long as you don't actually get that inflation.
Right.
The Fed can only do so much to keep rates low through its bond buying. And if you end up attempting to monetize the debt too much, inflation expectations rise, and so do long-term interest rates, thereby making the cost of servicing the debt
more expensive.
More expensive. So there's been this separation in general between the Fed as the monetary policy agent and the Treasury, the fiscal agent, and the two are considered to be independent of one another. The Fed in particular has been politically independent of the Treasury Department, and that typically delivers low and steady inflation and better economic outcomes. Any sort of questioning of that relationship brings into question that political independence, brings into question inflation expectations.
But central banks have different roles in different countries, and the U.S. Central Bank has this dual mandate. Are you saying that there are concerns that dual mandate will not come under attack, but it won't necessarily be viewed as those being the priorities of the Fed?
It's not so much a question of the dual mandate coming into question. It's really just whether the Fed is able to pursue any mandate separate from political involvement, separate from electoral politics. And as it has pursued its dual mandate, it has done so typically rather politically independently. And so we've had persistently low inflation up until COVID. And the big question around COVID is, Treasury issued a ton of bonds so that they could issue checks directly to people.
Right.
The Fed monetized it during massive quantitative easing. That if we were to have that sort of an arrangement, that would be very troubling.
So,
but we also know, I should say, we also know that, yes, there's this relationship that's being reconsidered because the Fed has previously overreached. But we also know that Kevin Warsh, the one thing that he has been very consistent about through time is that he does want the Fed to have a smaller balance sheet.
Well, that's what
so you can't do both.
That's what I don't understand. I thought that was his driving force. So I was trying to kind of connect the dots between that. I thought he wanted a smaller balance sheet. And we've had a fair amount of guests come on from, I think, from the business community as well as those who follow the Fed or the economy saying, yeah, maybe the Fed has outreach. So there are those who agree. So what is he doing?
So you have a bunch of questions regarding political overreach on one hand, the Fed considering things like climate policy and pressuring banks into lending less to energy companies. That could be considered politicization of the Fed and overreach by the monetary policy agent. On the other hand, you have Kevin Warsh's view that as a market participant, the Fed should be shrinking its balance sheet. It should not be monetizing the debt. When we have any sort of reconsideration of who plays what role in American society, the Fed or the Treasury, I think that Kevin Warsh and Scott Bessent probably agree that the Fed should stay out of concerns related to climate policy and things of that nature. And I think they lean towards the Fed shrinking its balance sheet. I think that there should be less concern in markets that the Fed would be around to just persistently and perpetually monetize the national debt.
Unless there's a crisis or something.
We've seen it before. Yeah.
We've seen this before. But it does. So then, which one are we supposed to believe? That he wants the balance sheet to shrink, or he's thinking of reconfiguring the relationship, a new accord between the Treasury Department and the Fed?
Any sort of discussion of a new accord is a little bit curious and a little bit troubling, but I think that the one thing that's been very consistent through time has been that he wants to shrink the balance sheet. I think it's easier said than done, but I do think, and maybe this is just the optimist in me, thinking that the Fed will remain rather politically independent. It will not just be a sink for Treasury issuance, just holding those bonds inert, and that the Fed will remain politically independent.
Which he knows a little bit about, having served as a Fed governor already. Thanks for laying it out for Paul there. He is, of course, U.S. and Canada economist at Bloomberg Economics right here in studio. You know, Tim, what's interesting is this comes on a day where, and we're going to talk about this with our next guest, what Stuart just laid out, but also we had China weighing in too about, you know, not wanting their investors, their, I guess, retail investors, not to basically buy U.S. treasuries. They are advising the nation's financial institutions to rein in their holdings of U.S. government bonds due to concerns over market volatility.
Not apply to China's state holdings of U.S. treasuries. And this move, Carol, framed around diversifying market risk rather than anything to do with geopolitical maneuvering or a fundamental loss of confidence in U.S. creditworthiness.
Yeah, it makes me think about this idea and this argument that the U.S. is increasingly becoming uninvestable. But let's see what Stuart Kaiser has to say about all this. He's head of equity trading strategy over at Citi. He joins us here in studio. Stuart, good to have you here. Welcome back.
Thank you. Good to be here.
Hey, we were just talking with our Stuart Paul about Kevin Warsh's past support of a new accord between the Treasury and the Fed, and this has to do with the balance sheet, which sounds like increased cooperation. We know in the past that Kevin Warsh has wanted the Fed to shrink its balance sheet, so we're trying to make sense of what it is. And then we just talked about the Chinese regulators advising their financial institutions to rein in the holding of U.S. government bonds. Are treasuries undergoing a reboot, in your view, on the world stage when it comes to, you know, the United States being kind of a sure thing, if you will, in the financial world? And if so, what are the implications of that?
I mean, look, I don't know if there's any real alternative for a lot of these, countries to invest their reserves.
Because of the size and the liquidity, right?
Exactly.
Of the U.S., like hands down.
And look, there is a risk out there in the long end of the government bond curves, I think, but that's globally. We've seen that happen in UK gilts. We've seen that happen in German bonds. We've seen it happen in Japanese JGBs. So I don't think really concern about the impact of fiscal spending on the long end of the yield curve is unique to the U.S., nor is it something that's kind of snuck up on people. But it is a risk. And if you look at what is triggered those kind of events in other countries, it's generally been things related to fiscal policy, tax cuts, things of that nature. So it's something that's on our radar. It's probably been on our radar since about last July, when all of those 30-year bonds globally got above 3%. You know, as an equity guy, I'm going to let the bond markets tell me, you know, when and if this becomes a risk. But for now,
but the equity guys keep a watch on the bond market.
we do, but I would say if an equity guy knows when the bond auction is, you're in trouble. But big picture in this case, so for now, people seem pretty comfortable with things.
Well, speaking of we saw the volatility that we saw, the moves down, then the moves up, a week that sort of ended really close to where it started, but a lot happened in between with some big moves lower when it comes to companies like software. What is your view on where to be optimistic right now and where to stay away from?
Yeah, I mean, so we're still pretty positive U.S. equity risks in general. We've been pretty bullish on the cyclical parts of the equity market since the beginning of the year. I think if you took a little bit of a step back, though, you'd see that this quote-unquote rotation sort of out of tech and growth and into value and cyclicals actually started back in November. It's not a new phenomenon. What happened last week is the moves accelerated and it got quite volatile. And I think that impacted the way that folks manage risk. And it's also, to be honest with you, a pretty simple math question, right? You know, if you take the Mag 7 plus Broadcom and a few others, you pretty quickly get close to about 50% of S&P market cap.
Right.
So when you're selling those stocks, you have to find a home for them. And I think just the absolute size of the moves is really what concerned people last week, rather than a change to like the underlying U.S. equity outlook. I mean, U.S. GDP, according to the Fed, is tracking kind of mid 4% range. Our economic surprise index is kind of off the chart. Earnings were solid. You're expecting some good tax refunds coming up. So the sort of fundamental underpinnings of the market look pretty good. What you're going through is some indigestion after 2 years of buying tech and growth stocks. You're now kind of repositioning not whether you want to own U.S. equities, but how. And that process has been a little bumpy, to say the least.
Well, we talked, too, about the overperformance or performance of small caps last week. They were up about 2.2%, certainly outperforming the large cap indices. The other thing is, if you look at the equal weight S&P, it is easily outperforming the S&P 500, 5.5% year to date for the equal weight to just under 2% for the widely quoted S&P 500. So again, that plays into what you're saying, that we're seeing money go elsewhere. But what's to stop the money going back to big cap tech or those hyperscalers? Because it feels like the last 2 or 3 years, everyone's like, no, time to diversify. And yet, that's where the overperformance has been, or outperformance.
I mean, I think back in sort of October and November earnings season, you started to see a little bit of a change in this reaction function. Meta back then was the key one, where they announced this very large CapEx spending program, and the stock sold off.
Right.
And that was probably the first time in the last couple of years where a company had been punished for spending more on AI. And look, lo and behold, this quarter we saw that repeat with a number of companies. So,
but Meta did well, right, off of their earnings, because they're showing the ROI on this AI spend.
They are, and that's the key, right? This CapEx spending is undergoing an audit or some other form of very invasive examination. But Microsoft and Amazon were both kind of punished for more CapEx spending this quarter. So I think what you're really seeing is within the tech trade, the shift is moved kind of away from the spenders and to the beneficiaries of that spending. We like power generation and the AI data center build out as the way to express that. And then more broadly, to your point, you're also getting a little bit of a rotation out of growth into these cyclicals. So again, these things aren't necessarily negative for the market collectively, but they do cause a lot of pain in some positions that people have had in their portfolios for 24 months minimum.
Alphabet embarks on a global bond spree to fund record spending, borrowing far and wide to finance unprecedented spending plan on its AI ambitions. $20 billion, a U.S. dollar bond offering on Monday, more than $15 billion than initially expected. Is this a signal of something?
I mean, it's a signal.
Same thing you're just talking about.
It's a signal that they have a lot of spending to do. I think,
They also have a lot of money.
They do, but Amazon though looks like negative free cash flow after their announcement. So I think what folks are doing is you can generally carve out the Mag 7 and say their balance sheets are so big and strong that they can sustain the spending. They're all AA rated or better. You take a step, even a slight step down in credit rating to, let's say, an Oracle that's BBB,
right?
And that examination is a little more harsh. So I think what you're seeing from Google, frankly, is look, they're viewed as the current winner in the AI trade. Now, clearly, those winners are changing quarter to quarter. So I think folks are maybe a little more comfortable with them spending, because to your point, they have the ROI, they currently have the best AI model. If you can demonstrate acceptable return on the investment, the markets are okay with this. If it looks like it's going to be ROE destructive, then right now you're getting punished for that a little bit. And I wouldn't expect that to change as this year goes on. I mean, there's a higher bar right now for what you're going to spend this money on.
All right, great stuff. Stuart, thank you so much. Really appreciate it.
Thank you. Have a good one.
Yeah, you too. Stuart Kaiser, Head of Equity Trading Strategy over at Citi, right here in our studio.
You think the equity guy's going to come back after he may have spent half the time talking about bonds? Hopefully.
I just know everybody watches everything.
Hopefully. He's always welcome.
He is, indeed. Hey, we were talking about maybe the potential for some things to get pummeled. We are seeing shares of Hims and Hers Health tanking to the lowest since late 2024. We'll explain why when we come back.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ 100 index, Russell 2000 index, all advancing. S&P right now up 43. That is a gain of 0.6%. The Dow trading at a record. Any advance today will be a new high on the Dow. 50,158 where we stand. That is a gain right now on the Dow of 0.1%. Keeping it all in context, we got the S&P up 0.6%. NASDAQ Composite Index doing a little bit better, up 1% now. NASDAQ 100 Index up 0.9. And the Bloomberg Mag 7 Index enjoying a gain of 1.3%. The VIX just ticking below 17 now, with the 10-year at 4.19%, the 2-year 3.48%. Spot gold up $102 the ounce, up 2%, 5,066. Silver at 83.12 the ounce, up 6.8%, and an advance for crude up 1.3%. WTI 64.40 for a barrel of WTI. Bitcoin down 0.3%, 70,467 on Bitcoin. Eli Lilly has agreed to buy closely held U.S. biotech Orna Therapeutics for up to $2.4 billion in cash. Its second deal in as many days as the company expands its pipeline beyond its well-known blockbuster obesity drug Zepbound. Lilly shares down today by 0.7%. Recapping, S&P up 43 right now at 69.76. That is a gain of 0.6. The Dow at a record up by about 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, a lot of Monday morning quarterbacking when it comes to the Super Bowl. Like, we're talking about a lot of things, right?
Yeah, look.
You didn't watch all of it.
I did not watch all of it. Did you know how late that went?
I did. I watched all of it.
Yeah,
I like football.
We watched the first half.
All right. Well, anyway, Monday morning quarterback on the big game, on Big Bunny's halftime show, and yes, on the commercials. We've been talking about it in the newsroom. On that, there were several spots during the Super Bowl from the world of GLP-1 drugs, and that included one from Hims & Hers Health.
Rich people live longer. All that money doesn't just buy more stuff. It buys more time. The wealth gap is a health gap. The rich have health care that comes to them. Custom formulated peptides, specialists on call, and preventative care before they need it. They get the best of everything. So why don't you?
Yes, why don't you? That, of course, from Hims & Hers Health during the Super Bowl. Making these drugs more accessible has really amped up the competitive landscape for the makers and sellers of these drugs. We are definitely seeing that a lot.
Yeah. Just this morning, Novo Nordisk said it's suing Hims & Hers Health for making knockoffs of its obesity medicine, even as Hims scrap plans to sell a copycat version of the Wegovy pill. With a rundown on the latest headlines and sizing up the competitive landscape on GLP-1s. Our guru, Bloomberg News health reporter Madison Miller, joins us here in the studio. I just want to start with the lawsuit because I was pretty surprised last week when we got the news that they were going to do this, because I thought there was no more. It wasn't legally allowed by the FDA to compound, for companies to compound medicine anymore for, well, not any medicine, but GLP-1s, because there's no longer a shortage. Wasn't that the loophole that these companies were using?
Exactly. So it was a big, kind of a risky bet that Hims was taking, that the FDA just wouldn't do anything about it. But that is sort of what we've seen happen the last couple of years since the shortage ended. There's been really very little action from the FDA in terms of cracking down on this proliferation of compounded GLP-1 drugs. And so Hims has continued doing it. A lot of other companies have continued
So they're
doing
breaking
it.
the law by doing it.
That is the assumption, yes.
Okay.
But the problem is that the FDA really hasn't said much of anything. So it was kind of up to these companies to interpret the law themselves. So in this gray area, they've continued doing it. And that's part of the problem, is that it was a little bit unclear, at least to maybe the general public or to some people, what the FDA was really going to do. And so they've just continued to do it. Some companies have pulled back, like Roe, for example, stopped compounding after the shortages ended, and Hims has kept doing it. And so far, until now, there has been really little action either from Novo, from the FDA, and finally, I think both of them said enough is enough.
All right, so Novo files this lawsuit. All right, so I guess it's going to play out in the courts, or there's going to be negotiating, or what?
We don't really know.
Or does the FDA have to come in here and make a ruling to figure out what the real ruler law is.
Right. So Novo is suing on the grounds of patent infringement, which is something we haven't seen before. Novo and Lilly have both filed lawsuits against compounding pharmacies, telehealth companies, med spas that are selling these knockoff versions of the drugs, but they haven't gone after anyone for patent infringement yet. So this is actually the drug semaglutide, which is the active ingredient in both Ozempic and Wegovy. Novo is saying that Hims is violating that patent in the United States. So that's a big deal. That's a big escalation, and it sort of shows the more aggressive strategy that Novo is taking, because they really are under a lot of pressure right now.
Why are they under pressure and Eli Lilly's not as under much pressure, much pressure?
I mean, Novo, so...
And we're going to talk about some deal news a little later, but...
Yeah. Novo, they've had different problems. Even though the market, they're the only two players really in this market. Novo has had more difficulty because, one, their drugs are a little bit older, meaning that they do come off of patent outside of the U.S. sooner, whereas Lilly has another decade of patent life on its drugs. Novo also has had more difficulties with these compounders because it did not get a handle on this supply shortage as soon as Lilly did. So both companies' drugs were in short supply. Novo had more issues, couldn't get a handle on it. Lilly got a handle on it more quickly and was more aggressive, really right off the bat, going after these compounders. Whereas Novo they're Danish, they're a little bit less aggressive, I think, than an American pharmaceutical company, but they've had to change that recently. And then in terms of next generation drugs, their pipeline is not quite as exciting as Lilly's, and so that doesn't set them up for the future quite as well either.
I am shocked that we're already talking about maybe a move towards generics or their patents coming off. When did they start? I feel like it was just a few years ago.
Right. I mean, that's the thing. So Novo's drug Ozempic was approved, I think, in 2017, launched in 2018.
Oh, okay.
And so that's the same drug technically as Wegovy. Wegovy's just a higher dose version of that. So that was the thing. It didn't really come onto the scene. People didn't start talking about it until a couple of years ago, but really the drug's been around for a while, and so the clock has been ticking in that time.
Should we talk about the Eli Lilly deal?
Yeah, let's do that.
Okay, so this is not a non-GLP-1 deal, which kind of speaks to the idea of these companies diversifying. The company agreeing to buy the closely held U.S. biotech Orna Therapeutics up to $2.4 billion in cash. Second deal in as many days as the country looked to expand its pipeline beyond Zepbound. What does this do?
I mean, this drug, was that bound or this deal? This deal.
It kind of speaks to this idea of going beyond.
Yes.
Of going beyond this industry.
Because I kind of thought they were going to be living off this.
So did I.
For a long time.
But I guess that's why we're not running a drug company.
That's exactly why we're not. That's what we're here.
I had the same reaction as you did. I thought they got it.
They're going to tweak it. Yeah. They're going to make a pill. They're going to just kind of keep going.
Well, Lilly has learned the hard way that resting on your laurels, which is sort of the problem that Novo is facing right now, doesn't work. I mean, drug companies should always be looking toward the next big thing because patents expire, and that's the problem with the drug industry is you always have to be thinking about the next thing. Lilly is the one that brought Prozac to the market back in the 1990s. That was a massive drug, and for a while Lilly was in a similar position where it was riding high on the Prozac fortune, and then after that they really were so ultra focused on we're going to be a company that develops neuropsychiatric drugs and for psychiatric conditions, whatever, this is what we're going to do. And then they didn't have a second act to follow it up. And so I've talked to the executives at Lilly who have said they're really being purposeful about we have to be thinking outside of just obesity. They're looking at immunology, cancer, genetic medicines. A third of their portfolio is gene therapies now. So they're still extremely focused on obesity, and they're testing drugs for basically everything in the obesity landscape, from 5% weight loss to 30% weight loss. They want to have something for everyone, but they're also looking outside of obesity, and that's a really important part of their strategy.
Can I ask you something, going back to, because Novo's going to come off patent sooner. So should we assume that, so then there'll be all these copycats, that folks that maybe were taking Zepbound or something, we've talked with you that they're not all the same, that they're just going to run to, the generics because they'll be cheaper, or they're not going to be able to medically because things are different. Not every drug is the same.
They hypothetically would be able to. I mean, in consulting with their doctor, if their doctor's generic semaglutide is fine for you, sure, that's great. If that's the most affordable option, that's what your insurance covers. But we also have this other side of this industry where there's a huge cash pay component. And the drug makers, Novo and Lilly, have both worked with the Trump administration to bring down prices for patients in Medicare and also cash pay prices. And I think it's something like a third of patients in this market in general right now, in the US at least, are cash pay patients. So they're not going through insurance and they're paying these lower discounted prices that the drug makers offer through direct-to-consumer websites. And so the prices have come down much, much faster than we would normally see in such an ultra-competitive market. Usually that it doesn't happen this way. So patients maybe are already used to paying $200 a month for their Zepbound and they don't want to switch because that's what works for them, even though there's a cheaper option on the market. It's sort of a question mark as to what happens next.
So we're talking about this in the context of the way that Americans have are looking for ways to lose weight. We'd be remiss if we didn't talk about some of the messaging in the Super Bowl last night. Mike Tyson ad from, it was like a Maha ad out there, talking about how processed food kills, and he's eating an apple at the end, and he talks about his own struggle, his sister's struggle. Is there any, I mean, I know it's kind of a crazy question, but is there any chance that the messaging with that starts to work and it attacks the problem that some argue is where it starts, right? This idea that we're not necessarily eating healthy, and therefore there won't be as much of a demand for these drugs moving forward.
I mean, it would be great if I think like everyone hopes, even Lilly and Novo say that they hope that people will eat healthier, move more. Like they say that that's an important part of these drugs too. But I think it's hard because obesity is a disease, and that's the message that these drug makers are also putting out, is that like this is a thing that for some people eating healthy doesn't fix. And even if you eat healthy, exercise, whatever, for some people that just doesn't, they have a certain genetic makeup or it's whatever, like they can't lose weight, or it's really, really difficult for them to lose weight. So I think it's like not an either or situation. Both things should be happening, and hopefully both things will help bring down the obesity rates in this country. But
I wanted to ask you, because I feel like when we started talking with you that we, were like, this is the drug that's going to solve everything. Can these drug makers get initial indications for the medications that expands their patents or something? Like does that help?
I mean, it helps with getting more insurance companies to cover it, so to pay for it. There are some things, like if you have a different formulation for the drug, like those types of things. Sometimes pediatric indications will help give you a couple more years of patent life, but at the same time, it's like the clock is always ticking. It's not going to add much at this point, and you have patents, at least for semaglutide, for Ozempic and Wegovy, falling sort of all over the world within the next year, and so you will have those generics out there in the world, even if the U.S. patent hasn't expired yet. It's kind of only a matter of time before we get there.
I almost feel sorry. Like I know like the R&D that goes into this stuff. Like you kind of understand that argument. Having a brother that used to be in pharma, like we used to talk about this all the time, debate,
Right, and that's what I think they're also like. They've really had a hard time with the compounding because it sort of circumvented that a little bit.
Yeah, and pretty quickly, right?
Yeah,
Just as they were kind of like taking off. Thank you so much. It's been a long time. We're so glad we could catch up. Madison Muller, Bloomberg News health reporter. Check her out on the Bloomberg and at Bloomberg.com.
Hey, coming up next, we're talking about another area of the market, specifically distressed real estate. Amy Rubenstein over at Clear Investment Group. That's next.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg, looking at another rally in tech companies today with the Dow, the S&P, NASDAQ, the NASDAQ 100 index, and yes, Russell 2000 index of small cap shares all pushing higher. The Russell 2000 up 0.9. That compares to a 0.7% gain on the S&P, up now by 45. The S&P at 69.77. Dow on track for a record, up 48 now, gain of 0.1%. Any advance today will build on Friday's record. Right now, the Dow is at 50,164. NASDAQ 100 index up 1%. The Russell 2000 again up by 0.9%. The VIX just above 17 with the 10-year at 4.19%, the 2-year 3.48%. Spot gold up $109 the ounce to $5,073, up 2.2%. Silver up 7.2%, $83.40 for an ounce of silver, while West Texas Intermediate crude oil up 1.2%, $64.29 for WTI. And Bitcoin now up 0.3%, 70,861 on Bitcoin. Apollo Global Management shares up 1.2%. Apollo set a record in its business of making loans, a crucial plank in the firm's ambition to become one of the largest underwriters on Wall Street. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, today's Bloomberg Big Take, it's an exclusive. It's on the Bloomberg Terminal. It's on how private lenders have started the foreclosure process on 7.4% of the 2,000 properties that they financed in 2023, with initial foreclosure filing spiking 82% nationally over a 2-year period.
Yeah, it's a story that takes us to Cape Coral, a city, what was once a hot real estate market. It's gone cold due to a spike in interest rates and insurance costs. The strain in Florida's housing market, though it demonstrates the risks of private lending, with some lenders, Carol, warning of a dangerous turn for speculators and borrowers facing significant losses on their investments.
Yeah, so it's an interesting story that takes us to a city. So I'm curious to see what our next guest says, because she invests in distressed real estate. Back with us in studio is Amy Rubenstein. She is CEO of Clear Investment Group. They target real estate investments in the distressed, mid-size, or larger multifamily sector in predominantly secondary and tertiary markets nationwide. I stole that from your website, so hopefully we've got it right. And you've talked with us. Welcome back. Welcome back.
Thank you.
You've talked to us. It's about workforce housing. It's about what you call free market affordable. I'm just curious, though. You guys have done a lot of transactions around the United States. Stuff in Florida. Do you have projects going on? Tell us about the environment, and I'm curious if you've got anything in Cape Coral or nearby.
We don't have anything right now in Florida. We've been in Florida in the past. Something that Florida has to struggle with is rising insurance costs, and that has made it really hard for property owners and for new investors to come into that market because of insurance.
Is that why you guys are staying out?
Well, we've been staying out of coastal for a little while. We started looking back at it again because insurance started to level out, but insurance rates are incredibly high.
That's not just a Florida story. It's a California story, too.
It's all coastal right now, and fires, right?
Yeah.
You get that in California.
And we see that start to hit parts of California, like Malibu and the Malibu area. But for the most part, California real estate prices are still really, really high, even though it's challenging and expensive to insure those properties. When does that chicken come to roost?
California real estate market has always been very unique in the sense that it's an appreciation market and not a cash flow market. So it's always been a little bit tight there. But when does that stop? I don't. It's a market that seems to not follow economics.
And you don't have anything in California right now,
We
right?
used to. We started in California. That's where we were for 10 years, and we do not now. So we are very cash flow oriented.
So talk to us about the environment, what you are seeing today versus what it was 6 months ago, 12 months ago. I think it's been a few months since we last talked.
Yeah, absolutely. We're still seeing a very bifurcated economy, both in the macro economy and then also within submarkets. So what we're seeing is a bit of mean reversion right now, where markets had overgrowth are starting to cool down a little bit and starting to try to absorb all that overgrowth. And some of the markets that were more depressed, that didn't overbuild, are starting to rise. You see something like that in like Chicago or San Francisco, where you now all of a sudden you see 3-4% annual increases, which is really high compared to some of the rents in the country that are starting to drop. So we are seeing a tale of two cities.
Since we last spoke to you, the Trump administration has come out with some different, I wouldn't call them policy policies, I'd say policy proposals, to try to get housing within control for many Americans.
Sure.
Some of them target single-family homes and institutional investors. Is anything that you've heard from Washington, D.C. helping to alleviate the problem?
You know, we're hearing a little bit about it in that single family buy to rent or rent to own model. And we're not seeing it we don't hear proposals coming out as how are you going to help workforce housing or market rate housing, right? So there are ways to help as far as subsidized housing like Section 8 or something like that. But ultimately what it comes down to is cost of living is rising so much, and it's more so than the cost of actual housing. That workforce housing or free market housing stays pretty stable. It grows slowly, but it stays a little bit independent from macroeconomics because you get a lot of friction in mobility. People aren't moving a lot out of their units, but then again, you know, we talk about this lack of affordable housing.
Right.
We have to dig into what is that? What does that mean?
Well, we constantly, I think, pepper people with questions to try to understand. And before we got going, we said, well, you know, one of the things that we've kind of pushed on is building housing, affordable housing where the jobs are, whether it's a major city, rather than having someone who's got to, you know, take a train or a bus or however, 2 hours or an hour and a half or something, you know, outside that major city in order to live, you know, affordably.
Sure. I mean, you see something like New York right now, and you've got units here that are vacant, but it's hard for landlords to bring them back online. How do they do that, especially when you've got threats of a rent freeze here in New York? How do you offset that for the landlord?
So it's cheaper for them to leave them open than to rent them at a below market rate.
That's true in some of the places in New York. New York is very specific.
Okay. But not in other cities?
In other cities, you're not seeing that as much. But you don't have those freezes like that. Even in places where you do have rent control, we are seeing some relief on other sides. I think that we do see that cities are starting to recognize that keeping landlords from raising their rents ends up hurting affordability overall.
Where are you bullish right now? Where do you want to do new projects?
We're really bullish in the Midwest right now. We like areas that are very stable. We don't like to see that overgrowth. We like to see places that are that have a lot of economic growth as far as workforce.
So where in the Midwest?
We love Ohio right now. We're buying a lot there. It's a great time to invest right now if you're very discerning and specific with what you buy. So we're looking for upside-down capital stacks.
So Southern Ohio, Central Ohio, Northern Ohio. I mean, these are all very different parts.
Sure. Right now, we're heavy in Columbus. We're looking in Cleveland. We're looking in Cincinnati.
Okay, so that's everywhere. It's pretty much.
It's a little bit. We're all over the Midwest. We like other cities too. It really depends. We're more deal-oriented. We're looking for where is that upside-down capital stack that really needs us to come in to infuse capital, because that's what really happens.
So much money has gone down south, certainly the Southeast. Is that gotten overheated at this point? I've heard some signs or some stories about things like prices starting to come down, at least in kind of residential homes. But what are you seeing there?
Right. So that's that Sunbelt area or some of those overheated areas that are now coming back down. So I think that what happened is there was this oversupply of building, right? We hit this peak of building in like 2022. Those units started coming online. If you take a look at where we're at today, new development is 70% in 2025 below where it was at its peak in 2022. So now we're seeing that absorption. And so that drops prices for a little bit, but they'll even out and start to come back.
So Amy, in terms of affordability, bottom line, in your view, it's more about like thinking about why is it that people can't afford to buy homes? And is it wages, or like, is that what we need to be focusing on in your view from what you see?
Right. So in what I deal with, we are not really competing against the home market. We are providing housing for renters by necessity as opposed to lifestyle renters or people who choose. But what we're seeing is really it's cost of living is high and cost of mobility is high. And so that just getting out and packing up and moving and getting a new security deposit down somewhere, and the costs of that is what is expensive. So we're seeing a lot more concessions on the front end as opposed to rent reductions.
All right. Well, always a great window into real estate. Thank you so much.
Thank you.
Good to see you. Amy Rubenstein, she's CEO of Clear Investment Group. When we come back, a check on the trading day and also some specific stocks on the move. This is Bloomberg.
listening to Bloomberg Business Week Daily with Carol Masser and Tim Stenivek on Bloomberg Radio and Television.
All right, everybody, we're coming up on the last hour of trading on this Monday. Carol Masser, Tim Stenivek, live here in our Bloomberg Interactive Brokers studio here on Bloomberg. Hey, I'm looking at a market where U.S. equity is pretty much hovering near their best levels of the session. S&P 500 up 2/3 of 1 percentage point, a gain of about 44 points. Dow up about 1/10 of 1%. It was a big week last week for the Dow, as we know, taking out a key level. And the NASDAQ 100, those tech names, overall, really outperformance, up almost 1 full percentage point, up 241 points, Tim.
I'm Tim Stenivek, along with Carol Masser. Let's take a look at some stocks on the move today with us.